held up US markets. I must say, and a bunch of factors around this, right? I mean, AI, growing AI skepticism. What is the return on invested capital going to be? Growth concerns, a less accommodative Fed, etc. at play. Remember, we got that sense from the FOMC that the next cut in December is not a given. But despite all this, just look at the earnings, how earnings are tracking in the US from companies which are reporting for the quarter. It's the strongest quarterly earnings season, broad-based, since 2021. So, corporate America is firing on all cylinders, and it's not just these 7 companies. So I think, you get this wobble once in a while that, well, is this it, etc. And maybe rightfully so. Naren, for example, S. Naren, who is the CIO of ICICI Pru, expressed that view, saying, well, the big risk for India is not local, but is global. This AI bubble bursting, as he put it. But are we there yet is the question. And to that, I mean, just one more point that, and I think it's a relevant point, that broader growth, corporate growth is looking pretty solid. Okay, now US Supreme Court sounded skeptical of the Trump emergency tariffs last Wednesday's hearings. Remember, the oral arguments had opened. The takeaway is that President Trump essentially said that he will not announce new tariffs while the Supreme Court in the US is the verdict is pending. So, a bit of a reprieve during this period. We don't know when the Supreme Court will finally come out and say what it wants to say. The odds have shifted in terms of what the market is expecting. Market is now saying, well, maybe the court will say these are illegal, is leaning towards that. And that is a big difference compared to from when the case started in the court. Goldman Sachs has upgraded India, and we'll talk more about this after its downgrade in October 2024. We've had a big downgrade. I mean, the reasons are pretty much the same: big underpositioning, tax cuts, rate cuts, etc., etc. We all know that. But this is a big global bank which has changed its view after they downgraded the market here, say around the same time last year. Just to tie in the levels here, Nifty broke the September highs on the downside, which is 25,448. This is the level we put out on Thursday. On Friday, intraday, we broke through it on the downside, but closed above it. So 25,448 is the first level. Below that is 25,400, 399 to be precise. It's the 40-day exponential moving average. So we'll see what happens. Bank Nifty, it tested and closed above the 20-day moving average, which is 57,578. The 40-day on the Nifty Bank is still about 200 points lower. We'll sort of work around it if we near those levels. So those are numbers up on your screen. Gift Nifty will give you a quick sense of how we are likely to start, and then we will pick it up from there. 35 points higher. F&O positioning, how are we set up? Nigel is standing by with exactly that. Nigel, over to you.
Well, I'll tell you what, the markets have seen a little bit of a correction from the recent peak, but more than a runaway rally, what I would want the markets to do? Just consolidate. Stop falling. That will be the first trigger for it to start moving up. And I say this because the FI short positioning has gone up by more than 50% since the start of the series. So what you require is the markets to stop falling, then these short positions get a little bit nervous. What we have been seeing is the markets have been coming down and the FI shorts have been increasing. Moving to the client positioning, well, they as well have gone ahead and they have added some long positions. So this combination of FI net short and client net long, it's good. But for that, the markets need to stop falling first. The Nifty needs to hold its ground, this 25,500, maybe move in that band, 25,500 on 25,600 or thereabouts. Even in stock futures, there was some short positioning that was created by the FIIs. Well, moving to the options data, there's some encouraging signs coming out there because there were puts that were written. Close to around 2 puts were written for every 1 call. That's on the FI stable itself. And there were options that were fairly active as well. What you've observed in the last few days is even the puts, if you're writing puts, you're seeing that, in fact, the premium has been going down. If you're buying puts, you're not making any money. And that's exactly what happened in Friday's trading session, because the premium on the 25,400 put, it didn't go up, though you got the direction right. On the upside, though, the 25,500 call, well, that's seen a good amount of open interest build up with the premium around 100 rupees. So just looking at the options data, looking at the technical levels, well, the key data points for the day come up for you on the screen. So Friday's low, important. You don't want it to break on the downside, 25,300 odd. And on the upside, the 20 DMA becomes extremely important. The Nifty Bank, well, that's the one that led the fight back in Friday's trading session. I'll tell you what, that one needs to defend this 20 DMA. Intraday, it went ahead and it breached it in Friday's trading session, but there was a good recovery from there on. So the 20 DMA needs to hold out for the Nifty Bank, and on the upside for the Nifty, it needs to get past the 20 DMA. But as I said earlier, shots are getting piled into the system. market needs to stop falling. That will be enough trigger for the market to see a bit of a pop. Some bit of consolidation will be par for the course.
Okay, well, absolutely. By the way, if we look at the picture across Asia this morning, it continues to be fairly mixed given the concerns around the US tech sell-off. So the other piece of news is that at the consumer level, inflation is finally positive in China, but at the producer level, it continues to be in negative territory for this is the third year in a row. The latest numbers that have come in this morning. That's the picture. So Hong Kong markets are shrugging it off more or less along expected lines, 0.5% up on Hang Seng. Taiwan's also slightly higher. And if we look at some of the other regional markets, then again, it's a fairly mixed picture as we see across the region. Now, on that note, let's look at what the implied open is telling us. We'll probably have a mild positive start. The question is, can the bulls really build on it? Because that's where bulls have faltered all throughout last week. So we'll talk about this as we go forward. For the time being, let's get to that really bullish call that Goldman Sachs has put out on India equities. Sunil Kaul of GS says that they have upgraded India to overweight, reversing the October 2024 downgrade. He expects the growth revival to be driven by supportive monetary and fiscal policies, RBI rate cuts, and improved liquidity. He also expects the corporate profit growth to rise from 10% in 2025 to 14% in 2026. And this, he says, will be led by financials, defense, consumer, and the tech sector. Goldman Sachs' key themes include mass consumption revival, self-sufficiency, new economy, and high growth pockets. That's a bullish note to start the week. Goldman upgrading India. Well, on that note, let's welcome in Mr. Ed Yardeni, President at Yardeni Research. He's with us for some perspective. Mr. Yardeni, thanks so much for joining in. Good to have you in. Well, let's start first with this whole debate around tech. We've seen a cool-off last week, but do you think it's anything more than that? Is it looking a little worrisome now, the manner in which some of these stocks cooled off and sold off?
Right. No, well, it looks worrisome to some. I think that it's a very healthy pullback. It's hard to get a 1999, 2000 style meltdown in the stock market when there's so many people worrying about that. And so seeing some pullback, some correction in the AI stocks is a very healthy development. We're not going to see this thing feed on itself and turn into an economy-wide recession because it's not going to turn into a stock market-wide bear market.
So then that brings me to the other point, and that's the lack of data. Now there seems to be some sort of effort to get a new agreement going. We'll see how that goes. But some of the data points that we had, for instance, I think there was a consumer sentiment, the Michigan survey. I think that at least was released, and all those points have been fairly negative. So what do you make of things?
Well, a lot of the survey data, even before the government shutdown, was very pessimistic, particularly the Consumer Sentiment Index. To be blunt, I think it's useless. It's been totally useless since the pandemic. It's been showing way too much pessimism, and yet consumers continue to spend. So I would, to a large extent, ignore it. The other concern was the Challenger layoff announcements.
Yes.
Also was of concern. But it was really all technology and it was all warehouses. And obviously, having layoffs is not a good development, but it certainly can explained by a tremendous increase in productivity. And productivity boosts overall economic growth. And a lot of these technology people, I think, will find jobs fairly quickly. Warehousing is a whole different story. We have a lot of robotics and automation there. But neither one of them reflects a weakness in demand for technology or for retail warehousing.
Ed, the win in New York, and I was wondering whether there will be a bit of a turnaround in trying to cut the size of the budget and that big beautiful bill, etc. Healthcare spending being cut. You think all that perhaps will be now on standstill? And maybe even a bit of a reversal, maybe some expansion compared to what people were penciling in?
Well, I don't think we're going to see major changes in Trump administration's policies, but the rhetoric will change. The Republicans, generally speaking, will not want to lose the affordability issue to the Democrats. They've seen what that can do in terms of upsetting the politics of New York City. So I think the Republicans are going to embrace at least talking about doing something about affordability. The president's also already been pushing on the drug side, and I think they'll just advertise it more. They'll be talking more about what they've done. They'll be talking more about how energy prices are very low. They may come up with policies that'll bring down food prices. So I think there'll be a widening of the net of policy making, but the basic approach of the administration won't change. I think they've already done everything that they really wanted to do on the tariff side, and I think even if the Supreme Court rules that the tariffs are unconstitutional, Trump will just say, well, that's okay because we did use the tariffs to renegotiate deals. These deals are here to stay, and he'll claim victory in that regard.
Hi, Ed. Morning. Good to see you. And as always, throughout the year, we've been having a bit of a revision in the S&P 500 target. I recall earlier we were talking ballpark 6,000, 6,500. Last time we chatted, you said maybe 7,000 as well is possible. Yeah. What's your call with regard to S&P 500? Where is it headed? Yeah. Because there are some calls that maybe it's peaking out, but I think you have been quite optimistic. And your view on the Indian markets as well. A rank underperformer just in the last 12 months or so. We're hoping that earnings come back and the economy picks up as well. So at current reckoning, your view?
Well, of course, India has had a few years of outstanding performance and having several months where the market is flatted down, again, is a healthy development. You want to give the market a chance to catch up with earnings. Valuation multiples got a bit stretched. And now I agree with the Goldman call. I think the outlook for India is quite good, especially if the whole tariffs thing gets finally resolved and doesn't make headlines. I think there's still a tremendous amount of pressure to move production out of China and into other parts of the world, including India. With regards to the U.S., I usually don't change my forecast very often, but when Trump started talking about tariffs at the beginning of the year, I wrote that I reserve the right to change my opinion as often as the president does. So I try to stay flexible on the issue. But basically, I remained optimistic that we're in a bull market. I still believe that. I'm still using 7,000 by the end of the year. We could have further pullback, perhaps. But, if the government opens up, as we saw on Friday, that could be a positive development for the stock market. So the U.S. stock market, it's a bull market. I think everyone should stay with it.
Absolutely. And I think there's such a thing called seasonality that is also supportive, right? End of the year. 30 days to go for the end of the year, 35 days. Well, thanks very much, Ed. Good to speak with you and really appreciate your time here on CNBC TV 18. We'll just quickly run you through what's coming up here in terms of interactions, right? 8:35, we have the management of HCLTech Babak joining us to talk about their second quarter numbers and outlook going forward. Mahesh Patil of Aditya Birla Sun Life Asset Management is a market master of the day. 9:30, we'll hear from the manager of Bajaj Auto performance here in India and, of course, their export markets. Akzo Nobel will be speaking with us at 9:40 on the quarter gone by. Paints and Focus, we have the management of Niva Bupa joining us at 9:50 on, of course, the monthly numbers. A bunch of other issues to talk to Niva as well. And, of course, towards the end of the program, we have Latha in conversation with Sonal Desai of Franklin Templeton Fixed Income on US Yields, dollar and the rupee. Coming up.
Time to slip in a quick break. We've got a lot of stock-specific action to track for you. Get at that in just a bit. For the time being, I give you a sneak peek into the top 10 segment. We're looking at Bajaj Auto, Torrent Pharma, Nykaa, Global Health, Kalyan Jewellers, Nalco, GSW Cement, as well as some auto stocks. On the flip side, Trent and Transformers and Rectifiers will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Well, while the indication from the implied open from the GIFT Nifty is that we'll probably start on the positive side, we need to see if the bulls can retain their winning streak. Last time we saw the implied open was about 20 odd points higher, okay, 43 points higher, so looking pretty okay for this Monday morning. What about individual stocks? Lots and lots of earnings came in through the weekend as the season comes in its last lap. So let's straight away take it to our team for the top 10 stocks to watch out for this morning. Guys, good morning to all of you. Let's start first with Sudarshan. Sudarshan, Bajaj Auto revved up.
Good morning, Surabhi. So amongst all the auto stocks, Bajaj Auto is the only stock which is still down YTD. But as far as Q2 FY26 earnings are concerned, overall earnings have looked largely in line or slightly better than estimates. So I'll talk about two numbers. First, revenue. So it was led by two things. First, export continues to see a healthy growth. In the month of October, total volume was 2 lakh units after 40 months. And three-wheeler segment continues to see a healthy growth. Even going forward, companies saying that it will see growth in the range of 15 to 20%. These two things have helped company report revenue growth of 15%. What has helped margin? First, operating leverage. Second, rich product mix. And third is rupee depreciation. So dollar realization has improved to more than 87 versus 83 in the same quarter last year. That has helped company report margin of 20.5%. That's at multi-quarter highs. Going forward, company is saying that in the medium term, two-wheeler motorcycle segment growth is likely to be in the range of 6 to 8%. But remember, H1 FY26 for Bajaj Auto domestic motorcycle had seen a decline. Also, growth is likely to remain strong for both export and commercial vehicle segment. So I'm going with green for Bajaj Auto.
Okay, all right. Thanks a lot for that, sir. In fact, we'll have the management. Mr. Rakesh Sharma will be joining in at 9:30 a.m. later today to discuss the past quarter's numbers and how he sees trends shaping up moving ahead. That said, let's hop across to Mangalam. Trent, a darling of a stock a few quarters ago, and now growth is not enough, I think so, Mangalam. Tell us, how do you read the numbers?
Well, it looks like the company is entering the moderate growth phase after the exponential growth that we've seen already, and I perhaps suspect the street to adjust to that reality as well as we move forward. So soft revenue growth, the company had reported in their second quarter. Reported EBITDA is up 26.5%. But remember, if you account for all the accounting changes in lease agreements, etc., the company said the operating EBITDA actually is up 14%. So on a 16% revenue growth, the operating EBITDA up 14% implies that on a like-to-like basis, there has been some margin moderation as well. The net profit lower due to higher depreciation. The consumer sentiment in the second quarter was relatively muted. So overall stock, the revenue saw an uptick of 16% and the net profit saw an uptick of 11.5%. They added 19 stores, West Side stores, and closed 6. And they added 44 Zudio stores and closed 4, which includes 1 store in UAE as well. The stock has been a bit of an underperformer, soft performer in the last 12 months or so. And I expect that weakness to continue on the back of these numbers.
Okay, all right. Thanks very much, Mangalam. So maybe a bit of a continued readjustment here as far as Trent is concerned. Torrent Pharma is the next one we want to focus on. Ekta's here. Ekta's got details. Ekta, good morning.
Morning. Well, good numbers coming in for Torrent. The revenue was up around 14%. Margins came in at close to 33% this quarter, and a profit growth of around 30% at 591 crores. India did well. It was up in double digits, so up around 12% for the India business. US did well as well, so up around 21%. It was a recovery after multiple quarters, according to analysts, and they do expect that to sustain. And Brazil was up around 21% as well. So good going for Torrent. Expect the stock to be in the green on the back of the numbers.
Okay, all right. Ekta, thanks a lot for that. Going back to Mangalam. Mangalam, tell us about Nykaa.
Well, Nykaa is in the same phase as Trent was, say, a couple of quarters ago. You know, a big hyper-growth trajectory because net revenue growth in mid-20s for the last 12 quarters. Gross margin is at a 12-quarter high, the highest EBITDA margin and PAT since the company is listed. And at the same time, the gross merchandise value up 30%. This growth is the highest that we've seen in the last 6 quarters itself. So 25% revenue growth. The EBITDA grew by 53%. And on a low base, the net profit actually jumped by over 150%. See a fair amount of green on Nykaa. 25% growth in their beauty business, which has actually seen the margin expansion. Fashion as well. Losses have, narrowed down from about 32 crores of EBIT loss to about 21 crores. The company has guided for it becoming profitable by the end of this year, and we are getting into the better season for this fashion business. And additionally, they've also announced, their own brand, which is House of Nykaa, saw a GMV jump of 74% year on year. So good times continue for Nykaa.
Looking beautiful, looking good. All right, that's Nykaa. Thanks for that, Mangalam. Let's get back to Ekta. Ekta, what about global health? How was the quarter?
Global Health or Medanta, good numbers. Revenue up around 15%. Margins were a bit under pressure, 21%. And the profit came in at around 158 odd crores, so no complaints coming in. 7.7% increase in the occupied bed days. Occupancy as a whole was at 64%. Average revenue per occupied bed was up around 5.5% to 65,570 odd rupees. And international patients was up around 48.5% on a year-on-year basis. So the internal statistics look good for Medanta as well. Overall did well for the company this quarter.
Okay, all right, Ekta, thanks very much. That's Medanta on your screens. Kalyan Jewellers is the other one. Mangalam is back with that one. Mangalam, morning.
Strong performance for Kalyan Jewellers. We've seen it in the jewelry space so far, and Kalyan's update as well was fairly strong. 30% revenue growth, 50% EBITDA growth, margins expanded by about 100 basis points, and the net profit nearly doubled from 130 crores to 260 crores. The good part, non-South contributed 54% to their revenues. Same-store sales growth was also mid-teens for both South and non-South. And studded share improved from 30% to 31%, and that explains why the margins were higher as well, despite higher contribution coming in from franchise stores. And they target same-store sales growth of mid to high single digit and continue to increase the share of non-South. And they have also announced that they will start a new hyper-local design brand. The first brand will be launched in FY26. So all of that should augur well for their hyper-local markets and expanding in specific areas of the country.
All right, Mangalam, thanks a lot for that. Well, I'm focusing on two stocks, Nalco as well as JSW Cement. Let's start off with Nalco. Revenue growth of close to around 7.5%. Good growth is what we saw out there. But the operating profit was up by 25%, which told you the margins were much better, both on a sequential basis as well as on a year-on-year basis, coming in at around 45%. On alumina, there were higher sales, so that's operating leverage that played out there. On LME, aluminum, we know that prices are much higher, so that's what supported as well. And in addition to that, you had both the segments, whether it's chemicals, which is the alumina business, that did very, very well. Just look at it. The EBIT number, much higher in this quarter in comparison to the previous quarters, even on the aluminum business, big beat out there. Besides the higher top line that we saw, we had employee cost that was lower, cost of power consumed as well was lower, and both those two played out into better margins. The PAT number came in much higher. That's because of a better operational performance, and the effective tax rate as well was a little bit lower. In addition to this, the management has gone ahead and announced a dividend of around 4 rupees, so the street will like that. And they've also said that their alumina refinery expansion, 1 million ton odd, is on schedule to come in June 2026. So that's going to be important. Hopefully they meet the deadline and they don't delay that, because that's normally the trend that we've seen with some of these PSUs. Moving to JSW Cement, numbers look good. Top line, we have a growth of close to around 17%, so good going out there. The EBITDA number, I've adjusted the base year number, because there was this fair value loss. They had those convertible instruments before listing. And because of that, in the base year, there was around 37 crores of a hit. So, I've added that back in. But still, the adjusted EBITDA looks very, very good. Even margins look very, very good. The EBITDA per ton comes in at around 860 rupees per ton. What played out for them? The sales volumes is up in mid-teens, which is very good. Remember, the industry grew at just around 5%. So they outgrew the industry. However, realizations actually were softer than what the industry did deliver. The reason that the margins came in much better is because the gross margins have expanded, given that now they have sourced a higher amount of their slag captively rather than buying it from third parties. The net profit came in much higher because finance cost as well has gone in lower, and the net debt number post the IPO proceeds have come down drastically. Just take a look at that. Just one word of caution, 3% of equity that was locked in, that gets freed up for trade. Hormuz, my colleague, had just told me about that. So that could be a reason that the stock could be under pressure, but otherwise the numbers look quite good. All right, let's hop across to Vinny. She's here to tell us about transformers and rectifiers. Vinny?
Hi, good morning. So in terms of transformer and rectifiers, weak set of numbers that's coming from the company this time. Revenue growth, decline of 0.2%, 460 crores over there. Profits are down by 25%, EBIT down by 25% as well. And overall, margins have seen a sharp contraction. 11.2% is what the EBITDA margin came in at versus 14.9%. Order book has also on a sequential basis just a mild increase there. 5,472 crores, and last year the order book was at around 3,500 crores. In terms of order inflow, That is coming at 590 crores. Last year, the same time, it was 1,031 crores. That was the order inflow as well. So it's a bit of a muted performance in terms of order inflow is what the company has received. Overall, weak performance execution seems like it's still a concern for the company and an important challenge. We'll watch out for margins because they are below the guided range of 17 to 18%. So in the con call that's going to be held today, will they reduce their margin guidance? That's something that we'll watch out for. And obviously, this is the lowest level in terms of margin since Q3 FY24. Staff costs has seen an increase in this quarter, as well as other operating expenses that's seen an increase as well. So we're expecting red here.
Okay, Vinny, got it. So some red maybe on transformers and rectifiers. We'll keep that in mind. Back to Sudarshan. Now, there's some good news finally that's coming in. So it seems that those rare earths will finally make their way to India and pretty much rest of the world.
So another reason for auto companies and auto ancillary companies to react positively today, as in the month of October 2025, if you remember, Chinese government had announced export controls, and that would have come into effect starting December in the phases. Now, following the recent meeting that US President had with Chinese President in South Korea, reports suggest that Chinese government has decided to suspend those export control orders, and mainly those are for rare earth metals, which are being used very actively in high-end bikes, cars, and all the EVs. Now, Chinese government has decided to suspend that for at least 1 year till November 10 of 2026. So that will be taken very positively in the hope of improved supply chain.
Okay, all right. So some additional good news coming in for the auto space today. Thanks for that, Sud. Well, with that, let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow are Bajaj Auto, Torrent Pharma, Nykaa, Global Health, Kalyan Jewellers, Nalco, JSW Cement, and auto stocks, while stocks with negative news flow would be Trent and Transformers and Rectifiers. Okay, so that's our stock list for the morning. Let's now also figure out what's the latest in the world of commodities. Manisha is joining in with all the action. Manisha, good morning.
Morning, and thank you for that, Surbi. I'll start with the precious metals because we're looking at some gains coming back in for this one. Important psychological levels is what we are breaking on the higher side. So gold is back above $4,000 an ounce, and silver prices gained 1% on Friday. Well, the weak U.S. data is strengthening demand for safe haven yet again, and then the markets do believe that the AI valuations are overstretched. We've also seen some corrections happening in equities globally, and that has been supportive. Apart from that, the U.S. consumer sentiment, the jobs data, both of them were weaker than expected, and that brings the street putting in probability of 72% for a U.S. Fed December rate cut. So that has been supportive as well. Also supportive is the fact that the Chinese central bank increased their gold reserves for a 12th straight month for the month of October. But it's not just about gold or silver or copper. We've seen the crude oil prices gain also. Last week's 2% of decline has turned into gains in this week right now. Couple of things here. One, China crude imports for the month of October were quite positive month on month, year on year. And the second is there are conversations that Hungary perhaps could continue. So clearly,
Oh, I think we've just lost that line with Manisha. We'll get her back in a bit. Let's do one thing. We'll take a very quick break on that note. Come back on the other side. We'll have Dharmesh Kant, Head of Research at Chola Securities, joining in to go through some of these interesting numbers that came in over the weekend, plus more fundamental stock ideas.
Welcome back. 20 minutes to go for the pre-open session. As promised, we're going to get you lots of opinion from the Global Leadership Summit, which was held here in Mumbai on Friday. So hearing from the Jio Financial Services Chairman, KV Kamath, who said that clean balance sheets bring a sense of confidence, added that India should aspire for a growth rate of 10%. Listen in.
And what does consolidation get you? It gets you scale and gets you bulk and gets you, I would say, efficiency of operation. And all these are critically important today, and even more so when you're talking of, I would say, a technological revolution that you're all going through. So this is absolutely the correct move at this point in time. My biggest confidence is the fact that, what gives me the biggest confidence is the fact that the bank balance sheet is clean. If we were having this conversation in a situation where bank balance sheets are not clean, profitability is not at healthy levels, then we would have probably gone in a different direction. So banks are strong, and banks can today compete. I would say that we should actually aspire for a 10% growth rate, and then we will achieve 8%. So that's what we need to do. And also, and I'm very happy that the index is being reset of, say, industrial production or various indices, because we will then have a better picture of at what pace are we really growing. I would think that we're probably growing a little faster than what we all assume.
All right, that's Mr. Kamath on the way forward for the Indian financial landscape. Let's also tell you what the other big voices were. We, of course, had the Chief Minister of Maharashtra, Mr. Devendra Fadnavis, at the event, and he said that the state will be leading the infrastructure scenario in India over the next 5 years. Take a look.
अभी जो आप इंफ्रास्ट्रक्चर देख रहे हैं ये केवल ट्रेलर है, असली पिक्चर अभी बाकी है, क्योंकि मुंबई और एमएमआर रीजन ये एक ऐसा रीजन है कि जो भारत की अर्थव्यवस्था को एक पावर हाउस के रूप में, एक ग्रोथ इंजन के रूप में ये डेवलप कर रहा है। और जो हमारे प्रधानमंत्री मोदी जी का सपना है इंफ्रास्ट्रक्चर लेड ग्रोथ का, उसके साथ साथ जो एक प्रकार से अर्थव्यवस्था को विस्तारित करने का जो उनका सपना है उसको पूरा करने का काम हम लोग कर रहे हैं। तो अभी हम लोगों का एक प्लान चल रहा है कि हम बांद्रा से सीधा एक टनल ये बीकेसी में लाएंगे और बीकेसी से सीधा उस टनल को हम एयरपोर्ट ले जाएंगे, तो जिसमें आपको उसके बाद ये जो बीकेसी का जो कंजेशन है और वेस्टर्न एक्सप्रेसवे का जो कंजेशन है वो ख़त्म हो जाएगा। अभी हमारा जो बांद्रा वर्सोवा सेक्शन है उसका काम चल रहा है। बांद्रा वर्सोवा के कारण वापस हम लोग वेस्टर्न एक्सप्रेसवे जो मुंबई का 60% ट्रैफिक कैरी करता है उसको डीकंजेस्ट करेंगे। वर्सोवा से लेकर हम लोग दहीसर और दहीसर से लेकर भाईंदर, इसका काम हमने ऑलरेडी चालू कर दिया है, जिसमें कुछ टनल्स है, कुछ ब्रिजेस है, वो हमारा हो जाएगा।
Well, that is the Chief Minister of Maharashtra, Devendra Fadnavis. I mean, interesting conversation about the infrastructure build-out that we're seeing here in Mumbai and what plans are. And, I urge you to go online, listen to the full interview on YouTube, and gives you a sense of confidence that a lot of work is going on, a lot of work is being planned for the state and, of course, for the city of Bombay as well. Dharmesh Kant is with us, Head of Research at Chola Securities. Dharmesh, great to have you with us here. Thank you very much for joining us. You know, before I ask you about earnings and what came out, I want to just talk about the capital market stocks, which all surged on Friday. We had the SEBI chairman there at the conference, and he kind of basically said there was of course, before that there was a finance minister, I think, at the SBI conclave, and then there was the SEBI chairman at the Global Leadership Summit at the CNBC event, where the SEBI chairman essentially said that we are. He didn't sound too harsh on options, especially weekly options. He said, well, there's a consultation paper, etc. It's going to be there'll be deliberations, but nothing harsh. At least that's the sense came out. I was looking at the stock back then when those comments were being made. Stock was up 1%. BSE ended up 9%. Angel was up 5-6%, and a bunch of others like CDSL, CAMS, etc. Your thoughts, Dharmesh, on this space?
Yeah, good morning, Prashant. Thanks for having me for the show. I mean, yes, they have gone milder, and I think a mid path is being talked about, and both the finance minister and the SEBI chief were sounding the same notes. There was no, I mean, differentiation between the two. And rightly said, I mean, investor education, awareness, and the risk which is being involved in taking options trade, if the investors and traders fully understand them and are appreciative of them, definitely the losses will come down. However, the fight against the algo remains. To my mind, SEBI chief was more of a calibrated kind of to save, and because of that, we did see a knee-jerk kind of a reaction taking place. So eventually, the volumes will fill the gap, which this temporary, even if the disruption comes through, will take effect. So to our mind, we are still not advocating executors like intermediaries kind of a play on the like brokers and all. But definitely we are very bullish on the exchanges and the infra plays like CDSL, NSDL, CAMS, KFIN. So but this is the indirect route of playing the market, and not to forget the AMC. So these basket is still intact. Any declines can be bought into. Direct plays like angel booking, Motilal and all should be avoided for the time being, because to my mind, eventually this will come down, though at a slower pace.
Okay. Dharmesh, hi, good morning. Lenskart, it's finally the day, right? And I was looking at the so-called grey market premium. I think this indication is that I think it's now down to some 3-4 rupees, not too much. So the question is, A, for people who did get allotment, who applied, who got allotment, what should they do? If there's no listing pop, do you just hold on? Is there long-term potential in this business? And B, if the stock declines today because of so much of debate around the valuations, would it be a buy on dips? And if yes, at what kind of price? I mean, it finally got offered at 402. So when does Lenskart become a buy?
Good morning, Sobe. Good luck to Mr. Dinsal and the Lenskart team for the IPO listing. We have a clear, advice on same. We have a word rating on Lenskart. And see, I mean, going by Mr. Dinsal himself, he said 25% of the addressable market is already being catered to, and they are the largest player as far as the eyewear is concerned in India. And still you are sitting on basically no profit. Whatever profit was there, that was led by other income and not from the business's operation per se. So to my mind, after capturing so much and you're being the largest player in the organized segment, still you are struggling to get a good profit. So best to the judgment of the people who want to buy it. I will like to see at least 1 year, 1.5 years before the profits are on the table. And any peg ratio above, 40-50 is not advisable. So the best they can grow is say 15-20%, which we have seen. I mean, FY24, they were growing at 43% top line. FY25, they came down to 23%. And definitely for FY26, I think it will be below 20% kind of a growth rate. With that kind of a growth rate, you can do your maths when the valuations can be justified in what P multiple. And we have plenty of examples to subscribe for that. I mean, Nika is the case in point, DMart was there. Today you have Trent playing out. And similar valuations will play out for Lenskart as well. So,
yeah, out of the names you mentioned, Trent was the deja vu, right? I mean, a company that had a fabulous run growing at 50%. But as the growth came down, so did the valuations. Take that point. Okay. More on Lenskart in a bit. Dharmesh, stay on. We'll just quickly go through a management conversation as well. VATech Wabag is the company on our radar. Now, VATech reported fairly quiet sort of a second quarter. We have Mr. Skanda Prasad Sitaraman, Chief Financial Officer at VATech Wabag, joining in. Thanks very much for joining in, Mr. Sitaraman. So the reason I said quiet was I think everyone's focusing on your margin. The revenue growth was fine at 19%, but there is margin compression and EBITDA was also lower. So can you just explain at the operational level what happened? Because our colleague is telling us that even if you look at margins X of this other income falling, even then there is a compression. So just tell us what exactly went into it.
Yeah, hi. Good morning. Good morning to all your viewers. Thank you for having us on your show. We see it differently. At least we don't see it as a quiet quarter. This quarter continued to be a profitably growing quarter for us. Excluding other income is something we have explained enough in the past, and I will re-explain it if required. We are a global company. More than 50% of our business comes from outside India. And obviously, then the foreign exchange gains and losses become part of operational income. So for us, that is operational income. And hence, we have grown year over year. Coming to the margin percentages, we have also guided a 13 to 15% band within which we continue to perform. And we have explained in the past, see, this is a business where it's a game of mix. Then EP and EPC projects. EP projects are lower on top line, but higher on margin percentages. EPC give you volumes. But obviously, since construction is a pass-through for us, we end up having lower margins. So with growth, this band of 13 to 15% is what we have guided. And that is what we are at. From our point of view, that way, we have delivered on a 13 to 15% band. We have delivered on a profitable growth.
So, if allow me to come in, good morning. Margins are 10.7%, right, for the quarter?
No, the margins are 13.8% for the half year, if you see.
Okay, this is including other income.
Yeah, this is including Forex.
Including Forex.
We are not including all parts of other income. We take Forex because all our Forex is from operational.
So Forex for you is just translation gains or losses when you bring that money back?
This would be both. There will be translation as well as realized gains. Because a large part of our business is export. So when we export, obviously, the difference between what we bill at and what we collect at will deliver gains.
So you're saying, including Forex, it's 13.8%. And that guidance of staying between 13 and 8 includes, has always included Forex, which you consider as part of the operational income.
Correct. 50% of our business is international. So if you see the last quarter, we had a Forex loss. This quarter, we have a Forex gain. So we do not distinguish when it is a different result. For us, Forex is operational, and that is part of EBITDA.
Okay, so that clarifies the Forex piece and why you consider that as part of the operational flows, revenue flows. Let's, however, talk about that mix which you said. And going forward, what makes you confident that you will be in this band of 13 to 15% margin? How is the mix changing? If you talk about the order book right now and the bid pipeline going forward, some more color on that and how that will play out on the margin.
Yeah. So today, our top 5 projects, if you take, are largely EPC projects. Last year, we did have the likes of Senegal, the Russian project, which had an EP mix. But towards the end of last year and from the start of this year, there has been a higher mix of EPC projects, which means there is growth in volumes, which is what we have guided. A large part of these projects are backed by good payment security, so quality order book. And also, as we look forward, we see these projects will churn out the revenues and also the new projects that we are bidding for, mainly in the Middle East and African region, are large marquee EPC, few EP projects. And that is where we have given a preferred bidder guidance of about 3,000 crores of orders, where we are well placed and we would secure within this year. So for us, the mix is more towards EPC now. These are quality orders with good payment securities. You've already seen us demonstrate in the first half of the year, which is a little less heavier than the second half, where the volumes are much better. And if we are delivering 13.8 in the first half, we are confident about the second half, and the full year is going to be good and well within the band of margins.
Sure. Just a quick last point. Your order book right now is about 16,000 crores. Where do you see it by the end of the year?
We would certainly like to have a year-over-year growth of 15-20% in order book as well. But we have guided that we will be about 3x of our revenues, and that we are even today, and we will continue to maintain that.
Okay. All right. We will leave it on that note. Thank you very much for joining in, and good luck for the second half. Well, that is the performance at VA Tech, Vabag, at the end of Q2. We'll take a break on that note. On the other side, we have our technical experts joining in, Sudarshan Sukhani, as well as Siddharth Rai, with some trading ideas for today.
Welcome back. Well, let's hop across to Hormuz. As always, he's here to tell us about all the big movers and the ones that had good amount of delivery as well. Hormuz.
Good morning, Nigel. And the capital market names were the ones that were the buzzword on Friday, and BSE was leading that charge. There's an almost 10% gain that the stock saw on Friday, which was the biggest in at least the last 6 months. And even on the volumes front, it was also the highest since May of this year. Now, over 2 crore shares were traded for BSE in Friday's trading session, which is almost 4x of the 20-day average of 48 lakh shares. And out of those 2 crore shares, 65 lakh shares were marked for delivery. That too is a 4x jump from the 20-day average of around about 15 lakh shares. Now, L&T Finance was the other one. It was reacting to its earnings call updates, a bullish commentary coming in there from the management. That stock was also up 10% on Friday. And the volumes were the highest since June of 2024. So in almost 17 odd months, the volumes were the highest. 7 crore shares were traded of L&T Finance. It's a 10x from the 20-day average of around 70 lakh shares. And even out of those, almost 2.5 crore shares were marked for delivery. The 20-day average here is just over 30 lakh shares. And the last one is Precall. It was an earnings reaction on Friday. The stock was up 9% in Friday's trade. Volumes were the highest since February of 2023 on the day when the deal announcement was made. And here too, almost 1.5 crore shares were traded. The 20-day average is only 1.5 lakh. And even here, almost 15 lakh shares were marked for delivery. The 20-day average is just 80,000 shares for Precall.
All right, Narmas, thanks very much for that. As always, an interesting set. We discussed BSE earlier. We'll discuss some of the others as well in a bit from now. We take a quick commercial break here. We'll come back, get you some top market voices from the CNBC TV 18's Global Leadership Summits and tech calls as well on the other side. Stay tuned.
Welcome back. Well, as promised, let's get in our technical experts. We have Sudarshan Sukhani of Technical Trends and Siddharth Rai Mangala of Stock Box Technologies, who joins us on the show. Hi, Sid. Hi, Sudarshan. Good morning. Good to see you all in. Sudarshan, you go first. The markets have been a little bit slippery. The good news was that on Friday, at least we recovered from the intraday lows. How would you trade the index? We like to start off with some green as per what the GIFT Nifty was suggesting.
Yeah, good morning. Well, the markets keep on correcting, and that was a very decent correction. So after that big gap up, a trading range, another renewed up move, the market decided to have a smooth and decent correction. See, corrections are welcome because they take the froth away from the market. So this is a very good day to begin trading today. I would say that the Nifty is a buying opportunity for the day, and hopefully for the next few days, keep a stop under 25,400 and look to buy the Nifty. Maybe you can say distribute your trades, something at the open, something at a dip, some on a consolidation. But I would be a buyer in the Nifty today with the stops I mentioned.
Okay, got that. Siddharth, what about you? I recall you being a little bit cautious on the index, and that call actually worked out quite well. Time to turn that around, or do you think we have further downside?
And thank you for having me, first of all. See, Nigel, Friday's short covering move was kind of a lot on the expected lines. I did discuss it with Survi in pre-market on Friday that after all that quick fall from the 26,100 around levels, the Nifty was looking oversold on Friday, and 25,300, 25,400, 25,350, 25,400, that range acted as a very strong support for the index. Now, Nigel, see, a full-blown recovery or a chance to buy for further up move will only be coming once Nifty manages to go above and sustain for some time above 25,500, because that's the most important level right now. So we did not see a closing above 25,500, a good closing above 25,500 on Friday. Now it stays the same. We have to watch out for this level in the first one and a half hour, because that is what is going to be setting the undertone for this market for the upcoming for this whole week. So 25,500 is going to be very crucial. If we go back above 25,500 and sustain for some time, we will be seeing an up move towards 25,700-ish levels. But 25,500 is going to be that level which we have to watch out for.
Gentlemen, morning. Good to have both of you here. What about specific calls, Siddharth? What would you trade?
Yes, sure. Hi, Prashant. See, two stocks, both of these we have to buy. The first one on my radar is UPL. See, the reaction to its quarterly results has been very good, Prashant. In fact, we are seeing a breakout above probably 3-year-old levels. So the breakout is very big. We can stay in it for the long term too. UPL can be bought. For now, the important levels in the stock will be that right now the spot is around 750. Stop loss will be at 729, and our targets being the first target 795, the second target 810. The second stock is Jindal Steel. See, there was a very interesting move in this counter in Friday's session. Initially, the stock was negative, but it did turn around very strongly from the 1,000 levels. We saw it coming back to around 1,070. So it can be bought here. Right now, the spot is around 1,070. The stop loss will be at 1,055, and our targets being first target 1,099 and the second target 1,115. Jindal Steel.
Okay, all right, got that, Siddharth. Thank you for it. Let's go to Sudarshan as well. Sudarshan, morning. What about your stock ideas for the day?
Yeah, good morning. See, M&M is a buying opportunity with a stop under 36.15. Paytm is a buy after a long time, stop under 13.20. HDFC Life is a buy, the stop under 7.35. So I have three buys, one intraday short, that is Glenmark. Keep a stop above 18.55. But as I have said, that I am a little beat on the market, so focus on the long.
Okay. All right. Got that. Thanks very much, gentlemen. We'll come back to you a little closer to market opening. We have Dharmesh, who's been waiting by patiently. Dharmesh, thank you for staying on. So just wanted to, toss these weekend earnings to you, if anything really stood out. You briefly mentioned Trent and Nykaa. Very different stories there. Trent continues to show a bit of a deceleration in growth. But Nykaa seemed actually better. Do you like any of them? And aside of this as well, any of the other key weekend numbers that caught your attention?
Yeah, I mean, Nykaa, the numbers definitely looked encouraging, but again, the valuations comes into play, and it's a long runway left before the valuation can, justify the numbers. I mean, numbers can justify the valuation. So we are giving it a skip. But Bajaj Auto number looks interesting that the export market has been doing fairly well, and if the domestic market picks up, then definitely a catch up on the price action compared to the relative peers may fall into place. Nalco is one number which we liked, greatly, just because all the parameters, all the boxes were ticked marked, and valuation wise is quite comfortably cheap. Going forward, as we see, global tensions easing down and more or less now, I think the reversal of tariffs may start seeing into place. So if that happens, then definitely aluminum prices will be a kicker going forward. So Nalco is the space which we like. And in pharma, I mean, there are particular counters which posted a good set of numbers, like Lupin numbers were excellent. Jadis Life Sciences came out with a strong set of numbers. Torrent Pharma came out with a strong numbers. So these are the plays where I think still the 2 months may still be muted on the index front, but these counters may do fairly well and a lot of upside left there just on the valuation count. So be stock specific, and there are many pockets where the numbers have been good and encouraging to ride the trend going forward into the month of November and December.
Absolutely. Dharmesh, thanks very much. Good speaking with you, and talk to you again soon. Well, just back to some of the opinion that we got from the Global Leadership Summit, and this is purely markets now. So S. Narain, one of the largest money managers in the country, Rhythm Desai, top equity strategist, Neelkant, who looks at things from a macro-ish, top-down perspective. I sat down with them, asking them what next for equities in 2026. Listen in.
The risk is something going wrong in US AI stocks, because if US is 60% of the global index, how do you expect India to go up when US is going down? So I think the challenge is US market. At any point of time, markets can correct, and I think, we look at a global guru like Warren Buffett. He has created the highest draw of cash at this point of time ever. And, he's the only person who doesn't care what happens in the near term. He doesn't have any performance risk. He doesn't have any risk that anything can go wrong just because he's underperforming. So I think what he's doing suggests that there is enough risk of US markets correcting. We think it's a mature bull market. So, there have been such good stock because in India that anything which has to be discovered got discovered. But a lot of people get frustrated.
That is like the efficient market theory.
A lot of people got frustrated. They buy in 2023, the share hasn't worked for 2-3 years. They get irritated, they start selling. So we found that in many sectors, people get frustrated holding a stock for 2-3 years, they don't get return, they come and sell. So we've been trying to buy wherever we find that the seller has got frustrated with holding stocks. Not like 2018 to 20 was very easy. You buy PSU, buy metal, buy telecom. All those stocks are very cheap. Today, all those sectors are not very cheap, but across, whether it is quality, whether it is many other sectors, you'll find someone coming and selling because they waited for 2-3 years, no return, they'll come and sell. So we buy across sectors, and we find like recently we bought oil and gas, and we found that it suddenly performed. Now, today, if you ask me, is oil and gas the best sector? I would say, I would think, because oil and gas has done very well. So we look across sectors at this point of time. But do we expect mega returns from here? For that, we need supply to come down. The day supply comes down for 3 months, this flow comes, our SIP flow keeps coming, then I think we have a good rally ahead.
India's relative valuations have corrected a long way, and we're now actually at levels which we don't see very often. So India does look far more appealing as a market to foreign investors. And the final point is that in recent months, the focus of global tourist capital, the one that looks at short-term returns, has been on AI. And India does not really offer an AI trade. So ultimate trigger point for the return of the FPI will be if the AI trade starts fading. I think India will suddenly start looking very attractive.
Roll forward gains in earnings are now starting. So for almost 3 quarters, we had all the roll forward gains, which is 3 to 3.5% a quarter, being offset by earnings cuts. So now I think that GDP upgrades have started. I expect that by the end of this fiscal year, the real GDP number will be upwards of 7. The reason why there is still a lot of negative sentiment is that nominal GDP growth has been coming down. And again, people have been extrapolating too far. So from 18% in FY22 to 8% this year, people think that this is a new trend line. I don't think so. We have been tightening fiscally and monetarily too much. Therefore, core inflation has come down. Food inflation has been falling for the longest period, as RBI has documented. So both of these will reverse. And so we are going to be back to 11, 12% nominal GDP growth in 6 to 9 months. And then the earnings cuts start to slow down. And they've started to slow down. I think maybe some earnings upgrades can happen. And the roll forward gains will start coming through. So I do expect that in the next 12 months, we should see much better support for India. In fact, foreign investors have been using, hedge funds have been using India as a funding shot.
Okay, well, at the margin, Neelkant and Rhythm, of course, sounding more optimistic, relatively speaking, but Naren, of course, echoing the view that, his big risk comes from what's happening out there in the US, not so much locally speaking. Well, I think it's time to get some more trading ideas. Sudarshan is back with us. Sudarshan, 9-10 calls. What do you have?
Well, it's M&M, buy M&M with a stop under 36.15.
Okay, Mahindra and Mahindra is Sudarshan's call. Well, let's just revisit and put the spotlight back on Trent and Nykaa on the back of numbers. Mangalam is back with us. Mangalam, morning.
Good morning. So Trent is actually basically readjusting to a new normal where the hyper growth period is perhaps behind the company. That's what brokerages believe. If you look at the numbers, is nearly 16% revenue growth. The reported EBITDA is a lot higher, but if you look at the company's own adjustment or calculation of that EBITDA, it's up around 14%, which implies that there has been some narrowing of margins, and the net profit is higher due to lower depreciation. So it's a growth of around 11%. But remember, over the past few years, Trent has seen a much higher growth than that. They continue to expand their store footprint when it comes to West Side as well as Zudio. But going forward, the street believes that maybe, normalized growth for the company would be around 20% as against previous few years where the growth has been over 35%. And that's what the stock will adjust to going forward as well. If you look at Nykaa, good performance continues. They are in their hyper growth phase. In fact, it's been the 12th quarter where revenues have grown in mid-20s. We have gross margins which are at a 12-quarter high. EBITDA and net profit have been the highest since its IPO. And at the same time, the gross merchandise value grew at 30%, which is the highest growth that we've seen in the last 6 quarters as well. Overall revenue growth of 25%, EBITDA growth of 53%, net profit growth of over 150%, 13 crore turning into 33 crores, led by beauty, reducing losses in fashion, and their own brands, which have seen a GMV growth of over 74%. Additionally, the company has also announced Deepika Padukone as their brand ambassador, and is one of the last, A-list stars which haven't been on Nykaa's list and now has entered as well, because you already have House of K Beauty and the other Bollywood stars.
And Nykaa indeed is holding up about 3% in the pre-open session. Thank you for that, Mangalam. In terms of result reactions, the other one to watch out for would be Nalco, which is about 3% higher. Nigel was telling us numbers were good. It was also Dharmesh Khan's top pick from the whole earnings pack, numbers that came out of the weekend. So Nalco is also looking good. Just a quick check on Bajaj Auto before we get started. Even Bajaj Auto up about 1%. Steady numbers, margins at 20.5%. And well-rounded growth, and the market's taking note of that. And given the fact that the stock hasn't performed, Bajaj Auto is actually down. For the last 12 months, it's down 11%. This year, it's been absolutely flat, underperforming the rest of the auto pack. So let's see if that changes or not. But yeah, just a couple of seconds to go now.
Okay, I think just taking a look at what the index looks like, and we'll get down to individual stocks, which is going to be more interesting. So it's flat, 25,530. It's about, 50 points, 60 points higher. And the Nifty Bank is up about 0.1, so not very much in the Nifty Bank here at this point in time. Midcap index is starting higher by about 0.25%. The small cap index will come up, and I think there as well, there is some amount of gains which are coming through. Yeah, about 0.25%. So I think uniform percent gains across the 4 indices. Nifty heat map will give you a quick sense of how we are starting as far as the broader indices are concerned. The Nifty 50 is concerned, so it's all in the green. I think there is Infosys, Bajaj on one end. Trent, as Mangalam has been highlighting, a little bit more in terms of readjustment to lower growth rates afoot there. So otherwise, I mean, it's pretty good looking screen. And Reliance once again is amongst the top gainers. Reliance is up about 0.75%. But let's get down to more names and individual reactions. Surbhi.
Okay, so on the large cap screen, taking things higher is Infosys, the winner of the morning. There's Hindalco, which is about 1% up. Bajaj Auto, like we just mentioned, is seeing a decent reaction to its numbers, 1% higher there as well. Asian Paints, L&T, Reliance is chipping in a little bit here and there. Eternal is managing a 0.5% gain for itself as well. And then it starts fizzling out. But otherwise, most stocks are contributing 0.5% to about 0.75%. SBI, ITC, Titan, all these stocks are up and about. On the flip side, Trent is showing a lot of disappointment. The growth numbers have been coming down. The company, remember, I think it was 2 quarters back, had guided a steady state of 25% growth, but it's not able to meet those numbers as well in terms of growth expectations. 4%, so straight away gone from Trent. Power Grid, Apollo Hospitals, Eicher Motors. These are some of the other stocks that are cooling off. So all things put together, the Nifty, for what it's worth, is still managing about a 60-point up move. So steady start. Nigel.
Well, the accent of the morning is transformers and rectifiers. The stock is down 20%, weak performance in Q2 because of executional challenges. The margins are at its lowest levels since Q3. Margins are down because of higher staff costs as well as higher OPEX. And, the street clearly is very, very disappointed with these set of numbers. Smacked 20% down on that one. Remember, these are one of these names that have seen a big run. And now, in fact, is coming for some intense profit taking. The other few stocks I'm looking at, Pennar Industries, well, that stock is down close to around 13%, so big selling on that one. HCL Engineering, well, that came out with a set of numbers. The street likes it. Stock is up 10%. Big up move is what we're seeing on that particular name. Nalco, I told you, the numbers were quite good. That stock is open up with a gain of around 5.5%. There are some reports that are indicating that Vedanta may not get Jaiprakash Associates assets after all. And Adani Group could get it. It's not confirmed, but if this is the way things, go about, then actually Vedanta shareholders will consider themselves as the lucky loser. They don't want Vedanta to go ahead and take another asset on board. So let's see how that goes. But for the time being, Vedanta up 1.5%. JSW Cement as well is up close to 2%. It's still more than 10% away from its IPO price. And keep in mind that we could possibly have supply that is opened up now because there was, 3% of the equity that was in lock-in. Today, that gets free for trading. Otherwise, plenty of stocks in the broader markets. Newland up 10%. Super move out there in reaction to its numbers. That stock is flying away. And Interarc as well, another management that will be joining in during the course of the day. That's up 6% as well.
Okay, so looking pretty okay for the time being. Newland, HCL Engineering, Nalco, good result reactions. Just watch out for Amber. Amber fell quite a bit on Friday after a disappointing second quarter. And it's down another 3% today. So 7% on Friday, 3% today. Bit of a knock over there. Hexaware is also down about 3%. Trent, by the way, is down 5%. So the market is really not happy with the pace of deceleration in growth. I mean, from an era of 50%, then it came down to about 30%. Then the company said they'll do at least steady state 20-25%. But this quarter has been below even that run rate. And I'm talking about top line growth. Trent, should be called Trent. That's the stock to keep an eye out on. Down 5% for now. Let's get Trent up if we can. I think it'll come up. Yeah, 5.5% lower on Trent now.
Some of these mid-cap, small caps are such big winners, right? I mean, how Nigel mentioned HBL. I was just looking at yearly charts on this one. 3 years, it's up 10x, HBL. Forget about the lows in 2020. That's, of course, I mean, that just makes it seem absolutely unnatural. But I'm just looking at the close in 2022, $100. And from there, it's come up to about 1,100. Super strong numbers. Look at the volumes pick up on this as well on HBL. Newland is the other one, right? I mean, again, of course, this one as well, 2022, close was 1,600, basically, 1,700. Stocks at almost 20,000 now, right? So some of them, you got to stick with them, which is, of course, harder said than done. Nalco is the third biggest volume-led gainer. It's up 6%, and Nigel was telling us about this earlier. Nykaa is there. Force Motors, of course, such a big winner over the years. Our power is back up about, our power has come off quite a bit from the highs, but it's coming up today. Lumax Tech, I think we mentioned. Interarc Builders, right? I think it's had a pretty decent run last 3 days. From about 2,200, it's moved up to about 2,700. 3 sessions flat. So they are into prefab buildings, prefab structures, I should say. and one of the largest actually in that space. Jain Resources is up 6%, Torrent Pharma is up 4%. So out of the gates, I mean, this is a pretty vibrant looking screen out there. 1,600 stocks are higher and about 900 stocks are lower at this stage. Surbhi.
I forgot to mention the sugar space, Prashant. It's a sweet start to the week. All the sugar stocks, look at Renuka, Balrampur, Bajaj Hindustan, between 3, 4, some even 5% higher. The reason is that the government has allowed export of 1.5 million tons of sugar for the sugar season. The industry was asking for, I think, 2 million tons. They've got 1.5 million tons. It's still 500,000 tons more than last year, at least. So exports coming in, and even the duty on export of molasses, that's been done away with. Yeah. So it seems to be
I think in sugar, I'm not, maybe Manisha will tell us more, but I think sugar prices have crashed. Globally, sugar prices have absolutely crashed. And maybe that is the reason why, you know, I'm just looking at Balrampur Chini's chart here. It's come off very sharply. I mean, I think in the month of August, its price was $600. It's at 450. You know, and of course, today, on the back of this, you know, the government directive, more exports allowed. Prices are coming up a little bit. But as I said, more with Manisha as we go along. Mahesh Patil is Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Mahesh, good morning. Great to have you with us here. Thanks very much for you joining us. You know, there is this Goldman Sachs upgrade in terms of their view on India. You know, it's basically calling for a 14% upside at an index level by the end of 2026. Sounds pretty reasonable, right? Given where we are. Although the point is how to play it, Mahesh. I just wanted your thoughts on it if you've looked at the note. You know, it's nothing not that we don't know and we haven't discussed in terms of the reasons and the sort of thesis which they're putting out. But would you agree?
Yeah. Good morning. So I haven't seen that note, but I think clearly, the optimism is coming in from the fact that we are now seen the period where we've seen last 4 quarters successively. We have seen earnings growth has been weaker. There have been downgrades to earnings. This is the first quarter where we are seeing that the earnings actually downgrades have halted, and we haven't seen any major downgrade. At least the results which have come in for the second quarter show that it's pretty much in line. And as we step into the third quarter onwards into the next fiscal year, the outlook over there on earnings growth looks better. Again, buoyed by a better top line growth, and also a lot of sectors, okay, which especially on the consumption side, the auto sector, because the GST cut would see a boost. So I think clearly, I think the growth trajectory now at least looking to go back into the double digits is what one is seeing. And the fact that on the global front also we're seeing the talks about the trade deal getting soon. I think expectation is that in the next 1 month, okay, the trade talks with the US should conclude. So that should improve the sentiments. And more importantly, the foreign investors who are kind of selling India last month of October, if you look at, they were net buyers. And clearly also they are also seeing the relative valuation of India is now no longer as expensive as what it was a year back. And that is also helping. So I would say that from here on, I think the market returns should broadly be in line with the earnings growth. Valuations are reasonable, I would say, slightly above the long-term average. But looking at the steady inflow, which is coming in for the domestic investors and with foreign investors coming back, I think the market should do better, at least compared to the last 1 year. That consolidation which has happened has also really meant that a lot of the weaker hands are out. And I think there is fresh set of investors, especially from global side, could come in. So I'm not surprised by the target. I mean, it could be anywhere between 10 to 14% in that range if you take a 1 year perspective.
Mahesh, hi, good to have you with us this morning. So let's talk about high growth companies and the market's way of looking at them. If you talk about the new age space, I mean, and each is charting its own sort of course, right? Nykaa seems to be on a path to profitability. The numbers have been looking better. But if you look at some of the others, I mean, Eternal, Swiggy is still raising more money, perhaps for further investment into the business. So how are you looking at this entire internet space? And now it's a little confusing, right? Because the company that will list today sells eyewear, but even, Piyush Bansal is very clear that they're a tech company at heart. So what do you make of this whole space and the approach to it?
It's interesting. I think in the last couple of years, we've seen now uh, uh, quite a few companies into this new age technology or the so-called disruptors which are there. And that is now, and quite a few of the IPOs recently and more in the pipeline would mean that you will see a lot more options over there in that space. And I think especially when we look at some of these high growth companies, they are coming in from a phase where very low profitability or no profitability, and that's where the initial period is very difficult to value them on a price to earnings multiple or a even EV to EBITDA multiple. And that's why we would normally look them at slightly longer term view. We would try to forecast their earnings for the next, say, 5 years, because over the next 5 years, the high growth would translate into decent or stable EBITDA margins and also a reasonable profit for us to really value them on a traditional multiples, whether it's EV, EBITDA or P multiple, and then discount that forward. So on that basis is what we will look at it. Obviously, the competitive intensity also is very important because just like what we're seeing in the quick commerce space, the intensity is still fairly large, and with multiple players trying to boost their balance sheets, that can continue to bleed. So I think that's another factor which needs to be borne in mind, that how the competitive intensity is, whether it is settled. If that is the case, then it's fairly easy to really project the earnings going forward. So this is a space where we would take small exposures, build up a basket, and then watch the progress whether they are meeting these high growth targets, and then progressively build exposure in that space. But again, that's a space which is opening up pretty well, and we've seen good performance of some of these stocks in the last 1 year when the market has been flat. So one can't ignore that sector, and most of the new age companies are good quality names. They are dominant in their space. They are market leaders, and that's what gives us comfort over there.
All right. Hi, Mahesh. Good morning. Good to see you, Ben. What about Lenskart? In a few minutes, we'll have the first rate on that one. Plenty of debate. Great business. Valuations questionable, but great response is what they got. We'll have to see what is going to be the listing price. But any view on this one?
Well, I wouldn't. We have also participated in this IPO. Would not like to comment specifically on the company, but again, good companies, good management, strong market positioning, a significant moat. I think these are the factors which we look at in some of these names. And while the initial valuations would look expensive, it's more about also looking at the promoter, right? If we like the vision of the promoter, his ability to not only play that market, but also to pivot at various points in time to really give a new dimension. And these are some of the things which we can't really kind of encapsulate in the multiples. And those are factors actually which we look at when we look at a company, say like Lenskart or any of these new age companies.
So Mahesh, what's the pivot, if any, if I talk about the overall portfolio call that you're taking right now? As we get through the second quarter earnings, any more changes? For instance, let's look at consumption, because that's the big hope, right? Second half, that the consumption side of the market will revive in a bigger way. So have you made any pivots to that effect? And if yes, and in which pockets of consumption?
So when the GST cut and the whole change in the narrative, towards consumption, which has been an underperforming sector now for the last more than a year. So that makes it much more interesting for us to look at it and names over there, which and it's also a sector, especially which is underowned in a sense. So within that, I think auto is one sector which has already seen some amount of re-rating and rally, but I think it will still continue. I think the growth rate, what we are seeing in the festive season, if that sustains, though even at a slightly lower rate in the next 2 quarters, I think this is a sector which can still see some amount of outperformance over there. Consumer staples is another sector which is still not, last quarter was not that great, but the real impact of the GST cut will come in the ensuing quarters. And there the growth has been fairly weak. We would anticipate that with the overall interest rate cuts, higher disposable income, one should see a better growth volume growth across in the coming quarters. And this is a sector again which is underowned, so that can be a good contrarian play to play out, where we could also see margin improvement because the commodity pressure which was there last year seems to be easing off over there. That's another, I think, pivot which one can look at. But by and large, I would say that we are, I mean, the market, we are not seeing any big tailwinds across the sector. So it will be more a bottom-up kind of a market. I think companies are also reacting more to their financials, whether it is positive or negative. So it's going to be more stock-specific rather than taking any large sectoral call at this point in time.
Okay. All right. Fair enough. So more of a bottom-up approach. Got that. Mahesh, good conversation. Thank you very much for joining in. You have a good day and we look forward to connecting again soon. Well, as we move back to corporate conversations, just a quick glance at the screen, and it's still a pretty steady open, about 66, 67 points higher. It's more about individual stocks today. For instance, transformers and rectifiers that Nigel pointed out slammed on bad results, or, well, let's just say, less than expectations result. 20% lower on that stock. Medanta is down. Global Health is down about 3% as well. Nalco is soaring, about 8% up on Nalco. Torrent Pharma, 4%. So it's all about individual result reactions playing out. Speaking of result reactions, the market gave a thumbs up to Bajaj Auto second quarter performance as well. We've seen a pretty healthy set come through for Q2. Resilience coming in terms of the margin growth, largely aided by the move in the rupees as well, and the export volumes looking healthy, looking pretty healthy, good recovery over there. Let's put all of this in perspective and the way forward for the company. Mr. Rakesh Sharma, the Executive Director at Bajaj Auto, is with us. Mr. Sharma, thank you so much for joining in. Always a pleasure to have you with us. So it's the export markets are really fired up for you. The margin picture is looking very, very robust overall. But I want to start by getting a color on the domestic piece, because the first 2 quarters of this year have been very subdued for the domestic business. But now with the GST cuts and the festive season looking good, like you told us last time we spoke, what is your expectation and, what is your projection for H2 for the domestic two-wheeler business?
Good morning. Yes, the industry was sort of languishing in the April-August period. In motorcycles, it was a tad negative, -1%. And I must say the GST rate cut timed with the festive has catalyzed the industry back into growth. So we are looking at, give or take a few percentage points, but in the band of 6 to 8% growth. But in the coming quarters. However, the other story which is sort of hidden under those overall numbers is the quality of growth. What we have seen that in this 45-day festive period is that in each sub-segment, the higher end variants and the better products, the better models have far outstripped the performance of the base models. So whether it's a 100cc, whether it's a 125cc, whether it's above that, we find that our N series, NS series, which are top of the line products, our KTM and Triumph models, they have grown very fast. So it's not just the quantum of growth getting corrected, but I think it's the quality of growth, which is now again reinforcing the up-trading trends which were there, but they've strengthened them further. So that's very good for us because, as you know, we focus on the top half in the 125cc plus, and we are expecting, therefore, to harness this trend.
So that's good to hear. And when you say that in the second half, industry is going to grow at 6 to 8%, what does that imply for Bajaj Auto? I mean, how much better than industry, or would you be in line with the industry?
Well, our focus is the 125cc plus segment, and we hope to outpace the industry. We saw, a reversal of trends somewhat in the September-October period, where we have begun to claw back some market share. So going forward, basically in Q4, because the remaining parts of Q3 are going to be a little, will languish after the huge festive. But yes, come Q4, and we think that we should be expanding market share in our core strategic area of 125cc.
Can you give a sense of how much that expansion could be in your area of focus, which is 125cc plus? I mean, where is the market share right now? What percentage point gains do you think will happen looking at customer preferences?
Yeah, so in October, our assessment is that we have come in at about, I would say, from a registration point of view, we have come in at about 21%. We would be looking forward to adding to that. Now, that's a mix of, competitive reaction and how exactly the segment grows, etc. So the lineup for us and the momentum from September, October is suggesting that we should add to market share, but precisely how much, I'm also very keen to understand that, but I think that will reveal itself more by March or so.
All right. Hi, Mr. Sharma. The other, the strong point has been exports, and that's been seen a very, very healthy recovery. And what's heartening to see is now you're not dependent just on one geography. You've got it spread out a little bit. So a couple of questions out here. I think you clocked 2 lakh units. You expect to hold on to these sort of numbers on a monthly base? Point number one. And point number two is in Nigeria, I think the festive season starts. So what kind of a run rate should we look at from Nigeria?
Well, we've reached the 2 lakh mark after, I think, about 40 months. So that was a very welcome outcome. We are hoping to maintain the growth tempo, which is between 15 to 20%. There is a little bit of seasonality, which is there where, after the festive, which generally in LATAM and all starts from Thanksgiving and extends up to New Year. So that is almost over from a shipment point of view. But I think we will continue our 2 lakh plus performance, hopefully in November. And then we will see a slight dip. But I think the growth tempo will continue. Nigeria is in kind of an equilibrium where we are doing about, between 20 and 30,000 units. This is also season time for Nigeria, and we are hoping to really capture a disproportionate share of the growth. But Nigeria has not yet come back to, the 50, 60,000. In the past, when we have done 2 lakh plus, Nigeria would account for 50, 60,000. And currently, it is accounting for about 25,000. So you can imagine the kind of swing which has taken place in LATAM and parts of Southeast Asia, etc. So we will see how Nigeria goes. But it seems to be in an equilibrium in this 25 to 30,000 range. And but if their macroeconomics, if their currency is stable, that country is capable of much more. But we are going to take it month after month.
All right. A shorter conversation than usual, Mr. Sharma. Thank you very much for joining us. Really appreciate your time, and best of luck as you continue to execute. Piyush Bansal of Lenskart is speaking at the NSE as he gets ready to ring the bell, bring Lenskart into the listed space. Listen in.
Lenskart Foundation exists to make vision a right and not a privilege. It's deeply personal to me. When I left Microsoft, it was by a speech from Bill Gates, which said, "From those to whom much is given, much is expected." The foundation is led by my wife, Nidhi, and it keeps purpose alive every day at home. Years ago, I met Ronnie Screwvala, who became an investor. And then I saw on the internet a Swadesh Foundation video of an eyewear van. I immediately picked up the phone and called Ronnie. "This one is ours to do, not yours." That moment stayed with me because I knew the responsibility belonged to here, with us, with me. Over time, it's grown quietly, one village, one school at a time. Not to make headlines, but to make vision reach where it's forgotten. When one child sees clearly for the first time, that's our true profit. None of this would exist without the people who built it. If there's one thing that I've learned in this journey, is that a company is nothing without its people. The engineers who write the code, the designers who shape every curve of the frame, the optometrists who test eyes, the store teams that open the shutter every day before sunrise, and they greet the customers. Our home eye checkup teams which visit home. You are the reason Lenskart exists. You are the builders of this dream. A big round of applause for all of them. To my co-founders, Amit, Sumit, and Neha, and to those who have been part of this journey, Ramnik, Ashwini, Shuji, Take, Marco, Borga, Surain, the GeoIQ team, and many more who care about this dream as much as I do, and usually even more. I'm forever grateful. At Lenskart, we believe profit is oxygen. It keeps us alive. But purpose is breath. It keeps us human. Lenskart has always been a purpose-driven organization. For over a decade, we have stayed focused on one single mission: to make high-quality eyewear accessible to all.
All right, well, that's Piyush Bansal, and we'll hear more from him in a bit from now. I think about 20 minutes more, and the bell will go, and Lenskart will be part of the listed universe. We take a break. AkzoNobel reported numbers, and we'll talk about them with, of course, focus on the outlook. Pains in focus on the other side.
Welcome back. Well, we have got the initial rates with regard to Lenskart. It's settled at around 395 rupees. That compares with the issue price of around 402 rupees. I recall in the run-up to this IPO, there was some kind of, premium that was there, which got totally nullified on Friday. And now I think it's opening up, back in line with what the grey market discount was suggesting. So I think around 3-4 rupees is what it was suggesting. It's opened a little bit lower. So we'll just get back to that in just a bit. And Manglam will join in as well to give us a quick check on the valuations. Let's focus on a couple of good numbers. Nalco, the top line growth was close to around 7.5%, which is good. But the real beat came on the operational performance because the operating EBITDA, that popped up by close to around 25%. which meant the margins came in at around 45% or thereabouts. And both the segments, if you're looking at the chemicals, which is actually the alumina business, out there they clocked close to on 620 crores. Much better sequentially, much better on a year-on-year basis as well. And the aluminium business, well, that came in at close to around 1,200 crore rupees, a direct beneficiary of the LME aluminium price move, and that was on perfect display. So on the top line, there was a good growth, and on the cost front as well. High amount of captive coal, it appears, is what they consume. So cost of power was down, and employee cost as well was a little bit lower, which led the profit number to pop up by more than 35%. On the volumes front, the alumina volumes was up by close to around 40%. A sweetener came in because they've gone ahead and given a dividend of close to around 4 rupees per share. And they've also promised that currently the alumina capacity is at around 2.1 million tons. There'll be 1 million tons that will be added in the middle of 2026. So put everything together, strong trends in the aluminium market. Nalco is flying away, up 7.5%.
Okay, and I think we do have the management of Akzo Nobel now joining in. So let's discuss the quarterly trends. The company reported a mute set of numbers. Numbers were slightly lower on account of course, the carve-out and sale of the powder coatings business. Rajiv Rajagopal, Chairman and Managing Director at Akzo Nobel, is with us. Mr. Rajagopal, thank you so much for joining in. So let's start with the broad trends first. In terms of volumes, Q2 and beyond, when the sentiment turned around thanks to the GST cuts, I mean, what are you seeing and what are you projecting for the rest of the year?
Good morning, Surabhi, and good to be back, and thank you for having me on your show. Look, I think as far as volumes are concerned, the last quarter after the prior quarter was a strong quarter. We grew 3% in volumes. Remember that our growth, both in decorative paints and in our coatings businesses, largely come through premium. So I think one of the great things that we've seen, which is, I guess, slightly different from some of the other industry players, is the fact that we grew in premium. We grew mid-single digit in premium, and that clearly shows us that we are poised well. Where we've had an issue is really on the larger part on the mass economy, because there was heavy discounting and pricing-led actions in the market, and we chose to play very selectively there. We've come back pretty strongly. We also have taken some price corrections. Yeah, so I think from a volume perspective, I think we are now going to move to a high single digit. In the coming quarter, in the current quarter, we should be at between mid to a high single digit, and then go to double digit in the next quarter. That's the volume.
So that will take the total second half volume growth to
about a mid-single digit now, because the reason for that, Surabhi, is that if you look at the volume growth is largely coming from mass economy, construction, chemicals, and putty. And those are not the segments which have been our core competencies. Construction chemicals, we are just about to launch in the next month, in December. So hence, you would see a slight gap. But once we launch, we have tested our products. We do a lot of checks at our lab before we bring it to market, because we want to make sure that our products are of Dulux standards, and hence we've taken a bit of time rather than rushing in. But those are slightly lower margin products, and hence for us we need to also make sure that we are closer to market, because otherwise it's margin dilutive, right? So our entire infrastructure setup, etc., is taking time. But once we get in, you would start seeing the volume growth coming back to double digit.
Okay, all right. So what should margin look like then, for the second half of the year? Because there will be some benefits, sale of the powder business. You also have lower royalty rates as well. Give us a broad range, sir.
Yeah, so Nigel, good morning. So, just a quick one. First and foremost, you have to look at the revenue and all the figures net of the powder, the carved out business, which is powder, IRC business, etc. And hence, if you look at from a revenue perspective, we were down first by about 1.5%. Let me explain that. So I told you volume has grown for us. Our mix has not been hugely adverse. Our entire drop is on the price. And why? Largely led by decorative, because we are transitioning, as you know, to JSW paints eventually. So hence, I think the brief, and we are following the brief which we've got, which is to get aggressive and make sure we participate in every segment and drive top line. So the focus is going to be hugely on market share. But to your question, I think I would like to say our EBIT margins we will keep, as I said in the investor call on Friday, guidance between 14 to 16%, while we are aggressively focusing on our top line.
Since you brought up, the new Akzo, so to speak, with the merger moving ahead, just tell us what else is changing. So one clear, change in strategy or renewed push that we're seeing is that you want to be in all segments. The brief is, like you're saying, is to be aggressive. Give us some more color. What will that aggression really look like? And how is the overall competitive intensity? You know, very interesting times, because we were speaking with Berger Paints and we were talking to them about what the changes at Birla Opus really mean. I mean, the exit of the top executive there suddenly got the market very excited, thinking that the aggressive intensity from the Birlas is going to die down. But from what you say, I don't think it's dying down from the JSW group.
Well, look, I think, Surabhi, let me take the second part of your question first. Look, firstly, I don't want to comment about people. I think it's not right. We respect all players in the market, and I think that's the way we've been. Coming specifically to, do I see the competitive intensity slowing down? No, I don't. I think on the contrary, I see this going to continue for about a year. I mean, people, and this is, I'm not just talking of, the Birla Opus, but if you look at all the players who've come in, they put sizable amount of capex and money into the businesses. So we should expect competitive intensity to continue, at least for a year, if not a year and a half, is my view at this point of time. And so we are poised because, to me, I think it's important to have a ground reality of what it is. Yeah, I think, yes, there has been a recent trend of, of Birla Opus maybe in a month or quarter, but I don't think that's you're comparing to a standard which is, if you look at what we've achieved, is not small, and hence we don't want to take, we take notice of every competitor, and we don't want to sort of, let go right now. On JSW Paints, I think it's very important for Mr. Parth Jindal. I think it's more appropriate for him to answer once the entire deal closure happens. I think, and perhaps after that, maybe it's appropriate for me to comment, Surabhi.
Okay, all right. Let's talk about your business then. Post the sale of the powder coatings business and the other smaller business, you'll have some cash, right? Some liquidity has come in. How do you use this money?
So we are going to use it to continuously drive growth. I think the focus has been, Nigel, to be consistent with what I've said in my previous interviews. We are investing behind our brand. If you saw, we just did a campaign on Lage Shandar, Chale Shandar. Remember that in 2021, we were the first player to actually bring this entire warranty into the market. But what you've seen is both the largest player and the recent challenger, both trying to stake claim by putting huge amount of monies on the campaign. Hence, I think our agency did a fantastic job with our marketing team. We said that, look, it's quality that delivers warranty. And we are very clear that Dulux stands for the best-in-class quality in paints, at this point of time anywhere in India, if not worldwide, right? So hence, our focus is to bring that simple message to our consumers, and we are seeing some good uptake. The fact is we grew mid-single digit in premium. It's slightly different from the narrative that you've heard, maybe other than one player. So I think that tells you that's a testimony of the fact that we continue to focus on premium. You can continue to expect a lot of innovations coming in the coming months and in the quarters ahead, and both. And we are going to straddle across price points. We're going to straddle across the portfolios and start intensifying our efforts to start getting market share.
Mr. Rajgopal, thank you very much for joining us, sir. Good speaking with you, and good luck to you and your team. It's always great speaking with you here on CNBC TV 18.
Thank you.
Well, let's just go across to the management of Niva Bupa now. So, general insurance industry growth slowed in October, with certain players performing strongly. We have Mr. Vishwanath M, ED and CFO of Niva Bupa Health Insurance. Mr. Vishwanath, great to have you with us here. Good morning. I don't think we've spoken after your second quarter numbers, which is July to September. And of course, after that, you've also reported, October numbers. That is the monthly numbers as well, which have now come through. So, I mean, I guess we can go backwards, right? Look at the latest, which is what you've seen in October. So 50% retail growth is what we pick up you've managed to do in October. That's a monthly number. And the ticket size in October is some 15% higher. These are very strong numbers. Could you give us a sense of what happened in October?
Yeah, good morning and thanks for inviting me to the show. So let me just decode October numbers for you. So one thing which has happened is this GST, and it is a very, very positive impact. And as you know, we all decided specifically I can talk about our company, to pass on the entire GST benefit to us. And the idea of this is that volume should increase, and that's what we are seeing. So so the reported numbers are slightly different. So 67% overall, 50 plus 56% retail. But if I just give you a like-to-like number, which is without 1/n, and that's what we have been, suggesting to look at. So in the Q1, in fact, in the H1, if we see April to September, our retail growth like-to-like was 28%. The same number for October is 40%. So that's the kind of uptick we have seen. So 2-3 reasons. One, of course, is GST. There was already very good awareness of health insurance post-COVID, but this has also gave boost to affordability, the GST exemption. And second, we launched a product, Reassure 3.0, that has got very good reception. So this is a combination of 2-3 things. Of course, there's higher awareness, there's interest for this category, and that's now converting into actual sale.
Yeah.
And we have product.
Can I come in, sir?
So these are yeah.
Yeah. Sorry, you're saying that retail premium growth in H1 was 28%, right?
Yes.
And in October, that like-to-like number is up 40%.
40%. That's right. Yeah.
And the entire GST cut has been passed on to distributors.
That's right. Yeah. To customers. And the GST, this exemption is passed on to customers. What that means is we have not increased rates.
Yes, that's what I meant. Sorry. Yes. You've not, you've passed it on basically to end consumers. Yeah,
that's right. Yeah.
Okay. And this 1/n, which is basically accounting for premium over the term of the policy, these numbers are based on that method?
The one which I quoted you, that 40% retail growth, are without that 1/n. With 1/n, it is higher because, this was implemented 1st October 2024. Now the premium which was deferred has started coming in, and which is true for the entire industry. The numbers are there in front of you.
And why is the average ticket size gone up as well?
So
any particular reason?
Yeah, one is related to Reassure 3.2, the new product. Second is also because people are upgrading their sum insured. Those who are renewing, not only the persistency is high, but they are upgrading their sum insured. So upsell, cross-sell is also one factor. And of course, with the high affordability, people are going for high ticket size products.
Got that. There is also some talk that health and general insurance companies were in talks with hospitals to find some arrangement on rate increases by hospitals. Have you reached any such agreements? You can tell us?
Yeah, so that's one project which has been taken at General Insurance Council level, which is industry body. And they are looking at few things. One, of course, is standardization of tariff, common empanelment, standardization of protocol, admission criteria, etc. So that project is going on. It's slightly longer term.
Okay.
But what I understand, it's gaining traction.
Last question, sir. Fettletone, which is an investor, they have about 8, just under 8%, and we understand they're looking to sell about 5% of that. Anything you can tell us?
About Fettletone, it is a true north vehicle. Of course, being private equity, it has finite life. At some point in time, they will exit. I'm not sure about the timing. But one thing I can assure you is it's going to be a very coordinated sale. They are very, very responsible investors. So we don't have to worry about supply overhang if that's what you're alluding to.
All right. Thanks very much, sir. Thank you for joining us. Appreciate it. And we'll talk more. I think Lenskart is what we want to focus on. And that's the much awaited listing on your screen. Piyush Bansal and other company officials, along with, of course, family, friends. And I guess I can see Mr. The exchange officials as well. It's starting about 8.5% lower and at about 370 odd rupees or so. So 30 rupees lower on Lenskart. At the word go, that's the first tick which is coming through. I mean, one of the most discussed, debated IPOs with regards to its valuations in recent times. So 402 was what the company sold stock at. and it's listed at 395. It's at about 357 at this point in time. So 10 or 11% lower at this stage. Guys.
No, but I'd just like to say that obviously, and this is going to be a big headline, that day one of Lenskart, and we don't know, it's still a long day ahead. Right now, the stock's down 10%, but I just want to say that companies like these have a much. It's just the start, and that's what Piyush Bansal said, that this is day zero for him, even though it is listing day. And I just want to take our viewers back to what happened when Eternal listed. There was a fair amount of excitement, and then the stock went through a very, very, deep, rough patch. There were further investments in the business, and then Eternal managed to come roaring back and regained a fair amount of confidence. So, I mean, these are different companies. They're big disruptors, as Mahesh said. And, I think the debate on what Lenskart will really bring to its shareholders, current shareholders and future shareholders, that debate is not going away anytime soon. And Nigel, I'll be very interesting to see, at what point do buyers start coming? Because with Lenskart, the entire debate was not about the business. I don't think there was anyone doubting the business potential. They're in foreign markets. 40% of their revenue is coming from overseas. They're looking at all kinds of tech. So there was no debate about the business or those who are running the business. The only debate was on the price. The price is adjusting, and we'll see what happens.
Well, that's right. Hard to buy a stock when it comes at around 11 times price to sales, right? So that was the issue of valuations, but no two doubts about it. They built a very, very good business. Business was good. Problem was in terms of the valuations. The stock has pulled back close to around 10% from the peak. And I'll go with you, Surbhi, as you're saying that we have seen various issues where the listing is blockbuster and then the stock loses its way.
Absolutely.
Will this be one of those that, you have a soft listing and then you see some kind of stability? Let's see how it goes. But for the time being, stock down 10%, or now it's down only around 5%.
I think given all the concerns around valuation, etc., tepid listing, what was expected?
Yeah,
So I think it's par for the course in that sense. So it's a 10% lower, and now it's down 5, right? So and it'll move around today till it finally figures out some kind of even keel, some kind of equilibrium. It's just very, very early days. Absolutely par for the course, I would say. And that's actually, this is what it was expected as well. So, and that's what's actually happened as well. I hope we get a chance to speak with Piyush now after the company is listed and made its debut. And we'll try and do that. I think everyone is there at the NSE. Our colleagues are also there. We'll try and see, get a quick sense and quick response. We, of course, cut to him earlier making that speech into the listing 20 minutes before, but more as we come through here. So that's Lenskart, one more addition into the listed space. Large company now, market capitalization, I think, big one.
Stock's recovering also. We must, keep that in mind. Started almost 10% lower. It's recovering also. So it's telling us that, debate between buyer and seller, it's a beautiful one, and that's exactly what the market is made up of. So right now, Lenskart already on recovery path. Nigel, you wanted to make a point?
No, I'm just, just looking at the volumes. Massive traded volumes in the first minute, 1,400 crores on the NSE itself. Massive, and by the end of today, I'll be interested to see whether or not there are any large funds that come in, to buy into this issue, because you got a big dip of around 10%.
Look at the recovery.
Let's keep an eye out on that. But for the time being, 8% off the lowest. Lenskart going to be a stock that we'll be talking about all through the trading session, and maybe for the next few days as well. More actively, we'll track that one. Slip into a break, come back. Manisha Gupta is waiting for us. She'll tell us about what's going on in the commodity space. Stay tuned.
Welcome back. Well, it's a steady morning for the equity market. Let's find out what's happening in the world of commodities. Manisha, what's capturing your eyes?
Well, plenty of things really, Surbhi, because when you look at the gold prices, we are back above $4,000 an ounce. Sugar exports have got a yes. A lot of pieces to look at, but I really want to come to what SEBI came out with over the weekend, where they are warning on digital gold being offered on online platforms. And this is coming in on various very, very credible platforms. Remember, this place is not regulated, and that's exactly what SEBI goes on to say and warn as well. They say that the digital gold is unregulated, one, it is not notified, not securities, and not regulated as commodity derivatives as well. So it is a bit of a gray area when you look at digital gold in that sense, but we have seen a lot of euphoria around this. It also says, the SEBI notification that also says that it may expose investors to counterparty and operational risk. There's no grievance hearing into this one as well. We have seen gold prices make 53% of gains in this year, and not everybody can buy a lot of gold, and is the reason a lot of people were buying fractional tokenized digital gold in that sense. Now, SEBI says what you can though buy is exchange traded commodity derivatives, gold ETFs, gold mutual funds are also there that you can buy it via. And then, of course, there is electronic gold receipts that is tradable on exchanges are the some products that are regulated at this point in time. Anything else that you see in sense of schemes or digital gold, online gold, etc. is not regulated. And SEBI has come out in sense of warning for that one. Another important thing now is to tell you on what really digital gold is all about. Now, this is offered by payment apps. It's offered by some jewelers as well, some fintech companies also. And interestingly, it does allow the users to buy gold for as less as 100 rupees, 10 rupees, even 1 rupee in some of those platforms. So this is something that you see as a 24/7 market. You can buy gold anytime, anywhere. And it usually is the age group anywhere between 25 to 45 that really seems to be buying a lot of digital gold at this point in time. Interestingly, when you look at the key features, what you buy gold in sense of is 24 carats. The other thing is about storage. Whatever gold that you buy is bought and stored in insured third-party secure vaults on the customer's behalf. The other positive thing that a lot of consumers saw within digital gold was about accessibility. As I said, you can buy as low as 10 rupees when you want to buy that fractionized gold. There's good liquidity as well because you can buy, sell, trade at any point in time on market prices there, and redemptions can happen in cash, or you can buy physical gold into this one as well. Now, who offers all of this digital gold? There are very, very strong names coming in here. You have all these fintech companies, online platforms like Google Pay, Phone Pay, Paytm, Amazon Pay, all of them give digital gold. It also is about investment platforms like Grow and Zerodha. You can also buy digital gold onto this one there. Then you have jewelers like Tanishq and Kalyan and Carrot Lane. And you have service providers like Augmont, MMTC PAM, Safe Gold, Digital Gold also providing that. My final chart should show you on what really is the digital gold market within India. It is an 8-year-old market. Companies themselves have been asking for the product to be regulated because so many people right now have bought gold. Well, actually, when you import 800 tons, digital gold market right now is perhaps 1 to 2% of that. But even with that, the digital gold and wealth tech platform market is valued at 15,000 crores as of now. Industry reports suggest that it's going at a CAGR of 25%. And when you look at the overall number there, well, the UPI transactions when it comes to buy digital gold doubled between the first half in this year itself. And that perhaps is the reason that SEBI had to come out and warn about that. So very, very strong volumes being done. And 2025 clearly has been a record year in sense of digital gold and digital silver buying. Thus the warning.
That's a great point, Manisha, and you explained it so well indeed. Because in the last couple of years, a lot of people just gravitated towards this. It seems simple and easy, and you could buy gold in such small quantities. But the regulators made its stance very clear that we're not regulating it. So if you're buying at your own risks. Thank you for explaining that to us. Well, on that note, we'll take a very quick break. On the other side, we have our special segment, It's the Economy, coming up. Lata will be in conversation with Sonal Desai of Franklin Templeton Fixed Income on US yields, dollar and the rupee.
Welcome to It's the Economy. While US equities have ruled the roost despite occasional bouts of doubts over AI stocks, US 10-year yields have mostly remained above 4% for a better part of the year despite so many rate cuts, partly due to strong data or doubts over the fiscal deficit, especially if the US Supreme Court holds the tariffs illegal. The higher yields have recently strengthened the dollar index as well, the DXY, to nearly 99. The market is still divided over another rate hike from the Fed, and despite strong ISM data, there are doubts over growth everywhere, not just in the US, because of political uncertainty. To get a fix on everything concerning US bonds, Euro bonds, yields, dollar, yen, rupee, I have with me Sonal Desai, Executive Vice President and Chief Investment Officer with Franklin Templeton Fixed Income. Sonal, pleasure having you back in India with us.
Lata, it's so nice to be here with you.
Thank you. Okay, let me start at the beginning. Okay. How many rate cuts so far? And still, the US yields have remained, the 10-year yields have remained above 4%. What's the forecast for the coming year? Do you see it dipping because of Fed cuts?
No. Actually, so the short answer is, I don't think. I think you're exactly right. You nailed it. The Fed has cut so much, all the way from 550 now to 375. And indeed, US 10-year yields have remained stubbornly above 4. They keep trying to break 4, but they don't get there. And I think that this is a combination of a couple of things. Certainly the fiscal issue, and in the last few days for sure, as it becomes more and more likely that the Supreme Court will express some concerns at a bare minimum on the tariffs, and we start seeing that 10-year yields start inching back up. But you know, to me, the curious thing is not that 10-year yields haven't dropped below 4, but more that they're not at 450 or a little bit higher still. And let me explain why. I think that the Fed currently, with its rates at 375 to 4, far from being moderately restrictive, as Jay Powell says, I think actually they are looser than neutral. And if we don't believe that the US economy is going to tumble into a recession, is going to face a serious slowdown, there is no real need to have rates cut more from here.
Okay. But you know, there is an argument that globally growth will slow, partly because of political uncertainty. You don't see that as an argument that, you know, immigration questions, tariff questions, doubts over growth is not a reason for yields to fall?
I think those doubts are very interesting because I think they're sentiment-driven rather than data-driven. So let me first talk about... And data is strong. And the reality is, let's take a step back and talk just about the US for a moment. The US is effectively, from my perspective, a large closed economy. Before you get worried about this, I'm not saying the US doesn't import anything, export anything, but the US is a $30 trillion economy. 70% of 30 trillion is consumption, 21 trillion. 70% of consumption is services, not tariffed. You keep bringing it smaller and smaller and smaller. Finally, you get to imported goods. 50% of those imported goods are actually excluded from tariffs. So in the end, tariffs, you know, even for the US, tariffs in and of themselves were never a reason to create a growth slowdown. And separately, imports deduct from growth. They don't add to growth. Globally, it is a slightly different issue. You know, different countries to varying degrees depend on exporting to the US. But in the US, I am not sure that we have seen a significant growth slowdown. I'm happy to talk about things like the labor market.
So in your base case is that there are no more Fed cuts and definitely not in December?
So I would say at this point, we have a government shutdown. So, you know, it's always feasible that by the end of this week or next week, you know, BLS reopens, the government reopens, and we find some shockingly weak data. That is not my baseline. Because right now, what I'm guiding myself by are things like the higher frequency private sector labor market reports, the equity market earnings reports, all of which are still pointing to a relatively strong consumer. And therefore, I'm not anticipating drama from the data when it comes. But suppose it comes. Supposing you get that drama, yes, they will cut. But if you don't get that drama, I think it would be quite reckless for the Fed to cut in December. Do I think the Fed would cut one more time still in this rate cutting cycle? It's possible. It takes you now to 350. And now, to me, you are 50 basis points loose. And that starts becoming interesting because a lot of the tax cuts, the fiscal expansion embodied in the big, beautiful bill, they come in Q1 of next year. Suddenly, people get tax rebates. Firms have an incentive to invest even more because they get immediate depreciation. So I think some very useful things come to, which act as tailwinds for the economy.
Fair enough. So then the reasons for cutting kind of disappear.
Yes.
Let me come to the dollar index, therefore.
Yeah.
Is it headed higher then, or at least it's not weakening?
I think what we saw in the first half of the year, that dramatic collapse of the dollar.
From 106 to 100.
100. And if I think about the more narrow version, which is if I just look at the G3, the yen and the euro and the dollar, and everyone said, oh, the dollar has depreciated so much, it's depreciated so much. I think what is underestimated is how strong the dollar was coming into this year. In real terms, the dollar was at its strongest level since the Plaza Accords of the 1980s. We've gone through several years, US exceptionalism, all this type of stuff, attracting massive capital inflows. And the dollar was so strong. Against the euro, it was at close to parity at one point.
Yes.
Today, we are at 115, 116. That's close to fair value. So I think we got a dramatic depreciation at the start of the year. 3 reasons. China DeepSeek.
Yes.
Germany suddenly issuing a lot of fiscal stimulus. And then the famous Liberation Day tariffs, which really got everyone worried.
Okay, fair enough. So your any range for the DXY?
So I'd say
first
right
half
now,
of next year?
No, I'd say that there will not, I don't see right now extremely strong directionality. Supposing the tariffs are ruled as being illegal, that means, you get larger fiscal deficits. The interesting thing about larger fiscal deficits, you might see a yield sell-off, and that actually attracts some inflows. It starts becoming a little bit more two-sided as to whether you get a little bit more dollar strength or you are somewhat range-bound.
Okay, ranged. Let me come on in that context to the rupee, though I want to speak about the yen as well to you. We have seen the rupee have a bad or a weak, I call it bad, have a weak 2025. Is it about at the bottom?
I hesitate to call at the bottom. For the reality is we don't have the final tariff picture yet for India, and exports are going to have a certain impact. So again, there are some pros, there are some cons. Over here, what you see is in favor of rupee strength, I would say, are weaker oil prices. This certainly helps India. Against the rupee is the fact that we potentially are going to have more issues with our exports to the US. So I hesitate to call it as such.
Basically, it is capital flows.
It's capital
We don't
flows.
have a trade deficit issue to that extent.
It's capital.
Our issue is a capital deficit. I mean, at the moment, capital flow deficit. So let me first discuss your area. Bonds actually saw decent flows. We've had 3 or 4 years of equity outflows, but it was bond inflow. Even 2025 is a net bond inflow. I think I have the number, over 2 billion is a net inflow. You think Indian bonds will be attractive?
I think actually Indian bonds are attractive. I think they are attractive for a couple of different reasons. One thing to keep in mind is we should not understate the importance of the significant fiscal consolidation that has taken place in India over the last several years. And you have that inclusion in indices. You have a variety of different reasons which are all positive, and quite frankly, India is doing enormously well. You can take point factors like Apple moving 50% of its production here. There are any number of reasons to be optimistic.
And inflation is low.
Yes, and inflation is low. So, against that background, I do think that I think that there are many factors playing to the attractiveness of Indian bonds. So I would note that. Against this, there is the fact that we think that as we look over the longer term, we do think that there may be some steepening still to come in terms of where we are. So Indian bonds are attractive. They could become even more attractive. This is one thing I would say. I would put it that way.
The other thing that has in the past upset the apple cart for global treasuries or global yields is the yen. Do you see a rate hike from the BOJ? How is the yen headed? Is there a lot of yen strength that might upset the markets?
So You know, I would have said the yen is... So first, let's talk about fundamentals. From a fundamental perspective, the yen is one of the most undervalued currencies out there. So, so you see this also in the differential between the euro and the yen, because the euro moved to fair value and potentially maybe even a little bit stronger than fair value. We don't know. But the yen clearly is not there yet. And so the yen has the potential to become stronger, but we also have a new prime minister there who actually is thinking along the lines of policies which on balance would not immediately strengthen the yen. So I would say that, yes, the BOJ probably does need to raise rates. You do have an inflation issue in Japan, but it doesn't sound like there will be any rush to that outcome currently. And counterbalancing that is always the question of fiscal.
Okay. Yeah, there is the, earlier in this year, the yen moves did disturb all the markets.
They did. And I agree. Earlier this year they did, because there was a great deal of sudden belief that Japan was going to normalize and the US was going to fall into a deep recession. Therefore, US rates rallied. And so the differential between yields in Japan and the US narrowed. And that, I think, is where that came from.
Okay, the bigger question, of course, which every one of our viewers want to know from you is, where do you stand on gold? We saw that 4,000 plus, and ultimately it is a safe haven play.
It is a safe haven play.
So, how do you see that playing? Does US dollar attract because of tariff issues getting settled, or will gold continue to be a pull?
I think gold actually has regained a position which probably in the next few years, I don't see it losing. I don't know that we will continue to see that rapid ratchet up of gold, because on the one hand, we keep talking about political uncertainty. But Lata, actually, in many respects, political uncertainty has not gone up. We are actually seeing resolution in some areas of long-standing issues. If we're talking about the Middle East, for example, we're thinking about oil. Various areas, we're actually seeing a little bit less uncertainty. So it's true that there is the political uncertainty element, but I think the more interesting thing is for the next several years, we're going to see inflation. And so the two things I don't believe about gold are, number one, or that this is somehow a description of the dollar's loss of its supremacy, and therefore people are going to gold. I think to some extent it is a natural reaction to the fact that inflation globally is a little bit higher than it used to be. And there is definitely more policy uncertainty emanating from the US, but that potentially will last for another few years, and then that could reverse. But I'm not sure that gold's attractiveness fully reverses. And I definitely don't think when people talk about dollar supremacy, this is the end of the dollars, I think that is wildly overblown, because every time there was a lot of excitement, for example, showing that gold had achieved the second largest exposure reserve status in various central bank holdings. And I think here the more interesting thing to think about is not that gold achieved it, but why the euro didn't. No. And that, I think, pretty much tells you that the dollar does not have a significant competitor in the currency world.
Fair enough. I think that everybody will buy, everyone who's got anything to do with the global markets. Just a final question. Give us a range for the rupee for the next 6 months.
So, I am going to hesitate to do that, but mainly because I don't do these point estimates. But I do think, let me put it this way, we do think that the RBI probably can cut 25 basis points to 50 basis points already in December. We think in general the outlook for India is actually really quite strong, and despite all the tariff noise. So there may be some depreciation pressure, but I don't anticipate anything as dramatic as what we saw earlier on this year.
Okay, that's plenty of things you have clarified for us. Thank you very much, Sonal Desai, for coming here and joining us in the studio itself.
Thank you so much, Lata. It's a pleasure.
Well, that's it from Sonal Desai of Franklin Templeton. Thanks much for joining us. After a break, time for Chartbusters.
Trent nosedives in early trade following what was a muted second quarter. Reported EBITDA stood at 26.5%, but like-to-like EBITDA grew 14%. Soft revenue and profit growth trigger multiple downgrades and target price cuts. The stock top Nifty loser.
A 37% year-on-year growth in profit coupled with a sharp expansion in margins sends the shares of Nalco higher. The government-owned company also declared an interim dividend of around 4 rupees per share.
Strong second quarter results fuel an upmove in Nykaa. Steady 30% upmove pushes gross merchandise value to a 6-quarter high. Profit more than doubles while EBITDA margin is the highest since the IPO.
Steady show coming in domestic businesses aids a double-digit growth for Torrent Pharma. Profit up close to around 30% year-on-year. US and India growth lift revenue by around 14%. The stock is up 6%.
Lenskart sees a muted debut on the bourses, lists at a 2% discount, declines, but thereafter sees a recovery, now currently at the issue price of 402 rupees per share on the NSE.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, and with me as always is Mangala Malu. Well, we've got plenty of numbers that are coming in thick and fast, and one of those numbers that looked absolutely rocking was actually Welspun Corp. The company reported a solid set of earnings in the September quarter. Revenues are up more than 30%, profitability jumped up more than 50%. And to help us with the past quarter and the way ahead, we're joined by Mr. Vipul Mathur, the MD and CEO at Welspun Corp. Hi, Mr. Mathur. Good morning. Thanks a lot for coming down to the studio.
Good morning, Nigel.
Well, congratulations on a good showing, with regard to your numbers. But my question is with regard to your guidance. Why are you being so conservative? As per your reported numbers at the half-year mark, you're around 1,200 crores. And for the year, you're guiding for around 2,200 crores. If I go past all the last many years, second half is much better than first half. So realistically, should it be actually 2,500 crores of EBITDA for this year itself?
So, Nigel, first half has been good. Yes. Second half looks extremely promising.
Got it.
It is going to be a strong performance coming up in Q3 and Q4. I think so. The reason we are slightly conservative in terms of guidance, that do I have a worry that we will not exceed it? No, I don't think so. We will definitely be exceeding that. But the reason we have always been slightly conservative is because, see, there are many variables into play. Delivery at the customer side, payments, this, that, there's quite a few things which are out there. So which holds us back slightly in terms of overcommitting. See, we always believe in committing and performing and delivering.
So you are comfortable of beating that guidance. You're sure about that, but you don't want to just immediately promise the street because you believe that there could be some unforeseen circumstances. X of that unforeseen circumstances, which none of us know about, going by purely the historic run rate, etc., 2,500 crores should be possible, right?
I don't want to put a number to that, but definitely we would definitely be beating the estimate. There's no doubt about that.
Okay, all right. Let's focus then on the thought process. Because suddenly Welspun Corp, I remember a few years ago, there was a big debt in books, business wasn't picking up, single trick pony, depended only on the US business. Now what's happened is the US business is firing. And then you have support from Saudi as well as from India. My question is on the capex. What 5,000-6,000 crores of capex, majority of it is in the US as well as in Saudi. Tell us about demand trends. And once this capacity comes on stream, do you believe demand is very, very strong? And if you could put in, a number, are return ratios better in the US and Saudi in comparison to what you have done in the past?
So, Nigel, we did a sort of a strategic exercise a couple of years back, and we clearly came up with a theme that we will be investing monies into core products and core geographies. For us, core product is pipe. Core geographies are India, Saudi Arabia, and US.
Yes.
I think so that decision which we took around 3 years back, we are absolutely walking the talk onto that. And accordingly, we have made the investments in Saudi as well as US. And now you see the things turning around. One thing is very clear that the industry is in a different mode altogether at this point in time. At one point in time, everyone was saying energy, fuel, fossil fuel is history. That's not the case anymore. You see any report which is coming out from Exxon, Chevron to Totals of the world, they're all saying, at least for our lifetime, the fossil fuels are going to be there.
And Trump is saying drill, baby, drill.
And Trump, in any case, is saying he is further accelerating the whole process. So we are in the right place at the right time, and with the right credibility and the right sort of a situation. We are one of the largest players in America at this point in time, almost having a 30% market share. So who will invest other than us? So that's the leverage we are taking. And I think so that investments, what we have done, either in Saudi or in US, I think so. And as they will come on to stream, one will come up in FY26, the other will come up largely around FY27. For the next 2 years, when these two businesses will come on stream, you will see a sort of an exponential growth coming in there.
And you give us a sense on what that exponential growth implies in terms of quantifiable targets?
Yeah, and return ratios, how is it better compared to what you have done in the past?
At the end of the day, everything will boil down to, let's say, what is the EBITDA margins we are making, right? What is the sort of a growth we are showing, and what is the ROCE we are delivering?
All those are the targets that we are asking you.
So we have already been very clear about that we are targeting a ROCE of more than 20%. Right now, if you look at it, we are already around 22%. Once these two things will start coming up, they are only going to improve from there.
Right.
Okay. So ROCE moves up further from here, right?
Absolutely.
All right. The new buzzword is data center. And it seems indirectly, suddenly there is some exposure for Welspun Corp. Because one of the large clients, they are going to be setting up capacity, which ultimately will require some of what you produce. So tell us, how big is this data center opportunity for Welspun Corp in the United States? Because the last client gave you a big order, and that was in the direction of data center itself.
So there is a sort of a paradigm shift which is happening. Earlier, what was happening? People were drilling in the Permian. They were exporting all the gas to the Gulf Coast, and that was being, that LNG was being shipped all over the world. I think so. The way data centers are coming up, they have a massive power requirement. Now, the power requirement could have been handled through the grid. They have the grid connectivity and the grid stability in the US is falling short of expectation at this point in time. So, and data centers are absolutely energy hungry, assets. So what they are trying to do, they are trying to power themselves on their own. So they are setting up a captive power plant beside the data center, and those power plants are now being fueled by the gas.
And to transport the gas, they require
for transport the gas, these midstream companies are putting up these pipelines. So earlier, these midstream companies were all going towards the Gulf Coast. Now these midstream companies are going towards the Gulf Coast as well as to the data center.
Okay, what is the
total addressable market here?
See, the early days, but the fact remains, more than the addressable market, what we need to see is that the type of players which are coming into play. The types of Metas and of all those people, that the high quality asset people are coming into the data centers, and they are setting up massive, they were doing a massive investments. So we are a part of a value chain. Earlier, data center versus chips. Now you are a part of the value chain, is a pipeline. So we are now sitting into that particular value chain.
Got that. So we'll get to that opportunity as and when we start seeing that in the numbers and orders, etc. Finally, a couple of questions from an India standpoint. One is Sensex, 650 crore. Just wanted to know what is the path to break even here and what's the scalability here. And the second one is on Welspun specialty, business. You had said that you incubated it, turned it into a black from red. Only at some point, merge it with you. So on Sensex, profitability and Welspun.
So on Sensex, see, as I have always said, it's a work in progress at Sensex. It's fundamentally a very, very strong brand. It's a pan-India brand. Today, you go on street and you ask anyone, Sensex, it's a national iconic brand. You see, it is taking its own time. There's no doubt about it. I wish it could have been a little better. But, there have been challenges into the industry. We have seen some sort of infrastructure, capex or money flowing from the government into the water sector, into infrastructure over the last 1 or 2 quarters have gone slow, which I believe that should be okay now. Once that happens, the things will change at Sensex. More importantly, I think so what we are trying to do is we are creating a very, very strong base out there. So we are not, it's a long haul. We are seeing, we don't want to expedite things, recklessly. We want to do everything which is absolutely correct in terms of, let's say, who are my dealers, who are my distributors, who are my influencers. All those stuff, all these cleanup and hygiene factors are currently going on.
So basically, Sensex is still in that growing mode. Don't expect exponential growth in the near term. You're building the blocks. So we got that out of the way. What about Welspun specialty? Will you look to fold it in? That business has turned around. You'll have taken a larger chunk as well. Very quickly, sir.
So Welspun specialty is not, we do not intend to do that at this point in time. We want to incubate it. I think so there's a huge potential in that company.
Yes.
And I'm very, very sure that in quarters to come, you will see a sort of a significant growth into that.
All right. Mr. Mathur, always a pleasure talking to you, sir. You're sounding optimistic about business, and we'll track you to some of these numbers. But wish you well, and we look forward to chatting up at the end of the next quarter.
Thank you. Coming in quarters to come, we'll obviously have you join us every quarter and then detail where the growth.
It's always a pleasure, man.
And the street likes what you have said. I think the stock, has recovered from the day's low. It's currently moved to the high point of the day as we speak. Take a break, come back. The management of Hindalco is waiting for us. They'll detail their numbers. Welcome back. You're tuned in to Chartbusters here on CNBC TV 18. Well, let's shift focus to another earnings conversation. We have Hindalco, which reported a good growth in revenue, 20% jump in profitability as well for the September quarter. I spoke to the MD, Mr. Satish Pai, and started off by asking him about the pricing band for aluminium and also their hedging strategy. Let's listen in to what he had to say.
A normal hedging strategy is about 20 to 25%. But as we come closer to the quarter, like what we saw now, and as you said, the LME is reaching all-time highs, we started to add on to actually lock in the gains for Q4. So whereas you see the 49% at an average of 2750, the last amount, let's say the last 10 or 15% hedges have been at that 2900 and above. The average then comes down to the 2750. So we took advantage of the very high LME prices to add to our hedge positions for Q3 and Q4. Otherwise, our hedging strategy does not change. Generally, we do only about 20 to 25%.
Okay, got it. Also, if you could help us out with regard to the EBITDA per ton for the India business. That's been looking beautiful, rock solid, so to call it. Do you expect the aluminium EBITDA per ton to continue around the similar levels that you've seen in the past quarter? And what about copper? In the past, we've been talking about this ballpark 600, 650 crores per quarter. Stick to that?
So as I think even last quarter when we discussed, as I said, if the LME stays above the 2,800 that we have been seeing, the EBITDA per ton will be at that $1,500, which is what we are running at right now. Now, why Q2 is more remarkable is because it was a monsoon quarter. And during a monsoon quarter, generally coal availability, coal costs go up compared to Q1. But in spite of that, our plants delivered a very stable and excellent operational performance, and which is why even in a monsoon quarter, we delivered 1,500 plus EBITDA per ton. Now, coming to copper, as you know, TCRCs are low. We have been guiding that because of our varied value chain in copper, we will be delivering 600 crores plus, and we are maintaining that and will continue to do that.
Got it. Just to close the loop then on the India business, you have announced the expansion at the Aditya unit, and I think that will reach full capacity. Now all eyes are on Mahan because I think you have scope to double capacity out there. Are there plans to go ahead and announce, a capacity expansion? Because the India business suddenly is looking very, very rock solid, since that's a direct play on aluminium.
You're absolutely right. And we, of course, have plans to do the next phase of expansion in Mahan. It's just that the timing is what we are going to look at. We are preparing the background work. You see, Aditya, we are doubling capacity from 360 to 720. And that's the projects that are ongoing now. Probably we'll be announcing Mahan sometime next year.
Got it. Explain to us the Novelis capex then, Mr. Pai. What went so wrong? From the time you'll have announced it, the capex now is close to double of that. In the middle as well, you'll have gone ahead and increased it. So the street said, okay, cost could have gone up. But now it's up another 20% from the last announced capex number. Explain to us, what went wrong? And is there scope for this capex to even go higher from here on? Because the return ratios now have come down to mid-single digits.
So let me make a few important points on our Bay Minette project. So Bay Minette is providing us 600,000 tons with the capacity to go to 1.2 million tons of rolling capacity in the US. The US is the largest market. Because of the tariff environment, anybody trying to import into the US faces a lot of hurdles. So we think that this project is going to be highly accretive to Novelis going forward. The second point on the capex itself is that it is a very complex project. There is a high inflationary environment in the US now. So more than 50% of that increase is due to cost inflations that are going on today. So I think that overall, when you look at it, the US is a great market. The demand is good. We will have, of course, pricing strengths because we'll have capacity in the US. So we think overall, this project will be good. And most important, we will be delivering higher than the cost of capital for Novelis on this project.
Interesting. But what about, if you could give us an ROC number? Earlier, you were estimating, I think, low double digits. Now it'll be likely 6 to 7%?
No, it'll be high single digits.
It'll be high single digits. Got it. On this expansion, the ROC will be high single digits. Got that. Given the expansion that are going to be taken at Aditya, in addition to this Novelis cost escalation that we've seen, the net debt to EBITDA that was well behaved for the last many, many quarters, that could perk up, right? Where do you see the net debt to EBITDA peak out? And also, if you could tell us the absolute debt number, what will it look like?
So look, I think that the India business at these current LMEs is going to be at a negative net debt to EBITDA for the next few years. So at the console level, we committed to the street that we will never cross 2. So our clear plans that we have made over the next 3 years is to make sure that the consolidated net debt to EBITDA does not go even close to 2. And that's why we are going to look at phasing the Indian capex so that Bay Minette gets completed in FY28. And then we will be, again, Novelis will be at a cash flow positive and their net debt to EBITDA will come down. So I think it's suffice to say that the balance sheet of Hindalco overall is strong. The India business will be negative net debt, and Novelis will be the only one that will probably touch around 4 and then come down again.
Got it. Final question. Second half of the year is going to be a washout because of the unfortunate fire that we saw in September. But for FY27, Novelis gets closer to around the $500 per ton mark?
So let me first correct. Q3 will be the quarter in Novelis that takes the brunt of the Oswego fire. The mill will start in the first week of December. So Q4, Novelis will come back very strong. And as I said, the underlying business of Novelis is doing quite well. So we expect FY27 to be a very good year for Novelis.
So around $500 per ton, EBITDA?
that will be our target.
All right, $500 per ton EBITDA will be their target, also explaining the rationale behind the increased capex for the US business, Novelis that is, that's Hindalco, up around 1%. Remember, post the results and post the announcement that came in, there was a big knock on the stock. We take a short break, come back, get you more on the stocks and individual, in fact, the whole market, which is currently doing extremely well. We haven't had an opportunity to talk about that. The Nifty currently at the high point of trade, led by the Nifty IT.
Come back, keep an eye out on the Nifty. It's headed towards the 20 DMA. So good move is what we're seeing, 120 points. I'll tell you what, the big batsman has not yet come to play because the Nifty Bank is actually underperforming in today's trading session. Has to get its act together to push the Nifty higher. But we'll wrap up on this edition of Chartbusters. Don't go anywhere. The team of Trading Hour comes up next.
Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Hormuz Fatakia. The Nifty's climbed above 25,600. It's a 125-point up move on the Nifty. The Sensex is raced away with a 400-point gain, and it's IT to the rescue on the way up. So frontline IT names like Infosys, HCLTech, Wipro, TCS seeing buying. Infy is your top gainer, 2.7% up. But generally, the recovery in the last 1 hour is courtesy the large cap IT names. Asian Paints reports numbers later this week, and that's come in for some amount of buying, and the stock, in fact, has hit a fresh 52-week high. Bajaj Finance reports numbers later today, and that stock ahead of that is also seeing some traction on the way up. On the way down, it's Trent, which is subdued, now taking its year-to-date loss to 40%, and it's a fresh 52-week low on Trent as the stock struggles with competition, slower growth, consumer sentiment has been subdued, and perhaps some cannibalization as the company continues to add new stores. But Hormus has now moved over to the big wall to tell us about the top movers and shakers in the market right now. Hormus.
Well, earnings reactions are aplenty, but to talk about the buzzword of the morning today, and that has been Lenskart, and it's been a very impressive recovery from the opening lows. The stock fell as much as 12%. Now it has back at its IPO price, and the shares worth over 3,000 crore rupees have already been traded in the first hour of Lenskart's trading debut itself. So significant volumes, almost well over 7 crore shares have been traded already. HBL Engineering is an earnings reaction. It was off the highs of the day. At one point was up almost 13 to 14%. It's the biggest single day gain in 3 months. The stock has gained in 3 out of the last 4 trading sessions as well. We've had over 1 crore shares that have been traded for HBL Engineering. The 20-day average is only 6 lakh shares. And the stock, as a result of this move, it's above all of its key moving averages. And at the end of 2022, since the end of 2022, the stock is up almost 10x in value and has been delivering positive annual returns since the start of 2020. On the downside, transformers and rectifiers, multiple news flows resulting in that 20% lower circuit, but the street may have had a whiff of this. The 7th straight day of losses today, as the stock is down 32% in the last 7 trading sessions. And in this lower circuit, we have had close to 30 lakh shares that have been traded. The 20-day average is only 2 lakh shares, and this is already turning out to be the worst month for the stock since October of 2008. And lastly, Nalco is a positive earnings reaction among the PSU names. It's a strong reaction to its second quarter results. Over 1 crore shares were traded on Friday. More than 1 crore shares are traded today as well. In fact, we have had close to 3 crore shares that have been traded on Nalco today already. The 20-day average is close to 50 lakh shares and 20% higher so far in the month of 2025 so far. And that comes on the back of a 60% gain each in 2024 and in 2023 as well, Rima.
Thank you very much for that. But Lenskart is clearly the big story of the day, and we'll put the spotlight on the new kid on the block, the recovery that we're seeing in today, though the debut was muted. We now can go across to Mangalam to tell us more about this. Mangalam.
Well, if you look at Lenskart, it was a very interesting story, the most talked about issue in very recent times, and rightly so, because it's a strong consumer brand. Their stores are everywhere. At the same time, the founders are fairly popular as well. And then you had the valuation issue. So it was fairly debated, hotly discussed, and then the listing was something that the street was expecting to be muted because of the value, on offer. At the same time, from lower levels, because the business is fairly strong, we saw the stock recover as well, and now hovering very close to its issue price of 402 rupees. The total subscription, there was a fair amount of demand for this issue. 28 times oversubscription, led by retail, 7.5 times, institutions, 40 times, HNIs, around 18 times as well. 7,300 crore rupees is what the company raised. But at the same time, remember, this is a D2C company that sells a wide range of eyewear products. They acquired Ondays in Japan, and that accounts for nearly 40% of their sales as well. In India, they have about 2,150 stores and globally 2,800 stores. What they've basically done is close to around 1,900 crore revenue in the first quarter with margins of around 17.7%, a net profit of 60 crores. And if you look at their strengths and the opportunity along with threats, 2.5 times bigger than their nearest competitor is what they are. The organized eyewear segment in India is projected to grow 60% higher than the unorganized and be 31% of the market by FY30. And they are expecting international expansion as an important instrument of growth going forward. Going forward, the question is at what price? Because there is strong growth runway. 30% plus is what the company has been growing at. Indian market is likely to grow between 12 to 14%. The company has said they'll grow 2x of that. And even if you annualize the first quarter profits, it's trading at close to around 200 times price to earnings and over 8 times price to sales. So that's something that the street will constantly keep discussing.
Of course, has been the subject of much discussion over the last couple of weeks. Mangalam, thank you for that update. In fact, we did chat with Piyush Bansal of Lenskart at the Global Leadership Summit. Listen into what he had to say.
I think it is time that we start creating global brands, because my firm belief is that in the long term, if you think 10, 20 years, either you are global standard or you may cease to exist. What will it take for us to create global companies? I think the most important thing is belief. But today about 40% of our revenue comes from international markets. I think that belief was really important. What we have achieved so far is a very small portion of what we intend to do. We want to give a vision to 1 billion people. We have given it to only about 25 million people so far. Right? So there is a lot more to do ahead. And I do think game is going to be about how do you leverage technology, and this is my firm belief, to solve some of the biggest obstacles in getting access and affordability to people, right? Because what are the two important things? One is how do you deliver great experience? And second is how do you deliver it most efficiently? And in both of these, technology has a very large role to play.
We'll take a short break, put the spotlight on the crypto markets. On the other side, Manisha Gupta joins in.
CNBC TV 18 presents Crypto Corner, powered by CoinDCX.
Welcome back, and as promised in crypto space, we will talk about the crypto markets right now, where we have seen continuous decline or profit taking into this space. Well, remember, the first half of 2025 was all about gains. It was about the US president coming in, new regulations, and a lot of friendly frameworks come in. But the second half clearly has been more about profit taking. So when you look at Bitcoin itself, it has been down 20% from its all-time high that it saw on 6th of October at around $126,000. It's trading at around 105 to 108 right now. Interestingly, on Friday, it also saw a decline below 100,000, and we did see those lows at around 96,000 to 97,000 as well. Now, this has happened second time in a month that the Bitcoin has tried to break below $100,000, and the markets do believe that that could lead to some bearishness for the markets there. It also has to do with the early adopters in Bitcoin, which seem to be selling their large holdings. Also, when you look at the last 2 or 3 months, it has been more about the leverage positioning, where we have seen profit taking come in. Since the month of July, it really has been about massive liquidation. The leverage positions liquidation also happened in the month of October. And then since July, there has been a lot of pressure coming in. The Bitcoin also is looking at the US dollar index, which has seen some strength coming at around 100 levels, and that has been putting pressure on various alternate currencies there. Researchers do believe that if you do see a break of around 93,000, then that could open way for 70,000 on the lower side as well. But there are various reports also suggesting that by the end of this year or in next 6 and 12 months, you could also be looking at 170,000 when it comes to Bitcoin there. That, of course, is a report that's coming from JP Morgan. So the street clearly is divided on where the cryptocurrencies could be headed in the next 1 year or so. But at this point in time, it's a sharp correction that we've seen from the highs of 2025. So Bitcoin, as I mentioned, has seen a sharp decline, 20% off onto that one. But that's not the only one. Take a look at Ethereum, 4,800 to 3,600 currently. From a high of 1,300, Binance also has slipped to 1,000. And we have seen a sharp correction in Solana as well, from 262 to 180 there. And Ripple, whether you talk about Polygon, Ashgrand, all of those cryptocurrencies which are looking at higher market capital have seen some decline come in. And as I said, the first half of this year was very, very bullish. But as you can see, the second half just about holding those kind of gains there. So Bitcoin is holding with 13% of strength right now. Ether is just about 9% higher. Binance Coin clearly has done well, but that also has been because of the mergers, acquisitions, stable coin strength that this platform really seems to be attracting right now. Solana actually is turned into negative, and you have Ripple just about holding 18% as well, with markets believing that the month of November and December would be quite deciding on how this year closes. And with that, that's all the time on this segment, but we'll come back after the break and talk about markets and stock specifics.
CNBC TV 18 presents Crypto Corner, powered by CoinDCX.
Welcome back. IndiCube Spaces is in focus after reporting the Q2 numbers. The top line for the company has gone up by 38%. The EBITDA has gone up by 74% on a year-on-year basis. Rishi Das, co-founder and CEO at IndiCube Spaces, is now joining in. Rishi, great to have you. This is Rima here. Strong performance in the first half of the year. As we said, 38% in Q2, but in H1, it's a 33% top-line growth, and adjusted margins are at about 21%. Can you sustain a 30% plus revenue growth for the full year and maintain margins at 21%?
Yeah, thank you, Rima, first of all. Yeah, I think, it's very sustainable. That's what we are seeing, that we have some good wins in the quarter. The basis that we are quite confident that if you look at the current quarter, which is going on the Q3 as well as Q4, we should be able to sustain the revenue growth and defend the EBITDA margin as well.
Okay.
Rishi, good morning. Thank you for joining in. Same about the occupancy levels as well. At 87%, you sustain that in the second half, or you see an increase in the occupancy levels?
Occupancy level will hover around a similar range. There could be some fluctuations because, as you can imagine, when we add properties, any new properties get added in a quarter, there is a slight blip. But what we have seen historically is that at a portfolio level, we have always been between 80 and 85%. And if you look at our steady state centers, which are more than 12 months old, we have been between 85 and 90%. So that's the guidance that we have internally. And there could be some fluctuations here and there, but it will be range bound.
Rishi, your AUM increased by 1.3 million square feet to 9.14 million square feet, and the seat capacity went up by 30,000. What is the guidance on seat capacity and AUM for the second half of the year? Where will you end FY26? And any indications for what FY27 might look like on these two?
So we have been adding, Rima, anywhere from about 100,000 square feet to about 125,000 square feet monthly. That has been our addition, and that trend has been fairly consistent. And we are very hopeful that we'll be able to sustain that. And if you translate in terms of seats, it comes down to about 2,500 seats. Typically, every month we should be able to continue adding. And we have a good headroom for growth. If you see, our AUM is 9.1 million, and out of which about 5.8 million is what is giving us the rent yielding. So we have almost close to 3 million square feet, 3.1 million square feet of space that is available to us. So that gives us a good headroom for growth. And we will be, in terms of growth, range bound between 30-35%. And we are quite hopeful with the kind of supply pipeline we have, we should be able to sustain that, yeah. Similar numbers should be there for FY27 as well.
Rishi had also highlighted that you have plans of doing capex worth over 460 crores in the over the next 3 years. How much of it is done in the first half? How much do you expect to do in the second half? If you could share a breakup of the numbers over the next 3 years.
So in terms of capital expenditure, most of our capital expenditure gets done on adding the interiors for our offices. And typically, if you look at like the H1, we would have added close to 100 crores worth of 120 crores worth of capex that we would have done to add more seats on a net basis. However, there are some past payments, future buildings that we sign up for which we have to pay advances and all of that. But purely in terms of interior capex, it would be about 120, 130 crores that we would have spent in H1. And we see a similar outgo in H2.
Sorry, go ahead.
Yeah, and what we have budgeted the 3 year, we are very hopeful that this money should last longer with us because we have very strong cash flows. Typically, our cash flows have been almost like 150 crores in the H1. So that should be providing us a lot of accrual-based capex opportunity as well.
Rishi, I remember the conversation we did around the time of listing, and we spent some time discussing the contribution of value-added services. And that number was going up. And if I recollect, when we spoke, it was about 12.5%, 13%.
Yeah.
What does it stand at right now, and how are you looking to increase it? I mean, do we have a target in mind?
Yes. So if you look at Rima, a year back, from there on, it was 11%. Now we are at 13%. So there has been a 2% growth. And as you can imagine, when we have grown by 33, 34%, on an overall revenue basis, growth from 11 to 13% is a good growth. We are quite confident that this number will start touching 15% in next year. And why we are so confident is because we are finding that when customers are coming to us, they are buying more and more B2B and B2C services like food, transport, IT infrastructure, green power, the like. And also they are giving us the opportunity to serve their other centers, which are beyond IndiCube centers. So for example, if they have taken space in a couple of offices with IndiCube, and if they have 5 more setups, the other 5 setups also they want us to make them IndiCube managed, where they expect us to provide services. So that number we are quite hopeful that will continue on our upside. And for next year, we see this number reaching close to 15%.
Rishi, is there a supply constraint in the market currently? Because a lot has been said about commercial real estate in comparison to the residential bit. But in case there is a supply constraint, which geographies are facing this, and what's the situation right now?
So definitely, you are so right on that. The absorption has been very, very sharp. Typically, like in the 9-month period, calendar year, India has absorbed close to 60 million square feet of space. And this compares very well with the last year numbers. And just the quarter, the Q3 calendar year, absorption has been close to 20 million square feet. So there is a supply crunch building up. Cities like Mumbai are facing quite an extreme supply crunch. In certain pockets in Bangalore, we are seeing the supply crunch coming in. But as I said earlier, that we have a good headroom of almost 3.2, 3.3 million square feet of area which we have signed up and yet to become rent yielding. So that should ensure that in the short to medium run, we have enough supply. We are signing up new buildings. Plus, another distinguishing factor with us has been we have done a large amount of renovation. If you see, close to 3 million square feet of office space in our portfolio is renovated buildings. These buildings are which were done, say, 30 to 50 years back. For example, if you see today Nariman Point kind of location, with the C-Link coming in and metro getting started in some time, you will see a lot of revival in Nariman Point kind of area of older properties. So we are seeing the same kind of revival happening in many Indian large cities like Bangalore, NCR and all of that. So since we have been an early mover in picking up the older buildings and renovating them, we see a large part of our supply should come from the existing stock. We are not completely dependent upon the new stock coming in. And to give you another idea, India has about 1 billion square feet of real estate, and 500 million real estate is more than 10 years old. So there is a massive opportunity to also tap into that pool of supply.
Rishi, thank you for sparing time and joining us today. Wish you good luck for the second half of the year as well. And while the index continues to do well, good time to get in an FNO check as well. Mangalam joins in with the latest trends. Mangalam.
Well, the indices continue to do well at the higher end of the range today for the Nifty, above 25,600 as well, taking its total gains from Friday's low to well over 300 points. And the good part is that, well, Friday, the recovery was led by the Nifty Bank, which rallied about 800 points from lows. Today, the recovery has been sustained by IT index, which is actually taking the index, the frontline index further. The Nifty Bank, if you look at the other indices, is actually an underperformer right now. In fact, as we speak, the Nifty has also gone ahead and crossed the 20-day moving average of 25,639. It's closer to 25,650 right now. So that's something we will watch out for, because if the market sustains at these levels, then there could be a case for powerful short covering. Why do I say that? Because, despite the Nifty recovering from lows, we've actually seen the FI longs come down from a series start of 20%. In fact, even at the last 3 trading sessions, the FI longs are down from 15% to 14% to now 13%. So 87% of their shorts are, in the system right now. With the Nifty moving back above that 20-day moving average, will bulls make a comeback or not is something that we will track in the second half. Nifty Bank will be extremely crucial to watch as well. While the Nifty has moved higher, as have put writers gotten their confidence. So 25,600 put fairly active in trade, 25,500 put equally active in trade, telling you that there is strong support at around 25,550 to 25,500. But at the same time, the 25,650 and 25,700 call writers still haven't left their position. So that's something that I will monitor, because if the Nifty stays between this 25,650 to 25,700 range, then the 25,650 call writer and the 25,700 call writers will have to cover their position. So that would provide an additional up move to the market, which may go all the way up to 25,800, 25,850. But a lot of stocks are, seeing some short covering. Nalco, for one, good results coming in. A lot of stocks stuck on the wrong side, so they are shutting their positions down. And then we have Trent, which is the top Nifty loser. A lot of shorts backing it. In fact, down about 12% in terms of its open interest. That's increased, and that's the kind of short build-up that we're seeing on Trent.
Thank you very much for that. Get into a break. On the other side, we'll discuss market fundamentals. Devang Mehta from Spark Private Wealth Management joins in next.
Welcome back. Good going for the markets, but with more highlights from the CNBC TV 18 Global Leadership Summit. The Principal Secretary to the Indian Prime Minister Shaktikanta Das says that the Indian economy continues to be sound, stable and resilient amidst the global uncertainties. He also reinforces that more reforms are in the offing, especially on the ease of doing business front. Listen in.
The overall, in the global context currently, when the world order is changing, when the rules of international trade are being rewritten, when multilateralism is being replaced by regional agreements and by bilateral agreements, given the current uncertainties all around, both geopolitical and economic, Indian economy continues to be sound, stable and resilient. That's the first point which I would like to mention. I can back it up with a series of factual details, but in the interest of time, I'll leave it at that. Second, the goal of Viksit Bharat, that is making Indian economy as an advanced economy by 2047, it's very much on track, and the Honorable Prime Minister has set the roadmap. You would have seen, just think of 2025, the kind of reforms which have been taken, GST, next-gen GST reforms which were undertaken recently. The Prime Minister talked about it on 15th of August from Red Fort, and within 5 weeks, on 22nd of December, the next-gen GST reforms were implemented with the cooperation of all the states. So the second point I want to mention is that the goals of Viksit Bharat, the roadmap has been laid. Several reforms this year have been undertaken, not only in GST, but also in non-financial sector deregulation, for which a high-level committee has been appointed. So in the days and months to come, you will see a series of reform measures relating to ease of doing business, relating to making Indian economy more competitive. All these measures will follow. So as the Prime Minister has pointed out on 15th August, I'm referring to that because that was really a moment which really marked a leap to the future. On 15th August, the PM PM stressed that reforms will continue with greater vigor. And thereafter, we had GST 2.0. Many deregulation measures are in the offing, and several other measures are in the offing. That's the second point which I would like to mention.
Taking the conversation on the markets forward with Devang Mehta from Spark Private Wealth Management. Devang, good morning. Thank you for joining in. Let's start off with Trent, though, is the earnings accident of the day on the Nifty stocks at least. You know, when a stock has been at the street getting used to almost 35 to 40% growth, that even 16 to 17% growth looks below par, seeing the stock reaction. But have valuations now corrected enough for it to be an attractive bet? From almost 8,400, the stock is now below 4,300.
On the show, good morning to all the viewers as well. I think, see, probably what we have seen in Trent, and this has been the sector retail or sort of for discretionary consumption has been one of our sectors to go to. What we have seen in Trent particularly, and of course the revenues, when the revenues decelerated in the last couple of quarters, it appears like that. But most importantly, what it is doing, the operational efficiencies, the automation initiatives, all are still making a lot of promise for the operating performance. If we look at the EBITDA margins, it is still roughly around 12.2, 12.3%, which is I think very good. Most importantly, the company commented about the like-to-like sales, which sort of decelerated a bit, and the same store growth, which we talk about normally in the retail, that was a bit slower due to maybe unseasonal rains or not so great a demand, because more so the demand in September started off on the back of GST reforms for very high ticket consumption. But whatever the company has guided about, I guess probably maybe a quarter of miss or so. But these are sort of, I will not say attractive valuations, but the correction in such companies normally provide you with good opportunities. The company was on track to start around 13 stores of Westside and around 40 stores of Zudio. So my sense, it's getting into a zone where I think it's trying to also eat out some of the competition. So as I said, at some level, probably maybe 5% correction from here on, it would start looking very attractive.
Okay, it's already at a fresh 52-week low with a 40% fall this year. So another 5% lower would put it closer to 4,100. And that, according to Devang, is an attractive entry point for Trent. What else, Devang, are you recommending for your clients to buy at this juncture?
Rima, what we are looking at, I think probably most importantly, if you dissect the markets, the last couple of months when we have seen a bit of a bullishness return back to the proceedings, I think with good macros, with a decent set of earnings. I will say this set of earnings were not as bad as the street predicted. But the stark reality is that only few companies have done very well. So on the bourses, I'm not talking about the results. The results of a lot of companies were good. But on the price action, most of the companies which have done well are probably sector rotation we have seen. It started off with maybe banks, then it came to IT, then a bit of oil and gas. Every week we are seeing the trend change in terms of which sector comes to the fore. What I mean to say here is the broader markets as such, a lot of mid caps and small caps, while your indexes are just very from a very near distance from the lifetime highs, all these companies are trading very low. So my sense that if somebody has the faith for the next couple of years, a good mix of large, mid and small caps being sector agnostic and market cap agnostic would do the trick. On the sector front, which you asked about, we are looking at a combination of discretionary consumption, as I talked about, where the GST effect will be more structural. Yes, you will not see this type of sales for the next 3-6 months. You would probably see a little bit of sobered down sales, but I think it augurs very well for the industry to be a part of discretionary consumption. Second is capex, which we always talked about. I think the capex is just, again, the government capex will not slow down much, and private capex should also come to the fore with of the companies operating at 80-85% of capacity utilization. So I think sectors like power automation, engineering, manufacturing, all this will do well. And last but not the least is financials, which I always talk about, the intermediaries, the depositories, the AMCs, which mostly have seen good set of numbers coming so far. And I think with financialization wave on the rise, with penetration and density going to rise, these are sectors which one should sort of build in the portfolio.
But Devang, you mentioned discretionary consumption. Does consumer durables fall into that bracket as well? Because consumer durables companies, the commentary from them has flattered to deceive, to say the least, be it Blue Star, be it EPAC Durables, and a lot of others, and they have been smashed all through last week. Would FY26 be a washout year for these such companies, and would you recommend taking advantage of such a correction because there will be a revival in FY27 on a lower base?
I think for sure, there is a very good chance of a revival in the sentiment if you look at per capita consumption of anything, right from cars to consumer durables, and you can take segment-wise the likes of the air conditioning to your televisions, and probably also the premiumization trend, right, from people graduating from a normal TV to a LCD to a OLED. I think most of these companies which are now listed, and there is an ample choice now, right from, I'm not recommending anything, but right from Havells to the LGs of the world to Blue Star and Voltas into different categories. My sense that yes, any weakening of the stock prices because of not so good numbers, and it can be a trend a couple of quarters. But I think October, November, December sales should have been good for most of these companies because whatever we saw and whenever you interact with companies like Vijay Sales and stuff, I think there was a relative bit of good sales which these companies would have done. Yes, maybe operationally they can have 1 or 2 quarters difficult. Most of these companies have also done their capex. But my sense, somebody has a 1.5-2 years view. These are attractive bets on a fall.
Devang, thank you for sparing time and joining us today. Looking forward to having you more often on the show. Take a short break. The management of Interarc Building Products joins in on the other side to discuss the road ahead and their second quarter results.
Welcome back. Interaj Building Solutions is buzzing in trade after reporting Q2 numbers. Stock has gained 4%. It's a 52% jump in the company's top line and a 65% increase in the EBITDA. Arvind Nanda, Managing Director of the company, is now joining in to talk more. Mr. Nanda, it's been a very strong first half of the year. Your top line growth is in excess of 30%. When we spoke to you last time, 3 months back, you indicated that Q2 is typically a bit volatile, so you'll wait by to see. So you were sticking to your full year guidance of 17.5%, though you did say you're likely to beat it. Now that H1 has been so strong and your commentary is saying that this growth number is sustainable, what is the revenue guidance for the full year, FY26, and also on the margins, 10% or 10% plus?
Thank you for having me on the show. Yes, you are right. We seem to have done better than we expected. I think the monsoons and the usual problems that we normally face in the second quarter or the first quarter, we managed to overcome them. And I think we have also increased our capacity. So a lot of our turnover depends on our capacity. So the order book is good. Even going forward, our order book is still very robust. So I think the ability to deliver more to our customers, to produce more, to deliver more, to erect more, I think that has helped us. So I think we should be now upwards of 17.5% that we had predicted, definitely. So maybe nearer 20% is what I think we have given as a guidance even in our investor call last week after having done so well. And we have the ability to achieve that figure. Normally the first half is a little bit more critical. I think we have crossed that criticality. Second half is far more predictable.
So why not more? In the first half of the year, your top line growth is 39%. Are you being conservative when you say the full year growth number will be 20%, or are there more headwinds? And on margins, 10%, or you'll do better?
Well, I think the first half of last year, when we compare, the base point is a little lower. In the second half, the base point is a little higher. So it could even be higher, but we are not predicting that because in our business, because it's all a customized building, things can still get a little delayed in some large projects or some projects, and it could be, so it can, we are definitely trying to go full out. We are not going to hold on because we gave a prediction, but I think the prediction should be conservative because things can go up and down. Margins should improve. I don't know whether it will touch 10%. We are doing a lot of investment into plant and factories. And consequently, like I mentioned before, for pre-engineered building, it is an equal investment into sales, marketing, engineering, project management, which happens as well. And this has to happen in advance of the plants coming into production. So once you are in that cycle of increasing your turnover, increasing your output, then the expenses also start a little earlier. So I think margins should definitely go up. But since nearly every year we are trying to grow by 15 to 20%, there will be a little bit of a lag. And it's important for a company like ours. We are very fond of calling ourselves the Mercedes of pre-engineered building industry, and an industry which was pretty much unknown till a year and a half ago. I think it has come into a lot of prominence. I think the investment, we must realize, has to be in advance. And unless we invest into engineering and design and better quality, better deliveries, better erection or project management at site, we are not really a pre-engineered building company. We are not governed only by what we produce. So it's very important that we grow all around. And that is how we have grown over 25 years, step by step. This is not an industry which you can jump overnight. These figures, what we have got, I think are extraordinary. But otherwise, this is not an industry which you can jump too much, too fast.
Fair enough, Mr. Nanda. The intention of asking you that question was simply that since you mentioned that the second half is fairly predictable for you as a company, so you would have a better projection of what's going to pan out in the second half. And since your first half has been that good, it would only mean that the second half would be equally better, if not more. But be that as it may, what's your order inflow been for the year so far, FY26, the first 6 months? And how has the situation been on ground in the third quarter so far? We are into almost, a month and a half of the third quarter as well.
The order intake has been good. I think our order intake is very much related to how much we can deliver, because we cannot take more orders since pre-engineered building is a very short-term order cycle business. Nobody gives an order to us 2 years, 3 years in advance. Is maximum, even a very large order is 10 to 11 months. So we have an order book of, let's say, 1,630 crores, which we will be having to execute in the next 9 months, 10 months. Of course, we'll try a little faster. So it reflects that, and it's very robust. We have booked about 450 crores of orders in the last 3 months. And I think it has to relate to our turnover. So I think our ability to take more orders increases with our ability to deliver more. So there's no problem. The pipelines are very healthy. I think, as your commentators have also mentioned in the last few days, few weeks, private sector investment is also improving. And in the sunrise sectors that we are there, in the new age sectors, as we call them, the renewables, the lithium battery, your data centers, electronics, these are growing at a very fast speed. And more are changing to steel, and more are changing to pre-engineered steel, because that is the best way to build fast and go forward.
Right.
So we don't see any problem, I would say, next 4 or 5 years in any problem in the kind of business we are in. A lot depends on how fast we can
Right.
do all our 4 legs. Yeah.
Got that. Mr. Nanda, we leave the conversation here. Lots of earnings to track today. Thank you very much for joining in. Get into a break. More on the markets when we return.
Welcome back. Good going for the indices. The Nifty still above the mark of 25,600. The Sensex to 450 points higher. The broader market's doing fairly okay for themselves as well. Take your leave on this edition of Trading Hour. From Rima and me, thank you for watching. Halftime report on the other side.
Stocks notch up some gains as an end to the US shutdown and investor optimism on Indian equities provides a sentiment boost. IT, pharma and metals are the big gainers while PSU banks trade soft.
The stock of Lenskart recovers after listing at a discount to the offer price of rupees 402 following a strong response from institutional investors to its over 7,000 crore offer. Founder Piyush Bansal sees big need for vision care and believes people will gravitate towards the best brand.
West Side and Zudio owner Trent posts a slow growth quarter with softer gross margins, even as cost controls boost profitability. The weak show drags the stock.
The government allows 1.5 million tons of sugar exports in 2025-26 season against the industry demand of 2 million tons. The allowance is, however, higher than the 0.8 million tons permitted in the last season. Stocks of sugar producers perk up.
Principal Secretary to the Prime Minister Shakti Kanta Das says there will be several reforms in the coming days, including in the area of ease of doing business. He adds that the Indian economy continues to be strong, stable and resilient despite trade uncertainties.
Hello, good afternoon. You've tuned into Halftime Report coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. With me are my colleagues Mangala Malu as well as Ekta Batra. Good afternoon, guys, and surely a good day at least what to start the week with, right? When you're looking at it in terms of the Nifty, 25,600, 100 points uptick there. Sensex managing to hold on to more than 400 points of gain, and broader end of the market. That is doing well too, right? Broader end is also holding on to gains of 3/10 to 4/10 of a percent, whether the mid cap or the small cap. Mid cap is doing slightly bit better than the small cap as of now. A lot of movers specifically today in terms of earnings that we're seeing coming in as well. So whether you look at Waltamp, Krishna Diagnostics, all these broader end of the market names doing well in trade as well, guys.
They're doing well. In fact, from Friday's low, the Nifty is rallied about 300 points. The good part is that the Nifty Bank, which took the mantle on Friday for recovery, is holding on to those gains, underperforming today, and the Nifty IT index has come by, so causing that smooth transition for the Nifty, which continues to hold above that 25,600 mark. In fact, currently just below the 20-day moving average, which is around 25,640. So we'll watch out for how that pans out. The IT index doing well. Let's see whether the Nifty Bank in the second half moves higher as well, because the FII shorts, they continue to be piling on in the system. So if the market holds higher, then maybe some more scope for short covering coming in.
Hi guys, yes, absolutely. Maybe the US shutdown, seeing some amount of a deal, possible deal, is what is probably keeping the markets alive. And the stocks or the sectors which are US focused, say for example, the Nifty IT sector or the index itself is up around 1.87%. The Nifty Pharma index is up around 0.8%. So maybe there's some amount of optimism which is circling around those sectors based on what is taking place in the US. So we have the Nifty currently at around 25,622. We have the advanced decline ratio, which could possibly see some amount of improvement on the Bombay Stock Exchange, just about even keel on those levels at this point in time. So let's see how the day goes. But as of now, it seems as though the momentum is on the upside. In fact, we do have Vivek joining in to take us through all of the stocks that are moving around in trade today and which are adding to all of this green. Vivek, over to you.
Well, thank you so much for that. Like you mentioned, it's advances that at this point of time are outpacing the declines, especially in the broader end of the markets. Well, a couple of stocks on the radar, mainly have a look at some of the stocks in the NSE 500 index. The top gainer over there is actually Indigo Paints. Very strong volumes as well. Follow-on buying seen post a very strong Q2, higher by over 11% for that particular name. HBL Engineering, earlier known as HBL Power Systems, that particular stock, very strong Q2, and that stock also higher by over 11.5%. National Aluminium clearly outpacing Hindalco in terms of Q2 performance. Kotak Upgrade 2 coming by 7.5% higher for Nalco. Torrent Pharma, very steady set of numbers for this particular company. They're saying that the double-digit growth could continue. Street clearly likes that over 6.5% higher. And Nykaa, that particular stock continues to see upward momentum, almost 7% now. And the GMV, or the gross merchandise value, again, higher by over 30%. On the other hand, quite a few laggards as well. NCC from the broad end of the markets, in the post-results conference call, the management had actually withdrawn the revenue growth guidance. That stock down by almost 3%. Medanta, one of the top laggards as far as the NSE 500 index is concerned. Again, margins under pressure for this particular name. Trent, multiple downgrades coming in. Growth concerns persist as far as this high-value stock is concerned. And Trill, or Transformers and Rectifiers, one of the casualties of the session today. A weak Q2, margin concerns. Along with that, World Bank has gone ahead and blacklisted this particular name. Street clearly doesn't like that 20% lower as far as Trill is concerned.
Take that point, Vivek. Thanks a lot for that. So those are a bunch of stocks which are buzzing around in the back of numbers, news, and a lot of volumes as well. Greenlam Industries, however, the first management on the show today, the laminate major reported a good revenue. 18% jump out there. Laminates and plywoods business saw improvement. Panels were the ones that was a new addition, or that is what added to their overall revenues as well as against the same time last quarter. Saurabh Mittal, who's the MD and CEO, joins in now. Saurabh, thanks a lot for joining in. Congratulations. The second quarter, despite it being, a challenging one from a demand environment, has done well for you. 18% revenue growth, EBITDA growth of 28% as well. So the question, first half, 15% revenue. The last time you joined us, you said 18 to 20% revenue growth for FY26 with 11 to 12% blended EBITDA margins. You're pretty much there when it comes to the EBITDA margins. But the second half, do you think you can make up for your overall target of 18 to 20% revenue growth for the year?
Yeah, so I think we should be able to make up. And last year, we had a weak H2. And I think with the way Q2 has progressed for us, so I think we are on with that 18, 20%, kind of a top line number for FY26.
Saurabh, hi. Thanks very much for joining in. 18 to 20% growth is what you are sticking with for the entire year. But just give us a sense in terms of what that's predicated on for the second half. If you had to break up the volume mix, the pricing mix, and the segment growth that you're anticipating, what's going to be driving the growth?
So, like if you see in Q2, we grew across all parts of our business. The laminates, the core business, is exceptionally well in terms of volume, value, gross margins, EBITDA margins. The plywood and allied category also did well, with plywood and door doing very well. The chipboard business gained decent traction. We grew about 50% in Q2 versus Q1, and Q1 was our first quarter. So I think going ahead, I think each part of our business, we think will grow, both domestic and international. There could be some gaps here and there, but by and large, we expect growth across every part of our business.
Sure. Saurabh, you're expecting growth across all your businesses. I just want to understand specifically for the panel side of the business. Your utilization, I believe chipboard utilization is at 36%. Where do you see that headed now? And what would be the peak revenues that one could see coming in from this business as well? In terms of contribution, growth, what can we watch out for?
Right. So Q1, like I said, was a first quarter for that business. And I think progressively we'll keep winning more business, and which will help us increase utilization, increase revenues. We had said earlier, year 3, we expect full utilization. At a full utilization, revenues would be something like a 725 to 750 crores. So that's on the peak revenue. I think moving ahead, we'll keep getting better from where we were in Q2. Can't give an exact number on every quarter, but I think this will keep inching up as we move ahead.
All right, this will keep inching up as you move ahead. Could you give us a sense on the break-even for your veneer business and the plywood business? You had earlier indicated that it's fairly near. So I just wanted to understand on that factor and exports as well. What proportion are exports at right now, and where do they stand going forward?
Sure. So in the plywood and light category, we have plywoods, decorative veneer, flooring, and doors. The veneer business and flooring business have already achieved the break-even in Q2. Like we said last time, we're close to it. The ply business obviously is a larger investment, and there too we're winning market share in the premium plywood category, and sales are going up. And you can see in Q2 we did about, I think, 45-50% of growth. So in the plywood and the door business also, door break-even is just at the corner, and ply, I think we will have to still do a little bit more numbers to get to a break-even on the ply business. On the exports, again, Q2 was very good for us in exports. We grew about 10-12%. Revenues were good, and Q1 was a bit weak for us. So, and exports is about 45% of the total revenue of the company, and about 50-51% of the laminates business. So I think exports too, we see decent traction in many markets. And in fact, we've announced expansion for laminates, in this quarter, and we're adding 2 lines of laminates, which will be about 2 million sheets and boards, which will come up by Q4 of FY27. So exports too, I think, should do well overall. Some markets, there could be some challenges, but by and large, we expect decent growth on the export front too.
Okay, so you're expecting maybe a 10 to 12% growth in terms of the export market to continue?
Yeah, we could say that, yes.
Okay. Is that going to be the key driver going forward? If you had to compare it to the domestic business, where are you sort of pushing your energies in terms of incremental growth and CapEx?
So on the growth, the laminates business is like 50% domestic and 50% international. All the wood business, which is plywood, chipboard, veneer, flooring, door, these are largely domestic businesses. So I think as we move ahead, we expect growth in both domestic and international markets. The recent investments have been largely done on the wood category. So we expect the domestic mix to improve as a percent of the overall revenue mix, but will grow in both the geographies. We have a very strong foothold in both international markets and domestic markets. And I think, we'll keep growing in both the places. And the capacities we've built in laminates are of global size and scale. So I think clearly, that's a core strength of the company, and we expect growth.
What would that mix be going forward then? If you expect domestic to pick up in terms of the mix there, what is the mix that you're envisaging? Maybe FY27 end, what would we watch out for?
So my sense would be 60% domestic, 40% exports as a company. Okay. But if you look at laminates, maybe still remain in a similar range of 50% each.
Okay.
Right. And
about 20% to here there.
How much more room do you have for working capital? Because earlier it was 65, 70 days, closer to 70 days. Now it's come down sub 50 days, 47. Right. As we move forward with more plants coming in, more products, more businesses, do you think this is the best that we have in terms of NWC, or at some point you will see further improvement here as well?
So actually, I'm not so sure. We have improved net working capital cycle to 47. This is the best we've done.
Yeah.
Having said that, we still have the chipboard business where the working capital cycle is still not as efficient as we want it to be.
Exactly.
And likewise in the ply business. And we've seen, if you see Q2 of last year versus Q2 of this year, overall revenues went up by about 130 crores. And we actually could reduce net working capital cycle in value and obviously in days also. So I think it depends on how things go. But my sense is if we keep improving revenues, because our collection periods in the market is one of the best, I think net working capital cycle can still improve a bit, but want us to see how this goes actually.
Take that point. Thank you so much for joining in and giving us your outlook on the business going forward. 18 to 20% revenue growth with 11 to 12% EBITDA margin, something you're on course to do. Second half looks a lot better. There are some triggers coming in from new plants, etc. that will play out too. But working capital days, something that we will monitor as we go along, because you've already seen a fair amount of improvement. Take a short break, come back, get you more on the markets. We'll focus on Lenskart and transformers and rectifiers. Stay with us.
Welcome back. Well, 0.5% higher currently for the Nifty. We have the Bank Nifty, which is up around 0.2%. But let's talk about the big debut in today's trading session. In fact, it is the big story of today and has been for the IPO market in the past couple of weeks. Let's focus on the new kid on the block, Lenskart. The company, in fact, did see a bit of a muted debut on the bourses today. It listed at a bit of around a 2% discount at 395 rupees per share versus the issue price of around 400 odd rupees. Now the stock, however, is significantly off its opening lows. But Mangalam, you've looked at the IPO well from the start, and you've tracked it in terms of its anchor book, in terms of what the management said. What's your sense? It's a bit of a subdued debut, you'd say.
Well, it's a subdued debut, but some would say it's a stellar debut given the sort of valuations at which the issue was offered as well. So there's this classic case when it comes to Lenskart, are good businesses good investments? Because from a business standpoint, no two ways about it. It is, one of the best that we have in its segment, 2.5 times bigger than what we have in Titan as well. So let's look at the listing itself. It listed at 395, went all the way down to 354, then recovered more than 10% from lows, and currently is sitting a little above the issue price of 402 as well. There was strong demand for the issue. Total subscription 28 times, retail 7.5 times, HNIs 18 times, and institutions 40 times. It is a company that, designs and sells a wide range of eyewear products. You don't need me to tell that, just walk down the road anywhere in India, every nook and cranny, you have 2150 stores. And apart from India, they acquired Owndays as well, which is an international company that accounts for nearly 40% of their revenue, the international operations for the company. India margins at 12%, international at 17%. So put that together with increasing contribution from international, there is case for margins improving for them as well. The total addressable market in India, as per them, is close to 80,000 crores and likely to be around 1,50,000 crores by 2030. International, 1,60,000 crores, likely to be about 2,11,000 crores by 2030 as well. They are 2.5 times bigger in sales and footprint compared to its nearest competitor. The organized business is growing at 1.5 times unorganized, and brand Lenskart has presence across all segments. So 18% revenue comes in sub 2,000 rupees pair, and 18% comes above 10,000 rupees a pair as well. So it, straddles on both sides of the value spectrum. They've done about 1,900 crore of sales in the first quarter with around 18% margins and a net profit at 60 times. The question is, where is the catch? The catch is in the valuation, because at current levels, the stock is trading upwards of 70,000 crores in terms of a market cap. Now, even if you annualize the current revenue of the company and annualize the current profitability of the company, it gives you closer to 250 to 300 crores in terms of profit. 300 crores in terms of profit for a 70,000 crore company makes it a 234 times FY25 price to earning. That's trailing, but FY26 as well, upwards of 200 times. Price to sales as well, closer to 8 to 9 times. So great company, but not much left on the table. And today's move also will have to keep in mind that 15% of the equity right now is available for trade. 85% still locked in, with one lock-in chunk opening a month from here, around 3rd February or something. So we'll watch out for how it plays out over a longer period of time, given its valuations and growth, underlying growth trajectory. So that's one of those things that we've been discussing all through ever since the IPO was announced, but even now post its listing. In fact, we heard from Piyush Bansal at the Global Leadership Summit, and this is what he had to say.
I think it is time that we start creating global brands, because my firm belief is that in the long term, if you think 10, 20 years, either you are global standard or you may cease to exist. What will it take for us to create global companies? I think the most important thing is belief. But today about 40% of our revenue comes from international markets. I think that belief was really important. What we have achieved so far is a very small portion of what we intend to do. We want to give a vision to 1 billion people. We have given it to only about 25 million people so far. Right? So there is a lot more to do ahead. And I do think game is going to be about how do you leverage technology, and this is my firm belief, to solve some of the biggest obstacles in getting access and affordability to people, right? Because what are the two important things? One is, how do you deliver great experience? And second is, how do you deliver it most efficiently? And in both of these, technology has a very large role to play.
Right, so that's about Lenskart. You'll obviously hear a lot more about this company as the months progress. That's up 2%. The listing of the day has seen a big recovery from the lows as well. But one stock which is still locked in lower circuit of 20% is Transformers and Rectifiers, under pressure after having reported a weak set of second quarter numbers and a little more. Vinny.
Hi, yes, so absolutely weak set of numbers that's coming from the company even this time. Look at the revenue, just 0.2% decline that we're seeing, 460 crores. So not much of a change there. Execution, that continues to be a problem, seems like it, and that's not changing. So that's a big challenge for the company. Apart from that, when you look at it in terms of margins, 11.2% versus 14.9%. So around a 300 basis points contraction in terms of margins. Mainly the factors that impacted the margins obviously is the higher staff cost, other operating expenses, that's higher as well. So that impacted the margins. So this led to the lowest margins that the company has seen since Q3 FY24. And obviously it's much below their guidance range of 17 to 18%. They had mentioned this 17 to 18% the last time they spoke with us as well. Now order book, that's also not looking exciting when you look at it, right? Overall order book at 5,472 crores. Last quarter, it was at around 5,246 crores. Inflows are at 590 crores versus 665 crores was the inflow last quarter. Last year also, it was somewhere around 700 crores in terms of inflows. So big challenge that comes in there in terms of numbers. But apart from that, there was one more news flow where World Bank has debarred the company on bidding on its projects, financed projects, for engaging in some corruption or fraud related some issues that were going on in Nigeria. So there's some investigation that is going on that front. But right now, the World Bank has debarred the company from that. So that is what we'll be keeping an eye out on as well. But today, obviously, because of all these news flows, we're seeing some bit of a pressure, and obviously the stock is locked in lower circuit as well.
Okay, all right. So that's Transformers and Rectifiers. That stock is down now. Whopping 20%. But before we move on, just want to point out Emcure should come up for you because they have, announced a tie-up on Wegovy with Novo Nordisk, and that's the reason why you're seeing the stock up around 6.5%. They will be selling a different form of Wegovy, which is basically the same drug, but marketed differently, or, the brand name will be different in the Indian market, and it's going to be an exclusive tie-up with Novo Nordisk, and that's the reason why you're seeing the stock higher by around 6.5%. We'll get more details on that, but as of now, we'll take a short break and we'll focus on a lot more stocks which are buzzing on the other side. Stay tuned.
Welcome back to Halftime Report on CNBC TV 18. As of now, Nifty is managing to hold on to 25,600, 0.5% of gain for the Nifty is what we're seeing. Sector-wise, like we mentioned before as well, IT, Pharma managing to do well in today's trading session. IT, obviously, we're seeing Infosys, LTIM, Oracle Financials, that is also managing to hold on to good gains as well as Emphasis. But a lot of movers are coming in terms of the broader end of the market as well. So that is what we'll be keeping an eye out on. But let's go across to Mangalam now, who's here to tell us what's happening in the world of F&O from the F&O desk.
Well, the Nifty is holding around that 25,634 mark, which is a near 300-point recovery from Friday's low, 140-point gain today as well. And a large chunk of that gain is courtesy Nifty IT, which is up around 2%. The Nifty Bank holding above 58,000, but not the best participant in today's trading session, just supporting the frontline index after a big rally from the lows on Friday. And which is exactly why the India VIX hasn't seen a big fall. In fact, when we had declined from the highs, the India VIX did not see a big rise, and now it hasn't seen a big fall. The Nifty is very close to its 20-day moving average of 25,639, and that will be a bit of a fulcrum as we move forward. If the Nifty crosses this 25,639 and closes above that, as it had been over the last few trading sessions, it's been under that. If it crosses past that, then they could lead to some short covering by the FIIs. Why do I say that? Because, November 5th, the FIIs were 15% long, coming down to 13%. In fact, the start of the series, they were 20% long as well. Put writers are fairly active today. 25,600 put and the 25,500 put. Both of them fairly well shorted today. And that's telling you that maybe the street believes that the base of the market has moved higher from, earlier 25,300, 25,350 to closer to 25,400 to 25,500. So that's something we'll be watching out for. On the way up, however, the current congestion zone needs to be crossed because 25,650 call writers still active, telling you 25,700 thereabouts. There could be some selling and the 25,700 call too. So between 25,700 to 25,750, there could be some supply. That's what the call writers are playing for. A lot of stocks on our radar. Nykaa did well in the morning today. A lot of shorts caught on the wrong side. They covered their position and now the stock is seeing some fresh long build up. But some shorts still stuck in Uno Minda, Nalco, Nuvama Wealth. So short covering underway in a massive way in all these stocks. And fresh shorts right from the word go. Trent is one of those stocks. Top Nifty loser after slowing revenue growth, and open interest is up 18%, telling you the shorting activity is fairly high on Trent.
Okay, all right, Mangalam, thanks very much for that. So that's on Trent. That stock down around 7.7%. At one point was the darling of the markets. But just want to point out that Krishna Diagnostics is doing very well in trade today. That stock has spiked up to a gain of around 13.5%, reacting to its numbers. 819 odd rupees, still, a bit of a distance from its 52-week high of around 1,041 odd rupees, but doing well post its numbers. That stock up around 13.5 odd percent. Take a break. On the other side, Manisha Gupta will have Deepak Balani, who's the Director General, Indian Sugar and Bioenergy Manufacturers Association. Stay tuned.
Welcome back. Joining us on the show now is Deepak Balani. He's DG at ISMA. Mr. Balani, thank you so much for joining in. And the season 25-26 for the sugar industry has started on a positive note, with government allowing 1.5 million tons of export. The concern, though, for immediately would be the parity, because the international sugar prices are trading at a multi-year lows. When do you see an opportunity window opening up for India to be able to export?
Thank you, Manisha ji, for having me in your show. First of all, we welcome the government's decision to permit the export of 15 lakh tons of sugar for this season. And as requested by ISMA, based on the surplus sugar production which we are expecting in this season, so this timely move will definitely enable the industry to plan the production plan for both raws and whites. And this will also ease the domestic stock pressure and also somehow try to stabilize the domestic prices. Having said that, as very rightly mentioned by you, the parity is not there in the international market today. Well, London white today is around $410 per ton, which approximately comes to around 34,000 per ton. And even the New York raw is around 14.1 cents, which approximately is 28,000. So the parity is not there, but we are hoping, and as we had requested the government, that an advance permission will help us in perhaps planning for the raw production, as well as also doing some advance contracts. And we are hoping, looking into the situation where there is an expected trade gap in LQWs starting mid-December until 31st of March, when the Brazil sugar is not in the international market. So there could be a parity. Okay. And having said that, we are hoping that we will have a window for 3.5 months where we can export raw and both whites in the international market. 15 lakh tons should be doable, I believe.
Mr. Balani, one thing done, but there is still, it's still desirable that the ethanol diversion and the MSP and then the ethanol price revision, I mean, those are three top things for the industry. Are you anticipating that that being something that industry would also get from the government?
Definitely, yes. The expectation is always there. We never lose hope, and that is the job of ISMA, to always try and help the industry through policy advocacy. And very rightly said, so this is a good start of the season where we have got an advance permission to export. Having said that, this is a temporary relief, definitely will give a boost to the industry, but a long-term permanent reform structure specifically related to the revision in MSP and ethanol prices, as well as ethanol allocation, is a very, very important aspect, which perhaps need correction by the government through their policy intervention. MSP, which has not been revised for last 5 to 6 years, still stagnated 31 rupees a kilo, which is very unrealistic given the fact the FRP and FSAP has increased, and the realistic cost of production today is almost 41 to 42 rupees. So in order to make sure that the domestic XP prices don't drop below 40, 41, there has to be an MSP. Perhaps that is the only thing which will give a good support to the industry as well as farmers. And as you very rightly said, ethanol pricing, we have been discussing this for quite a long time. But I believe that also, to me, I think it is somewhere in the horizon, and definitely we will be able to achieve the price correction in both juice and B-heavy, as well as the ethanol allocation. Allocation has been very poor this time, 290 crore litre, very poor. So we will have a lot of unutilized capacity. So we have suggested certain measures for the immediate relief for the ethanol capacities to be utilized, and also some permanent and long-term relief.
Mr. Balani, I also want to talk to you about the kind of investments that the sugar industry have made in sense of ethanol. And as you said, the capacities are underutilized, allocations much less than what the street was anticipating. So how much are the underutilized capacities right now for ethanol? What is the kind of investment that has been made for ethanol? And would you say that is at this point in time at a pause, because we do not know whether or not there is a framework or a plan in the very near term for beyond E20?
No, as very rightly mentioned, industry has invested 40,000 crore rupees and has capacity of almost 900 crore litre. And this capacity was put up by the industry based on the Niti Aayog's report, which said when India will achieve E20, 55% of the share will be with the sugar feedstock. And also the ethanol blending program, where there was a commitment of both offtake and pricing based on FRP. Now, that is something which is not happening. Allocation has been near 289 crore litre against the expected 450, 500 crore litre. So that definitely, so the capacity utilization is hardly 30-35%, which is very, very low. And it is very, really unviable for our capacities to be operational. And it's not viable. So it directly affects the entire sugar balance sheet and also puts pressure on the domestic prices and ultimately puts pressure on the cane areas. Having said that, I think there are certain measures which needs to be taken in allocation. One is that at least reserve 50% of the ethanol allocation for sugar feedstock so that we have 50% share and we have a guaranteed offtake. We also, for example, there are certain priorities for juice and B-heavy within the state. Perhaps we have requested the government that the priority should also be extended beyond the state in the deficit states as well.
Okay.
And third is that, we import almost 100 crore liter of denatured alcohol for our ENA use and chemical industry. And since we have too much of capacity today, which is unutilized, maybe the import could be restricted and the denatured alcohol by the chemical industry could be procured by the ethanol production capacities in India.
Okay.
And also we have requested the government to allow export of denatured alcohol, ethanol. So even although there is no parity as of now, but if the permission is there and we see that there is a parity coming, at least the industry could export some of it outside. And the cycle 2, which we are expecting for Q3 and Q4, which perhaps could be around 150 to 200 crore liter, we have requested the government to at least reserve 100 crore liter for the sugar feedstock.
Okay.
These are some of the immediate relief which could be provided to the sugar industry. This is something which perhaps could be provided to the industry immediately.
Okay, absolutely. Point taken there, Mr. Balani. Thank you so much, Manisha, as well as Mr. Balani, for joining us this afternoon for the conversation as well. But on that note, we're going to slip into a very short break. After the break, we'll get to the management of Aarti Drugs to decode their Q2 numbers. Stay tuned in.
Welcome back. You're still tuned into Halftime Report on CNBC TV 18. Let's talk about one particular company, RT Drugs, which in fact has reported what was a good set of numbers. The company witnessed a recovery in terms of margins. The company says Q2 was aided by favorable export mix as well as execution. We have with us Adish Patel, who's the CFO of RT Drugs, joining in. Adish, thank you very much for taking the time out. Well, it's a 9% growth this quarter. Just tell us how the API business did in particular. What was the volume and price offtake, considering that you have indicated that the past 2 quarters odd, you have seen a recovery in demand?
Yeah, so the API volumes actually grew by 9.33% for this quarter, year on year. And majorly entire volumes were driven by because of the exports. In fact, in domestic market, we suffered a couple of percent volume degrowth, especially because of the antibiotic segment. But the export market did fantastically well, as well as the formulations also increased quite a lot. And that is why we got overall 9% value growth for this particular quarter.
So you've said that your exports did very well this quarter. You've said that your momentum also is expected to continue. So put some numbers to that. How much did, say, the domestic market grow this quarter? How much did exports grow this quarter? Yeah. And what are you guiding for both segments?
Yeah. So in fact, we saw around 30% volume growth for exports this particular quarter. And overall for the standalone company, around 42% of the sales came from export market, which is pretty steep. Earlier, we used to have it around 36-37%. And even for formulations, the export market was around 68% of the total sales. And that is the main reason why we saw better margins in this particular quarter.
Okay, so that was the main reason for better margins in this quarter. But then do we start expecting better margins going forward as well? How is the export trend now in Q3? Do you see that continuing?
So the export will continue a little bit, but mainly we are banking more on the fact that 2 greenfield projects, we will see more and more volumes in those greenfield projects. One of the greenfield project which we just started in September month is doing very well. All the quality parameters are matching, impurity profiles are excellent. Whereas the first greenfield project which we commenced last year actually in salicylic acid, we still are carrying few losses which are being expensed out in the current P&L. So whatever numbers you are seeing is after taking into account those losses. So once we reduce those losses, the P&L will look drastically different.
And then margins by the end of the year would be better as well, right? So yeah, we could start seeing better margins in Q3, Q4?
Yes. So typically Q3 for our business is lean, mainly because we have certain therapies like antibiotics and antidiarrheal, which are acute therapies. And December quarter, typically offtake is a bit less. But March quarter should be really good, what we expect.
Okay. Just a couple of questions. Formulations. What was the growth this quarter for your formulations business, especially from the regulated markets?
So overall formulation growth was around 26%. It would be difficult to pinpoint the regulated market growth, but majorly the entire growth has come from the export market. And that is why the percentage of exports to the overall formulation sales for this quarter is around 68%, which typically is around 55%.
Okay. All right. Just one quick follow-up. You seem to be actually focusing on oncology as a segment now. Just give us a sense in terms of how much revenue are you getting from the oncology segment as a therapy, and how much of a push are you looking at when it comes to oncology?
Okay. So this oncology segment is definitely a very long-term game for us. Last year, we just got a formulation plant approved by US FDA for the oncology segment, which was a very important thing, first milestone for us. And then we are registering a lot of oncology molecules. We are doing a lot of R&D in oncology. In fact, you can say 30% of the total capex or investing cash flow this particular year went into formulations, and a majority of that went into the R&D development of oncology products. So we are developing a big basket. It will take around 3 to 4 years for it to meaningfully reflect in the revenues, but the total potential of these molecules from the plant what we have is around 500 to 600 crores per annum. And once we hit that, then definitely the margin profile should look starkly different from what it is right now for formulations.
What would it be?
So as of now, our formulation EBITDA margin is quite less. In fact, it is slightly lesser than the our API and Spec Chem business. Our API Spec Chem business was around 13+% EBITDA margin for this quarter, and formulation was 90 basis less approximately.
Right.
So what we expect, for oncology, for only oncology segment, the margins should be much higher. Let's say in 20s to late 20s. But overall, on aggregate basis, we still would like to achieve that 20% mark for formulation business.
And on API, what's your prognosis on the prices? Do you believe that we bottomed out, or do we see some further correction from current levels? Because that directly impacts the absolute revenue that you guide for, right?
Right. Definitely. So we were expecting that in terms of year-on-year perspective, that we will see some negative price variations in September quarter, and that happened. Means we saw around 3.5% to 4% negative price variation in September quarter. In spite of that, we had a value growth of 6%. The prices have definitely bottomed out. In fact, for few of the molecules, we have seen the prices are slightly going up based on the raw input prices.
Sure.
And certain molecules it is going down, but it is more or less stabilized.
All right, just a quick last question, Adish. Are you all participating in the GLP-1 opportunity because you have an anti-diabetes segment? Is GLP-1 a part of it?
Yeah. So as of now, means for next 5 to 10 years growth, we are engaging outside consultants as well to develop a product portfolio to take care of growth from, let's say, 5 to 10 years perspective. And in that, we will definitely evaluate these molecules. But as of now, we are not announcing anything that we are venturing into that particular segment.
Okay. All right, Adish, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Aarti Drugs. The stock is up around 3.6% in today's trading session. Reacting to its numbers, we'll take a short break, but we'll get you a lot more on the markets once we're back. Stay tuned.
करें।
Welcome back. A solid up move continues for the Nifty. In fact, we're back around the high point of today's trading session, closer to 25,650, and that up move has been led by two underperforming factors. The IT stocks continue to do well. The Nifty Bank, when we started the show, was up around 0.5% or 0.2%. Right now, that's spiked, and that's courtesy ICICI Bank and the others. And before we wrap up on the show, just keep an eye out on Reliance. That big boy too, moving and has taken the Nifty higher. So ICICI Bank's moved higher. Reliance is at the high point of trade, and that explains why the Nifty is at 25,650. Take a short break, come back, get you more of the markets. Business Lunch takes all of that action ahead.
Stocks notch up some gains as an end to the US shutdown and investor optimism on Indian equities provides a sentiment boost. IT, pharma and metals are the big gainers while PSU banks are soft. The stock of Lenskart recovers after listing at a discount to the offer price of 402 rupees following a strong response from institutional investors to its over 7,000 crore rupee IPO. Founder Piyush Bansal sees a big need for vision care and believes that people will gravitate towards the best brands. The government has allowed 1.5 million tons of sugar exports in the 2025-26 season against the industry demand of 2 million tons. The allowance is, however, higher than the 0.8 million tons permitted in the last season. The stocks of sugar producers perk up. Principal Secretary to the Prime Minister, Shaktikanta Das, says that there will be several reforms in the coming days, including the area of ease of doing business. He adds that the Indian economy continues to be strong, stable and resilient despite the trade uncertainties. The longest government shutdown in US history could be set to end after the Senate, with bipartisan effort, votes to pass a stopgap funding bill which will keep the government running till the 30th of January next year. The bill must also be approved by the House of Representatives and President Trump before coming into effect. If there was ever a day that summarized power and the top voices of the country, it was Friday at the Global Leadership Summit of CNBC TV 18. And you're watching Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormuz Fatakia. It's a fairly good start to the week for Indian markets after 2 straight weeks of losses that have come in for the index. Of course, they're still very shy of crossing some very important levels, but a positive start nonetheless. Now the index at the highest point of the day, 25,650, 160 points higher. And a couple of factors leading to this, of course. One being, of course, the hopes rising of the shutdown in the US coming to an end after the Senate vote. Still a lot of processes that need to be completed, but the Dow futures and the Nasdaq futures in particular are rebounding, and the Nasdaq futures are up almost 300 points. And as a result of which, that's showing up on the IT stocks as well in the country. The IT stocks leading the gains on the index in today's session. The Nifty IT up almost 2% in today's session. And the other one, of course, being the Goldman Sachs upgrade that came in for India 13 months after they had downgraded the rating in October of 2024. The Nifty target set at 29,000 by Goldman Sachs. So a couple of positive triggers leading to this strong start to the week. Of course, we are watching out for some big results as well from Bajaj Finance, from ONGC, awaiting more commentary from KPIT Tech. So keep an eye out on all of these names as well. But the talking point all through the morning has been Lenskart. The stock listed at a discount fell further lower, but then has recovered, and recovered how? From those post-listing lows, currently holding on to gains of around 1%. So that's almost a 13% recovery from the lows of the day. And Mangalam is now joining in for more details on this. Mangalam.
Well, for Lenskart, you know, it's the classic question. Good business, and is good business a good investment or not? Especially given the leadership that the company enjoys in its category. And understandably, there was a fair amount of demand for the issue as well. 28 times, led by institutions at 40 times, HNIs at around 18 times as well. But remember, at near 70,000 crore valuation, the company was offered at over 235 times FY25 price to earnings. So that was something that caused the stock to open on a relative muted move. But at the same time, we saw some recovery given the inherent strength in the business from the lows as well. And it's very close to issue price. It's a D2C company that designs and sells a wide range of eyewear products. Of course, Indian business accounts for nearly 60%. They acquired Owndays for $400 million. That now accounts for about 40% of their overall sales. And they have about 2,800 stores, of which 2,150 are in India itself. The unorganized to organized shift for Lenskart, you know, happening at a pace of nearly 1.6 times. And in that as well, they are nearly 2.5 times bigger than their nearest competitor in India. And the brand appeals to both segments of the audience, where
18% comes in from sub 2,000 rupees a pair, and 18% comes in from above 10,000 rupees a pair in terms of sales as well. But then the big question, once again, how much are you paying for it? Because if you look at it, the first quarter revenue is closer to 2,000 crores with 17.5% margins, net profit at 60 crores. You annualize that, on a trailing basis, definitely it's 10.5 times price to sales and 234 times price to earnings. But even if you analyze the current revenue run rate and the profitability run rate, it is between 7 to 8 times 1 year forward earnings, and at the same time trading well over 200 times forward earnings as well. So it is, again, a question of good business versus good investment. And that's exactly the answer that we'll get over the coming days.
Time will tell. Mangalam, thank you for that update. And let's also bring you some key insights on the Indian markets from CNBC TV 18's Global Leadership Summit. Listening to market veterans S. Narain and Rhythm Desai as we take this short break.
We think it's a mature bull market. So, there have been such good stock pickers in India that anything which has to be discovered got discovered. But a lot of people get frustrated.
That is like the efficient market theory.
A lot of people got frustrated. They buy in 2023, the share hasn't worked for 2-3 years. They get irritated, they start selling. So we found that in many sectors, people get frustrated holding a stock for 2-3 years, they don't get return, they come and sell. So we've been trying to buy wherever we find that the seller has got frustrated with holding stocks. Not like 2018 to 20 was very easy. You buy PSU, buy metal, buy telecom. All those stocks are very cheap. Today, all those sectors are not very cheap, but across, whether it is quality, whether it is many other sectors, you'll find someone coming and selling because they waited for 2-3 years, no return, they'll come and sell. So we buy across sectors. And we find, like recently we bought oil and gas, and we found that it suddenly performed. Now, today, if you ask me, is oil and gas the best sector? I would think, because oil and gas has done very well. So we look across sectors at this point of time. But do we expect mega returns from here? For that, we need supply to come down. The day supply comes down for 3 months, this flow comes, our SIP flow keeps coming, then I think we have a good rally ahead.
India's relative valuations have corrected a long way, and we're now actually at levels which we don't see very often. So India does look far more appealing as a market to foreign investors. And the final point is that in recent months, the focus of global tourist capital, the one that looks at short-term returns, has been on AI. And India does not really offer an AI trade. So ultimate trigger point for the return of the FPI will be if the AI trade starts fading. I think India will suddenly start looking very attractive.
Welcome back. Now, life insurance companies recorded strong overall performance in October. Yash is now joining in with the fine print of that. Yash.
Well, the numbers have been very strong as far as the life insurance sector is concerned. And one standout performer in the month of October has been SBI Life. SBI Life has recorded a second straight month of very strong growth in the month of October. And this growth in the month of October comes on a very strong base again, which means October of last year. To speak about specific numbers, SBI Life Insurance, as I said, very strong growth on a strong base. The new business premium growing by 20%, AP growing by 19%, retail AP also growing by about 19%. The performance from SBI Life was followed by Axis Max Life Insurance, which again grew strongly on a strong base. NBP, the new business premium for Axis Max Life, growing at 15%. AP at 17%, retail AP at 16%. HDFC Life, it was a mixed growth on a strong base. The new business premium growing by about 1%, AP growing by 7%, retail AP growing by 9%. ICICI Prudential Life Insurance, weak growth on a strong base. The new business premium, that saw a growth of 7%, AP saw a growth of 9%, retail AP grew by about 3%. Finally, LIC, it was a strong growth, but one needs to factor in the fact that this strong growth comes on a very weak or a favorable base. So the new business premium, that saw a growth of 13%, AP saw a growth of 30%, retail AP also grew by about 28%.
Yash, thank you for that update from the life insurance companies. The other stock that is in focus is Bosch, and that is following reports that China has resumed supplying chips to car makers. Sudarshan is now joining in with more on this. Sudarshan.
So over the last few weeks, one company that you would have seen in the headlines was Nexperia. The reason, it's a Chinese chip making company. It's one of the biggest suppliers to global automakers. Now, recently, US President had a meeting with Chinese President, and they had reached to certain agreements. And after that, we have seen that China is lifting the curbs on rare earths and all the other. Similarly, US has lifted the curbs, and after US has lifted the curb, it has also lifted the curb on Nexperia. And over the weekend, there was a statement of Volkswagen that it has started seeing the supply of chip from Nexperia, and first delivery has arrived. Now, if you remember, on October 28, Bosch had released a statement saying that there are certain problems or there are certain issues with the chip supply, and Nexperia, being one of the biggest supplier of electrical component of the company, if the supply does not improve, it might have an impact on its business. But with now the restrictions have been lifted, it can be taken positively for Bosch.
And the stock is reacting to that positively as well. Sudarshan, thank you for that update. Now, the Supreme Court will soon hear a PIL on the regulation and use of artificial intelligence. Ashmit is joining in with more details on this. Ashmit.
Well, this is a key talking point that has emerged once again now, this time at the hands of the Supreme Court. Public interest litigation has been filed. The public interest litigation flagged the use of AI and the lack of a regulatory framework. Now, these are aspects that have been flagged before the Apex Court. What's interesting is that this was done before a bench headed by no less than the Chief Justice of India. And importantly, the Chief Justice of India remarked that he himself had seen pictures of himself, of other Supreme Court judges that had been morphed using AI tools, using AI technology, and thereby noting that there is concern that the Apex Court, that the Supreme Court now feels with respect to this new technology and with respect to the need for a regulatory framework. So with that in mind, the Supreme Court essentially saying that it is agreeing to hear this petition. The Supreme Court will be taking up this PIL 2 weeks from now. On the sidelines, important to mention that as far as deep fakes is concerned, that is one aspect where the government is doing some work. The government has proposed amending the current IT rules that are in place. The amendment to the IT rules essentially proposes that any content that is put out that is generated by AI will need to be watermarked, will need to be clearly labeled so that the users can clearly gauge for themselves whether this is an authentic content or whether it's generated by AI. Those rules, of course, are currently not in effect. They're currently in the public domain for consultation, but there is a framework that is being contemplated. The Apex Court also voicing some concern. 2 weeks from now is when the case gets taken up once again.
Ashmit, thank you for bringing us those updates. Let's bring you some more highlights from the CNBC TV 18 Global Leadership Summit. The Principal Secretary to the Indian Prime Minister, Shaktikanta Das, says that the Indian economy continues to be sound, stable and resilient amidst the global uncertainties. He also reinforces that more reforms are in the offing, especially on the ease of doing business front. Listen into what he had to say.
The overall, in the global context currently, when the world order is changing, when the rules of international trade are being rewritten, when multilateralism is being replaced by regional agreements and by bilateral agreements, given the current uncertainties all around, both geopolitical and economic, Indian economy continues to be sound, stable, and resilient. That's the first point which I would like to mention. I can back it up with a series of factual details, but in the interest of time, I'll leave it at that. Second, the goal of Viksit Bharat, that is making Indian economy as an advanced economy by 2047, it's very much on track, and the Honorable Prime Minister has set the roadmap. You would have seen, just think of 2025, the kind of reforms which have been taken, GST, next-gen GST reforms which were undertaken recently. The Prime Minister talked about it on 15th of August from Red Fort, and within 5 weeks, on 22nd of December, the next-gen GST reforms were implemented with the cooperation of all the states. So the second point I want to mention is that the goals of Viksit Bharat, the roadmap has been laid. Several reforms this year have been undertaken, not only in GST, but also in non-financial sector deregulation, for which a high-level committee has been appointed. So in the days and months to come, you will see a series of reform measures relating to ease of doing business, relating to making Indian economy more competitive. All these measures will follow. So as the Prime Minister has pointed out on 15th August, I'm referring to that because that was really a moment which really marked a leap to the future. On 15th August, the PM PM stressed that reforms will continue with greater vigor. And thereafter, we had GST 2.0. Many deregulation measures are in the offing, and several other measures are in the offing. That's the second point which I would like to mention.
We'll take a short break for now. More news and updates follow on the other side. Stay tuned. Welcome back. Now, the U.S. Senate late on Sunday moved to end the 40-day shutdown and the vote to advance such a bill passed by a 60-40 margin. Even if the Senate passes the bill, the package must still be approved by the House of Representatives and signed by President Donald Trump. Now, under the deal, the Republicans will vote in December on extending subsidies under the Affordable Care Act, a key promise of the Democrats ahead of the 2026 midterm polls. A British state broadcaster BBC's Director General Tim Davie and new CEO Deborah Turns have resigned after a leaked internal memo that suggested a documentary produced by the BBC had edited 2 parts of the US President Donald Trump's speech together so that he appeared to explicitly encourage the Capitol Hill riot of January 2021. The US President Trump also welcomed the resignation of the 2 officials. A couple of stocks that should be on your radar. HCLTech is one of them. We addressed it just before the results, just at the start of the show as well. HCLTech awaiting more commentary from the management, but before that, the stock has surged to the highest point of the day. At one point was up almost 4%, so it's a slight cool off, but still seeing gains. Remember, the stock is down 20% on a year-to-date basis. Epigril's numbers flashing at the bottom of your screen. The profits are down 37% from last year. The stock has taken a bit of a nosedive after the announcement of the numbers. It will be interesting to see if there is any one-off in the base quarter or if there is lower other income. We'll see more numbers from the revenue and the margin front as well for Epigril. But for now, 7% lower on that stock. Among the top Nifty losers, of course, Trent continues to lead that, 7% lower after a slew of downgrades and price target cuts coming in after the results that were declared after market are 7.5% lower now on Trent at 42.77. I take your leave on this edition of Business Lunch from me and the team. Thank you so much for watching. Midcap Radar on the other side.
Good afternoon and welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Vivek Iyer and with me today is Ekta Batra. Good afternoon, Ekta. Well, markets are in the green. The Midcap index advanced decline ratio is positive, but you have a lot lined up on the show today.
Hi, Vivek. Yes, absolutely. So we have a buzzing show ahead of us in the next 30 odd minutes. So let's take our viewers through all of the top stories that you need to be tracking at this hour. These are top headlines. Stocks notch up some gains as an end to the US shutdown and investor optimism on Indian equities provides a sentiment boost. IT, pharma and metals are the big gainers while PSU banks trade soft, mid-caps in line.
Krishna Diagnostics surges after reporting its highest ever quarterly profits, revenues up 10.5%, while profit surges 22.2% on a year-on-year basis.
Weak Q2 numbers drag Shipping Corporation. Company reports weakness across business segments with the revenue and margin falling across the board.
Transformers and rectifiers under pressure after reporting a weak Q2. Along with that, the World Bank has also debarred the company from bidding on its finance projects for alleged corruption as well as fraud tied to a $486 million project to improve Nigeria's electric grid.
And NCC is under pressure after the company reports its Q2 numbers and withdraws revenue guidance for FY26. Revenue for the second quarter was down over 12%, while EBITDA declined 11.5%.
Well, those are the top headlines that we are tracking on this edition of Midcap Radar. Quite a few stocks in focus, as you can see on the bottom of your screen. It's the last week of Q2 earnings season, and results are coming in thick and fast. Electronic Smart, while profitability is down almost 30% for the company on a year-on-year basis. Along with that, even HCLTech has reported its results for Q2 and in line with NHPC. Remember, NHPC actually saw a subdued quarter on back of heavy monsoons across the country. So HCLTech too has slipped a little bit after reporting its numbers. Along with that, KPIT Technologies, remember, just around a half an hour ago, reported its results. KPIT Technologies, it was expected to be a slightly subdued quarter for the company. It reported results largely in line with what the street was anticipating, and KPIT Technologies now has surged to the day's highest point, almost 2.5% higher. But this is our special segment, Midcap Movers. Sudarshan is standing by the wall to take us through the midcaps that are moving around in the session.
So first, let's talk about the companies which have reported earnings and are reacting to that. First, on top of the list is Nalco, up more than 9%. Remember, it's one of the major components is alumina, which has reported volumes of almost 40% higher if you compare it YOY, and that's the reason it's up. Nykaa has been reporting a strong set of numbers. This quarter also, company has reported highest ever EBITDA and profit since its IPO. On the back of that, it's up more than 7%. Trent Pharma, on a regular basis, company keeps reporting a healthy set of earnings. This quarter also, its margin was almost 33%, almost largely in line. All the other segments also have seen a healthy growth. That's the reason up more than 6%. Minda has maintained its guidance margin guidance range, and that's the reason up more than 7%. HBL Engineering had not only reported earnings that were healthy, but also has bagged an order. On the back of that, stock is up almost 12%. Some of the other mid-cap gainers, Indian Metals. If you remember, it had done a deal with Tata Steel for a plant, and after on that day, company had seen profit booking. Since then, stock has been moving higher, and today also the stock is up almost 11%. Dreamfox also had reported earnings, but the stock has made an acquisition. It's a very small acquisition, but company had been under pressure over the last few months. But today, on the back of that, stock is up almost 9%. Bharat Dynamics, like all the other defense names, is seeing a buying today, up almost 5%. IIFL Finance, remember, gold is back over $4,000 per ounce, like Muthoot Finance and Manappuram. Even IIFL Finance is saying buying. Stock is up currently almost 3%. Last one is Lupin. Lupin has raised EBITDA margin guidance for FY26 to in the range of 25 to 26% from earlier level of 24 to 25%. Also, earnings were largely better than expectations. That's the reason you are seeing stock moving higher, up more than 2%. Some of the stocks which are under pressure, on top of the list is Amber Enterprises. After slipping almost up to 15% on Friday, but it had made an intraday recovery. Stock is seeing under pressure today also. It's down almost 3%. NCC has withdrawn its guidance for FY26. That's the reason. After Friday's, the stock was under pressure. Today also the stock is down almost 2%. LIC, Earnings were largely in line, but today IRDA has released the October month data in which company has seen a healthy growth. But remember, it's on a very low base. That's the reason even a report suggests that OFS is expected. That's the reason stock is under pressure. Ola Electric has been under pressure for second straight day. The results were very weak for the Q2 FY26. Today also the stock is down almost 4%. Last one is Affle Capital. It was a very weak set of earnings that company has reported for Q2 FY26, and that's the reason it's down more than 5%.
Okay, all right. Definitely a very buzzing screen in terms of a lot of numbers. And imagine that we have around 4 to 5 days left in terms of reporting numbers. Thanks, Sudarshan, for that. So that's the lively screen on your, which Sudarshan just brought us on Midcap Radar. We'll take a short break, but the management of Gateway Distriparks joins in next to discuss their Q2 numbers and more. Stay tuned.
safe.
Welcome back to Midcap Radar. Well, as promised, Gateway Distriparks is the first management on our radar. The company's Q2 performance was impacted amid inclusion of Snowman Logistics as its subsidiary. Samvid Gupta, who's the joint MD at Gateway Distriparks, joins us now to discuss more on how Q2 panned and what is the outlook as far as the rest of FY26 is concerned. Samvid, thank you so much for joining us. Well, first up, give us a sense of how exactly Q2 panned out. Give us numbers in terms of what was the EBITDA per 20-foot equivalent for the rail as well as the CFS business in Q2 FY26. What is the guidance you're giving us?
Hi, good afternoon. Thank you for having me. So the Q2 numbers were basically on the rail side, 9,300 EBITDA per TU. And on the CFS side, it was close to about 1,000 per TU. But the CFS segment had some one-offs, which include some old provisions, some legal, some bad debts. So we expect that to go back to 1,300. Rail on an as-is basis will stay at this level. But going forward, we are going to find a new metric on how to report the EBITDA per TU or our overall margins, because as we add domestic and Ankleshwar into this number will come down and it won't reflect a true picture of the profitability. But we'll probably figure that out and come back next quarter on how to report it going forward.
Okay. Samit, just give us a sense in terms of the volumes that you're targeting in the rail business. You had guided for double digit earlier.
Yeah, so we're sticking with that double-digit guidance. We have about 10 to 12% in our mind for the full financial year. Ankleshwar has seen domestic volume start in the month of October, and that'll ramp up slowly. It was our first train right now, but towards the end of the year, that'll start contributing a bit. And for F1, for next FY, the first quarter should see the ICD volumes at Ankleshwar also start. So that will also contribute additionally to next year's volumes.
Okay. And the CFS business?
CFS will continue at about 5 to 6% in terms of volume growth. Revenue, we've changed the mix of business a little bit. So revenue is going up at about 9 to 10%, but the margins will remain as is where they are.
Okay. Samvid, one thing we want to understand is earlier you had alluded to the fact that you are looking to divest the CFS business. So where are we currently on the divestment of that? And also, what is the kind of interest you've received, especially when you're looking at this divestment? Even without that, debt has come down. So what is the outlook on debt also going forward?
Yeah, our net debt's at about 80 crores for the month of September. As of today, it's closer to about 55 crores net debt. So we're very comfortable in that position. CFS divestment, while we were looking for a buyer for the entire 5 CFSs, we weren't able to find the right valuation. We got some piecemeal offers that came in, but they weren't up to the mark. Okay. So we're not actively looking. We're not against divesting it if something comes in.
It's on the back burner for now. Is that what you're saying?
Yes, that's correct.
Okay.
Okay. What are the valuations that you're probably looking for at this point?
We were targeting 1,000 plus. But again, we got individual offers and they weren't adding up to that amount, and not for all locations as well. So we're happy to continue because it's still giving healthy cash flow, and it's seen some improvement this year versus last year.
Okay. Samvid, the other question is, especially with the upcoming DFC, you will benefit, once the final leg to JNPT does become operational. Can you quantify, what kind of number one opportunity is there? Number two, what is the kind of cost operationalization or rationalization savings you could see there?
So it's hard to quantify what the volume benefit will be. It'll be a gradual shift, but basically it'll be a shift from road to rail will further help. When Gujarat got connected, we saw a big jump in our volumes from the road to rail, especially for North India. Right. We're hoping a similar trend for all the volumes still going towards JNPT will happen once the final connectivity is there. But I think it'll be a more of 1 to 2% additional shift from road to rail per year. In terms of cost, obviously it helps in terms of double stacking. So it'll basically lower our cost per train, sending it the extra handling that we do at one of our hubs in Viramgam or now in Ankleshwar, that will also reduce. So at least 2,000 to 3,000 per TU for the JNPT volumes can be helped, and it'll be passed on also to the customers.
Okay, and Especially in Q2, exports has seen quite a bit of softness. What was the reason for that? Was it largely tariff-related worries? What kind of recovery can you make in H2?
Yeah, so US business was obviously impacted because of the tariffs last quarter. We saw about a 5% dip in exports. Imports also rose during the same period. So the imbalance was about 58% imports and balance for exports. But hopefully these trade deals that we're discussing with US, UK, UK is already done, but the implementation will happen next year. EU, along with some other smaller countries, that will help increase India's exports. So for next year, we're quite positive that the number comes back closer to 50-50.
Okay. What about Snowman Logistics? Any further stake addition that you're looking at there? Your current holding is at around 50%?
So no additional plans as of now. Our initial target was 50%. We're not against it, but we have nothing in mind immediately.
Okay. All right, Samvit, we're going to leave it on that note. Thanks very much for joining in and giving us your quick take. So that's Gateway Distriparks. That stock is just about lower by around 1% Take a short break. But up next, we'll connect with the second management on the show, Arvind, to discuss their Q2 numbers. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC TV 18. Well, Arvind reported what was a good set of Q2 numbers. Steady growth continued despite tariff headwinds. We have with us Puneet Lalbhai, who's the VC at Arvind, now joining in to discuss the performance. Puneet, hi. Welcome to the show. Well, that is the big question then. This was a quarter where you did see the US tariffs impact business. Just give us a sense in terms of what the impact was on the P&L this time and how are you navigating the tariff issue?
So yes, you're right. It is a very challenging market currently because most of the tariffs have now kicked in. However, the mitigating factor has been a very strong push on cost and efficiency, which has sort of offset the tariffs. And in lieu of discounts, we have shored up volumes with our customers. That's been the other positive. So we are sort of slightly under pressure on margin, but we are making up for that through volumes and efficiency.
So you have around 25% of your sales going to the US, and that's a majority of the impact in terms of margins is coming in from there.
Correct.
Okay, Mr. Lalbhai, on a quarterly basis, 25 to 30 crore hit. How much of that can be offset by the India-UK FTA? Are you seeing increased traction on that front?
Yes, so the groundwork for shoring up volumes there is ongoing. However, it's a much smaller geography, so one has to be sort of realistic in how much volume can come through the UK FTA, but up to 10% of the company's volumes we see in the future, up from the 4-5% that is now. So we can essentially double our UK business going forward. Of course, the benefits of the UK FTA will get implemented only next year.
Are you, are you indirectly exporting, say, via Bangladesh and other geographies such as Sri Lanka into geographies such as the US?
Yes, we are, and that would be almost 50% of the overall US exposure. So in addition to the about 20% direct exposure, there would be another 15 to 20% that would be through other geographies. That is not as badly affected. However, even there, because the tariffs have been rolled out, though at lower levels in these other countries as well, there is some pressure to pass on further discounts.
Okay. Mr. Lalbhai, the other thing want to understand is, especially when we look at the three segments, denim, woven, as well as garments, the order book in all three of the segments is pretty strong. So H2, do you expect better volumes? But you also mentioned that, there is realization pressure. So what is the kind of realization pressure that you're witnessing, and what can be the volume growth?
So we expect that we'll be able to make up in terms of efficiency what we lose in terms of realization.
Okay.
And the second half of the year generally is more buoyant in terms of the business cycle. So we should see good volumes. At least in Q3, we have a very healthy order book going forward.
Are you seeing a structural shift from your clients to other geographies or to other, other businesses in order to mitigate the impact of the tariffs?
Well, the big structural shift is the move away from China. Okay. And any other structural shift is tactical at this point in time. So okay. I would expect the India volumes to remain intact if all else remains equal, unless, of course, it becomes clear that we are never going to have a trade deal. So right now, people are expecting that there will be a trade deal at some point in time, even if it's a couple of quarters down the road. And people are keeping the faith in India so far.
But are you curtailing capex in lieu of this?
We had done so at the time when tariffs first hit. However, it is becoming clear that we will be able to mitigate the impacts of those tariffs as things stand today. So we have resumed cautiously capex because there is good demand both in the US and in other geographies, and especially in India. So we cannot completely sort of abandon increasing capacities where they're needed.
Understood that. Mr. Lalbhai, talking about the AMD business, almost 15% year-on-year growth, guidance in the range of 18 to 20% growth. What are the segments that are seeing traction? Any segments is witnessing slowdown? And how much of it is due to the new defense orders?
So the defense is still quite a small part of the overall revenue, though we are quite buoyant about that segment going forward. If you see, the composites and the industrial segment have outperformed this quarter. There, the impacts of the tariffs have been rather minimal. The human protection business, which is the largest segment in the advanced materials business, is the most affected by tariffs. There also, we've seen a growth, but we've seen a little bit of margin pressure in lieu of the tariffs.
Okay, all right. Well, we wish you luck. Puneet, thanks very much for joining in and speaking with us. And we'll touch base when there's little more clarity with regards to what's happening on the tariff front with India and the US. Well, on that note, that's all the time that we have on Midcap Radar. Your stocks once we're back. Stay tuned.
Hello, good afternoon. You're tuned into Your Stocks, coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Markets, yes, managing to hold on to the green, but today, as of now, we've come off the day's highest point. Right now, 25,600, around that mark is what the Nifty is trading at. 0.4% of gain is what they are managing to hold on to. We have BLS, which reported its numbers as well. So let's keep an eye out on the numbers over there. As of now, the stock is down almost 1%. But yes, in terms of overall market, managing to hold on to gains. IT, the top sectoral gainer. Pharma managing to hold on to gains as well. Nifty Bank, 0.2% of gain there. No complaining on that front. Broader end of the market performing in tandem with the benchmark indices. And advanced decline ratio is largely even Steven right now when you look at it, but more in the favor of advances than declines. So yes, you're seeing that intersection that came in. But as of now, again, 1,400 stocks on that one side, approximately 1,400 stocks on the decline side as well. So let's keep an eye out on where we see these lines move in the second half of the trading session as well. But let's bring on board our experts for today. We have Ashish Kyal, a chartered market technician and author at Wave Strategy Advisors, as well as Gaurang Shah, Senior Vice President at Jayajit Investments, to talk to us about the markets as well as in terms of your stock-related queries. We'll be solving all of that. Ashish as well as Gaurang, good afternoon, and thank you so much for joining us on the show, as always. I'll just start with the queries then. Firstly, we'll have the first query that's coming from Priyanka Iyer, who's writing to us from Chennai. She's holding 150 shares of Rajratan Global Wires. Price is 768 rupees, so making a significant loss here. Now, she wants to know if she could continue to hold, sell, or what should she do now? And if she sells, which other stock should she look at? Gaurang, good afternoon. What's your view on this?
Thank you, Vinny. Good afternoon to you, to my good friend Ashish, as well as to all the viewers of CNBC TV 18. A small disclosure, as always, Vinny. All recommendations are a part of our research team recommendations. Our company, Jayajit or I, we do not have any personal investments, no conflict of interest, no financial interest, but we give our recommendations to our clients on similar lines. They might have their investment. So I think, first of all, a lesson to learn for investors is that don't let your capital erode 50%, 60%, 70%, because then the recovery of the capital itself becomes a tall order and a difficult task. You have to keep your risk appetite in mind and appropriately take steps if your investment is not going the way you wanted it to go. Having said that, we don't have any specific coverage on Rajratan Wires, but we like the sector, Vinny, and we have positive coverage on names like KEI Industries and Polycap. So I think you need to be a little bit careful when you invest in stock market. Let your alarm bells ring and take appropriate steps.
Sure. Okay. Ashish, what's your view coming for Rajratan Global Wires? What should they do? Should you just get out of the stock now and book their losses?
Afternoon to you, Vinny, and all the viewers, and Gaurangji as well. If you look at Rajratan Wires, the stock has been moving very erratic. My suggestion would be it's best to avoid stocks like this one, which has been trading on a thin volume, and suddenly the volume spikes up and then again goes back. So it's best to be out of this stock. I know there is a significant loss at these levels, but we can see that stock has moved from 320 to now 480 levels. So it's a good level from where the price have reversed even previously on the downside. So book out from here your losses and possibly invest into something like a Polycap. We also have our personal investment into that, and that's why the view is bullish, and the sector as a whole looks positive to me.
Okay, sector as a whole looks positive to you, but get out of these stocks, which are very volatile. One day you see volumes, next there isn't. That's a view from both our experts. So be careful while investing, but as of now, might as well get out of the stock and look at the other names that both Gaurang as well as Ashish have mentioned. Let's move on then to the next query for today. We have Nikhil Mehra, who's writing to us from New Delhi, holding 100 shares of Pidilite. Price is 1,145. Currently, the stock is trading at 1,457. Wants to know from the long-term perspective, Pidilite Industries, what should they be doing with this one? Gaurang, your view coming in for Pidilite, Q2, consistently they've been managing to perform, so there's no complaining at that front. What's your outlook now?
So, Vinny, I think they have got strong power brands, first of all, Fevikwik, Fevicol, etc. And of course, the specialty chemical sector looks quite interesting. And we do have, as a disclosure, positive coverage on Pidilite. price point where the investors got invested is also very attractive. And expect higher levels, like you rightly mentioned. I think earnings are going to get better going forward from here on. So long term, hold on to it.
Long term, hold on to it. And Ashish, what's your view for Pidilite? What should one be doing? Because in terms of stock mover returns, especially in the last 6 months, it's not done much, right? So any indication there?
Yes, in past 6 months, the stock has a very important support of 1420. On the upside, there were multiple attempts to cross that 1670 mark, but it failed. So I think it's consolidating. It's in a range. Now it's at the lower end of the range, and the expectation is at least it should go up towards 1570 again. Continue to hold on. From a longer term perspective, I think the stock is just consolidating before giving a breakout, and we can even see the levels of 1700 and higher. So hold on over here. On the downside, 1420, 1410 can be an important support. On the upside, we can expect 1570 over near term and eventually crossing above 1700 levels also.
Okay, surely keeping an eye out on that. Just at the bottom of your screens, you can see the numbers that have come in for Safari Industries. Stock is buzzing in trade, EBITDA up 53%, 16% approximately growth in terms of revenues. Profits have also seen a very, very strong growth coming in, and that's why look at the spike up that we're seeing in the stock as well. Look at the margin expansion, 400 basis point, almost 340 basis point to be precise in terms of margin expansion on a year-on-year basis. Safari Industries, that's buzzing in trade after its numbers. 8% uptick as of now. Let's move on then to the next query for today. We have Kathi Ravan, who's writing to us from Tamil Nadu. He's holding 75 shares of ITC Hotels. Price is 123 rupees per share. They're making a profit on this one. Wants to know if he should continue to hold for a time period of 5 more years, and wants to know if there are any other good stocks in the sector as well that they can watch out for. Gaurang, your view for ITC Hotels? They're ready to hold it for a long term as well, time period.
Vinny, I think the entire hospitality sector looks very, very attractive. As a disclosure, when the demerger was not done of hotel business and listed as a separate entity, we had a coverage on ITC. We currently have coverage on ITC Limited. Sector is looking extremely attractive. I think most of the frontline companies in the hospitality sector have lined up massive capex in existing assets that they have, and along with that, they have a pipeline of opening up new assets going forward. That means adding launching new hotels. Like I said, we are positive on the sector. On ITC Hotels, we don't have coverage, but yes, one name that we are positive on in the hospitality sector is Indian Hotels. Though the number was a little bit disturbing for the second quarter, but I think that was one-off. Long-term, we are positive on Indian Hotels and we like the sector.
Okay, long-term positive on Indian Hotels, like the sector overall as a whole as well. Ashish, ITC Hotels, what should they be doing? Should they continue to hold this? On the charts, what's the indication?
See, ITC Hotels showed a correction from 250 levels, now around 206. But this is a very important price action area. If you look at April 2025, this is where the important supports were. And I think the stock has the potential to reverse up from here on. My suggestion would be hold on over here. The sector as a whole looks positive. The stock has been correcting, but that's a healthy sign. On the downside, important support is around 198. As long as that is intact, we can see some reversal signs, and the stock should again move up towards 230, 240 levels.
Okay, sure. We'll keep an eye out on those levels over there. Will be key as well. So keep an eye out on those levels. Imami's numbers flashing at the bottom of the screen. Profits down 30%. Revenues down 10% on a year-on-year basis at 798 crore rupees. Keep an eye out on that one. The stock is down 2.3% as of now in the trading session. But we're going to sip into a short break right now, viewers. But before we sip into the break, here's a note for you all. You must have noticed that there is a money control stock score just above the line graph. Now, this is a score assigned to each stock based on Money Control's multi-factor algorithms. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, and V factor as well as T factor score. Remember that this is not a buy or sell recommendation. Any investor or viewer is advised to carry out the necessary diligence on their own or through a certified registered financial advisor for investment decisions. Welcome back to your stocks on CNBC TV 18. As of now, when you look at the Nifty, it's holding on to 25,600 again and moved up about that 25,600 mark. So keep an eye on that. But let's keep it going with all your stock-related queries. We still have with us Ashish Gal as well as Gaurang Shah to solve all those doubts. Let's move on to the next query, gentlemen. We have Sukesh Shetty, who's writing to us from Bangalore. He's holding 200 shares of Coromandel International. Price is 2,213 rupees per share. Wants to know the view on the fertilizer stock post-monsoon. Should they continue to hold? What should they be doing? Gaurang, your view coming in for Coromandel International. When you look at it in terms of numbers, seems like a mixed set of numbers. Decent number. Nothing was bad this time. But outlook going forward?
Well, so when again a disclosure, we have a positive coverage since he got in at 2200 plus, and currently the stock is trading at 2160, 70 odd. If he's looking at averaging it, I think it will be a good idea to average some at current levels and bring down the cost of acquisition. Don't average a large quantity, but maybe about 50% you can average over here. And if it goes down a little bit more, you can average some percentage again over there and try to bring down your cost. We remain positive on the sector. And I don't think now fertilizer is only a monsoon story. I think the government policies have evolved for better for the fertilizer stroke urea manufacturing companies. So long-term positive on Coromandel International, but need to average.
Okay. Positive on Coromandel International, but need to average. What's your view, Ashish? Should they look to average? And if at average, then what point should they look to average as well?
See, the overall stock trend from the bigger term perspective has been positive. We are just seeing a short-term correction over here. And I think the stock is now at a very important 61.8% Fibonacci retracement level also. So one can average at current levels. We can see positive divergence on indicators. So those signs are showing the downside momentum is reducing and the stock is poised for reversing back on the upside. The support is going to be around 2050 on the downside, and on upside we can expect the stock to move back towards 2500 or higher levels.
Okay, keep an eye out on those levels over there for Coromandel International. But let's move on. And actually, I just marked two stocks right now. They've just reported their numbers. Both of them spiked up in trade. One is Sarda Energy. You can see at the bottom of your screens for you all. Though they're seeing a net loss of 4 crores versus loss of 2.8 crores last year, we'll wait out for more internals in terms of numbers. Revenue's seen a growth of 32%. But look at the stock, that spiked up in trade after they've reported the numbers. The other one is Carousel. That's another one that spiked up in trade. That was also flashing at the bottom of your screens a short while ago as well, and that is also spiked up in trade. 4-5% of grain is what Carousel is managing to hold on to as well. Look at it. This was also posted its numbers. So keep an eye out on that. Seems like there's a number coming in for Q2 FY26 every minute that we're speaking. But yes, that's about earnings season. But let's move on to the next query. We have Sairam, who's writing to us from Hyderabad. He's holding 3,230 shares of IEX. Price is 188 rupees per share. Wants to know, as a long-term investor, what should they be watching out for in terms of the stock and where do we see it headed? Gaurang, IEX, your view?
Vinay, I hope this is not a short-term trade turned into long-term because of losses. And this stock, IEX, Vinay, has not given any positive returns to either investors or traders. Both have actually lost because of the kind of volatility in the stock. And of course, the policy decision from the government and of course, the negative impact on the stock. You don't have coverage on IEX, but again, try to limit your losses by taking appropriate steps. However, having said that, we are positive on the power generation sector. Tata Power and NTPC are the two investment ideas over here. No comments on IEX since we don't cover.
Okay. Your view on this, Ashish, what should they be doing, right? Like Gaurang is rightly mentioning, limit your losses. At what point for the investor right now, they bought it at 188 rupees, should they have that stop loss now?
See, I think the buying price at around 188 was just before the policy announcement, and the stock seeing very sharp cut on the downside, making a low of around 132, 133 levels. Since then, it is just consolidating. There is no signs of recovery on the upside that we can see, and we do not know how long this consolidation can take. Having said that, I think 133 can be a short-term support on the downside. Ideal will be to exit from the stock or maintain a stop loss of 133. On the upside, if the stock moves back towards that 155 level, my suggestion would be out of it. Instead of this, something like AEC International looks to be much more better, and IEX can be just moving in a range.
Okay, so keep an eye out on those levels Ashish has mentioned, right? 133 could be a stop loss around that 150 mark. If it reaches there, might as well just get out and, reduce the losses that you're already making. So yes, keep an eye out on those levels there. Let's move on then to the next query. We have Meher Khanna, who's writing to us from Visakhapatnam, holding 250 shares of Shakti Pump. Price is 889 rupees per share. She's making a loss on this one. Again, she's a long-term investor. She wants to know if she can continue to hold this for the long term. Shakti Pumps, Gaurang, what's your view?
Well, this stock was quite a performer some time back. I think the stock was trading at about 1100 or 1200. And I think because of some news flows, I think we've seen a downside correction. Makes diversified products in terms of helping irrigation. Don't have any specific coverage, Vinny, on Shakti Pumps. So I won't be able to give a specific comment. Excuse me. But I think the products and the market share is quite good of the company.
And your view, Ashish, on this one?
My suggestion would be to exit from here because the stock has already shown a sharp decline. It was consolidating, broke below its support levels also today and showing some minor recovery, but I think it's best to be out. There is absolutely no volumes and it is erratic. The movement has been erratic and it doesn't look to be good in near future.
Okay, quite erratic, so keep an eye out on that one. But okay, that's the last query for today. So Ashish as well as Gaurang, thank you so much for joining us on the show and as always helping our viewers solve all their stock related queries. Quick look at what the market has been doing. As of now, 25,600, 120 point uptick for the Nifty 50. And in the last 30 odd minutes, which stocks have come up? Sarda Energy, that's the one on the numbers. Graphite India, again, they also reported their numbers. So keep an eye out on that one. With that, HEG also in the last 1 hour is seeing an up move as well. So Graphite India has recovered from the day's lowest point, so keep an eye out on that. ATG, keep an eye out on that one as well. Latent View, that's another one that in the last 1 hour has come up also. 1% more uptick that we've seen in specifically last 1 hour. Now Latent View is trading at the day's highest point, so no complaining on that front for Latent View. As of now, the broader end of the market continues to do or slightly bit better than the benchmark indices. Look at the Nifty Midcap, 0.6% of gain almost is what the Nifty Midcap is holding on to, while small cap is holding on to gains of almost 0.5%. So we'll be watching out for that as well. A lot of gainers that have come in, especially Nalco, Torrent Pharma, all these, as well as Nykaa on the back of their numbers are holding on to very, very strong gains. But with that, we're absolutely out of time. Thanks you viewers for tuning in, but don't go anywhere. Last hour of trade is still left, and for that, you have Closing Bell up next.
to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
It's a positive start for the Asian indices on hopes that the US government shutdown is coming to an end.
On Friday, intraday, we broke through it on the downside, but closed above it. So 25,448 is the first level.
The consumer sentiment in the second quarter was relatively muted.
So it's flat, 25,530. It's about, 50 points, 60 points higher.
The remaining parts of Q3 are going to be a little, will languish after the huge festive.
Cost of power was down, and employee cost as well was a little bit lower.
It's starting about 8.5% lower and at about 370 rupees or so. So 30 rupees lower on Lenskart.
We, of course, have plans to do the next phase of expansion in Mahan. It's just that the timing is what we are going to look at.
The listing was something that the street was expecting to be muted because of the value, on offer.
Even if the Senate passes the bill, the package must still be approved by the House of Representatives and signed by President Donald Trump.
Markets are in the green. The Midcap index, advance decline ratio is positive.
Our market's still holding on to that 25,600. It's been a good day, a steady day of gains, up 150 points in the Nifty, with the Sensex up nearly 500 points. You're watching Closing Bell. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Reema, with me, Surbhi and Prashant, and Nigel is there at the newsroom. Hi.
Hi, folks. Yeah, I mean, actually, it's turning out to be a very, very decent session compared to the soft start and quiet start we had in the morning. There's a fair amount of green, and look at the stocks that are, moving up on news or otherwise. Lots of positive result reactions today. Torrent Pharma, Nykaa is up about 6.5%. Nalco pushing a 10% gain. And of course, the newly listed entity or in the new avatar, Piramal Finance. We'll talk more about the stock. And let's not forget, even Lenskart, after starting 10% lower, is in the green. So, Nigel, I guess the day really belongs to the bulls so far.
Well, that's right. It belongs to the bulls, but you would like the breadth of the market actually to be better, right? Because still, even going by all the headlines that you just ran us through, the number of stocks advancing and declining are even Steven. So various portfolios in the market actually are not feeling like we're seeing this sort of green on the screen. But a good session, but ye dil mange mo, I think so, is what the street would say, since various portfolios still will not be feeling like we're seeing a 150-point bump up on the Nifty itself.
Oh, all right. Just to run you through some of the big large cap movers on the way up, a lot of IT stocks. Infosys top gainer, HCLTech, Wipro also up 1.5 to 2%. Bajaj Finance is holding up strong ahead of numbers. That's got a gain going. You've got a Hero MotoCorp, which is up nearly 1.8%. Reliance Industries is providing support to the bulls. On the way down, it's Trent, and that continues to be the big laggard. And it's expanding its losses as the day has progressed, so 7.5% lower. Tata Consumer, Eternal are some of the other drags. Hi, Prashant.
Well, guys, hi, good afternoon. Yeah, it's I think, as Nigel said, maybe it's IT and Reliance, right, which is basically holding up things on the upside. Otherwise, lots of popular mid-caps, small caps, etc., under pressure. So, it's a slightly, that kind of a market. Although mid-cap index is up 0.75%, let's just put the small cap index as well and see what is happening there. There you go, about 0.5% higher. So it's not bad for the broader market either. It's just that there are, there's this enough and more on the downside today as well. Let's just quickly run you through what's lined up here over the next 60 minutes or so. And we'll sort of then pick it up from there. So markets are building on early gains to propel the Nifty towards 25,600 levels. IT and pharma stocks kickstart the week on a firm footing. Divergent moves on a couple of earnings reactions. Voltamp skyrockets following a stellar performance, while Transformers and Rectifiers tanks after a dismal margin performance. Key highlights from the results coming up on Closing Bell. Trent is something we will address. Nalco is higher. So, what do these numbers mean? Piramal Finance, of course, the demerged entity, sharp move on Friday, and I think it's up again today. Some details coming up on that one in a bit from now as well. So that's where we're at. Okay, I think let's just dive straight into it, right? Nigel, Nalco is making a move. Why don't we start there?
Well, Nalco's numbers, in fact, were very, very good. On the top line, there was a growth of close to around 7.5%. But the real beat came in terms of the operating profit. That popped up close to around 24%, which made the margins move up from sub 40% to around 45%. That looked good. What supported it? Higher LME prices. You had higher alumina sales as well that helped the top line. So operating leverage played out to some extent. Besides that, there were various input costs, like employee cost was down close to around 8% when you have growth on the top line, and even the cost of power consumed was down by close to around 10%. And if you look at both the segment, namely the chemicals, or which is known as the alumina segment, or even the aluminium segment, on both of them, just take a look at it. In comparison to a quarter-quarter basis or a year-on-year basis, the absolute EBIT number looked beautiful. So better operational performance, backed by a little lower effective tax rate, that's what made the PAT go up by close to around 37%. They threw in a bit of a sweetener as well. They declared a dividend of close to around 4 rupees, which the street likes. And they've also said they expanded alumina capacity. Remember, currently the alumina capacity is around 2.1 million tons. They're saying another million will come on stream by the middle of 2026. So there's an expansion as well that's on the cards. On the back of these numbers, brokerages like Antique, they have gone ahead. They have upped their target price from around 262 to around 280 rupees. They have upgraded their EBITDA estimates for the next few years. That's FY26, 27, as well as 28. And Motilal Oswal as well, they have a neutral rating, target price of around 250 rupees, but they have raised their revenue, EBITDA and PAT estimates for FY26. So numbers look good, dividend being thrown in, and brokerages going ahead and upgrading their estimates. The street likes it. Stock, bazooka move today.
Okay, all right. Yeah, actually, Nigel, let's take that up with Deepan, right? Yeah, we've got Deepan joining in. Afternoon, Deepan, good to have you in. Lots of individual stocks that we have to discuss, but let's start with Nalco. At these prices, does it make the cut? The performance, as Nigel is explaining, has been really robust this quarter.
Sorry about that. I think the camera is not completely set. No, I think that Nigel has covered it pretty well. And this is cyclical business. So when the realizations are higher on LME, that's going to reflect in Nalco's numbers as well. And fresh capacity is also gradually going up, volumes going up, and valuation still attractive. I think there's further scope for the stock price to move up. And in times like this, when a lot of mid-cap stocks are trading at very expensive premium multiples, I think investors are looking at metal stocks in fresh light where earnings are reasonable. And end of the day, last few years, track record have been pretty decent. And companies like Nalco and all are gradually increasing their mining capacity, production capacity. New smelter also going on stream, or rather brownfield expansion on stream. So that does aid the sentiment. I would remain invested in Nalco. And if you had less exposure to the metal share, then this is another stock's worth considering.
Got that. Let's talk about Trent. Clearly the stock of the day, disappointing Q2 numbers. Mangalam is now joining in to refresh the numbers for us. Mangalam.
Well, if you look at the numbers this time around, the street was apprised of them in the second quarter. They were surprised negatively, and thereafter, when the actual numbers came in, they were surprised even more. Why is that? Because, while the revenues declined by about 17%, the street thought maybe, just maybe, the margins have bottomed out. But that's not the case, because, well, reported EBITDA is up 26.5%. If you adjust for all the Ind AS sort of, impact on the lease accounting, etc., the companies, by a company's own accord, the EBITDA has grown 14%. So on a 17% revenue growth, the EBITDA growing 14% implies that there has been margin compression. And at the same time, the net profit is down by about 11 or up 11% as well, lowered by a higher depreciation. But importantly, the company said consumer sentiment is fairly muted. So 4157 crores is what the company had posted last year. This year, the revenue is 4800 crores. The margins, on an optical basis have increased, but adjusted basis have declined. And we've seen a higher jump in the depreciation. They've continued to open new stores, West Side stores as well as Zudio stores, 19 West Side stores and 44 Zudio stores, while their other businesses are growing as well in terms of expansion. What's not growing is their overall top line, and we haven't seen the kind of Zudio-like hyper growth in any of their newer formats, and that's something that the street does not like. Remember, the stock not particularly cheap. At peak, it was trading at 140 times, but then they were doing growth of over 50%. So that made the PEG ratio, or price earnings to growth ratio, a lot more favorable than now, where the stock is trading at 72 times, which is half of what it would at peak, but growth has less than half. So the PEG ratio now is closer to 3.5, 4. So, from that perspective, the disappointment is more on growth than just earnings, and that's exactly what the street is now recalibrating and adjusting itself to.
Thank you. Deepan, buy the stock at sub 4,300. keep the faith in the long-term story of Trent, or do you think the tide has really changed and we need to now accept that on account of competition, new age brands, or maybe just the size of the company, growth is going to be slower and therefore valuations need to be recalibrated?
Yeah, Reema, but the stock price has nearly halved. I mean, it's down 48% from its peak. And first, the disclosure, we are invested in the company, and it's a bit of a tricky question to answer whether to remain invested. Certainly not buying more at these levels because one quarter you can accept a slowdown, but let's see what happens in December quarter. That's the peak season for them as well. And Trent is certainly getting some benefit from GST cuts and overall improvement in consumer sentiment. So the real question here is whether this is kind of a, just a slight dip, which is temporary in nature, or is it the beginning of a trend where now the growth rates will be kind of low double digits? So that will get answered in a couple of quarters. But for the time being, I think we are remaining invested, but certainly no looking at fresh investment despite a correction of almost 48%.
Okay, all right, Dipan, I wanted your view on these luggage makers. We know there's a big runway ahead, but VIP went through that that deal, the long-awaited deal that came about. But Safari's numbers actually are beautiful. VIP, by the way, from the time that deal has been announced, with regard to the change of ownership, the stock has done 462, I think, sub 400 rupees, while Safari has at least held its ground, and now these numbers look quite good. It's the more expensive of the two stocks, but do you have any view?
I think from time to time, Safari does tend to surprise, and because they have got the customer pulse far better than VIP by focusing on hard luggage, whereas VIP is stronger in the soft luggage side. But I think with private equity, I think it's private equity has taken over VIP industry. Certainly, you could expect higher growth rates. Generally, we've seen that when new owners do come in, they kind of rev up the operations, look at cost cutting. So I would look at both of these companies in positive light, but I think they are more on the expensive side. So you should wait for a bit of a correction before buying into these companies. Existing investors, I think, remain invested, but just should be some margin of safety to buy into these companies which is not there at these levels. So wait and watch will be my view on both these companies.
Okay, let's just get Deepan, stay with us, get a technical view in as well. Nagaraj Shetty is with us with what he'd make of things and any specific trades in that sense. Nagaraj, good to have you here. What's your view and what are your trades?
Hi, Prashant. Good afternoon. Yes, Nifty has witnessed a sustainable upside bounce from near the important support of around 25,300. I think I'm expecting the overall chart pattern present setup is indicating a formation of important bottom reversal, and I'm expecting from here onwards Nifty could reach up to around 26,000 mark, which is a strong set of resistance in the near term. As far as the stocks are concerned, I'm bullish on the banking side, small scale banks and PSU banks. If you look at chartically, Union Bank has been in a stronger up move. We have seen higher bottoms, higher tops, and constantly moving up without showing any severe damage in between. The overall chart pattern is looking positive from the current level of 154.50. I'm expecting this to move towards the next hurdle of around 165 in the near term. Second one is Ujjivan Small Finance Bank has been in a consolidation phase, smaller downward correction over the last couple of weeks. Seems to have formed an important higher bottom reversal. I think the overall chart pattern is looking positive. The next resistance to be watched is around 56 in the near term.
Okay. Union Bank and Ujjivan Small Finance Bank. Nagaraj, thanks very much. We'll speak again. Appreciate it. Reema, KPIT has reported numbers. How did they look?
Well, Q2 was disappointing, but the company has guided for a better H2. They're saying H2 will be better than the first half of the year and a promising FY27. The CFO went on to say that as we move into the second half of the year, we are well positioned to capture new opportunities and resume our growth momentum. So I think it's this commentary that the street has latched onto. Q2 has been soft, 0.3% top-line revenue growth on a quarter-on-quarter basis, and this too was boosted by an acquisition, Carsoft, that the company did, and that contributed 2.5% to the top line. If you strip that out, organic revenue growth probably would have been negative. Margins, though, have been maintained at 21.1%. But as the company said, H2 is looking better than H1. FY27 looks promising, and the company is all set to resume the growth momentum. Dipan, this has also been one stock which has underperformed quite a bit and come off sharply from its 52-week highs. Do you think after a period of slow growth, many quarters now, slowly it's time to start accumulating and better prospects lie ahead?
No, Rima, I think that last 2 quarters have been challenging for KPIT. And overall, I think when it comes to electric vehicles, we are realizing that a lot of the Chinese manufacturers are really going on absolute rocket fuel over there. They're gaining market share. Wherever they are present, they're gaining massive market share. And that's putting a lot of stress on existing OEMs, be it in Europe, Japan, US as well. And KPIT being focused on the non-Chinese OEMs. I think that's a bit of a challenge for KPIT, and it's not that the stock is really cheap at these levels. Some of the other mid-cap software companies are trading at more attractive multiples. Large cap, of course, is trading at even cheaper multiples. So I would just be a bit cautious in KPIT at this point of time.
Okay. Got that, Deepan. Just looking at some of the other big movers and shakers of the day. So while KPIT is rising, the ones that have been hit hard on the back of numbers include Shakti Pumps, results to disappointment, Global Health for sure, which is down. By the way, look at Swiggy right now. Swiggy is falling quite a bit, 3.5% lower on Swiggy. Remember, the board finally did go ahead and approve that fundraising plan of 10,000 crores. That's the amount they're looking to raise via equity. Stock is on a bit of a slump. Let's put up a longer-term chart on Swiggy. When this was announced, in step with the results, even on that day, there was a bit of a selling on Swiggy. Yeah, so from the top, it's given up a fair bit. Deepan, it's the day and age of these new exciting businesses, call them internet businesses, tech businesses, I don't know, I mean, retailing businesses. So just leave us with some thoughts.
No, I'm getting progressively more cautious. Whether it's Swiggy and Eternal. Eternal is one of our holdings as a measure of disclosure. And the way Lenskart has gone and all of these Nykaa, I know Nykaa is doing well also, but I'm just getting a bit cautious on these platform companies which continue to make a lot of losses and are promising profits. But, as things evolve, I think the wait is getting longer and longer, and investors may get a bit tired in these companies. So I want to be a bit cautious, at least not look at increasing exposure to any of these new age tech companies, these consumer tech companies. And maybe it's just time to just step away from them. I think maybe the correction gets deeper over there for the likes of Swiggy, because this thing of going for a QIP, 10,000 crores, in a way it is a bit opportunistic. The market may take it, so they're doing it when they can raise the funds. But I don't think from a capital allocation perspective, it is good. I think you're just diluting the equity. And then when will you be able to service such a large equity? These are the questions which come to my mind.
By the way, Pine Labs, today is day 2 for its IPO, and so far the subscription is about 0.5 times. And the other one is Grow, and that lists on Wednesday. That also saw a pretty good subscription. I think overall was about 18 times, and Grow lists on Wednesday. But quite a few other casualties today. So Transformers and Rectifiers is one. That's down close to about 20-odd%. Graphite India came out with numbers. Stock is lower by 7%. Profits declined by 60%. The other one is Electronics Mart. Here, profits were down 30%. One more, Epigral, 7.5% lower on the stock, where the profits declined by 37%. And Aarti Pharma, this is when, the results came out and you can see the sharp reaction in all these individual names. So quite a few casualties. Though the color on the screen is green, we have these individual stocks.
Absolutely on the downside. But let's not forget, we have the upside names as well. I'd name some of them, Torrent, Nykaa, Lumax Auto. Some of them are still holding on to gains. So it's both shades. But yes, there's a fair amount of red wherever results have not met expectations. We'll let Deepan go on that note. Thank you very much for being with us, Deepan. Take a quick break. But when we come back on the other side, we'll have Alok Ranjan from ITI Mutual Fund joining in with some market perspective.
Okay, welcome back. 117 points. So the index is holding on with, that amount of gain since the morning. So no real bobble or anything of that sort. What are the big movers? What's the big volume action? Hormuz is standing by with exactly that. Hormuz, over to you.
Well, the stock of today, had it not been Lenskart, could definitely have been Nalco, considering the move that it has seen today is almost up now 10%. The volumes in today's session are the highest in over a year, and more than 6 crore shares of Nalco have been traded. That is 6x its 20-day average, which is just close to 1 crore shares. And the stock has had a fairly decent year as well. It's up 22% year to date. It was up 60% last year, was up 60% in 2023 as well. So it's been a fairly good performer over the last 3 years. Of course, can't not talk about Lenskart. The listing at a discount, the fall, and then the subsequent recovery, still around its IPO price of 402. But look at the volumes. Already 12 crore shares have been traded on Lenskart. The total trading value is nearing 5,000 crore rupees already. It will be interesting to see how much of it was marked for delivery when we talk about Lenskart tomorrow morning. Indigo Paints stock up around 17% in today's session, among the top gainers on the small cap index. Here too, the volumes are the highest since September of last year. We've had close to 30 lakh shares that have been traded. The 20-day average is only 44,000 shares. And the stock has been an underperformer over the last couple of years. Down 18 this year, was down 6 in last year as well. Dream folks, and the announcement coming today was that of an acquisition that the company is doing. And the stock is up 10%. It snapped a 3-day losing streak. Volumes are the highest in a month as well. Close to 25 lakh shares that have been traded. That is also 6x of its 20-day average, which is around 4 lakh shares. Of course, can't not take away from the fact that the stock is still down almost 2/3 in 2025 itself. And lastly, Lakshmi Dental. The stock made some news in September when Motilal Oswal had come out with a very bullish note. Today, the stock is up 7.5% in today's session. At 6 lakh shares traded, 20-day average of around 60,000 shares. And it's set to report results this week. But since that report and the highs that the stock had made of close to around 570, 580, the stock is already down 43% from those levels, is Lakshmi Dental.
Well, Hormuz, thanks very much for that. Alok Ranjan is head of equities and senior fund manager at ITI Mutual Fund. He's with us to take some questions. Thanks very much for joining us, Alok. I think first time we were speaking, at least on this forum. So generally, there seems to be a bit of a, while there are lots of calls. I think there's one from Morgan, there's one from Goldman. On the buy side, people are expecting better things going forward because of all the rate cards, tax cards, etc. Maybe a bit of a consumption boost. Conviction seems to be missing. I guess it's also because it's not as if markets are relatively cheap, but not on an absolute basis. They're not cheap. What is your view, Alok, as you look ahead in terms of trying to pick stocks to make money from here? You're on mute, Alok. Okay, I think we'll just go back to Alok in a bit. We'll get that view from him. Markets, right? I mean, just a quick look at what else is happening. Bajaj Finance, by the way, is going to report numbers a little later in the evening. There's a earnings call as well, and we'll put out a preview as we go along, a bit from now. There you go. The stock's about 1.7% higher. I think Alok is back with us. If ITI Mutual Fund. Alok, go on. You got the question, but we couldn't hear you earlier. Alok, go on.
Hello.
Yes, go on, please.
Yes, Prashant.
I think
they were saying that it's natural to miss conviction because it is kind of a herd mentality. So good. Hello.
Yeah, I think what we'll do is we'll just
with internet.
Yeah. There is some issue, Alok, with the line. We're not able to we can hear you, not see you properly. So we'll try and fix that. I was just talking about stocks, right? Bajaj Finance is, of course, one. But many other names in the broader market would seem to be moving. And I'll just highlight, markets are doing well, and to the point of why portfolios perhaps are not feeling all that great. Look at a few of these names, right? Transrail, recent listing is down almost 10%. Very large volumes for this one. Shakti Pumps is down 7.5%. Meaningful retracement, by the way. Stocks, the high was about 1,100 not recently, but it's correcting, and sharply so. JM Financial is down about 8%. Stocks at about 146 or so. You got Medanta, which is down 6% on the back of numbers. Tangamail is down about 5.5%. Very sharp mover recently. Urban Company, 132. I think on the day of listing, the high was, I think, about 163, 164. Actually, even higher. I think it
went to almost 200.
200, yeah. 200 plus, just under over 200. Listed at about 162, I think. Urban Company. So 132 now. That's taking a knock. Aarti Pharma is down 11%, 770. Genus Power is down 5.5%. You've got many other names: Schneider, IIFL Cap, Sangvi Movers. All of these names with decent-sized volumes, which seem to be under pressure at this point, and that's the reason why I think even though headline indices are doing just fine, there is some amount of pressure otherwise out there. I'll give it one more. Should I give it one more shot and go across to Alok to check if we have him? Alok, can you hear me?
Yes, I can hear you, Prashant.
Okay, let's try once more. Go on, Alok. Just wanted to understand what's the play and how are you picking stocks in this environment?
Right. So we are talking about the conviction in the market. So what I was trying to say that there is a lack of conviction, and the reason is that last 1 year was not so good, and it was against expectation. Most of the people were expecting markets to do well, but now things have started turning around, and we need to realize that this year, this quarter earnings season has been much better than expectation, and valuations have also corrected almost 10% from the top, and also earnings trajectory is looking good from here. So I think, first of all, large caps are moving, and from here on, mid caps will also pick up. And the last one to pick up will be small cap. And that is when conviction of the crowd or conviction of the people is at the highest. So that should be the progression. Yeah.
Got that. Alok, hi, afternoon. Rima here. So on which stocks, themes, sectors do you have maximum conviction now? Because it's been, the last 1 year has been tough to make money. Your own fund is down nearly 7%. So if you have to reverse that kind of underperformance and make big bets, what would those be?
Right. So definitely I cannot talk about the stocks, that mutual fund.
So what about sectors and themes?
Yeah, so sectors, we are bullish on consumer sector, especially consumer services. Then capital goods is picking up, and you might have seen reports that capex is getting better. So capital goods looks good. Energy sector, some pockets of energy sectors are doing well. If you see oil companies, especially refinery companies, they have been doing well, and they are looking quite attractive at this level. IT is quite, we are ambivalent. IT valuations have corrected, but still growth is not looking that good. But the best sector that we are looking at is BFSI sector. I think earnings have bottomed out. This quarter was not so good in terms of profit and profitability, but from here on, trajectory looks quite good. So BFSI looks to be the best position going forward.
All right, Alok, request you to stay with us. We're going to focus on two stocks that are moving with outside gains and losses. Transformers and rectifiers is lower. World time is flying away. Vinny joins us to tell us more about both these two stocks. Vinny?
Yes, both these capital goods stocks, a different story playing out here for both of them in terms of earnings. While for transformers and rectifiers, it was a weak Q2 number that came in. Execution, that was a concern and a challenge that has come in for the company as well. So revenues are down by around 0.2% for 60 crores. While in terms of the profit of the company, that's down 25%. EBITDA, that's seen a weak performance as well. So overall margin contraction that has come in as well. 300 around basis point contraction in terms of margins, mainly because, why? Higher staff costs as well as other OPEX expenses that was higher, and that led to the lowest margins that the company has seen since Q3 FY24, and also do not forget it's below their guided range of 17 to 18%. Order inflows, that also hasn't been anything great. 590 crores are the order inflows versus last year it was at around 1031 crores. So no major order inflows that are coming in Q2, and that is why weak number there. But apart from that, World Bank has also said that they have debarred transformers and rectifiers on bidding on its finance projects for engaging in some alleged corruption and fraud that was tied to around 486 million in a project that was in Nigeria. So there's some talks and investigations are still going on that front, but as of now, they're debarred from that. Now, apart from that, Voltamp, let's talk about that. Good set of numbers that came in from the company. Strong performance in terms of execution. Margins have seen an improvement as well. So obviously, when you look at it in terms of revenue growth, that's seen a 21% growth in terms of revenue on a year-on-year basis. EBITDA growth of around 25%. Margins have seen a sharp improvement as well. So overall, good performance from the company. They're adding new capacity, which is a positive for them. So execution will start improving furthermore. And overall, they are remaining quite selective in terms of order picking. They're picking up the good, profitable orders. So that is also something that everyone is quite positive on for the stock as well.
Okay, all right. Thanks a lot for that, Vinny. Well, Alok is still with us. Hi, Alok. Nigel on this side. Good to speak to you.
Hi, Nigel.
Any view on more these core domestic themes? You know, everyone's talking about real estate, and maybe that's got a longer runway. If you have a comment on that, would you play it via paints? You know, paints has been a rank underperforming sector. Asian Paints, Berger Paints down 20-25% from the peak. Not done anything. Now, hopefully, this competitive intensity, goes a little bit behind. And cement, there was a lot of optimism out there, but I was just doing a quick check, and I think this month as well has been a flattish month. Demand is yet to pick up. Your view?
Right. So, the paint sector, competitive intensity had gone up because two more new players joined in. And definitely they are trying to grab market share at the cost of profitability of other players. But as far as Asian Paints is concerned, I would not like to comment on the valuation, but it has definitely corrected. And I think things should be kind of stabilizing for the sector. Competitive intensity has started a bit going down, and things would pick up from here on. What are the other sectors you asked?
Cement, Alok, if you could give a view there.
Which one?
Cement.
Yeah, cement sector, 2-3 months ago, it seemed that they are getting back to pricing power, and especially North and East sector was doing quite well. It took some price rise, but right now, again, things are a bit mixed up. But going forward, I think as budget comes nearby, infrastructure and demand for that should increase. Government capex should also pick up. So maybe it will do from here on. It will do better from here on. As far as valuation is concerned, valuation has always been a question mark for the sector. It has been basically going up on the basis of price hikes they take, or if there is a sudden improvement in demand of tech.
Hello, great chatting with you. Thank you very much for joining in. It's time. Okay, we'll get to the futures and options space in just a bit. IndiCube also came out with the numbers. Stock is up nearly 8%. We chatted with the management earlier, and the company is maintaining a 30 to 35% kind of revenue growth for a 30% plus revenue growth for this year at least. And, this is a company which has seen a strong expansion in margins. Margins used to be sub 10%. Now they hit 21% in Q1 and Q2. And the company, when we chatted with them at about 11:30, that's when you got that spike in the stock, said margins should also be sustainable. So that's one more stock. And Imami, profits were down, but the stock is up nearly 2% Nigel is now over at the F&O desk. Nigel?
Well, the 20 DMA, very, very important. The Nifty can't get past that, and the Nifty Bank is counting it as a bit of a support. So if you just pull up the intraday chart of the Nifty with the 20 DMA, you'll see it went very, very close to there, and it got rejected. While the Nifty Bank, the first reference point on the downside comes in at around that 20-day odd mark. Looking at the options data, it's quite interesting because the bulls, they want to create a base at around the 25,500 mark. So you look at the 25,600 put, massive open interest build up. The premium is down from around 130 rupees. It's come down to around 50 rupees. So for them, that 25,470 mark becomes extremely important. Moving to the 25,550 put as well, the premium at the start of today was around 100 rupees. That's come down to around 31 rupees. So clearly there are signs that there is writing at that level. 25,450, the important mark that you don't want to breach on the downside. Looking at the call side as well, the 25,650 call, good amount of open interest built up. However, the premium has not run away, telling you that there is mix of activity out there. The premium is ballpark around 48, 49 rupees the last time I checked. Individual stocks are doing a thing of their own. On sale, the numbers are quite positive. But the stock didn't react positively because there was big buying ahead of the numbers. Now you're seeing fresh long build up on that particular name. The street is playing that one. Nykaa, one of those new age companies that are actually doing well, while the others are a little bit nervous today. So fresh longs on that one as well. While Bharti Airtel, there was a large trade that took place. There were a lot of shorts that got into the system. There's a bit of a short covering bounce that's playing out on Bharti Airtel. And finally, Trent. There is some cash-based selling that we're seeing on Trent after the numbers weren't as good as what the street expected. And there is some unwinding of long positions as well on Trent. So net-net, on the upside, that 25,700 odd mark, closer on the 20 DMA, becomes a bit of a resistance. And Friday's low from 25,320 becomes an important reference point on the downside. Back to you guys.
Okay, all right. Nigel, thanks very much for that. What we're going to do is we'll take a quick commercial break here. We're going to come back, get you a quick check on what's happening in dealing rooms. Nimesh is going to be with us with that on D Street Chatter. We'll also get you some trading ideas in the short term. Coming up.
Welcome back. Well, the markets actually have come off a little bit from the top. The Nifty Bank is a relative underperformer in today's trading session, but one stock from the broader markets is Infra, we had explained to you last week itself that it could be a near-term profit-taking that you're seeing on announcement of the deal. But otherwise, it's making the company large by scale and it's putting them into a bigger scheme of things as well. So that's why the stock now post its con call and post the interaction that they had with us here on CNBC TV 18, where Mr. Panda detailed the way ahead. They're going to be more than 1,000 crores of EBITDA. Stock up 10%, no mean feat on a smaller counter like that. That said, let's go across to Nimesh. D-Street Chatter. Nimesh, what are you picking up? Well, we'll say markets are up 100 points, but it's not feeling like that for various portfolios.
It looks like, and the reason for that, while the mid-cap index is looking in the green today, but the sense is that there are better sellers in the broader market. So maybe that's something to watch out for. It may not show up in the index, but decent day of trade, largely led by tech and metals. Metals has done really well for the last couple of days. Tech was a surprise today and no big flows as well. So I get some more of a short covering rally in many of the tech stocks today. PSUs continue to outperform. I've been saying for a while now that that's a space which generally is seeing a bit of buying interest. Defense is a sector today which is doing well. So within PSUs as well, there's a bit of churn happening. So, one day it's metals, one day it's defense, one day it's railway. So, but in general, there seems to be quite a interest in the PSU basket. I guess for the November series, in the next 10 days, this could be very crucial for the markets as well. The Bihar election outcome and the possible trade deal. That can be a big trigger for the markets, at least in the November series. So, that is something to watch out for. But I guess if you look at like what today we saw from Goldman, a big upgrade on India. The technical analysts have been talking about a big breakout on the Nifty and the Bank Nifty. So looks like this could be the curtain, the precursor to the big rally, the Bihar elections as well as the US trade deal.
Okay, all right. So those two big triggers we'll keep an eye out on. But Nimesh, what about individual stocks? Or what are you picking up?
Well, a lot of stocks are buzzing in the broader markets as well as in the large cap names as well. The first stock on my list is JSW Steel. It has relatively outperformed in the last few days within the steel pack. The entire steel pack has done well, but JSW stands out. There is strong delivery-based buying happening as well, and the city is anticipating a corporate development. It might take some time, but within the next few months, expect a very large corporate development in JSW Steel. So that's the buzz there. The second name is GMR Airports. I think results are today, but in general, there has been buying interest for the last couple of days in GMR Airport. Even on Friday, the delivery volume was quite strong. And so is the case today as well. And even technically, the sense is above 96.5. There's going to be a big breakout as well in GMR Airport. So that's the second name. The third name is Cyient. Again, it's been a relatively underperformer in the entire IT pack, but now it seems like the large part of the selling seems to be largely over. I understand one large long-only fund was an active seller. They were running more than 7%. Looks like it's a clean out, and now the supply seems to be largely over. So that's the reason why it's buzzing in trade. And the last one is Manappuram Finance. Again, relatively, it's been in that narrow range between 260 to 280, 290. But again, at least the flows have picked up. I understand some large HNIs have started buying as well. For Manappuram, the long pending trigger of an open offer from Bain, that's still been pending for the last 9 months. That is a very near-term trigger to watch out for Manappuram Finance.
Thank you very much for that. By the way, the Nifty is now slipped below 25,600. So it's given up about 50-60 points in the last 10 minutes. Nagraj Shetty from HDFC Securities is now joining in with a few BTST calls. Nagraj?
Hi, Nima. Good afternoon. Yes, Nifty has showed some indication of some profit booking from the higher levels. But the overall chart pattern remains positive. I'm expecting a buy on dips opportunity, and the 25,300 is going to be a strong support for the market. And already it has taken us a level of that support, and I'm expecting to move from here onwards. And the stock wise, I have two stocks. One is from the metal side, Steel Authority. Second one is from a defense side, HCL. SAIL chartically has been in a sharp uptrend recently. It has witnessed a decisive upside breakout of around 140, 142 levels, currently trading higher. One can look to buy at this point of time. Upside target would be around 155. One can place a stop loss at 140. Second one is HCL. HCL was in a downtrend over the last couple of weeks. It has bounced back from near 200-day EMA. The overall chart pattern is looking positive. Currently trading around 4789, 4790 levels. One can look to buy at this point of time. Upside target would be around 5,000, and one can place a stop loss at 4675.
Thank you. Let's talk about Piramal Finance. That's in focus. 1, Q2 numbers, and 2, on account of the merger with Piramal Enterprises. Gaurav joins in with the details.
Well, as the shareholders of Piramal Enterprises, which is now known as Piramal Finance, have gained more than 25% in the last 2 days. And let me give you reasons why we are focusing on this stock. When we look at Piramal Finance, first is that it has been strong fundamentally. So let me take you through some of the numbers. The merger actually happened to simplify corporate structure, and at the same time, it is also the upper layer NBFC. But when we look at second quarter, there also we saw a very strong set of numbers from Piramal Finance, around 22% AUM growth. In fact, net interest income and PPOP grew almost by 30%, and at the same time, profit that doubled on a year-on-year basis in the second quarter of FY26. When we look at the FY26 guidance, it has also been very optimistic from the company. In fact, they are expecting 25% growth in AUM. They are expecting profit to almost more than double from here in the range of 1300 to 1500 crores. And at the same time, it will be the AUM growth will be driven by the growth AUM that they are factoring in. Apart from that, on the long-term basis also, they're expecting AUM to double almost in the next 3 years, and at the same time, return to almost average AUM that is likely to go up to around 3% versus what it is right now at 1.7%, and this will be happening along with the leverage that they will getting from debt to equity levels. When we look at the management commentary during the conversation with our channel, they also said that they want unsecured lending to go higher, and at the same time, that is the reason why net interest margins, they are also likely to go to around 7% versus what it is right now at 6.1%. So definitely, outlook is very strong, growth outlook from the management as well as the guidance for FY26 as well as for the next 3 years. When we look at other merger benefits, they are also going to have around 14,500 crores of tax shield, which can be used for the next several years. That means that the PBT is more likely to remain in line with PAT, which is profit. So that is also something that we should be factoring in. And lastly, they're also developing and investing in AI. Now, coming to the valuation, when we look at valuation of the company, Piramal Finance current price to book value stands at around 1.1 times. But if we look at the peers, we've got some of the peers like HDB Financials, L&T Finance, all of them are trading somewhere in the vicinity of 3 times price to book. So definitely there is some headroom for the valuation also to go up. When we look at outlook, management themselves are guiding for a strong growth margins and the engines to be there with the company. And as a result, when we look at stock performance, it is reflecting in the stock performance as well. Even today, it is up more than 5%.
Okay, indeed. Yeah, quite a gain since the entity listed in its new avatar. And that's really strong commentary, as you're pointing out, Gaurav. But before you go, tell us what to expect from Bajaj Finance. Numbers due today.
Well, as when we look at Bajaj Finance, we have already seen the AUM growth somewhere in the range of 23.5%. Remember, management has guided AUM growth to be in the range of 24% for FY26. And as a result, going ahead, when we look at the numbers, Street is expecting some strong set of number from Bajaj Finance. We are expecting around 22% growth in net interest income. PPOP, that is also likely to increase almost by 21% on a year-on-year basis. And as a result, when we talk about profit, we are expecting around 24% growth on a year-on-year basis in terms of profits. Now, coming to some of the ratios, we are expecting net interest margins to increase somewhere in the range of 9.6% versus what it was at 9.5% on a sequential basis, and credit cost that is likely to remain stable on a sequential basis. They do not see any kind of worry here. Now, specifically, when we look at the commentary, that is a key thing to watch out in this quarter. And this is because we have got multiple tailwinds like the GST rate cuts and at the same time festive demand. Remember, company has already announced some of the major updates. They said that during the festival, they have already seen actually demand surging almost by 27%. So that is already a tailwind that company has given to investors. So as a result, if they're going to maintain the guidance of around 24% growth, that is a key thing to watch out for. And how their commentary is going to be in terms of guidance and the growth is also a key thing to watch out for. And second is the commentary on the cost of funds. So we will see some kind of benefits in the cost of funds. So we will also be watching out on how the commentary is going to be there. But all in all, in terms of numbers, good set of number is what we're expecting from Bajaj Finance in this quarter.
Okay, all right, got that. Gaurav, thank you very much for giving us all the details over there. We have Sudeep Bandopadhyay joining in. He's, of course, a market expert, has views on a lot of the fundamental discussion points. Sudeep, good to have you in. Let's actually start right there on financials. What did you make of Piramal Finance? I don't know if you caught our conversation with the company, but they really were sounding very, very optimistic on multiple fronts, talking about various levers of growth as well as margin expansion. Your sense, and maybe throw in a word on Bajaj Finance as well.
Of course, I think the management was very, very confident about the growth, and I think that's pretty interesting. The most interesting thing is, combine that with the valuation at which it is quoting. It's about 1.1 time book vis-a-vis its peers, which are around 3 time book. So definitely there is a valuation gap, and somewhere the market is probably started to notice that, and this valuation gap to an extent will get filled. So yes, Piramal Finance definitely looks good at current level, and it's definitely worth buying even at current levels. As far as Bajaj is concerned, I'll be very keenly watching the management commentary on the growth guidance. Of course, they have already in the business update indicated about the tailwind on account of GST cut and festive demand. But the profit guidance, whether they maintain at around 24% growth guidance, is what I will be watching. Of course, cost of funds also should be coming down, and that should help the improving the margins. So overall, I think the NBFCs are in a much better position in a falling interest rate scenario, and some of these leading NBFCs definitely will benefit more than proportionately in this kind of falling interest rate scenario.
Okay. All right, Sudeep, stay on. We'll take a quick break, come back. Lots of other stocks to discuss with Sudeep. We are back in just a moment.
Welcome back. We're still in conversation with Sudeep Bandopadhyay. Sudeep, wanted your view on a couple of stocks in the broader markets that are buzzing around. Lumax Auto, stock is up 15%. Any view out there? And Indigo Paints out of nowhere, that one as well has smacked it. 15% higher on that particular name as well. What's your view?
As far as Indigo Paints is concerned, I think after quite some time we are seeing some excitement which has come back in this entire paints industry. And there is a thought which is going around that probably we have seen the worst already and things will improve from here on. While I definitely don't want to comment on the biggies, which is Asian Paints and Berger Paints, but as far as some of these smaller players are concerned, I think their performance has been improving. And after quite some time, if you look at Indigo Paints, since the time it got listed, it was kind of languishing. I think things have started improving at Indigo Paints level. While I would not like to recommend any stock in the paint industry at this stage because of the competition intensity which is there and is going to remain for some time, I think things are improving definitely, but still not the time to start buying into those. As far as auto components is concerned, I have been positive, Nigel, on auto components segment for a very long time, and Lumax is in that space, and we definitely believe that some of these auto component and auto ancillary guys are in an excellent position to going forward as well. Their performance is improving, whether it's EV or IC, their business doesn't get affected. In fact, their per car component number increases, which gives them incremental business opportunity. Their international expansion is on. So auto component definitely, I will not probably buy Lumax Auto. I will buy an Uno Minda or even a Sambandhana Motherson. But overall, I think we are positive.
Okay, all right. Sudeep, also I wanted your view on a couple of these other names. JM Financial, I remember the stock had a one-way run, went closer to 200 rupees. Now it's down to around 147 rupees. So if any view out there. And Saman Capital as well. The long-awaited fund diffusion came about. The stock ran away, then it corrected. Now it's still holding around 180. What's your view?
I think both the stocks, there was some excitement, Samman Capital around the time of the fund infusion, it was moving up every day. And it reached a level where some amount of correction, profit booking was warranted. And pretty much that's what has happened. Fundamentally, I think the business-wise, the fund infusion was excellent for the company. And I believe that, going forward, the numbers should speak. The excitement around this corporate action and things like that is now over. Let the numbers start speaking. I think at current level, it's reasonably well valued. Also, I must repeat what I mentioned is that NBFCs benefit disproportionately when in a falling interest rate scenario, which is where we are at this stage in India. And some of these NBFCs will definitely benefit more than proportionately. As far as JM is concerned, we like the stock. And after this correction, we believe there is an opportunity for buying from a long-term perspective once again.
Okay, that is on some of the financial names. We're down to the last 4 minutes of today's trading action. Sudeep, what's your sense from the old economy space? I mean, L&T obviously had a good run. We'll look at how Thermax performs and whether the numbers are good this time or not. Our colleagues tell us the expectation is Thermax should do pretty well this quarter. Anything that you're liking in that space, even as we're talking consumer tech, all the focus is on consumption. What about some of the industrial names?
Well, I do like L&T, Surbi. I've been liking it for quite some time, and I believe it's a fantastic stock to buy even now from a long-term perspective. If you're building a long-term portfolio, please do have L&T in that portfolio. I also do like cement quite a bit from the the old economy segment. I think we are in a period where the cement will more than proportionately reward shareholders. I do like Ultratech quite a bit. And being the leader, it has got, it's put itself in a fantastic position. The cost efficiencies have been maximized, optimized, I would say. And demand is continuously increasing. So the pricing power is back. They are doing all kind of expansion, whether it's greenfield, brownfield, or acquisitions. So I think cement, we should see a very good period for the next 12 to 18 months.
And finally, let's end with the stock of the day in terms of the, maybe not the stock, but definitely the newsmaker of the day. Lenskart, it's ending the day exactly at that price, right? 402, the price at the shares were issued. What's your advice?
Well, I will definitely advise investors to steer away. I strongly believe that the kind of P multiple, sales multiple, whichever way you look at it, I think it's a little unrealistic to buy this stock at these levels. Let things settle down, let some time go, and the price come down a bit. I would say rather around 340, 350 levels, it is once again worth looking at, but not at current levels.
Okay. All right, Sudeep, well, just stay on. We'll quickly wrap up today's trading action, which has been extremely stock-specific. But yes, at the headline index level, the big level, you will classify this as, not very, very inspiring because the market couldn't retain the bulk of its gain. And it has also underperformed global peers. Remember, global markets are doing very well with the hope that the US government shutdown is ending, thanks to the Senate passing that bill on Sunday night. But the picture for our screen is a far more modest 80 points on the Nifty. So let's look at the winners on the way up. It was IT. Really have to thank IT and Reliance today for ensuring that we have at least this much of a gain. 2.5% on Infosys, HCLTech 2%, Wipro 1.5%, and TCS put on about 1% as well. Aside of IT, you've got names like Bajaj Finance looking good, 1.5% up before the numbers. Grasim, Tata Motors, L&T, the stock that we were just discussing with Sudeep, L&T up about 1%, and Reliance pitched in with about a 1% gain as well. Titan also managed to put on about 0.8%. However, on the downside, Trent is one of the biggest result casualties of the day, with growth of just 16% at the top line. Market is absolutely not amused. 7.5% gone from that stock. Other stocks falling actually coming from the consumer pack. So Tata Consumer, Eternal, these were some of the names on the downside. Max Healthcare had a rough session, down about 3% as well. That's the large cap picture, but a lot more action in the mid cap space, Rima.
Indeed, the mid-cap index ended with a gain of about 0.5%, but the advanced decline ratio was in favor of the stocks declining. So about 1350 stocks advancing for 1550 stocks declining. But the action was largely surrounding where we had an earnings reaction. So on the way up, Nalco, one of the stocks of the day, 10% up. Nykaa has been reporting mid-20s kind of revenue growth for the last couple of quarters. Losses in the fashion business reduced and the street cheered the performance. IndiCube, KPIT Tech were some of the other winners on the way down. Transformers and rectifiers, Aarti Pharma, Graphite, Nucleus Software. You had softness in Ola Electric, Swiggy. Lots of movers. Ujjivan Small Finance Bank also fell on pretty large volumes. Well, that brings us to a close in this edition of Closing Bell. Thank you for watching. Don't go anywhere. Markets Forward comes up next.
Markets snap their three-day losing streak. Nifty ends near 25,600, while the Sensex above 83,500. IT stocks lift the market, with Infosys and HCL being the top Nifty contributors. Banks relatively underperform. Metal and pharma amongst the top gainers.
Lenskart sees a muted debut on the bourses, lists at a 2% discount at 395 versus an issue price of 402.
Strong second quarter results fuel an up move in Nykaa. A steady 30% up move pushes gross merchandise value to a 6-quarter high. Profit more than doubles. Westside and Zudio owner Trent posts a slow growth quarter with softer gross margins, even as cost controls boost profitability.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I am Rima. With me is Ekta. Hi.
Hi, Rima. Well, what a good day for us. We started the week on a positive note. We had the Nifty, which ended higher by around 82 odd points, and the Midcap index, which was up around 0.5% as well. So no complaints coming in. Maybe there could be some more contribution coming in for the Bank Nifty, which just about ended with a little bit of a positive bias. But all in all, it was IT and pharmaceuticals. Maybe the US shutdown, seeing some amount of movement, possibly helped those sectors.
Indeed, the imminent opening of US's longest shutdown has cheered the sentiment in exporters, and Reliance Industries was a big contributor too on the way up. But all in all, a bit disappointing because the intraday high on the Nifty was 25,650, so somewhere around the 20-day moving average. But in the last 40 minutes, the market slipped. There was a bit of a reversal. We closed up in the green, up about 0.3%, but not quite at the day's high. Midcap index ended up 0.5%, but the advanced decline ratio was in favor of the stocks declining. So more stocks ended in the red versus the stocks gaining, and lots of earnings reactions seen. We'll discuss that. Before that, here's what we have for you on our show today. The top movers and shakers with Vivek. We'll talk about Nykaa's strong second quarter performance and Trent's sluggish growth and Lenskart's muted debut. And then we'll tell you about the key market events to watch tomorrow. But first up, let's go across to Vivek now. He's at the big ball with the top movers and shakers.
Well, thank you so much for that. In a session where advances outpaced the decline, so that led to a positive bias as far as the entire market breadth was concerned. Now, in terms of individual stocks that we were tracking, have a look at Indigo Paints from the broader end. Top NSE 500 gainer, 15% higher, good volumes, follow-on buying seen after what was essentially a strong Q2. The other stock on the radar, HPL Engineering, erstwhile HPL Power Systems, very good set of numbers. Margin expansion seen over 12% higher over there. And National Aluminium on Alco, very strong aluminium prices led to an earnings beat, and even as far as the outlook is concerned, is quite positive, almost 10% higher there. Torrent Pharma, steady set of numbers, double-digit growth is something that the company expects to sustain, over 6.5% higher. And Nykaa, the management has indicated that the GMV, which stood at over 30%, is quite steady. On the other hand, quite a few laggards as well. NCC came out with results on 6, but post that in the conference call, withdrew its guidance for FY26, stock lower by almost 4%. Medanta, again, margins under pressure in the quarter gone by, stock lower by over 5%. Trent, multiple downgrades, growth concerns for this high-valued stock, over 7.5% lower. Transformers and rectifiers, a weak Q2. Also, the company has been accused of corruption by the World Bank and has been debarred by the World Bank. So that stock lower by 20%. And lastly, Shipping Corporation, a very weak, muted Q2, opened sharply lower, but ended the day lower by just around 5%.
Okay, all right, Vivek, thanks very much for that. So all of the top movers and shakers in today's trading session. Let's go across to our guest this afternoon. We have Sudeep Bandyopadhyay, who's joining in to discuss the markets today. Sudeep, hi, welcome to the show. Well, overall, it was a good day. We have Jay Thakkar also joining in. But Sudeep, over to you first. If you could just give us a sense in terms of what you are expecting now that this niggle with regards to the US shutdown is largely out of the way. Do you think that it's going to be sentiment positive for the rest of the week as well?
Oh, definitely. This is definitely a sentiment positive, Ekta. I think, look, there are a few things which are happening as far as domestic factors are concerned. We have, by and large, seen most of the quarterly numbers. Our last few numbers this week will come out. But overall, the numbers have been better than what the market was expecting. That's a positive. Domestic factors are all looking positive. And on top of that, US shutdown ending definitely is a positive for the markets. We are now expecting definitely some positive news on the trade deal as well. And that, once there is some news and it's in the positive direction, that will be a big, big positive factors for the Indian markets, definitely. Also, the Bihar election results can have a sentimental positive impact, at least for a day on Indian markets. So we are waiting for these triggers now. Beyond that, I think the markets are looking reasonably good.
Jay, would you concur technically? Today was a bit disappointing, didn't quite hold up at the day's higher above the 20-day moving average. But what's the setup looking like technically, and any stocks you have on your radar for tomorrow?
Sure. Well, Nifty managed to bounce back from the recent, support levels of 25,200, 300 range on the downside. Otherwise, we had seen a, higher correction or, one-side correction from 26,100 until 25,300 levels. Now, what has happened is, initially we saw that rally coming in from 24,500 to 26,100, and that was on back of the FI covering their shorts in the index as well as sectorally, wherein there were shorts. And we saw the FI net positions in the index futures had come down from 2 lakh contracts to almost 92,000 contracts, and the the volatility had also gone up because of the short covering, Rima. But then now what has happened since last week is that the market corrected from 26,100 to 25,300. In that, the VIX also somewhat remained stable. It did not. Rather, it was going towards the upper end of the range, and the FI net shorts have gone up back from 92,000 contracts to more than 150,000 contracts. So that is not positive. So FI data is not positive. That is something which is a concern. The relative outperformance is in the bank Nifty or the banking and financials, or maybe BFSI entirely. Insurance is also doing good. So that is one sector which is definitely supporting the markets well, along with the Nifty Metal Index and somewhat I could say the auto. So these are the few sectors which are supportive to the market, and IT overall today it was up, but otherwise it has been laggard, it has been an underperformer, and Nifty Power Stocks has been an underperformer. So more or less, I would say Nifty is likely, Rima, to stay within the range because 50 to 60% of the components within Nifty are looking positive, mainly banking, financials, insurance. Another 40 to 50% of the components within the Nifty are looking sideways to negative, which can keep Nifty until what Sandeep said, that until the Bihar elections outcome. Nifty would probably trade within the band of say 25,200 to 25,800, and I would say that Bank Nifty may probably break out earlier than that of Nifty.
All right, that point is taken, Jay. Thanks very much for that. But let's talk about specific stocks then. Trent slipped after the firm posted what was a sluggish growth this quarter with softer gross margins. Manglam is here with the details on this particular counter. Okay, all right. So the Trent stock, however, we'll get to Manglam in just a bit, that ended lower by around 7.5%. Sudeep, good to get your thoughts in on stocks such as Trent. It was the darling of the markets, but the street seems to have now come to the, it's coming around the fact that maybe the earnings are a little disappointing at this point. How would you approach Trent? Would you be a buyer at these levels?
No, I'll not be a buyer, and I've been advising investors not to get into Trent for last almost a year. I think, there has to be a parity between valuation and the earnings. Now, the valuation which Trent was commanding and is still commanding, implies that they going to have a very high rate of growth. Unfortunately, Trent hasn't been able to meet that expectation for many quarters now. Even their own guidance of about 25% growth is not being met. So under the circumstances, at the kind of valuation at which Trent quotes, I think the margin of error is very, very limited. And that's the reason why it's correcting so sharply after they announced the numbers. There was a time when the Zudio was a revolutionary concept, and it kind of created a fantastic situation for Trent, which led to supernormal growths. But now Zudio has enough and more competition, both online and offline. And overall growth momentum is slowing down for Trent. Under the circumstances, the PE multiples have to be reasonable only and in consonance with the growth which they are, kind of demonstrating.
Okay, let's talk about Nykaa. That was the strong performer in the consumer space. Mangalam is still with us. Mangalam, strong Q2 numbers, stock up 6%.
A strong growth for Nykaa continues. In fact, the company was seeing near mid-single digits or mid-20s sort of revenue growth for the last 12 quarters in a row. Gross margins have been at a 12-quarter high, highest EBITDA margin and net profit since the company is listed. And even the GMV growth of over 30% is the fastest growth that we've seen in the last 6 quarters. So net overall revenue growth of 25%, EBITDA growth of 53%, net profit growing by 154%, something that the street really likes. It was led by the beauty vertical and also the fashion vertical, which grew upwards of 20% with narrowing losses. The second half, seasonally stronger for the fashion vertical. The street will be eyeing improvement in the operational performance out there as well.
Okay, all right, that's on Nykaa. Thanks, Mangalam, for that. Well, Jay, would you have a call on both these stocks, say a Nykaa as well as a Trent?
Trent, definitely, I'm bearish out there because despite, the stock having fallen by almost 50%, the reason is that we are continuously seeing short additions. There is no respite as far as short covering is concerned. We haven't seen that. In fact, the previous lows technically has also been broken. The trend has been negative, and I think the stock is likely to inch towards the lower end of the range, which comes to around 3,600. So I have a negative view on Trent, although it has fallen quite a lot in today's session. So probably it could not offer you that risk in the near term, but any rise in Trent, that should be utilized as a selling opportunity. Whereas on the flip side, Nykaa looks positive. We have continuously seen long build-up in this stock. Since the stock has entered into the F&O segment, the stock has been trending higher with the rising open interest, clearly indicating the strong uptrend. And it has managed to, in fact, take one of its previous resistance range or a supply zone of around 230 to 35 range as well. So positionally, I believe that Nykaa should be a good long trade. Any dips towards the levels of 250 can also be utilized as a buying opportunity. Maintaining 235 as a crucial support and targeting almost 285 to 300 going forward positionally.
Okay, all right. So that's on a couple of those counters. But let's talk about a couple of these pharmaceutical stocks which were in focus. So I'll start with Emcure, which was in focus as Novo Nordisk India has now partnered with Emcure to launch basically a second brand of Wegovy in India. Remember, Wegovy was launched in June 2025. Now, Emcure has become the first Indian company to gain exclusive rights to distribute and market the second brand of Wegovy in India. Torrent was in focus post numbers. Brokerages such as Jefferies have a buy and a target price of 4,300. They've raised their EBITDA estimate for Torrent by around 3% odd. Lupin, the company has revised its FY26 EBITDA margin guidance upwards to around 25 to 26%. Also, the court verdict around Mybetriq generic, which is due in Feb 2026, will be something key to watch. They have a $1 billion sales estimate for the US and EBITDA margins of 24 to 25% is what it should revert back to in FY27. Newland Labs reacting to its numbers, revenue up 63%, margins 30%, net profit 129 crores. So it was record high revenues for them. Also, Aarti Farm Labs, that one also did see good numbers in terms of, it actually saw poor performance. So 418 odd crores, margins 18%, and a profit of around 27.9 crores. Krishna Diagnostics was the one which reacted positively. It delivered its highest ever quarterly profit, 206 odd crores in terms of revenue, margins 28.7%, and profit of around 24 odd crores, a 20% plus growth. But Sudeep, there are a lot of these pharmaceutical companies that came out with its numbers. Anything that you liked? Even Emcure, which is in focus on account of news?
Well, I definitely like the numbers which came from Torrent. I think undoubtedly a fantastic set of numbers. The best part is they have been growing in India, they have been growing in US and Brazil. I think all three key geographies they have been growing, and that's pretty heartening to see. And definitely, I think this is one stock which can be looked at even at current levels. Of course, the Emcure news is interesting, but we'll have to see how they penetrate the market with Wegovy, the other kind of brand of Wegovy. But of course, this is an opportunity for Emcure Pharma.
All right, let's talk about the other stock that was in focus today, and that is Nalco. Very strong set of numbers. The stock surged. Net profit was supported by good margins. Nigel now joins in with some more details in fine print.
Well, Nalco's numbers, in fact, were very, very good. On the top line, there was a growth of close to 7.5%. But the real beat came in terms of the operating profit. That popped up close to 24%. Which made the margins move up from sub 40% to around 45%. That looked good. What supported it? Higher LME prices. You had higher alumina sales as well that helped the top line. So operating leverage played out to some extent. Besides that, there were various input costs. Like employee cost was down close to around 8% when you have growth on the top line. And even the cost of power consumed was down by close to around 10%. And if you look at both the segment, namely the chemicals, or which is known as the alumina segment, or even the aluminium segment, on both of them, just take a look at it. In comparison to a quarter-quarter basis or a year-on-year basis, the absolute EBIT number looked beautiful. So better operational performance backed by a little lower effective tax rate. That's what made the PAT go up by close to 37%. They threw in a bit of a sweetener as well. They declared a dividend of close to 4 rupees, which the street likes. And they've also said they expanded alumina capacity. Remember, currently the alumina capacity is around 2.1 million tons. They're saying another million will come on stream by the middle of 2026. So there's an expansion as well that's on the cards. On the back of these numbers, brokerages like Antique, they have gone ahead. They have upped their target price from around 262 to around 280 rupees. They have upgraded their EBITDA estimates for the next few years. That's FY26, 27, as well as 28. And Motilal Oswal as well, they have a neutral rating, target price of around 250 rupees. But they have raised their revenue, EBITDA and PAT estimates for FY26. So numbers look good, dividend being thrown in, and brokerages going ahead and upgrading their estimates. The street likes it. Stock, bazooka move today.
And not such a bazooka move on Lenskart. In fact, a fairly muted debut on the Louth Street. It listed at a discount and managed an intraday recovery. Mangalam joins in with more on Lenskart.
It was an interesting day for trade, day one for Lenskart. You know, the question always, a good business, but at what price? And opened understandably slightly softer because of the little value left on the table, but thereafter, because of the inherent strength of the business, there were some buyers. But remember, this is day one of an issue where only 15% of the equity was allowed to be traded, as against 85%, which is locked in for trade opens over the next months or so. But be that as it may, you know, can't take away from the fact that there was strong demand for the IPO, 28 times subscription, and the issue was overall subscribed by more than 40 times by the by the QIPs and 18 times by the HNIs. Remember, it is a company that we all know of, sells and manufactures eyewear across, sells in across 2150 stores in India, and 40% of its revenues coming from abroad as well. At the same time, the underlying total addressable market, as per them, in India is 80,000 crores, likely to be about 1,50,000 crores over the next 5 years. International as well, 1,60,000 crores, likely to turn into 2,11,000 crores. In India, they are 2.5 times larger than the other nearest national player, and the organized sector is projected to grow nearly 60% faster than unorganized as well. But then again, the question, at what price? Because the first quarter, the revenues were close to 2,000 crores with 17.5% margins and a net profit of 61 times. The company, which was offered at 10.8 times trailing sales and 234 times trailing price to earnings, now even if you analyze the first quarter numbers, would be well over 200 times 1 year forward earnings. So let's see where it goes from here on.
Okay, busy day, Mangalam, there. But, well, we need to take a break on that note. Sudeep as well as Jay, thank you very much for joining in and bringing your perspective. We'll be back with more stocks in focus. A lot of the top corporate voices along with the key market events to watch out for.
Welcome back. It's time now to run you through the big corporate voices on CNBC TV 18. First up, Bajaj Auto. The management noted that the industry is likely to see real growth in the fourth quarter for the domestic motorcycle business, while the third quarter will largely remain muted following the festive season. Growth from April to August this year was subdued across the industry. However, high-end variants have registered strong demand. Bajaj Auto added that over the past 2 months, not only has volume improved, but the quality of growth has also strengthened. The company expects to outpace industry growth in the 125cc plus segment.
Next up is Hindalco. The management of Hindalco said that while its subsidiary Novelis will take a hit in the third quarter due to a fire, it expects a strong comeback in the fourth quarter. It added that FY27 will be a solid year and that Novelis will head back towards $500 per ton. That's not all. Hindalco said it could look at expanding the Mahan aluminium project by next year, and it expects its India operations to remain net cash positive.
And as we wrap, let's get you the key market events to watch out for tomorrow. Gaurav is standing by.
Well, as for tomorrow, we have a whole bunch of stocks who will come up with the earnings. First is Tata Power, but along with that, we have stocks in the likes of Aavas Financials, Biocon, Fortis Healthcare, GMR Power, Jupiter Wagons. All of these stocks we have seen already reacting in the last few days. Apart from that, we also have stocks like Thermax, Texmaco Rail, and Welspun Enterprises who will come up with the second quarter's earnings. But apart from earnings, we have some other key events as well. So tomorrow is a date when we will see Tata Trust board meeting happening. So let's watch out on that. Adani will also be in focus, and the reason being that tomorrow is the hearing date for Adani and Sahara's deal. Remember, Adani is eyeing to acquire all the 88 properties owned by Sahara, and we will be seeing some kind of movement there as well. Apart from that, from the IPO market, we will see some kind of action. So tomorrow is the day when Physicswala will come up with their IPO and open the IPO to subscription. This IPO size is worth around 3,500 crores. MV Photovoltaic. Now, this company is also coming up with the IPO of the size of 2,900 crores. And apart from that, tomorrow is the last day for Pine Labs IPO. Remember, this IPO is still struggling to see fully subscription status, and this is the second day for this IPO. Other than that, tomorrow is the last day and the last leg of Bihar election, and Prime Minister Modi will also visit Bhutan for inauguration of the hydraulic plant. So definitely, let's watch out on that as well. From the global side, if we look at the key event to watch, Google, Teamsec and Bain, they will come up with the economy 2025 report, where they will discuss and talk about the digital trends in the Southeast Asia. So let's watch out if anything material that they have to share from this report as well, specifically given that AI trend is actually very much in focus. So definitely on the back of this, we will be watching out on this event as well.
All right. Thanks very much for that, Gaurav. And on that note, it's a wrap on this edition of Markets Forward. Stay tuned. We'll be back with more.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Stocks rally across the world as the US Senate clears a major hurdle, paving the way to end the government shutdown. But the deal does not address demands on healthcare made by the Democrats. At 41 days, the current shutdown is the longest in US history. The Sensex and the Nifty snap a three-day losing streak, but the large street underperforms global markets as the gains remain limited. Midcaps marginally outperform the blue chips.
2, 1.
Well, Lenskart debuts on the large street. The stock lists at a 2% discount to the issue price despite strong demand from retail and institutional investors. The stock ends the day barely in the green after a roller coaster ride.
So in the days and months to come, you will see a series of reform measures relating to ease of doing business.
Principal Secretary to the Prime Minister and former RBI Governor Shaktikanta Das hints at more reforms, promises a series of measures to boost the ease of doing business in the coming days. That's a CNBC TV 18 exclusive.
अभी जो आप इंफ्रास्ट्रक्चर देख रहे हैं ये केवल ट्रेलर है, असली पिक्चर अभी बाकी है.
With civic body elections looming in Mumbai and Maharashtra, Chief Minister Fadnavis promises to double down on infrastructure, plans to build a third airport for Mumbai at Vadhavan Port, which will be India's first offshore port. That's another exclusive. The Supreme Court agrees to hear a petition on the use and regulation of artificial intelligence. The government has proposed to amend the current laws to ensure labeling of AI-generated content. IT Secretary Krishnan says there is no need for a separate law as of now, and the focus is on leaving room for innovation. Delhi air quality hovers in the very poor category despite a marginal improvement over the weekend. The Delhi police cracks down on protesters, including children, on Sunday after they gathered at India Gate demanding urgent government action against the air emergency. Police claim only those blocking traffic were detained and later released. The loudspeakers have fallen silent in Bihar. 122 assembly seats will vote in the second and final phase tomorrow. Votes will be counted on Friday. Rich countries have lost the enthusiasm to combat climate change, says the head of COP30 climate summit, which kicks off in Brazil today. Policymakers from 194 countries set to attend. Dozens of state and local leaders in the US will attend the summit, even as President Trump decides to stay away. Well, the big global story moving the market, stocks are rallying across large parts of Asia and Europe amidst hopes that the US government shutdown could end. Now, the South Korean Kospi rallied by over 3% today. Shares in Japan and Hong Kong also gained over 1%, and the European markets are rallying as we speak. The US Senate has passed the first stage of a deal that could put an end to the longest-running government shutdown. At least 8 Democrats backed the agreement proposed by the Republicans, but this deal does not address demands on health care made by Democrats. The bill will now proceed to the House of Representatives for approval before being sent to the president for his signature. The agreement proposed by the Republicans will fund some parts of the federal government, including food aid, veterans programs, and the legislative branch, among others, and extend the federal funding until the 30th of January.
So there was no vote that we were going to get on the Affordable Care Act, premium tax credits. We have a guaranteed vote by a guaranteed date on a bill that we will write. Not that the Republicans will write, although I do think it's important for us to engage with them, because we need a bipartisan bill that we know is going to get enacted to provide the relief that Americans need. And I think there's a commitment on the part of many of our colleagues to do that.
Well, the longest-running U.S. government shutdown possibly now coming to an end. Meanwhile, the Indian markets underperformed global peers. Despite snapping the 3-day losing streak, the large street managed to clock only marginal gains today. Nifty closing about 80 points higher, 300 points higher on the Sensex. The Nifty Bank absolutely flat in the Midcap index, put on about 0.5% at close. IT stocks led the up move today. Banks underperformed the blue chips, with the Nifty Bank index ending flat, but with a slight positive bias. Now, eyewear company Lenskart listed at a 2% discount to the IPO price. The stock staged a recovery, but gave up most of those gains towards the end of trade, ending marginally in the green. The issue was subscribed 28 times during its IPO stage on the back of strong demand from retail and institutional investors. Mangalam joins us now with more on Lenskart's Dalal Street debut. Mangalam, perhaps one of the most talked about IPOs in recent times. Take us through what the market now makes of the Lenskart story post the listing.
It was an interesting day for trade, day one for Lenskart. You know, the question always, a good business, but at what price? And opened understandably slightly softer because of the little value left on the table, but thereafter, because of the inherent strength of the business, there were some buyers. But remember, this is day one of an issue where only 15% of the equity was allowed to be traded, as against 85%, which is locked in for trade opens over the next months or so. But be that as it may, you know, can't take away from the fact that there was strong demand for the IPO, 28 times subscription, and the issue was overall subscribed by more than 40 times by the by the QIPs and 18 times by the HNIs. Remember, it is a company that we all know of, sells and manufactures eyewear across, sells in across 2150 stores in India, and 40% of its revenue is coming from abroad as well. At the same time, the underlying total addressable market, as per them, in India is 80,000 crores, likely to be about 1,50,000 crores over the next 5 years. International as well, 1,60,000 crores, likely to turn into 2,11,000 crores. In India, they are 2.5 times larger than the other nearest national player, and the organized sector is projected to grow nearly 60% faster than unorganized as well. But then again, the question, at what price? Because the first quarter, the revenues were close to 2,000 crores with 17.5% margins and a net profit of 61 times. The company, which was offered at 10.8 times trailing sales and 234 times trailing price to earnings, now even if you analyze the first quarter numbers, would be well over 200 times 1 year forward earnings. So let's see where it goes from here on.
What will it take for us to create global companies? I think the most important thing is belief. Today, about 40% of our revenue comes from international markets. What we have achieved so far is a very small portion of what we intend to do. We want to give a vision to 1 billion people. We have given it to only about 25 million people so far, right? So there is a lot more to do ahead.
Well, that's Lenskart's Piyush Bansal speaking to us at the Global Leadership Summit, the stock listing today on Dalal Street. The IPO offering of Pine Labs was subscribed 48% on the second day of bidding. As of 4 p.m., the portion reserved for retail investors was booked 84%, while QIB portion was subscribed 54%. The company's 3,900 crore rupee IPO comprises a fresh issue of 2,000 crore rupees and an offer for sale component of over 8 crore shares. Sugar stocks gained in trade after the government over the weekend approved exports up to 1.5 million tons this year. The allocation is, however, lower than the 2 million ton demanded by industry. The Union Food Ministry has also decided to remove the 50% export duty on molasses. The Food Secretary had recently said that the government was considering allowing sugar exports due to the accumulation of surplus stocks. All of those stocks closing much higher. Look at that, 6.5% higher there for Balrampur Chini. President Trump has defended his tariff policy yet again. He claimed that levies made America the richest country in the world. The president called the people criticizing the tariffs, I quote, as fools, and promised that Americans will receive dividends of $2,000 each from the tariff revenue soon. His comments came after the Supreme Court questioned the legality of the tariffs while hearing a case last week. In August, a federal appeals court ruled that President Trump overstepped his authority with the imposition of tariffs. The U.S. Supreme Court is yet to deliver its verdict on the matter. And staying with tariffs, the 50% U.S. tariffs on India have made tyre exports unsustainable, says Raghupati Singhania of GK Tyre. Speaking exclusively to Parikshit Luthra, Singhania said unless the trade deal offers tariffs lower than other Asian nations, Indian tyre companies will have to find new export markets. Here's Raghupati Singhania.
If it is in 50% range, I don't think we are going to make it, because a U.S. importer, why will he import a product or buy a product 50% or let's say 40% higher than somebody else when the performance are similar? I mean, you can always claim a particular brand is better also. So why should anybody do it? So we have, as a industry, as a company, formed a strategy, alternate strategy. Couple of things. We are now catering to the US market more through our Mexican operations. From India, we are looking to alternate markets. We are developing Europe. There is a balance created, equilibrium created in the troubled waters when such things happen. So in a course of a year or so, I think things will settle down.
Well, that's Raghupati Singhania on the impact of US tariffs. India's most influential thought leaders converged in Mumbai on Friday for the CNBC TV 18 Global Leadership Summit. We spoke with 50 stalwarts across sectors from sports to business to policy making to decode how the India advantage can reap rich dividends. Maharashtra's Chief Minister Devendra Fadnavis was one of our speakers. With civic body elections looming in Mumbai and Maharashtra, Fadnavis promised to double down on infrastructure. Taking a cue from the hit Shah Rukh Khan movie Om Shanti Om, Fadnavis reflected the work done so far was only a trailer and picture abhi baki hai.
अभी जो आप इंफ्रास्ट्रक्चर देख रहे हैं ये केवल ट्रेलर है, असली पिक्चर अभी बाकी है। आप जब ये वर्ली बांद्रा सी लिंक से बांद्रा में आते हैं तो अभी हम लोगों का एक प्लान चल रहा है कि हम बांद्रा से सीधा एक टनल ये बीकेसी में लाएंगे और बीकेसी से सीधा उस टनल को हम एयरपोर्ट ले जाएंगे, तो जिसमें आपको उसके बाद ये जो बीकेसी का जो कंजेशन है और वेस्टर्न एक्सप्रेसवे का जो कंजेशन है वो ख़त्म हो जाएगा। ये जिस दिन तैयार होगा उस दिन वाढवण पोर्ट ये दुनिया के पहले 10 पोर्ट में होगा और अगले 30 साल 40 साल महाराष्ट्र और देश की अर्थव्यवस्था को और जो एक प्रकार से उसकी अगुवाई ये वाढवण पोर्ट करेगा। ऑलमोस्ट एवरी डिस्ट्रिक्ट विल बी कनेक्टेड विद अ सुपर एक्सप्रेसवे विद द वाढवण पोर्ट। तो मुझे ऐसा लगता है कि जो एक ग्लोबल सप्लाई चेन में हम लोग एक भूमिका निभाना चाहते हैं उसके लिए वाढवण पोर्ट और जो हमारे हाईवेज ये जो इकोसिस्टम हम तैयार कर रहे हैं ये इकोसिस्टम पूरे तरीके से इसको बदल देगी।
Well, that's the Maharashtra Chief Minister. And as other headliner, Second Principal Secretary to the Prime Minister and former RBI Governor Shaktikanta Das was honoured for his contribution to the Indian economy at the CNBC TV 18 Global Leadership Summit. During his acceptance speech, Das hinted at more reforms from the government in the coming days.
Next-gen GST reforms, which were undertaken recently, the Prime Minister talked about it on 15th of August from Red Fort, and within 5 weeks, on 22nd of December, the next-gen GST reforms were implemented with the cooperation of all the states. Several reforms this year have been undertaken not only in GST but also in non-financial sector deregulation, for which a high-level committee has been appointed. So in the days and months to come, you will see a series of reform measures relating to ease of doing business, relating to making Indian economy more competitive. All these measures will follow.
Well, that is the former RBI governor promising more reforms. On to a CNBC TV 18 exclusive that we're breaking this evening. Car Trade Tech is set to be in final stages to acquire Car Dekho. Rachna Dhanrajani joins us now with more. Rachna, take us through the possibility of this deal coming through and what the rationale is behind it.
Yeah, sure. My colleague Vivek and I have gathered from our respective sources that Car Trade Tech is in advanced stages to acquire Car Dekho. This move could be a defining consolidation move in India's digital auto space. Now, the deal sources say will be structured as a mix of cash and stock, and the intent behind this is to create the country's largest digital auto platform, bringing together new and used car marketplaces, financing and insurance all under one umbrella. Now, Car Dekho was last valued at $1.2 billion back in 2021 when it raised funds from investors like Sequoia and Leapfrog. In the financial year 2024, the Car Dekho group reported revenues of over 2,000 crore rupees and a standalone profit of about 37 crore rupees. The financials for FY25 aren't made public. While Car Dekho has declined to comment on the development, Car Trade has not yet responded to CNBC TV 18's queries. But if this deal goes through, it will reshape India's online marketplace, combining two of the biggest homegrown platforms and potentially setting the stage for a stronger play against global and local competitors in the digital mobility ecosystem. Back to you.
All right, Rachna, many thanks for joining us. That's a deal likely in the making. Time for us to head into a short break, but up next, Delhi's air quality hovers in the very poor category despite a marginal improvement over the weekend. That and more when we return. The Supreme Court will hear a public interest litigation on the use and regulation of artificial intelligence. The court is set to hear the case after 2 weeks. Chief Justice B.R. Gavai remarked that judges are well aware of the misuse of AI and have seen morphed pictures of themselves on social media. The government has proposed amending the current IT rules to ensure labeling of all AI-generated content. The draft rules are currently open for public comments. In fact, the Secretary at the Ministry of Electronics and Information Technology, S. Krishnan, while speaking to me, says that there is no need for a separate law to regulate AI as of now. He believes India must focus on leaving room for innovation and that the government will use existing laws to address problematic elements if necessary. Take a look.
Government's objective and MeitY's objective is primarily to focus on innovation and give room for innovation. And regulation comes after that. What we have made very clear is that we believe we have a very positive outlook on AI and the impact that it could have for India and for the globe. And therefore, we need to give as much space as possible for innovation to play out in this space. And as with all technologies, there will be elements which are problematic and which could potentially be issues. And wherever those issues arise, wherever there are potential harms, we will use both existing legal frameworks.
Well, no need for a specific AI-linked regulation. That is S. Krishnan, the Secretary. Speaking of AI, actor and entrepreneur Deepika Padukone says her voice and accent were mocked when she entered the industry, and now, ironically, she's the voice of Meta AI. Speaking to me, Padukone said the only thing AI will not be able to replace is human emotion. Fashion designer Sabyasachi Mukherjee also weighed in on the AI debate, adding that the technology will not be able to replace humans.
Interesting also, no, that I'm someone whose voice was like sort of mocked when I came into the industry, and now suddenly I'm the voice of Meta AI. Strange.
Well done.
And my accent, but I continue to own it, and I think that's probably how and why it happened. But I mean, what do I think about it?
Yeah.
AI or how?
AI. I mean, you know, there's all kinds of disruptions on account of it, including what is likely to happen to the film and entertainment world. People are now talking about dishing out AI movies in a matter of days, forget weeks or months. You know, so as somebody from the industry, do you see that as an exciting opportunity? Do you see that as a threat?
No, I'm so excited about the possibilities. The only thing I'm not sure about, I'm not saying. Actually, I'm going to say that with a lot of confidence because I truly believe it. The only thing I believe it cannot replace is human emotion. I think that's the only place AI will not be allowed or will not be able to match up. Can it do a similar job? Yes, maybe. Maybe it's not there yet. I don't know. So barring human emotion and how an actor would emote, because you can't infuse soul into AI.
You know, Sabya, are you equally excited, or do you also look at it with some trepidation and nervousness? Because, you know, you can churn out designs quite literally in a matter of seconds. There's existential questions being asked of the film world, of the entertainment world, of us in the media world, you know, of ad agencies and so on and so forth. So how do you look at what's happening in AI and what it means for human creativity?
See, two things. Firstly, the human mind will constantly evolve. Secondly, AI is necessary for many things to drive efficiency in fields where efficiency is required. But in art and craft and in the business of emotions, like we say, whether it's fashion, architecture, food, films, I think AI will never be able to replace human beings.
Well, the AI debate rages on. The loudspeakers, meanwhile, have fallen silent in Bihar ahead of the second and final phase of the election tomorrow. 122 assembly seats will go to the polls and the votes will be counted on Friday. The first phase recorded a voter turnout of 65%. In the 2020 polls, the BJP won 42 out of these 122 seats. The JDU won 20 seats, the RJD won 33 seats, and the Congress clinched 11 seats. The air quality in Delhi continues to remain in the very poor category despite a slight improvement over the weekend. Several areas including Pusa Road, RK Puram, Chandni Chowk, Shadipur, Punjabi Bagh and Munkar recorded AQI levels well above the 300 mark. Several people were detained yesterday after gathering at India Gate for a clean air protest. Police reportedly asked the demonstrators to move their protest to Jantar Mantar, but when they refused, a few were detained to clear the blocked road. Timsy joins us now with the latest from Mausam Bhavan in central Delhi. Timsy, some measures being announced by the government to stagger office timings of government offices, etc. But, no respite for Delhiites.
Delhi NCR's air quality continues to remain in the very poor category. CAQM met last evening and did not decide to go ahead with GRAP 3, rather continued with GRAP 2 phase, considering that the AQI levels on an average did not cross 400. It usually shows the AQI readings, but today it is showing only the weather report. That was captured at Safdarjung station, where today's forecast in Delhi, it says mainly clear sky. Central Pollution Control Board's app, which actually shows live reading of AQI, and at this location live, currently the AQI, the air quality is at 345. It says very poor. Over the last 3 days, this is today's average of Delhi, 345, which is under very poor category. And over the last 3 days, yesterday it was 370, day before yesterday was 361, and the day before that, that is 7th of November, it was 322. And this is the reason why CAQM last evening did not go ahead with GRAP 3. It waited till GRAP 2 only. Severe category kicks in, the GRAP 3 stage kicks in only once the average AQI crosses 400 level. And as of now, the Mausam Bhavan board, which usually shows AQI, is currently displaying only the weather report. It is not showing the current AQI readings.
Well, you may not be able to read the AQI reading on the Mausam Bhavan display board, but it's there available with many, many devices, and it's there to experience for all of Delhi's citizens. In international headlines, Hamas has handed over the remains of an Israeli soldier who was killed in Gaza in 2014. The release of his body was part of the ceasefire agreement signed in October. Reports suggest the U.S. presidential advisor Jared Kushner arrived in Israel, where he's expected to meet with Israeli leaders to resolve issues related to the ceasefire. Meanwhile, Israel's attacks on Gaza continue over the weekend. As per the Palestinian Health Ministry, 1 person was killed, 5 others injured in Israeli attacks in the last 24 hours. From one war-torn region to another, the Russian Ministry of Defense has said its forces have captured a Ukrainian settlement in the southeastern part of the country. Russia has also attacked key power and energy infrastructure in Ukraine, with over 1 lakh people left without water or electricity. At least 11 people were killed after a boat carrying undocumented migrants from Malaysia sank near Thailand. Malaysian maritime border, 13 people have been rescued so far, while hundreds are still missing. According to Malaysian officials, the vessel was carrying around 300 people, mostly Rohingya refugees. At least 2 people have died after super typhoon Fong Wong made landfall in the Philippines overnight, unleashing fierce winds and torrential rain. The powerful storm caused widespread destruction, with landslides cutting off several towns and roofs ripped off buildings. Footage from affected areas shows shattered windows and debris strewn across streets. Authorities said more than 1 million people were evacuated ahead of the typhoon's landfall. And a powerful tornado accompanied by strong winds and heavy rains tore through southern Brazil, leaving 6 people dead and hundreds injured. The town of Rio Bonito was the hardest hit, with more than half of its urban area suffering roof collapses and widespread structural damage. Authorities say 437 people have been treated for injuries, while around 1,000 people have been displaced. Tornado hit Brazil is the venue of the annual climate summit. The world's biggest climate summit, COP30, has kicked off in the country, and the head of COP30 summit has said that rich countries have lost the enthusiasm to combat climate change. Policymakers from 194 countries will attend the conference. Dozens of state and local leaders in the US will attend the summit, even after President Trump decided to stay away. So COP30 underway in Brazil. With that, it is time for us to wrap up this edition of Business 360. We leave you with highlights of the CNBC TV 18 Global Leadership Summit. Plenty of action to catch up on.
all of you, thanks very much for being with us here at the Global Leadership Summit. It's not every day that you get four of the sharpest minds in India's market ecosystem on the same stage at a time when the noise is loud, the flows are AI, Atmanirbhar India, and the opportunity set feels both extraordinary but also quite complex, I guess all of you would agree. Now, the India equity story has had many headlines, and I'm just talking about the last 1 year. I mean, in recent times, returns have been more subdued than usual. The Nifty and the broader NSE 500 has been flat for about 14 months now. Foreign investors have been big sellers, with domestic investors on the other side of that trade. Very large equity supply via exits, IPOs, and of course, I mean, India getting little love from President Trump in the US. Hopefully that will change. Looking ahead, many are waiting to see if government policies like tax and GST cuts, and of course, RBI's rate cuts will provide a durable bump to growth in markets. The question is, how will all of this resolve itself going forward? And that is what these four gentlemen will do, for you here on this very, very interesting panel. Gentlemen, once again, thanks very much, all of you. And we were just joking outside that Naren, I think, said that I'm here to balance things a little bit. If Rhythm, who's the big bull on the equity analysis side, gets too excited, I think Naren is here to temper some of that enthusiasm. So, Ashish Bhai, great to see you as well. Ashish Bhai, of course, heads the NSC. It's one of the largest companies now, and hopefully we'll see an IPO soon as well. But let me just stick with markets first up. Rhythm, where are we in terms of this cycle? Let's just place ourselves where we are.
See, first I have to acknowledge that Naren has been dead right and I've been dead wrong. So we should get that right of the way. I think he was warning, if I remember correctly, first time last year in September, that things are getting tricky. And well, they did. So India has, and I think the SEBI chair made a very useful point about foreign investors who, unlike domestic investors, see things on a relative basis. China announced its first round of stimulus September last year, and that eventually proved to be India's peak relative to emerging markets. And we've had the worst year for India relative to EM in 30. So it's not been just another year. It's not visible in absolute share prices because the world is in a raging bull market. Markets like Korea up multiples of 10 percentage points in the last 12 months. So that's the extent to which India has underperformed. The proximate reasons are known to everyone. Growth slowed down. The starting point of relative valuations especially were very high. And we've seen both of these, I think, correct or inflect. The RBI started working on the growth cycle in February, and we have arrived at a situation where it seems to be in reflation mode with a view to increase CPI. So that should help nominal growth going forward. India's relative valuations have corrected a long way, and we're now actually at levels which we don't see very often. So India does look far more appealing as a market to foreign investors. And the final point is that in recent months, the focus of global tourist capital, the one that looks at short-term returns, has been on AI. And India does not really offer an AI trade. So ultimate trigger point for the return of the FPI will be if the AI trade starts fading. I think India will suddenly start looking very attractive. And the final thing is on the trade deal. While I don't think the trade deal with the US is that critical for India's macro, in the minds of short-term capital movers, it does seem to be an important thing. And hopefully later this month, that trade deal happens, and that will again be another negative out of the way. So as I see the landscape, I think things look like they are about to turn for India on a relative basis. The risk, of course, remains that the world could wobble, and that could make it another tricky year for absolute returns, but I'm hoping that that risk doesn't pan out.
Well put. And that AI point that you made, Rhythm, right? ChatGPT, I think, came out in November of 2022. I think the opportunity size crystallized maybe in 2023, and it took off after that. before that, 2021, 22, and maybe parts of 23, we used to say Nifty and the Nasdaq are so closely synced and they were the best performing markets in the world. And that broke, as you said, because maybe there's no AI trade. And but that's very, very stark in that sense. Naren, come in here. What is your sense? Rhythm's view is gets better from here on a relative basis. Not a raging bull market or anything, but gets better relatively.
No, clearly on a relative basis, it gets much, much better from here because India has underperformed so much every other market in the world that it gets relatively better. The problem is on an absolute basis across the world because today every market in the world is very costly today. So how does the absolute markets behave from here is possibly we don't know. If you had asked me 1 year back, would US also correct? We maybe would have said US would correct, but that call went completely wrong. So I think the risk is something going wrong in US AI stocks because if US is 60% of the global index, how do you expect India to go up when US is going down? So I think the challenge is US market. In India, what the Indian entrepreneurs, the Indian private equity firms, all they've done is they've ensured enough supply. So even if we get good SIP inflows, they have ensured that there's so much supply that the market just cannot go up easily. I mean, there is so much supply and there doesn't seem to be any end to the supply. So, I mean, although we have a very, very big investment team, all the time we are trying to see how to handle every day there's some block or the other. So most of our time is spent in analyzing whether we should buy this block or this, participate in this IPO or this QIP. That there doesn't seem to be any way the market can go up till this supply ends. And we are not able to see when the supply ends. If I can say, okay, it'll end, maybe it will not be there in December. So December markets can go up because supply doesn't happen in December seasonally. But otherwise, again, Jan to March, there'll be supply. So that's where the challenge is at this point of time. So we are in a situation where it's tough to argue that you can make big money. You can't make big money, but at least on a relative basis, the problems doesn't seem to exist at this point of time. But on an absolute basis, we don't know. But at any point of time, markets can correct. And I think, we look at a global guru like Warren Buffett. He has created the highest trough of cash at this point of time ever. And, he's the only person who doesn't care what happens in the near term. He doesn't have any performance risk. He doesn't have any risk that anything can go wrong just because he's underperforming. So I think what he's doing suggests that there is enough risk of US markets correcting.
And that's the big risk to your mind, right?
Yeah, that is the biggest risk.
We have, by the way, as we were just saying, OpenAI on stage, I guess after this panel, or maybe after a panel after.
I think, no, the risk is not AI doing badly. The risk is AI stocks doing badly. Yeah. It's like internet. Internet didn't do badly from 99 to 2010, but still internet stocks crashed between 99 and 2002.
There has been enough mainstream sell-side research which is now comparing and asking the question with a question mark at end, whether this is the 99 moment. And most of the answer to that in those reports is no, this is not. And this is why it's different. 0.1, 2, 3, 4.
But they'll say this time is different.
But do you think, I mean, just to that point, this is something similar to, you've lived through that.
I don't think we can say with certainty. We are not part of it. All I'm saying is the sentiment, if you look at the kind of vendor financing which is happening, X supplies to Y, then say Y goes up, then X doesn't have money, X gets money from A then gets money from B. If you look at what is happening, it is very worrying. But do we know with certainty? I don't think we know.
But if AI has not helped India, why should it hurt India?
No, that is where, 99 to 2001, did Indian markets go down? Yes, it did go down. So now maybe it will go down as everyone says it will outperform. Doesn't mean it doesn't need to go down because the world's biggest market is US. I don't think if US goes down 20%, any market in the world is going to go up.
And across ICICI funds, are you kind of sort of building some hedges?
Yeah, I think, there it is very simple. We recommend asset allocation and tell people to invest in not only in equity.
Correct.
We have succeeded much more than most people, but that's a risk that the investor is taking. Investor is too fond of equity. After 13 years of 12 years of continuous equity return, they like only equity.
Nilkant come in here. And it's just the other part of the thing which Rhythm also mentioned is the US-India. Rhythm said, well, it's not that crucial. I remember speaking with you immediately after that, those tariffs, etc., were imposed. And I remember what you said. You said, well, the longer they last, I mean, it'll start to show up more and more. I mean, a quick resolution is, of course, is the best thing, but that's obviously not happening. It doesn't look like it's in the immediate horizon. How do you think about that? And weigh in on markets as well.
Yeah, so that I agree with Rhythm that it is not important for India's macro. It is important for FII sentiment on India. Remember that the whole world is obsessed with tariffs right now, so it does affect sentiment. And if you're sitting in London or New York and you're reading some of these Western business press and you see that India has 50% tariffs and it is struggling, I think the sentiment around India sours. The view on India among foreign investors that I see is not just neutral, that there's no AI, it's actually negative, that India is an AI loser, that Taiwan and Korea are AI winners because they have Samsung and SK Hynix and TSMC and they are beneficiaries of this boom in AI. And India has not just no player, but actually Indian IT and all of the GCCs, etc., will suffer, which I think is very, very myopic. I think it's absolutely disagree with that. And therefore, whenever this AI bubble turns, while I'm completely in agreement with Naren that as the US market from 200% market cap to GDP starts to normalize, that no equity market will be left untouched. But I do think that the roll forward gains in earnings are now starting. So for almost 3 quarters, we had all the roll forward gains, which is 3 to 3.5% a quarter, being offset by earnings cuts. So now I think that GDP upgrades have started. I expect that by the end of this fiscal year, the real GDP number will be upwards of 7. The reason why there is still a lot of negative sentiment is that nominal GDP growth has been coming down. And again, people have been extrapolating too far. So from 18% in FY22 to 8% this year, people think that this is the new trend line. I don't think so. We have been tightening fiscally and monetarily too much. Therefore, core inflation has come down. Food inflation has been falling for the longest period, as RBI has documented. So both of these will reverse. And so we are going to be back to 11, 12% nominal GDP growth in 6 to 9 months. And then the earnings cuts start to slow down. And they've started to slow down. I think maybe some earnings upgrades can happen. And the roll forward gains will start coming through. So I do expect that in the next 12 months, we should see much better support for India. In fact, foreign investors have been using, hedge funds have been using India as a funding shot. That it's not going to do anything.
Which means they're selling here and then using
that. Yeah, so because they know that this market is not going anywhere. And therefore, you just sell it, you get free funds. And then you invest, punt on that in the AI themes globally. On whether the AI bubble is bursting right now, I'm not so sure. Because as much as it does seem really excessive, even on things like code generation, you talk to or you listen to people who have worked in AI, who've done coding, people think that vibe coding is going to replace software engineers. I don't want to make it too nerdy, but there was a time when you actually had to write code in assembly language. And then compilers came. AI, the way it works today in coding, is maybe as big an impact in terms of time and effort as compilers. So it is not really going to transform and replace all coders. So I think even that is becoming excessive. So far, a large part of the capital going in is surplus capital that Google and Microsoft and all was accumulating. Bubble formation and the risk of a collapse happens when you have a lot of credit funded, you have a lot of, so then there is a deadline. So if Microsoft does not make enough money, the ROC falls by 2%. But if you've taken private credit and you fail, so that kind of share of capital is still low. So I think there's another maybe couple of years of bubble formation, and then it all falls.
Ashish bhai, you sit, you can be stoic through this market conversation because you sit on top of the market ecosystem where we all operate, analysts, fund managers, economists, everybody. But I mean, just your thoughts on the first point which we made, which is the domestic investor. And I mean, the numbers are just mind-boggling. Naren put it well, right? I mean, I don't think domestic investors need any equity encouragement. I mean, they're there, they've seen the returns, and they're here to stay in that sense. So while we can complain about all the supply, but it's like chicken and egg, what came first? The supply is there because there is demand in that sense, right? Just wanted your thoughts, Ashish bhai. How do you see things?
I think a time comes in the history of a nation when it starts investing in itself. And I mean, if you look at the numbers, in 2014, because that's when Mr. Modi took over, so I have some idea of what the numbers were. Total number of investors in India, unique investors, because we count accounts and also unique investors because we have PAN numbers. So we dedupe and figure out. When Mr. Modi took over, on that day, we had 1.6 crore unique investors. Today, after 11 years, we have 12 crore unique investors. Today, and many of, literally almost half of them have come in last 5 years, largely due to the COVID-induced framework where we were having a KYC framework where you had to go to physical houses of people, check their incomes and all. And then in COVID, because we could not go, SEBI allowed the KYC to be done by video. And that allowed many of my brokers to reach out to the nooks and corners. Today, India has around 19,400 zip codes, give and take few. I have pin codes in every part of India, every zip code except 28. And my understanding is out of 28, probably 25 are, the pin codes themselves are airports where you can't do KYC, right? So broadly, I have people in Ladakh, literally 6,000 meters, 7,000 meters on top, and I have people in Andaman. It is amazing how India started shifting from real estate and gold and everything else into equities. And it's a miracle, I would say. Today, with 12 crore investors, 9 crore males, 3 crore women, 25% women. And if you take number of households, it is now literally 9 crore households, give and take few, which is 1/4 of India's households. You don't see that type of numbers even in Germany. I mean, it's always said that a poor country, we are still $3,000 per capita. I don't believe we are $3,000 per capita, but numbers say that, so I would believe, right? So poor per capita income countries cannot have a good functioning capital market because poor people cannot save. And if they save, they don't trust their brothers also. How come somebody sitting in Arunachal Pradesh is putting money in a small little company, SME company coming out of Salem in Coimbatore? That person is never going to visit, check out what is happening, but she has a tremendous trust. Her 1,000 rupees is important to her. Don't think you talk billions and trillions. Her 1,000 rupees is important, but what I call a virtuous cycle has been created by all the past companies which have given results. And broadly, today, I mean, although people don't talk, Indian equities market with $5.3 trillion is probably 160% or more of Indian entire banking system. It is amazing what has happened, that people are investing in risk assets. And also it tells you that over last 11 years, India has become more middle class.
Rhythm, on that supply point, right? I think Naren earlier at one point had said that, I think you gave the Naren 95 example, that supply essentially is what overwhelmed the market back then. Just your thoughts on that. How do you think about the supply issue?
So see, Prashant, we are, so the previous peak in supply was about 3% of GDP. Today we are circa 1%. So we have a long way to go. When we get to about 3% at current GDP, it will be about $10 billion per month for 12 months on the trot. So I don't think we have reached a level where supply is going to be the reason why the markets wobble. So I'm not so perturbed about it. It's a good sign. It's a good thing that people are raising capital. It does help the economy, and eventually this will flow into capex and help earnings.
On that AI question, Rhythm, what's your? We got Naren who thinks No way to tell, but it looks a little scary. Neelkanth says it's still a couple of years away before it, to use the word, pops. But your thoughts?
So with the caveat that I don't know, like Naren said, I remember that in the internet cycle, Warren Buffett became cautious in 1996. A lot of smart investors became cautious in 1998. If you became cautious in December 1999, it was still too early because a lot of stocks doubled in the next 3 months. So this is really about your mandate, what you want to achieve with your portfolio. Warren is you know, as Naren rightly puts it, he doesn't have to report to anyone, including himself. So he's fine being early. Not everybody in this room can afford to be early. Yeah, so when you know, this is always going to test everyone. But we don't know.
Yeah. Wrap up with your, how are you approaching markets in terms of where wealth will be made from here? It's going to be relatively better, but relatively better where, Rhythm?
I think banks look very attractive. Valuations are, in fact, it's the only place where valuations are below history, where earnings are below history, where I think margins are stabilizing, likely expanding, where top-line growth looks like it's accelerating. So I think lenders are probably the place to be. The other places in the market, I think, get a little bit more tricky because you have to have some faith in their ability to deliver into the future. IT services, I think, offer an interesting opportunity because the consensus seems too bearish. I agree with the point Neelkanth made. It's not so simple that AI is going to, you know, take over coding. In fact, from whatever I know, a lot of the AI work, the monetization of the investments that have happened is taking place here in this country. So it's unlikely that, you know, AI is going to... What is hurting IT services actually is the GCCs. It's not AI. Because we, you know, for example, Morgan Stanley used to farm out a lot of work to IT services companies, say 5, 7, 8 years ago. Now a lot of that work happens in-house. So the amount of headcount that we have at our vendors has not grown, whereas our internal headcount has grown 3x,
Captive centers
5x. Yeah.
has grown.
So that's really the proximate reason why IT services may be hurting, not AI.
So financials and IT services is a non-consensus kind
IT
of...
services, you have to have a 2 to 3 year view. I think financials will do well even on a 12-month basis.
Naren?
What we think is it's a mature bull market. So, you know, there have been such good stock because in India that anything which has to be discovered got discovered. But a lot of people get
That is
frustrated.
like the efficient market theory.
A lot of people got frustrated. They buy in 2023, the share hasn't worked for 2-3 years. They get irritated, they start selling. So we found that in many sectors, people get frustrated holding a stock for 2-3 years, they don't get return, they come and sell. So we've been trying to buy wherever we find that the seller has got frustrated with holding stocks. Not like 2018 to 20 was very easy. You buy PSU, buy metal, buy telecom. All those stocks are very cheap. Today, all those sectors are not very cheap, but across, whether it is quality, whether it is many other sectors, suddenly you'll find someone coming and selling because they waited for 2-3 years, no return, they'll come and sell. So we buy across sectors. And we find, like recently we bought oil and gas, and we found that it suddenly performed. Now, today, if you ask me, is oil and gas the best sector? I would say I would think, because oil and gas has done very well. So we look across sectors at this point of time. But do we expect mega returns from here? For that, we need supply to come down. The day supply comes down for 3 months, this flow comes, our SIP flow keeps coming, then I think we have a good rally ahead. But for that, we can't afford to have this kind of supply coming in the markets.
You know, I had a lot more questions, but as always, we're always limited by time, and it's a packed day through the course of the day, and this is the top market panel that we put together for you. Rhythm, Naren, Neelkanth, and Ashish Bhai, thank you all for joining us here on this session. Thank you very much.
Hello and welcome to News Centre. I'm Parikshit Luthra. If you are a Delhi resident, chances are that you would want the right to breathe to be enshrined as a fundamental right in the Indian Constitution. And why not? Delhi currently shares the ignominy of ranking constantly as the world's most polluted capital city. The air quality in the metropolis continued to remain in the very poor category despite a slight improvement over the weekend. Several areas including Pusa Road, RK Puram, Chandni Chowk, Shadipur, Punjabi Bagh and Mundka recorded AQI levels above the 300 mark. The government is yet to implement the Graded Response Action Plan 3, whereby there is a ban on non-essential construction. BS3 and BS4 vehicles are also restricted, and classes up to grade 5 are required to work either in a hybrid mode or only online. So these next stage of measures are yet to be implemented. A subcommittee of the Commission for Air Quality Management has concluded that implementing stage 3 restrictions was unnecessary as of now because the pollution situation is improving. Outside Mausam Bhavan, the headquarters of the Weather Department, the air quality level is not even being displayed on the boards. The AQI reading is usually displayed on these boards, and with air quality worsening, the AQI reading has also vanished. Meanwhile, if the poor air quality was not enough, protesters had to face police barricades for daring to urge the government for intervention. They had gathered at India Gate last evening, demanding urgent government action against air emergency. Even protesters, which included children accompanied by parents, were not spared. The police claimed that only those blocking traffic were detained and later released. The cops said that the protesters did not have permission to protest at the India Gate and were reportedly asked to move to Jantar Mantar. Before I welcome our guests to discuss this, here's a report from Timsi Jepuria from ITO, a busy road intersection in central Delhi.
I'm outside the Indian National Science Academy. This is the air quality monitoring station where the meter to monitor air quality is stationed at ITO by the Central Pollution Control Board. And if you see the PM 2.5 readings, which will be displayed shortly, they are above 187 units. And any reading above 40 units, see, now the PM 2.5 reading is at 197 units, and any reading above 40 units is considered to be harmful for human lungs. Any reading which is in this category, say 197 units, is considered to be moderately polluted. Severe category is yet to kick in, is what the Pollution Control Board is saying, the meters are saying, and this reading is actually 197 of PM 2.5, and for PM 10 it is above 260. So these readings are very crucial when it comes to monitoring the air quality index, and this is one of the stations here at the busiest signal located right at the Bahadur Shah Zafar Marg ITO signal outside the Indian National Science Academy.
To take this discussion forward, I'm now joined by Vimlendu Jha, founder of Swecha, and environmental activist Bhavreen Khandari. Thank you very much for being with us on the program. Vimlendu Jha, let me begin by asking you, we see the situation year after year. What do you think is going wrong this time around? Is it vehicular pollution? Is it farm fires? Is it construction dust? Or is it all of the above?
So, Parikshit, I think, this year, and of course, this pollution is not a 2025 phenomena. We've actually seen last decade, at least, the situation being the same, almost similar AQI levels. But what is very, very unfortunate this year is twofold. One is that we've actually seen the data being manipulated at the end of the day. Like right now, in reality is that, of course, your reporter was talking about 350 or 400, or the government air quality monitors are talking about severe and severe plus levels of air quality in Delhi NCR. But reality is that through government's own submission to the Supreme Court on the peak of Diwali's pollution, the air quality monitors were either shut down or later there's been several instances of water sprinkling that's been going on. So one is that government, rather than actually suppressing pollution, it is actually suppressing data that should largely inform both the government and its citizens in terms of what to do and what not to do in these dire, extreme situations. That's one. Two is that what happened yesterday was extremely shameful and disgusting, that there were peaceful protesters assembled in one of the lawns of India Gate that anyway had thousands and thousands of people a Sunday afternoon. And a peaceful protest was actually violently dealt with by the state. And these were children, women, fathers, mothers, normal citizens who were actually asking their right to clean air. So that is fundamentally what has changed this year's narrative. But reality is that those sources of pollution, it's a collective failure of various governments through these years, where largely we look at perception management and symptom management in terms of really sprinkling water or perhaps doing these voodoo smoke tower and cloud seeding than looking at the origin, the source of the pollution, which in case of Delhi, we're talking about vehicular, which is almost 40. We talk about construction. We're talking about stubble burning. All those issues are the main issues that the government, being the custodian, is supposed to address. But government, largely, rather than addressing those issues, is actually charging upon small children and citizens.
Okay. Let me come back to you, Bimlendu. Let me go across to Bhavreen. Bhavreen, now the government's rationale is this. We are deploying smog guns in high-rises. We're using water sprinklers for dust mitigation. We're monitoring construction, and we've notified 8,000 industries to control emissions. What more needs to be done? And can there be some permanent SOP to bring down pollution levels during Diwali, during winters? Because why have a political debate over this? You see the BJP, the AAP, the Congress all trading charges against each other. Let's avoid this political debate. Why don't we find a permanent SOP to deal with this? What could be that permanent solution?
Yeah, so clearly, I mean, of course, adding to what Bimlendu just said, I'm not repeating, all these, things that you've mentioned, all the so-called solutions that they're saying or what they're doing are absolutely, mostly all illogical. They don't work. You're creating pollution, and then you want to clean it up. That's not going to work. So obviously, so many years have gone by because, whether it was smoke tower and now cloud seeding or smog guns, you need smog guns. You need smog guns on every construction site and throughout the year. You don't have to come and start doing this only because the GRAP is invoked, so you bring smog guns. It's like the green construction, compliances have to, bear this. But unfortunately, see, coming to compliance, now that is something, now throughout the year, there are so many violations that are being pointed out by various, residents, citizens, activists, and those are repeated again and again. So I will just come to a larger, picture that we kind of see, and I'm sure Bimlendu will agree with me, that the pollution boards have failed. They have clearly failed. It's too long a time for them. So now there's a very important need. There has to be kind of an independent, air quality and public health commission, because unfortunately the pollution boards or the commission, they're not even connected with the health. There's no interaction happening except for writing one odd letter in a year. So there are no advisories, as you saw this year. There's no data transparency, like we saw the real-time public air quality data. We need that. There has to be independent audit of monitoring stations. There should be, open, downloadable data for citizens. What is there to hide? Now today, citizens are roaming around. Every morning you are coming and, measuring yourself to prove a point. So it's becoming a game of numbers, not realizing it's damaging our lungs.
Okay, let me just get in Bimlendu once again. Bimlendu, is it time for Graded Response Action Plan 3? We restrict the flow of vehicles into the national capital. We shut down schools up to class 5, ban non-essential construction. Or is there something more that can be done to probably address this pollution problem? Because right now you've got pollution levels at alarming levels. That is clear. Even if we look at the AQI, which the government may admit to, it's in the very poor category. What do we need to do on an emergency basis to address the situation?
See, I'm not a proponent usually of band-aid solutions. And GRAP 3, GRAP 4, perhaps year 1, it still worked. But right now, to still depending completely on these GRAP solutions as the actual measure to combat air pollution is something which is completely misplaced, or it is actually a dishonest governance in that sense. Having said that, still, given the fact that there's no action that's been taken place through the year between the last gap to this gap, the eve of a gap in that sense, given that there's enough data already which should ideally have triggered GRAP 3 or in fact GRAP 4, because 400 plus is what air quality monitors were at least in 10 out of 39 air quality monitoring stations. So I think that the fact that when there's nothing else, at least sort of a shutdown, lockdown is the only thing that perhaps the citizens could be offered. However, as I said, it's a band-aid solution. But at the same time, my thing is that I think it's high time that the government of Delhi should realize that nobody's blaming government of Delhi alone, because Delhi government is a new government or this current political party in that sense. We will have to really look at this as an entire air shed. Because cleaning Delhi's air alone will not help unless you do not clean Gurgaon's air and Noida's air and Ghaziabad and Faridabad or the entire air shed in that sense. And that holistic, comprehensive, collective and continuous solution seeking can only happen if there's something that happens at the central level. Very unfortunate, but right now I don't even know. I have not heard a word. One of the largest protests and police action against peaceful protesters have taken place, but we don't know where the Environment Minister of India is. People don't even know who the Environment Minister of India is.
All right, my final question to Bhavreen. Bhavreen, one final message to the government, both at the state and central level, about what can be done. We just have about a minute. If you can sum up your thoughts for us.
Well, so something that I was saying now, it's whether, they have to act decisively, they have to act collaboratively, and beyond the short-term measures, like, we cannot have these like band-aid, measures. And this means that, again, putting it in, there has to be transparency, there has to be emphasis on health protection, so that ways of, I'm saying, you have to show clearly, the health advisories, etc. I mean, there were years now people were wearing masks and now you see nobody's wearing. So this is how, when the government leads in the wrong way, they mislead you, then, people tend to, forget and not care about it. And they have to lead in the right sense.
Right.
And independent air regulator that, is much needed, because obviously whatever it is, it's not worked, and it's not worked for long enough. Yeah.
All right, we've run out of time, but thank you very much, Bhavreen and Vimlendu, for joining us. We're taking a short break, but coming up on News Center, JK Tyres has launched India's first tyres with embedded sensors for passenger cars. A special conversation with company chairman and managing director Raghupati Singhania on the new launch, the company's growth plans, and the impact of US tariffs on the Indian tyre industry. Don't go anywhere, that's coming up. Welcome back. You're watching News Center. JK Tyre has introduced India's first passenger vehicle tyres with sensors embedded inside the tyre structure. This product has been developed at the company's R&D facilities and manufactured at their plant in Madhya Pradesh. This technology will monitor critical parameters including air pressure, temperature, potential air leaks and overall the health of the tyre as well. I caught up with company chairman and managing director Raghupati Singhania. I began by asking him about the launch of the smart tyres, why they are important for the company's journey, and also about the impact of US tariffs on the Indian tyre industry. But let's listen in to what he said about these smart tyres and why they have been launched.
First and foremost, I'm very proud that we are launching this product. It's a unique product in the country. In fact, many years back, 3 years back or so, we introduced a smart tyre, which had sensors for measuring temperature and pressure. The idea was to increase the performance of the tyre and get optimal mileage out of it. But that we were doing through an attachment of a sensor, which had to be bought separately, which is manufactured by one of our other companies, Treel, which is a sensor-making company. So number of customers did not bother to put them in, or they will buy it and leave it here and there. And with the result, the output expected of the sensor-driven tyre was not there at all. Then we realized that I think the mistake we are doing is selling two things separately. So we said, let us embed it inside the tyre. That will ensure sure-shot delivery of the product and the performance. And that's what it is exactly. This is embedded.
So it'll be down inside this tyre?
It's inside the tyre, somewhere here.
Okay.
And it's put in the factory itself. And we have put up a line for that in particular. So it is automatically done. And now the customer will buy a tyre which is embedded with sensors. Now you have a choice. You buy without a sensor or with sensor. There's, of course, some price differential. So this is going to be greatly beneficial from both safety point of view as well as deriving optimal performance out.
In terms of post-GST reduction demand, could you give us a sense of how the demand has been for you in rural and urban areas? What would be the difference and the percentage of growth that you're seeing?
Well, post-GST, it is a different world. On the 22nd September, which is the very next day, we had a phenomenal 100 crore sale in a day. Never experienced that in the past. But that is all pent up. People for 20 days did not buy a single product, so to say, because they were all looking forward to the benefit of the lower GST. So it did, to answer your broader question, it did create a spurt in demand. And even in the month of October, that demand has continued somewhat. But I have a sense that this was the initial spurt. Gradually, this excitement will wane off a little bit. However, in the long term, the affordability of the product will improve and increase. So is the case going to be with cars. The small cars will come back with, I think, with a good traction. And therefore, our tyres. So going forward, I think it will boost, generally speaking, a demand. And not only for tyres, but across the economy, to my mind.
Right. The US tariffs of 50%, could you give us a sense how they have impacted your business so far? There was discussion between India and US to have a deal by fall this year, by November, December. We're already in November, there is no deal. What's your thought? What's been the impact on the industry?
Well, that's a billion-dollar question. I do not know when the deal will be coming at all, but I have a sense it will. But coming back to the point, if there is no deal, with 50% tariffs, which is, now when we compare ourselves with the other competing countries like Vietnam, Thailand and Cambodia and the like, our tariffs will be way higher. Their tariffs are around 13 to 15%. And if it is in 50% range, I don't think we are going to make it. Because a US importer, why will he import a product or buy a product 50%, let's say 40% higher than somebody else, when the performance are similar? I mean, you can always claim a particular brand is better or so. So why should anybody do it? So we have, as a industry, as a company, formed a strategy, alternate strategy. Couple of things. We are now catering to the US market more through our Mexican operations. Luckily, Mexico-US does not have an issue, at least not that in the foreseeable future. Both USA, Mexico and Canada, they have some arrangement, and about 10% tariff is what it is. I hope it will continue because it's a fallout of NAFTA, as you know. But so we are trying to divert more product to USA from Mexico rather than India. And from India, we are looking to alternate markets. We are developing Europe. We are working very hard, and I'm sure it will come up. Some of the other friends of ours in the industry are already catering to Europe. And so I think, look, it's something like there is a balance created, equilibrium created in the troubled waters when such things happen. So in a course of a year or so, I think things will settle down and everything will find its own way and level.
I would also like to ask you about your expectations from the union budget. This comes at a time when the government, after the GST reforms, is working on the next set of reforms. In fact, Shaktikanta Das, the Principal Secretary of the Prime Minister, has already told CNBC TV18 that there are more reforms in the pipeline. One reform, according to you, which could really unleash more private capex, or something that you personally want to see?
If in one word I were to say that, is ease of doing business. Believe me, a lot has happened, positive things have happened in terms of easing the process, in terms of direct billing, income tax returns and manless, faceless assessments and so on and so forth, online clearances and so on. But still on the grassroots level, the ease of doing business is not there. And that is one reason why investment is not coming to the extent we would have expected. In fact, I aired this concern to somebody, people in government, that this is what we need to correct somehow. That genuinely ease of doing business. Now, there I mean land, example. It takes a couple of years to get land allocated. You go to Thailand, in 7 days you are TikTok and on the business, start work. So that is the competition. That's where the opportunities are. Power arrangements. Now, then of course, road transport we cannot complain about, is doing tremendous work and connectivity is improved. But even otherwise, the infrastructure. Until unless we are wise enough to understand this aspect sooner, we will not get real investments. And more so, please appreciate, you and I are sitting in India. Any foreigner, why would he come and break his head, if I may, unnecessarily in terms of time? Time is money. So that needs to be corrected. There is one single factor to my mind which will make a huge difference.
Right. Now, speaking about the major headwinds for the industry, tariffs is one. Are there other headwinds that you see in the domestic or global markets?
Look, headwinds keep coming up from time to time, depending on the changing environment. In India in particular, we are looking at growth. X amount of growth, even RBI has projected 6.8% plus. So far, so good. But if the growth slows down, tire industry is certainly going to be impacted because there are two aspects of the tire business. Three, let us say. One is the commercial. Commercial indicates the goods to be transported. Now, cement sector is not doing so well, nor is the coal sector doing so well because of the industry demand. So to that extent, there's a freight shortage to that extent. But hopefully they say that the monsoons are over and so on and so forth. The next quarter onwards, we will see some spurt. That will securitize the position of demand. But on the other hand, if you go to the passenger segment, here is a question of affordability. Affordability not of tires. Tires not a big deal. Affordability of cars. And there I feel somehow enthused that the two-wheeler existing owners will have to graduate to four-wheeler. And that entry has to be small car. This is my conviction. Although a lot has been talked about SUVs and so on and so forth. But SUVs will remain, but there's got to be a transition to a small car. And that should boost a lot of demand going forward. Now, this is not going to happen tomorrow morning. It's a matter of a year or so, 6 months, or a year or two, and gradually it will pick up. Second aspect is that the rural sector, albeit this year's monsoon or excessive weather conditions have spoiled the game. No doubts, floods, drought, this, that, and the other. But going forward, our agro sector retention of money in their hands is expenditure, surplus expendable money is quite a bit, is improving. And that should lead to demand growth, because ultimately our masses live there, not in the cities. And that volume should improve. And that should generate a sustained demand going forward. But again, it's a matter of time. Right. It will take a year or so, and gradually it will pick up.
Right. Could you give us your capex plans for the next 2 to 3 years? Which are the key areas where you would like to invest in?
Well, we have just completing a capex of nearly 3,500 crores, the last bit of which will be completed now in the next quarter. And then we are drawing up another 3,000-4,000 crore capex plan for the next 5 years. Because, and the area, of course, because we find that we are getting short of capacity, at least our company, in terms of both passenger car tires as well as truck tires. So we are planning capex. And this is based both on domestic demand as well as we are creating capacities for export, because we find there's a good traction for our products in the international markets, notwithstanding America. So that's what we are planning to do. And I think that's it. In terms of capex, that's what we are looking.
What would be your 10-year vision for JK Tyres? Where do you see the company in 10 years in terms of growth and market share?
Look, market share is a tricky question because different product lines have different market shares. In trucks, we are one of the largest in the country, if not the largest. In cars, we are a very good, well-positioned. Tractors and two-wheelers, we are very small players, but we want to continue our growth there. So basically, our expansions will be in truck and cars. And in 10 years, we see at least 4x volume growth for ourselves. And hopefully, the profits will keep pace.
With that, it's a wrap on this edition of News Center. More news and updates continue right here.
Christoph, thank you so much for joining us here this morning. It's a pleasure to have you at the Global Leadership Summit. We last spoke in Davos at the start of 2025, and you were very bullish on India. In fact, you said that if you don't have a seat at the table as far as India is concerned, then you're missing out on something. I'm paraphrasing, of course. But as you look at how the year has panned out, more importantly, what has happened as far as the global economy is concerned, what's the read now on India as we look into 2026?
Yeah, I think, first of all, it's a pleasure to be here and great to be together again. The read on India, in my view, is very similar to the read that we had on India a few months ago. despite everything that happened over the last months on a global stage, India continues to be pretty much the only country in the world, the only scale country in the world that if you take a longer-term view behind the short-term vibrations, can focus on what we call a double engine, a dual engine. You have incredible population growth, and that is what a lot of countries in the world would be dying for nowadays. You know, if you look into China, Europe, even the US with some of the latest policies, you will have a reduction in labor forces in big parts of the world. That engine is a fabulous engine for India. And then the whole recalibration towards a post-global world and the role that India can play to it is a second engine that India can play out. And so doing that at scale in a country with 1.5 billion population in the future is kind of an exceptional position to be in. So we continue to be incredibly bullish on India in terms of what can be done within the country, and for India, what it can do at a global scale. That dual engine for India is exceptional in today's world.
You know, let's talk about that dual engine that you talk about from an Indian point of view. And while the services side of the story has, of course, been firing on all cylinders for a while now, the hope is that the manufacturing side of the India story will also fire for India in a similar way. What's the sense that you get specifically on manufacturing in the context of this global reshaping of supply chains, diversification of risk, and people are sort of looking at investments? Do you believe that this is going to be the opportunity, this is going to be the breakout moment, so to speak? Or given the fact that we're on the receiving end of the US tariffs, that there's going to be a little bit of a pause on that?
Yeah, I think we need to look for India always behind short-term changes on tariffs, on policy from the United States. So yes, there's exceptional tariffs at the moment on India driven by the oil purchases that you do from Russia. But I think in the longer term, all of that will normalize, and it will normalize on a global basis on the fact that tariffs for everybody around the world will be a fact as a core policy in the United States, independent in our view if it's a Trump administration or another administration. That will be a feature of future trade relationships with the United States because they need it from a fiscal point of view. And so that opportunity for India on the manufacturing side continues to be there for the longer term. And the opportunity, I think, for India is to take the manufacturing side, not just like, for instance, that China has taken it in the past, but immediately take a future-back view on how you can take manufacturing. If we see the big global trends from a manufacturing point of view, it will go robotic. You know, the humanoids will be coming our way. And I think India has a unique opportunity to build out its manufacturing vision on future policies around electronics, data centers, etc., and around a way of manufacturing that will be the future way of manufacturing. Doing it in a robotic way fully, and then build the high-quality jobs around it that will serve India beyond the pure manufacturing jobs.
You know, that's interesting that you talk about moving towards robotics and humanoids, and of course automation has been part of the Indian manufacturing story, just as it's been part of the global manufacturing story for many years now. But I would imagine that the challenge that policymakers and CEOs are faced with today is, what do you do with jobs? What do you do in the transitory period? Because the pain is often mostly felt during the transition. So how are global boardrooms at this point in time envisaging this future where you're going to have more robotics, humanoids? How are they prioritizing the needs of the people versus the needs of the organization?
Yeah, so it's going to be an interesting future, both on the physical labor and on the brain, let's say. Both will transform. You know, the one will go through increased robotics and humanoids, the other one will go through increased agentic. I think as global companies, you always have to lean into the future. So you cannot say, I'm afraid what's going to happen with my workforce, so I'm not going to lean in, because that is a de facto loss of long-term competitive position, so you have to lean in. And then what we see with all those transformations, they're required for competitive advantage. They're business transformations enabled by technology. You have to reimagine every single of the workflows that you operate as a company. And then comes the trick. As you reimagine the workflows of your company, you have to reimagine how you adjust the workforce of the company and doing that hand in hand in order to reap the benefits of the AI revolution, and at the same time to develop, upskill, and transform the workforce that you will be sitting on. And like we've seen in prior technology revolutions, 90% of the jobs that existed in 1900 didn't exist a few years later. And we will see a similar evolution. The current jobs might be replaced by other jobs. It will not be that current jobs will all disappear. Because nowadays you see already with agentic, you can't just trust agentic. You still need to have a human in the loop. We're just going to see a different workforce, different skill sets of the workforce that will be required. And that dual migration of workflows and workforce is the invitation that we give to all the CEOs in all of the boardrooms, not just to focus on the AI use case, but workflows and workforce in parallel.
Yeah, work on both those in parallel. But, you know, we're here, Christoph, to talk to you about what global CEOs are thinking at this point in time. And you said that fear should not hold you back. In fact, if anything, this is a time for companies and for CEOs to lean in. What are you hearing within boardrooms? Where are CEOs choosing to lean in? What are they choosing to lean in on?
Yeah, the obvious one is, of course, AI. Everybody's leaning.
How could it not be?
How could it not be? And they're leaning in on different ways. I think increasingly people see that it's not just leaning in, as I said, on the use case. It's leaning in on the business transformation for competitive reasons. It's leaning in as CEOs, not to outsource, let's say, your transformation to a chief digital officer or a chief data or technical officer, but as CEO, you have to lead the business transformation yourself.
So the CEO is now the CTO and the data officer all in one?
No, the CEO orchestrates the business transformation enabled by AI and takes it as a business transformation. And that is a big shift also because everybody, of course, spends significantly more on technology now, and you need to see the returns of the investments that you do. And you can only do that if you take it as a transformation, not as a use case that tries to scale. The other question that's in all of the boardrooms and that you hinted at is, how do I navigate the post-global world?
Yeah.
What's funny, we often hear companies say, we don't necessarily have our geopolitical strategy sorted out. And we say every company has its geopolitical strategy because where your people and your assets sit at the moment, that is your geopolitical strategy. And then you can say, where am I long, where am I short in my strategy, and do I like what I'm sitting on, and how do I navigate and change that? So first AI, second the geopolitical side. And the third one is, do I have enough energy? Do I have affordable energy for the future? And the fourth one is capital is going to be structurally more expensive in the future, is our view. You know, again, making abstraction of short-term changes in interest rates. But all of the dynamics drive higher cost of capital, and we can expand if you want. And so the choice of where am I going to spend my money? How do I drive my capital allocation between technology, geopolitical strategy, and all the investments, M&A that I need to do, is the fourth one of the core trends that we see in boardroom. And that is, it's exciting to be a CEO in today's world. It's exciting to be in the boardroom.
Is it? I'm asking you, is it exciting?
It is exciting because it's one of those unique moments in history where we're living through a general purpose technology revolution in a geopolitical, reset in a certain way. And these are unique moments to lead as CEOs, to drive strategy as CEOs, change your organization. So I think it's very exciting.
You know, let's double down on those 4 pillars that you spoke of. And let me start by talking to you about AI. And as you rightly said, every company today is positioning itself to be an AI company. We're seeing trillions of dollars being spent. We just had OpenAI, and they're spending or intend to spend $1.4 trillion over the next 8 years on AI. What kind of capital are we talking about within the boardroom for organizations that are not necessarily tech companies or AI companies? How are they choosing to invest, and what are they looking at in terms of timelines on return on their investments for their AI adoption?
Yeah, it of course differs very much where you sit. If you're a services company, if you're a manufacturing company, etc. I think we differentiate between a few very different classes, which is everybody that's investing in the infrastructure at the moment puts massive amounts of capital because they don't want to lose the race in the world of capital deployment. I had one of the CEOs of the big 4 hyperscalers tell me at a dinner that we had to say, I'd rather spend 50 billion now, too much, because if I spend 50 billion too little and I lose the competitive race, that is an issue. Now, will all that capital drive returns? It's a big question, right? Because we think there needs to be a 2 trillion additional revenue being created in order for having the payback on all the capital investments that are being done now, and that remains to be proven. Now, everybody that's on the application side of the AI obviously spends in a different way. And if you're on the application side, I think you need to count on increased technology spend in order to have the compute power, in order to have the robotics, in order to have everything that we discussed, and spend more focus on how is that investment in the AI side going to pay back, and do I actually understand the drivers of my capital allocation, the drivers of my, of the services that I buy, and how it will return, and is that investment directly linked to the areas that will drive competitive advantage in the future? So what that means is, does it drive better products that I put into the market? Does it drive better customer service? And does it build my long-term competitive cost advantage? And what we see CEOs do more and more is to make the direct link between competitive advantage on those dimensions and the investments that they do. And that is a very different philosophy that we see in boardrooms now versus, as I said, let's try use case and see if we can prove that the technology works. Link it more to competitive advantage and the direct returns on the on the investments that you do.
So let me link competitiveness as well as the investment philosophy or the investment thesis driving CEOs and boardrooms today. And I'll ask you this in the context of a debate that's raging here in India for the IT services sector, for instance. Have we done too much in terms of capital allocation on buybacks and too little on innovation? So, what are you seeing in terms of the choices that people are willing to make? Is it also going to drive more M&A? Is it also going to drive more acquisitions? As people look at enhancing and beefing up capabilities, could we now see the next wave of that, Ansu?
Yeah, I think it's going to be the 2 parts. So the first wave, and I build on the IT services part, IT services, global capability centers, that core part of the Indian economy will have to transform itself. It has to lean into the AI, it has to understand how it changes the pricing model, value-based versus people-based. So there's a big transformation that needs to happen there for every single of the company that sits on a lot of physical labor, to see how they innovate with AI and they change their business models. IT services pricing, as I said, that's a big one. The other piece that is interesting to see from an Indian point of view is M&A is always a core part of leaning into the future. Even if you look at how the big hyperscalers in the US build a core part of their capabilities, they Google and they've built a significant amount of that through M&A. Within India, we see that you sit on 2 to 3% of the GDP that goes into M&A. And that is lower than what we see, for instance, in the United States or other parts of the world where it goes up to 5%. And I think there's an opportunity for the leading firms in India to lean even more within the new capabilities through investments, through M&A, and get it up to the level that has actually allowed some of the leading firms around the world to build their capability set through increased M&A. And I think the regulatory environment will also allow for that.
we do have a very special guest joining us all the way from San Francisco, the global CEO of a company that's one of the world's top companies by market capitalization, moving money across 200 countries. The global CEO of Visa is here with us to understand how India finds its place in Visa's global strategy and what Visa is looking at as far as the movement of money is concerned. Ryan McKinney, the CEO of Visa, many thanks for joining us here. Ryan, it's great to have you. I know it's early in the morning for you, but thank you very much for joining us here on CNBC TV 18. Do we have Ryan?
I'm very excited. It's great to be back at the Global Leadership Summit.
Well, thanks so much, Ryan, for joining us. And I want to understand from you, Ryan, we were talking about India and how you see India. We've had a big change as far as the UPI is concerned. We've seen a record number of transactions being done. What excites you about India?
Yeah, well, first, let me just build on what you said, which is India absolutely is one of the most dynamic and one of the most innovative markets on the planet right now when it comes to payments and commerce and shopping and everything involved. And UPI has done an amazing job. I think the work they have done to digitize the economy in India is just incredible. The work they have done to bring hundreds of millions of Indians into the
We seem to have lost that line.
The financial system is incredible, and we're a proud partner of UPI. We've collaborated with them closely, both our two companies together, but also with our financial institution partners to roll out different types of products and services. And we continue to be optimistic about our ability to bring value to the whole ecosystem in India, partnering with UPI and the entire ecosystem.
You know, you're talking about that UPI partnership. So frenemies or friends, Ryan?
Yeah, it is. It excites us enormously. And by the way, I think it's fantastic. It's fantastic for India. It's fantastic for the world, what's happening. You know, when we look at what's happened over the last several years, there's been a dramatic shift to digital payments, in many ways enabled by mobile. You know, I think the fact that we all have these devices, that you've got 1.4 billion people in India that have these devices, that's enabled better buying experiences, better selling experience. That's helped merchants and sellers grow their businesses by adopting digital payments. And, you know, we're just happy to be part of that wave. We're happy to bring more of our innovations from around the world to India. And we're excited to continue to help drive the adoption of digital and mobile payments across India for many years to come.
You know, you talked about Indian innovations, Ryan, and you're using India as an incubator to make some of these innovations and take them to the world. Take us through that and also walk us through what you intend to do to scale up your operations here in India.
Yeah, we have. And I remember that discussion that we had last year. The work on QR in India has had a deep impact on our strategy, and it's actually resulted in a number of products that we've rolled out with partners across Southeast Asia and other parts of the world where, you know, we continue to embrace the traditional card products, but we also have invested in adopting and embracing new technologies like QR, like, mobile money solutions around the world, like different types of blockchain and crypto-enabled payments around the world. So the way we see it is any opportunity that there is to participate in different ways that people are paying for things digitally, we think there's a role that we can play. We think that our brand can have an important role in those technologies. And really, we wanted to open up our stack to be form factor agnostic. So whether it's a card, it's a phone, it's a QR code, or it's any other way that people want to pay and be paid, we think there's a role for Visa, and we're excited to play that role.
Well, speaking of the role that you're excited about for Visa, Ryan, you've also been talking about using your stack to become a hyperscaler. What does that mean in the context of a company like Visa?
Well, first, we want to do everything we can to bring more innovations to India. So we're excited to bring, as you said, new B2B solutions. We're excited to work with our partners on different types of Forex solutions and working across different countries and different corridors with new FX solutions. We're bringing new products that we've built other places like the Visa Flex credential, which is a card that can be used as a debit card or a credit card. You can pay with rewards. You can pay with BNPL. all with one credential as an example. But I also want to say we're excited to export innovation from India. You know, we have more than 4,000 engineers and product teams that are dreaming and building the future of payments in our innovation hub in Bengaluru, where they're exporting those great ideas all around the world. So what can India do for Visa? One is embrace the innovations that we're bringing from around the world, but also continue to work in teams and build the great solutions that our teams are building that we then can take to more than 200 countries and territories around the world.
You know, exporting innovations from India, that's great to hear from you, Ryan. But I want to go back to the hyperscaler point that you were talking about there. How do you define a hyperscaler in the context of the work that Visa is doing? What differentiates you then?
Well, I think your audience is very familiar with hyperscalers in the context of the cloud companies and the platform companies that have enabled businesses to quickly expand around the world by leveraging their capabilities. That's what we're doing in payments and money movement. We've opened up our Visa as a service stack, starting with our foundational layer that has our network connectivity and our services layer on top of that, and our solutions layer on top of that, all the way to our network access layer. And what we do is we enable the entire commerce ecosystem to access those services and solutions and connectivity in a simple, easy to integrate way. So that whether you're a big tech player or a big financial institution, or you're a fintech in India, or you're a person in a garage with an idea that you want to be able to build and spread around the world, the Visa stack is your way to do that. And so in that sense, we've become a hyperscaler. We are enabling big companies and small companies to access 200 countries and territories around the world, access the reliability, the scale, the trust, the brand, the connectivity that we deliver in that stack. And in that sense, we're helping drive digital payments around the world by giving them access to that stack.
You know, Ryan, you were talking about that Visa stack, and I'm just looking at some of the numbers there and what you've been able to do, the deployment of next-gen Visa Net stablecoin, token growth, AI assistance development. Which layer, Ryan, do you believe will generate the biggest value for you over the next 2 to 3 years?
I think they're all important. And they all play different roles in different economies in different parts of the world, which is why rather than make any one bet on one specific capability, we've made that stack available to everyone. So, you mentioned the next-gen VisaNet that we rolled out. I announced that on our earnings call last week. This is an entirely new platform that we've built. We've essentially redesigned our entire processing platform that we've deployed globally. We wrote more than half of that code with AI. We've launched that in a couple places around the world. And what that does is allows our clients and our partners, whether they be big tech, fintech, FIs, to work more agilely and get product into market more quickly, but do it with the same level of reliability, trust, and service that they've come to know from VisaNet for many years.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Stocks rally across the world as the US Senate clears a major hurdle, paving the way to end the government shutdown. But the deal does not address demands on healthcare made by the Democrats. At 41 days, the current shutdown is the longest in US history. The Sensex and the Nifty snap a three-day losing streak, but the large street underperforms global markets as the gains remain limited. Midcaps marginally outperform the blue chips.
2, 1.
Well, Lenskart debuts on the large street. The stock lists at a 2% discount to the issue price despite strong demand from retail and institutional investors. The stock ends the day barely in the green after a roller coaster ride.
So in the days and months to come, you will see a series of reform measures relating to ease of doing business.
Principal Secretary to the Prime Minister and former RBI Governor Shaktikanta Das hints at more reforms, promises a series of measures to boost the ease of doing business in the coming days. That's a cnbc TV 18 exclusive.
अभी जो आप इंफ्रास्ट्रक्चर देख रहे हैं ये केवल ट्रेलर है, असली पिक्चर अभी बाकी है.
With civic body elections looming in Mumbai and Maharashtra, Chief Minister Fadnavis promises to double down on infrastructure, plans to build a third airport for Mumbai at Vadhavan Port, which will be India's first offshore port. That's another exclusive. The Supreme Court agrees to hear a petition on the use and regulation of artificial intelligence. The government has proposed to amend the current laws to ensure labeling of AI-generated content. IT Secretary Krishnan says there is no need for a separate law as of now, and the focus is on leaving room for innovation. Delhi air quality hovers in the very poor category despite a marginal improvement over the weekend. The Delhi police cracks down on protesters, including children, on Sunday after they gathered at India Gate demanding urgent government action against the air emergency. Police claim only those blocking traffic were detained and later released. The loudspeakers have fallen silent in Bihar. 122 assembly seats will vote in the second and final phase tomorrow. Votes will be counted on Friday. Rich countries have lost the enthusiasm to combat climate change, says the head of COP30 climate summit, which kicks off in Brazil today. Policymakers from 194 countries set to attend. Dozens of state and local leaders in the US will attend the summit, even as President Trump decides to stay away. Well, the big global story moving the market, stocks are rallying across large parts of Asia and Europe amidst hopes that the US government shutdown could end. Now, the South Korean Kospi rallied by over 3% today. Shares in Japan and Hong Kong also gained over 1%, and the European markets are rallying as we speak. The US Senate has passed the first stage of a deal that could put an end to the longest-running government shutdown. At least 8 Democrats backed the agreement proposed by the Republicans, but this deal does not address demands on health care made by Democrats. The bill will now proceed to the House of Representatives for approval before being sent to the president for his signature. The agreement proposed by the Republicans will fund some parts of the federal government, including food aid, veterans programs, and the legislative branch, among others, and extend the federal funding until the 30th of January.
So there was no vote that we were going to get on the Affordable Care Act, premium tax credits. We have a guaranteed vote by a guaranteed date on a bill that we will write. Not that the Republicans will write, although I do think it's important for us to engage with them, because we need a bipartisan bill that we know is going to get enacted to provide the relief that Americans need. And I think there's a commitment on the part of many of our colleagues to do that.
Well, the longest-running U.S. government shutdown possibly now coming to an end. Meanwhile, the Indian markets underperformed global peers despite snapping the three-day losing streak. The large street managed to clock only marginal gains today. Nifty closing about 80 points higher, 300 points higher on the Sensex. The Nifty Bank absolutely flat in the Midcap index, put on about 0.5% at close. IT stocks led the up move today. Banks underperformed the blue chips, with the Nifty Bank index ending flat but with a slight positive bias. Now, eyewear company Lenskart listed at a 2% discount to the IPO price. The stock staged a recovery but gave up most of those gains towards the end of trade, ending marginally in the green. The issue was subscribed 28 times during its IPO stage on the back of strong demand from retail and institutional investors. Mangalam joins us now with more on Lenskart's Dalal Street debut. Mangalam, perhaps one of the most talked about IPOs in recent times. Take us through what the market now makes of the Lenskart story post the listing.
It was an interesting day for trade, day one for Lenskart. You know, the question always, a good business, but at what price? And opened understandably slightly softer because of the little value left on the table, but thereafter, because of the inherent strength of the business, there were some buyers. But remember, this is day one of an issue where only 15% of the equity was allowed to be traded, as against 85%, which is locked in for trade opens over the next months or so. But be that as it may, you know, can't take away from the fact that there was strong demand for the IPO, 28 times subscription, and the issue was overall subscribed by more than 40 times by the by the QIPs and 18 times by the HNIs. Remember, it is a company that we all know of, sells and manufactures eyewear across, sells in across 2150 stores in India, and 40% of its revenues coming from abroad as well. At the same time, the underlying total addressable market, as per them, in India is 80,000 crores, likely to be about 1,50,000 crores over the next 5 years. International as well, 1,60,000 crores, likely to turn into 2,11,000 crores. In India, they are 2.5 times larger than the other nearest national player, and the organized sector is projected to grow nearly 60% faster than unorganized as well. But then again, the question, at what price? Because the first quarter, the revenues were close to 2,000 crores with 17.5% margins and a net profit of 61 times. The company, which was offered at 10.8 times trailing sales and 234 times trailing price to earnings, now even if you analyze the first quarter numbers, would be well over 200 times 1 year forward earnings. So let's see where it goes from here on.
What will it take for us to create global companies? I think the most important thing is belief. Today, about 40% of our revenue comes from international markets. What we have achieved so far is a very small portion of what we intend to do. We want to give a vision to 1 billion people. We have given it to only about 25 million people so far, right? So there is a lot more to do ahead.
Well, that's Lenskart's Piyush Bansal speaking to us at the Global Leadership Summit, the stock listing today on Dalal Street. The IPO offering of Pine Labs was subscribed 48% on the second day of bidding. As of 4 p.m., the portion reserved for retail investors was booked 84%, while QIB portion was subscribed 54%. The company's 3,900 crore rupee IPO comprises a fresh issue of 2,000 crore rupees and an offer for sale component of over 8 crore shares. Sugar stocks gained in trade after the government over the weekend approved exports up to 1.5 million tons this year. The allocation is, however, lower than the 2 million ton demanded by industry. The Union Food Ministry has also decided to remove the 50% export duty on molasses. The Food Secretary had recently said that the government was considering allowing sugar exports due to the accumulation of surplus stocks. All of those stocks closing much higher. Look at that, 6.5% higher there for Balram Chini. President Trump has defended his tariff policy yet again. He claimed that levies made America the richest country in the world. The president called the people criticizing the tariffs, I quote, as fools, and promised that Americans will receive dividends of $2,000 each from the tariff revenue soon. His comments came after the Supreme Court questioned the legality of the tariffs while hearing a case last week. In August, a federal appeals court ruled that President Trump overstepped his authority with the imposition of tariffs. The U.S. Supreme Court is yet to deliver its verdict on the matter. And staying with tariffs, the 50% U.S. tariffs on India have made tyre exports unsustainable, says Raghupati Singhania of GK Tyre. Speaking exclusively to Parikshit Luthra, Singhania said unless the trade deal offers tariffs lower than other Asian nations, Indian tyre companies will have to find new export markets. Here's Raghupati Singhania.
If it is in 50% range, I don't think we are going to make it, because a U.S. importer, why will he import a product or buy a product 50% or let's say 40% higher than somebody else when the performance are similar? I mean, you can always claim a particular brand is better also. So why should anybody do it? So we have, as a industry, as a company, formed a strategy, alternate strategy. Couple of things. We are now catering to the US market more through our Mexican operations. From India, we are looking to alternate markets. We are developing Europe. There is a balance created, equilibrium created in the troubled waters when such things happen. So in a course of a year or so, I think things will settle down.
Well, that's Raghupati Singhania on the impact of US tariffs. India's most influential thought leaders converged in Mumbai on Friday for the CNBC TV 18 Global Leadership Summit. We spoke with 50 stalwarts across sectors from sports to business to policy making to decode how the India advantage can reap rich dividends. Maharashtra's Chief Minister Devendra Fadnavis was one of our speakers. With civic body elections looming in Mumbai and Maharashtra, Fadnavis promised to double down on infrastructure. Taking a cue from the hit Shah Rukh Khan movie Om Shanti Om, Fadnavis reflected the work done so far was only a trailer and picture abhi baki hai.
अभी जो आप इंफ्रास्ट्रक्चर देख रहे हैं ये केवल ट्रेलर है, असली पिक्चर अभी बाकी है। आप जब ये वर्ली बांद्रा सी लिंक से बांद्रा में आते हैं तो अभी हम लोगों का एक प्लान चल रहा है कि हम बांद्रा से सीधा एक टनल ये बीकेसी में लाएंगे और बीकेसी से सीधा उस टनल को हम एयरपोर्ट ले जाएंगे, तो जिसमें आपको उसके बाद ये जो बीकेसी का जो कंजेशन है और वेस्टर्न एक्सप्रेसवे का जो कंजेशन है वो ख़त्म हो जाएगा। ये जिस दिन तैयार होगा उस दिन वाढ़वंट पोर्ट ये दुनिया के पहले 10 पोर्ट में होगा और अगले 30 साल 40 साल महाराष्ट्र और देश की अर्थव्यवस्था को और जो एक प्रकार से उसकी अगुवाई ये वाढ़वंट पोर्ट करेगा। ऑलमोस्ट एवरी डिस्ट्रिक्ट विल बी कनेक्टेड विद अ सुपर एक्सप्रेसवे विद द वाढ़वंट पोर्ट। तो मुझे ऐसा लगता है कि जो एक ग्लोबल सप्लाई चेन में हम लोग एक भूमिका निभाना चाहते हैं उसके लिए वाढ़वंट पोर्ट और जो हमारे हाईवेज ये जो इकोसिस्टम हम तैयार कर रहे हैं ये इकोसिस्टम पूरे तरीके से इसको बदल देगी।
Well, that's the Maharashtra Chief Minister. And as other headliner, Second Principal Secretary to the Prime Minister and former RBI Governor Shaktikanta Das was honoured for his contribution to the Indian economy at the CNBC TV 18 Global Leadership Summit. During his acceptance speech, Das hinted at more reforms from the government in the coming days.
Next-gen GST reforms, which were undertaken recently, the Prime Minister talked about it on 15th of August from Red Fort, and within 5 weeks, on 22nd of December, the next-gen GST reforms were implemented with the cooperation of all the states. Several reforms this year have been undertaken not only in GST but also in non-financial sector deregulation, for which a high-level committee has been appointed. So in the days and months to come, you will see a series of reform measures relating to ease of doing business, relating to making Indian economy more competitive. All these measures will follow.
Well, that is the former RBI governor promising more reforms. On to a CNBC TV 18 exclusive that we're breaking this evening. Car Trade Tech is set to be in final stages to acquire Car Dekho. Rachna Dhanrajani joins us now with more. Rachna, take us through the possibility of this deal coming through and what the rationale is behind it.
Yeah, sure. My colleague Vivek and I have gathered from our respective sources that Car Trade Tech is in advanced stages to acquire Car Dekho. This move could be a defining consolidation move in India's digital auto space. Now, the deal sources say will be structured as a mix of cash and stock, and the intent behind this is to create the country's largest digital auto platform, bringing together new and used car marketplaces, financing and insurance all under one umbrella. Now, Car Dekho was last valued at $1.2 billion back in 2021 when it raised funds from investors like Sequoia and Leapfrog. In the financial year 2024, the Car Dekho group reported revenues of over 2,000 crore rupees and a standalone profit of about 37 crore rupees. The financials for FY25 aren't made public. While Car Dekho has declined to comment on the development, Car Trade has not yet responded to CNBC TV 18's queries. But if this deal goes through, it will reshape India's online marketplace, combining two of the biggest homegrown platforms and potentially setting the stage for a stronger play against global and local competitors in the digital mobility ecosystem. Back to you.
All right, Rachna, many thanks for joining us. That's a deal likely in the making. Time for us to head into a short break, but up next, Delhi's air quality hovers in the very poor category despite a marginal improvement over the weekend. That and more when we return. The Supreme Court will hear a public interest litigation on the use and regulation of artificial intelligence. The court is set to hear the case after 2 weeks. Chief Justice B.R. Gavai remarked that judges are well aware of the misuse of AI and have seen morphed pictures of themselves on social media. The government has proposed amending the current IT rules to ensure labelling of all AI-generated content. The draft rules are currently open for public comments. In fact, the Secretary at the Ministry of Electronics and Information Technology, S. Krishnan, while speaking to me, says that there is no need for a separate law to regulate AI as of now. He believes India must focus on leaving room for innovation and that the government will use existing laws to address problematic elements if necessary. Take a look.
Government's objective and MeitY's objective is primarily to focus on innovation and give room for innovation. And regulation comes after that. What we have made very clear is that we believe we have a very positive outlook on AI and the impact that it could have for India and for the globe. And therefore, we need to give as much space as possible for innovation to play out in this space. And as with all technologies, there will be elements which are problematic and which could potentially be issues. And wherever those issues arise, wherever there are potential harms, we will use both existing legal frameworks.
Well, no need for a specific AI-linked regulation. That is S. Krishnan, the Secretary. Speaking of AI, actor and entrepreneur Deepika Padukone says her voice and accent were mocked when she entered the industry, and now, ironically, she's the voice of Meta AI. Speaking to me, Padukone said the only thing AI will not be able to replace is human emotion. Fashion designer Sabyasachi Mukherjee also weighed in on the AI debate, adding that the technology will not be able to replace humans.
Interesting also, no, that I'm someone whose voice was like sort of mocked when I came into the industry, and now suddenly I'm the voice of Meta AI. Strange.
Well done.
But and my accent, but I continue to own it, and I think that's probably how and why it happened. But I mean, what do I think about it?
Yeah.
AI or how?
AI. I mean, you know, there's all kinds of disruptions on account of it, including what is likely to happen to the film and entertainment world. People are now talking about dishing out AI movies in a matter of days, forget weeks or months. You know, so as somebody from the industry, do you see that as an exciting opportunity? Do you see that as a threat?
No, I'm so excited about the possibilities. The only thing I'm not sure about, I'm not saying. Actually, I'm going to say that with a lot of confidence because I truly believe it. The only thing I believe it cannot replace is human emotion. I think that's the only place AI will not be allowed or will not be able to match up. Can it do a similar job? Yes, maybe. Maybe it's not there yet. I don't know. So barring human emotion and how an actor would emote, because you can't infuse soul into AI.
You know, Sabya, are you equally excited, or do you also look at it with some trepidation and nervousness? Because, you know, you can churn out designs quite literally in a matter of seconds. There's existential questions being asked of the film world, of the entertainment world, of us in the media world, you know, of ad agencies and so on and so forth. So how do you look at what's happening in AI and what it means for human creativity?
See, two things. Firstly, the human mind will constantly evolve. Secondly, AI is necessary for many things to drive efficiency in fields where efficiency is required. But in art and craft and in the business of emotions, like we say, whether it's fashion, architecture, food, films, I think AI will never be able to replace human beings.
Well, the AI debate rages on. The loudspeakers, meanwhile, have fallen silent in Bihar ahead of the second and final phase of the election tomorrow. 122 assembly seats will go to the polls and the votes will be counted on Friday. The first phase recorded a voter turnout of 65%. In the 2020 polls, the BJP won 42 out of these 122 seats. The JDU won 20 seats, the RJD won 33 seats, and the Congress clinched 11 seats. The air quality in Delhi continues to remain in the very poor category despite a slight improvement over the weekend. Several areas including Pusa Road, RK Puram, Chandni Chowk, Shadipur, Punjabi Bagh and Munkar recorded AQI levels well above the 300 mark. Several people were detained yesterday after gathering at India Gate for a clean air protest. Police reportedly asked the demonstrators to move their protest to Jantar Mantar, but when they refused, a few were detained to clear the blocked road. Timsy joins us now with the latest from Mausam Bhavan in central Delhi. Timsy, some measures being announced by the government to stagger office timings of government offices, etc. But, no respite for Delhiites.
Delhi NCR's air quality continues to remain in the very poor category. CAQM met last evening and did not decide to go ahead with GRAP 3, rather continued with GRAP 2 phase, considering that the AQI levels on an average did not cross 400. It usually shows the AQI readings, but today it is showing only the weather report. That was captured at Safdarjung station, where today's forecast in Delhi, it says mainly clear sky. Central Pollution Control Board's app, which actually shows live reading of AQI, and at this location live, currently the AQI, the air quality is at 345. It says very poor. Over the last 3 days, this is today's average of Delhi, 345, which is under very poor category. And over the last 3 days, yesterday it was 370, day before yesterday was 361, and the day before that, that is 7th of November, it was 322. And this is the reason why CAQM last evening did not go ahead with GRAP 3. It waited till GRAP 2 only. Severe category kicks in, the GRAP 3 stage kicks in only once the average AQI crosses 400 level. And as of now, the Mausam Bhavan board, which usually shows AQI, is currently displaying only the weather report. It is not showing the current AQI readings.
Well, you may not be able to read the AQI reading on the Mausam Bhavan display board, but it's there available with many, many devices, and it's there to experience for all of Delhi's citizens. In international headlines, Hamas has handed over the remains of an Israeli soldier who was killed in Gaza in 2014. The release of his body was part of the ceasefire agreement signed in October. Reports suggest the U.S. presidential advisor Jared Kushner arrived in Israel, where he is expected to meet with Israeli leaders to resolve issues related to the ceasefire. Meanwhile, Israel's attacks on Gaza continue over the weekend. As per the Palestinian Health Ministry, 1 person was killed, 5 others injured in Israeli attacks in the last 24 hours. From one war-torn region to another, the Russian Ministry of Defense has said its forces have captured a Ukrainian settlement in the southeastern part of the country. Russia has also attacked key power and energy infrastructure in Ukraine, with over 1 lakh people left without water or electricity. At least 11 people were killed after a boat carrying undocumented migrants from Malaysia sank near Thailand. Malaysian maritime border, 13 people have been rescued so far, while hundreds are still missing. According to Malaysian officials, the vessel was carrying around 300 people, mostly Rohingya refugees. At least 2 people have died after super typhoon Fong Wong made landfall in the Philippines overnight, unleashing fierce winds and torrential rain. The powerful storm caused widespread destruction, with landslides cutting off several towns and roofs ripped off buildings. Footage from affected areas shows shattered windows and debris strewn across streets. Authorities said more than 1 million people were evacuated ahead of the typhoon's landfall. And a powerful tornado accompanied by strong winds and heavy rains tore through southern Brazil, leaving 6 people dead and hundreds injured. The town of Rio Bonito was the hardest hit, with more than half of its urban area suffering roof collapses and widespread structural damage. Authorities say 437 people have been treated for injuries, while around 1,000 people have been displaced. Tornado hit Brazil is the venue of the annual climate summit. The world's biggest climate summit, COP30, has kicked off in the country, and the head of COP30 summit has said that rich countries have lost the enthusiasm to combat climate change. Policymakers from 194 countries will attend the conference. Dozens of state and local leaders in the US will attend the summit, even after President Trump decided to stay away. So COP30 underway in Brazil. With that, it is time for us to wrap up this edition of Business 360. We leave you with highlights of the CNBC TV 18 Global Leadership Summit. Plenty of action to catch up on.
Hello and welcome to Startup Street. I'm Arundhati Ramnan and with me as always Shruti Mishra. These are the top headlines from the startup world.
3, 2, 1.
Lenskart recovers sharply after listing at a 2% discount and slumped up to 12% below the issue price of 402 rupees. Ends day one on Dalal Street with marginal gains. The initial public offering of Pine Labs was subscribed 48% on the second day of bidding. As of 4 p.m., the portion reserved for retail investors was booked 84%, while QIB portion was subscribed 54%. The company's 3,900 crore rupee IPO comprises a fresh issue of 2,000 crore rupees and an offer for sale component of over 8 crore shares. Global investment firm Think Investments has invested a little over 136 crore rupees in EdTech unicorn PhysicsWallah as part of a pre-IPO funding round. As part of the transaction, Think Investments picked up 1.07 crore equity shares amounting to 0.37% stake in PhysicsWallah from 14 employees of the EdTech firm. The Kenko Life, a health-first food company, has raised seed funding to strengthen its foundation and fuel its next phase of growth. The round was led by Rainmatter, Zeroda's health-focused investment fund. The startup claims to be clocking 300% year-on-year top-line growth. DPIIT has inked pacts with over 50 firms, including ITC, Flipkart and Mercedes-Benz, to encourage the startup ecosystem and the industry at large to foster innovation in manufacturing by supporting and collaborating with startups in developing manufacturing incubators. Well, those were the headlines we've been tracking for you this evening. On What's Brewing today, D2C eyewear brand Lenskart made a muted debut on Dalal Street. It listed at a 2% discount on NSE. Mangalam joins us with more. Mangalam.
It was an interesting day for trade, day one for Lenskart. You know, the question always, a good business, but at what price? And opened understandably slightly softer because of the little value left on the table, but thereafter, because of the inherent strength of the business, there were some buyers. But remember, this is day one of an issue where only 15% of the equity was allowed to be traded, as against 85%, which is locked in for trade opens over the next months or so. But be that as it may, you know, can't take away from the fact that there was strong demand for the IPO, 28 times subscription, and the issue was overall subscribed by more than 40 times by the by the QIPs and 18 times by the HNIs. Remember, it is a company that we all know of, sells and manufactures eyewear across, sells in across 2150 stores in India, and 40% of its revenues coming from abroad as well. At the same time, the underlying total addressable market, as per them, in India is 80,000 crores, likely to be about 1,50,000 crores over the next 5 years. International as well, 1,60,000 crores, likely to turn into 2,11,000 crores. In India, they are 2.5 times larger than the other nearest national player, and the organized sector is projected to grow nearly 60% faster than unorganized as well. But then again, the question, at what price? Because the first quarter, the revenues were close to 2,000 crores with 17.5% margins and a net profit of 61 times. The company, which was offered at 10.8 times trailing sales and 234 times trailing price to earnings, now even if you analyze the first quarter numbers, would be well over 200 times 1 year forward earnings. So let's see where it goes from here on.
All right, Mangalam, many thanks for those details. But on to a CNBC TV 18 exclusive. CarTradeTech is in the final stages of talks to acquire Cardeco. Rachna Dhanrajani joins us now with all of those details. Rachna, what are you picking up from your sources?
My colleague Vivek and I have gathered from our respective sources that CarTradeTech is in advanced stages to acquire Cardeco. This move could be a defining consolidation move in India's digital auto space. Now, the deal sources say will be structured as a mix of cash and stock, and the intent behind this is to create the country's largest digital auto platform, bringing together new and used car marketplaces, financing and insurance all under one umbrella. Now, Cardeco was last valued at $1.2 billion back in 2021 when it raised funds from investors like Sequoia and Leapfrog. In the financial year 2024, the Cardeco Group reported revenues of over 2,000 crore rupees and a standalone profit of about 37 crore rupees. The financials for FY25 aren't made public. While Cardeco has declined to comment on the development, CarTrade has not yet responded to CNBC TV 18's queries. But if this deal goes through, It will reshape India's online marketplace, combining two of the biggest homegrown platforms and potentially setting the stage for a stronger play against global and local competitors in the digital mobility ecosystem. Back to you.
Thank you, Rachna, for those details. Appreciate you joining us. Let's move to our hot seat segment. With gold prices at record high, consumers are turning to smart, stylish alternatives, and one homegrown brand is cashing in on that trend. Goya's, an occasion-led jewelry brand, is blending the affordability of silver with the luxury appeal of gold plating. The company recently raised 130 crore rupees in a Series A funding round led by Norwest Venture Partners, marking its first institutional round. The funds will be used to expand its retail presence, strengthen design and manufacturing, and deepen its footprint across metros and Tier 2 cities. To talk about the Goya's next phase of growth, joining me now is its founder and CEO, Priyanka Vermuluri. Priyanka, welcome to Startup Street. You call Goya's an occasion-led gold-plated silver jewelry brand. You know, traditional gold jewelry has long dominated the Indian market. What made you believe consumers were ready to embrace this side of, this idea of alternate luxury? And how big, Priyanka, do you think the opportunity is or will be?
I think that even the idea stemmed from it being consumer led. So I think the modern women today want versatile designs, want to have a lot of variety without locking up their savings. And I think we kind of came into the category at the right time, right place. So the entire idea of the brand was to make aspirational luxury provide that at a very accessible price point. And I think we have done a great job at doing that. And I think that was also the time where the Indian women preferences were kind of changing, and people wanting to wear more variety than wearing one solid piece and kind of locking up their savings. So I think it's a huge market. If I think about it today, I think the alternate luxury segment market to gold is about a 20 to 15,000 crore market.
Okay, 20 to 15,000 crore rupee market. Priyanka, you founded Goya's 2 years ago and have already scaled to 18 stores across India. What's driving this rapid growth, especially at a time when gold prices are soaring? Also, tell us how much of your traction is value-driven versus design or lifestyle-led?
I think something that was very, very important for us to kind of be transparent with what we're doing, because it was a new category when we came into the market. Silver jewelry was a thing, but gold-plated silver jewelry, that too, which is heavily focused on occasion, was not really a thing. So I think for that to happen, we had to be transparent with our prices, transparent with what we were doing, and kind of create that trust from the consumer from the get-go. So I think we are kind of acquiring most of our consumers because of our design, the experience we are providing in our stores, because all our stores are literal replicas, not just our product, even our stores are literal replicas of gold jewelry stores. And I think we kind of banked on that. And we've opened about 18 stores in about 30 months. We're just moving into our new state, 4th state in India, Tamil Nadu, next weekend. So very excited about that. And everywhere we go, I think as long as we've got the design language correct, I think I don't see us looking back.
All right. Speaking of design language, let's talk about your design and manufacturing capabilities. How much of your production is in-house, Priyanka? And with the fresh funds raised, how do you plan to strengthen your tech and manufacturing backbone?
Oh, absolutely. I think one of the reasons we wanted to fundraise is because we knew we had to double down on, our in-house manufacturing, on our quality systems, and also our entire tech stack and supply chain, right? And I think for that to happen, we did that strategic push from Norwest Capital, which we have taken the funding from. So I think currently about 80% of our manufacturing is in-house, but we want to make that 100% maybe in the next at top 6 months.
Okay, 6 months, and we'll surely keep a track of that. Priyanka, from 18 stores, like we mentioned today, how are you planning to scale your retail footprint, and what's the ideal mix between offline stores and your digital presence as you grow? What new geographies are you eyeing?
I think we're always going to be predominantly store first, is because I still believe jewelry in India is very look and feel. And I don't understand how somebody would kind of, and also we're occasion led, we're not lifestyle. So that's something people really think about before making that purchase. So, but I think what online does is it definitely gives you a place of discovery where people will discover you. And a lot of customer repeats also comes from online. So I think we're going to keep it omni-channel, but I think we're always going to be a store first brand.
Okay, the jewelry market, Priyanka, is deeply trust-driven. How do you build credibility and consumer confidence for a relatively new category like, gold-plated silver?
So I think, as I said, right, we really had to be transparent with what we're doing. We do use 92.5 silver. So we had to be very transparent about that. Be transparent about what plating we're using. And I think every quarter we're kind of getting better with that. And the entire goal of the brand is to kind of have more control over the plating durability. Because once that's cracked, now the next question is what's the difference between gold and silver jewelry, right? You're selling the same thing. It has the same finesse. I think we're in the process of doing that. I think from where we've started to now, I think we've come a really long way. And I think the overall store experience right now, we exchange old silver. I think that's been a touch point for the consumers to walk in, and because also the silver prices soared in at the right time, so it was a great opportunity for consumers to come in and exchange their jewelry and exchange their silver and purchase new jewelry.
Yes. So Priyanka, what's the long-term vision? Do you see Goya's evolving into a full-fledged jewelry powerhouse, or will it stay sharply focused on the alternate gold-plated silver space?
I think we're going to be at the gold-plated silver jewelry for now, but I think there's a huge headroom, right? Like never say never. With a lot of alternate jewelry options coming up, I think Goya's could explore all of that. But I think their next roadmap, the coming roadmap includes many product lines. But I think our core focus is going to be gold-plated silver jewelry.
So looking ahead, what's the next big milestone, Priyanka? More stores, new product lines, or perhaps an international play?
International sounds great. Why not? And we've already explored a couple of international markets that we've seen great success in. We're trying to have store spaces, offline store spaces there, and see how that works out. So that'll be great. But again, if you ask me about an immediate milestone, we want to scale retail. We want to deepen our design innovation. I think that's very important. And as I said, I want to have more control over the entire plating process. And I think we want to be the first one to kind of crack a plating that will be permanent. Let's just say that today.
All right. On that note, it's time for me to wrap up our conversation. Many thanks, Priyanka, for joining us on Startup Street today, and wish you the very best with all your growth plans.
Thank you so much. Thanks for having me.
Moving on the hot seat today, Bengaluru-based startup YouLook Technologies has raised 19 crore rupees in seed funding led by GrowX Ventures and InfoEdge Ventures to advance autonomous satellite swarms for radio frequency intelligence. The company plans to use the funds to accelerate aerial and space demonstrations and secure its first commercial and defense partnerships. YouLook is developing cutting-edge systems that can detect, classify and track emitters through RF fingerprinting from space. Joining me now to discuss this further is Siddesh Nayak, the co-founder and CEO of YouLook Technologies. Siddesh, thank you so much for taking time out and, being here with us on Startup Street. Before we get into the fundraise, if you could sort of take us through what you do at YouLook, can you break it down for us in layman's term and take us through what you're basically solving for?
Thank you so much. Good evening to you. We like to go by Uluk. Uluk is actually a Sanskrit word, which stands for owl. So how an owl sort of in a forest sort of represents a sentinel, hearing to different signals and frequencies and so on. Our satellites in orbit will be able to hear different signals. Typically you're used to satellites imaging a certain area in different sort of techniques. What's unique about our satellites is they hear for different signals from the ground. So essentially, it's a cluster of satellites, or what we like to call a swarm of satellites, where more than 2 to 3 of these satellites work in collaboration with each other, in tandem with each other, to sort of track different emitters or radio emitters on ground. Right. So these could be a range of radio frequency emitters. Recently, we've heard about GPS disruptions around the Indira Gandhi International Airport in Delhi. Our system can detect these kind of sort of interferences and so on. So a host of radio frequency applications are sort of what we are targeting. So we are building satellites that can pick up different kinds of they sort of do remote sensing in the RF domain.
Sure. What does this 19 crore rupee seed round mean for Uluk's growth trajectory and upcoming milestones? How will, the funding sort of accelerate these plans to commercialize these autonomous satellite swarms?
So, currently we validated a lot of our tech at the ground level, right? And there's lab validation for a lot of tech that we worked on. The seed round helps us accelerate validating this technology through a lot of aerial demonstrations. So we'll demonstrate this tech first using a host of UAVs, drones that sort of mimic that swarming behavior. eventually sort of leading to in-orbit demonstrations using our first sort of capability proving satellites. So this seed round helps us validate that tech, take it from lab to air and eventually to orbit.
Sure. If you could, sort of explain how this RF fingerprinting from space actually works and why it's considered a breakthrough. If you could give us, some use cases as well.
Perfect. So, fingerprint, we're sort of all familiar with what fingerprinting stands for, right? RF fingerprinting is sort of IDing out or fingerprinting every single RF emitter that's out there on the surface. Here we find unique ID and characteristics of an RF emitter in the sort of radio frequency domain. The reason why, if we consider an emitter from, the same manufacturing line, same make, same model, same everything, over a period of time, due to say exposure to weather or inconsistencies or minor tolerances in manufacturing, leads to every emitter having a unique sort of signature of its own or a unique fingerprint of its own. And this is classically a decade-old tech, but this has mostly been demonstrated using ground-based solutions or at best lab-based solutions. What we've seen in the past and a lot of our current research is towards analyzing data that's already being collected from space and then deploying algorithms that uniquely identify these emitters. So we're trying this on a large scale, from a space application for the first time, and that's sort of where a lot of our groundwork has been.
Sure. And you've also mentioned partnerships with defense and research stakeholders, right? What kind of collaborations are you looking to build in the coming months? And can you take us through, the kind of clients that you will be working with?
So, a major part of our client is going to be the defense and security, the defense and intelligence establishment, with, again, maritime as, sort of a core commercial, civil commercial sort of sector. The partnerships that we're looking for is, a lot of national research labs within the country who we're looking forward to in terms of collaborating in terms of their testing facilities, the R&D expertise that already exists in the country. ISRO's been one of the pioneering organizations globally to sort of advance space research. So we look forward to, working with them in terms of getting our satellites to orbit. We also look at, organizations like DRDO and other research labs who do fantastic work and sort of hope to build on, some core deep research that has already happened at these labs and then sort of build and commercialize and take it to orbit.
Sure. And with global interest in space tech rising, right, how do you sort of plan to position Uluk in the international markets? Is that something that you are eyeing or looking at?
So that's interesting because both me and my co-founder, we studied in North America. In fact, my co-founder has very recently made the move back to India. So in that sense, we sort of globally trained, globally educated sort of engineers with sort of heritage. But, again, we've decided to set shop in Bangalore because this is where, a lot of, there's amazing enthusiasm in the ecosystem. There's a lot of regulatory support. The current environment is very conducive for organizations like Uluk to thrive. So we're building out of India, we're building from India, but really the market is global, right? Because space is a global business. So we are targeting a global business with, the Indian establishment as the anchor customer.
Sure. So, bringing your global expertise back home is what you're doing and then building for the world as well. But, if you could quickly tell us, are there any specific timelines for the first satellite swarm launch or aerial demonstration? What are the targets for the year coming ahead?
So the aerial demonstrations are something that sort of kick off mid next year. And, they go through an evolution of tests and sort of, building on to each test that happens. Once sort of we validate tech at that aerial level, that's sort of when we move to the next stage, which is the in-orbit demonstration. So that's largely the timelines we're looking at.
Okay.
But again, yeah.
Sure. All right, Sudesh, we're completely out of time, but thank you so much for joining us here on Startup Street, and we wish you all the best on this journey going forward.
Thank you so much.
Well, it's time now to head into a short break. But on the other side, from Bengaluru to the Bay Area, Indian startups take center stage at Dreamforce 2025 in San Francisco. We'll tell you how Salesforce flagship event is helping them to think and go global. Coming up right here after this break.
Welcome back. You're still with us on Startup Street. Salesforce's flagship event, Dreamforce 2025, was not just a showcase of global AI breakthroughs, it was also a big moment for India. From AI role-play agents to autonomous CRM admins and field service platforms, Indian startups inside the Salesforce Startup Program were on the ground in San Francisco, pitching to customers and scaling globally. CNBC TV 18's Aishwarya Anand brings us this report from Dreamforce, where Indian founders are proving that enterprise software built in India can compete anywhere in the world. Take a look.
I'm up all night to get food. I'm up all night to get lucky. I'm up all night to get strong. I'm up all night to get soul. I'm up all night to get strong. I'm up all night to get lucky. I'm up all night to get lucky.
Well, the world's largest AI and tech conversations have officially begun here at Dreamforce 2025 in San Francisco. And there's also a large India story that's playing out. As part of Salesforce Startup Program, several Indian founders have flogged all the way here to showcase their innovations, set up kiosks, and to tell that Indian startups are no longer just participants but key players in global dialogues around AI and cloud innovation. So let's go and meet some of those trailblazers to understand how this platform is helping them connect, scale, and take their ideas from India to the world. We started with Clientele AI, a revenue operations startup building a fully autonomous Salesforce admin agent that plugs directly into CRM workflows.
We just launched 6 months back, and we've over 20 enterprise customers, over 4,000 users across the world using the agent right now. Imagine if you're a Salesforce admin or developer, you spend like 12 to 14 hours a day. The agent just allows you to have a little more time with your family.
Across the aisle, Outdo AI is turning every sales conversation into a training data set using AI role-play agents to help sales teams practice and improve anytime.
So you can replicate the exact buyers. So we call them AI twins. So you can create like AI twins of your buyers and practice calls with them regularly and learn new things and stay updated with the trends, with the market, with the product and so on.
Another thing that I want to ask you is that what is the kind of guidance or collaboration have you received through Salesforce's startup program that has helped you refine your go-to-market strategy?
Yeah, so we have got access to MVPs using which we were able to iterate our product in the early days. As our app is listed on App Exchange, the global customers, global enterprise customers can use Outdo's role-play agents in Salesforce directly.
While some startups here are born in the last 2 years, Murfans comes with a decade of experience as a Salesforce partner and is now shifting from consulting to product building with a field service solution.
Salesforce has its Sales Cloud, Service Cloud, Marketing Cloud, but not for field service. So then we thought, okay, we can fill that gap so we can introduce a field service solution for companies who actually manages technicians to go and do some work in fields on-site and complete the work and get the signature. So that entire life cycle we try to solve it. Almost like 50 to 60% of the cases are being reduced and no more manual efforts required.
And while these founders pitch, demo, and test in real time, Salesforce says the aim is not just to host a booth, but to build a community where Indian startups can learn, partner, and scale together.
We have the startups come together sort of in order to interact with one with the other. We provide them a platform whereby they are able to learn from each other, ask questions, seek guidance. So there is a lot that we do for them in order to ensure that, if they are starting up, they have the right kind of environment in which to flourish.
From just a handful of partners to now over 415 startups, including 200 in AI and more than 100 published apps, Salesforce's startup program has become a global community of innovation. And as Indian entrepreneurs flock from Bengaluru to San Francisco, it is a reminder that the next chapter of AI and cloud revolution will likely see very strong India footprints. With camera person Saroj Singh, Aishwarya Anand in San Francisco for CNBC TV 18.
Well, with that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
So wonderful to be in the midst of these four extraordinary young Indian entrepreneurs who've demonstrated to us the art of disruption, scaling, surviving, and really becoming billion-dollar entrepreneurs. The session's called Billion Dollar Babies. None of them are babies, actually. They've really demonstrated the art of moving from babies to becoming real giant killers in many ways. These are people who, when we started our startup movement in 2016, India had just about 150 odd startups. Today, India has over 150,000, 160,000 startups. We have over 160 unicorns in India. Many of them have been inspired by the journey of these four great young entrepreneurs. Let me first start with Piyush, who is just, I'm starting with you simply because I'm your consumer.
Thank you, sir.
The specs I wear is from Lenskart. So what makes Lenskart such an extraordinary story that you've been oversubscribed 28x? This great combination of technology, great eyewear. What's one big, huge disruption that you brought in?
See, I think, firstly, thank you, sir, for being a customer, and thanks for the vote of confidence. Look forward to keep serving you in the future as well. I think, firstly, the whole persistence and focus on on a problem and a vision that how do we get India completely visually corrected is one big difference. I think that obsession that we have almost 500 million people in India who need vision care and who are without one, and how can we really use technology to solve this problem. And I think the most disruptive, to answer your, and I think that mission has really kept it going and staying persistent day after day with a lot of failures. From a technology perspective, I think, and at the core of all of that, I think technology has been the biggest disruption. I'll give you a problem, like, as we were scaling up, one of the biggest problems we were facing is that we do not have optometrists in India, enough. We have like 35 or 40 optometrists for 1 million people. And it was like a big bottleneck on how do we test eyes for 500 million people more. And then using AI and technology, we developed this ecosystem where you can sit in front of a machine and do self-eye test. And you can talk to a machine. And that became, so I think to me, disruptions which have been around democratizing eye test have been the biggest ones.
Okay. And you're also in the export market?
Yes.
So how many countries have you penetrated so far?
So we are now in about 14 countries.
Okay, wonderful. So Fani Kishan is the co-founder of Swiggy. He's given Amazon, Flipkart, everybody a run for their money. He's also started doing 10 minutes delivery. How many deliveries are you doing a day?
Well, it depends on the day, but between 3 to 4 million.
Okay, and how much more disruption will you do? What's the next big plan?
I think for us, our mission has always been around delivering convenience to people. That's how we started. That's why I think we've been successful. There were many questions 10 years back around ability of people to pay for convenience.
Yeah.
And that's probably been our biggest contribution in the last 10 years, right? Where we've shown that at scale, people will pay for convenience and we can build massive businesses around that. And our vision continues to be around how do we unlock new methods in which hopefully you can get convenience.
And how's your journey of moving from just a food delivery app to providing many more things like shoes and groceries and many other items going?
Yeah, I think when we started out, of course, our vision was very simple. We said there seems to be a problem in food delivery, so why don't we solve that? But as we've scaled, the big question that came up for us is what can we do that can change, people's lives? If Swiggy was there in your life versus not, what meaningful delta difference can we make, right? And that caused the genesis of Instamart about now 5 years ago, about 4 or 5 years back. We constantly keep thinking now we have a concierge service where we're saying, hey, ranging from, trying to get a ticket at a movie or a concert to traveling abroad, how can I make my life easier? So we focused on continuously looking at pain points in people's lives, removing them, and be hopefully an integral part, an operating system, if I may, of their day-to-day life. So that's where our constant innovation is about.
So tell me, just because of you, are Indians and Indian housewives, are they all losing the art of cooking at home?
No. I don't think so. I can give my mom as a great example for this, right? There was a time when she was quite surprised about me joining or starting Swiggy. Because I was in a consulting firm and she was like, what exactly are you doing? But over the last many years, I've seen herself transform, wherein she continues to rely a lot on, let's say, the offline markets to get what she wants. But there are these few occasions, it's early in the morning, late in the night, some guests that come over to the place where there is that need state of seeking that additional help, right? And that's the kind of role that we're playing. So the way we see is to augment people's lives as opposed to displace it in any manner, right? And that's what we're observing. At the end of the day, while I wish we're used a lot more frequently than we are used, 3-4 times a month on average. And that kind of shows how we're augmenting, making life a lot more easy for people than, displacing it in some way.
So let me turn to Abhiraj, who's really brought a lot of discipline to the home services market, which is really chaotic in India. You can arrange a plumber, electrician, a carpenter, even someone who can do your beauty, makeup, all right on his digital app, one click, they'll be at your house in 10 minutes. Abhiraj, how's it going? How's the journey been for you?
Thank you, Amitabh. Amitabh, we started this company 10 years back with the simple vision of providing exceptional service to Indian households. High quality, reliable, always on time, and just delightful. That has been our North Star ever since, and it's something that keeps us honest even today. We want to be a company that is truly known for customer service, customer excellence, and in equal measure also help our service professionals live dignified, respectful, middle-class lives. So that's the vision we've been on. It's not been easy. It is a complex, operationally challenging business.
So you must be doing a lot of skilling for this.
We do.
And how many people have you skilled so far?
Till date, we've skilled roughly 60,000 service professionals in our training centers. We also use a lot of technology, a lot of AI to ensure quality control at the doorstep. And I mean, in many ways, we think we're only getting started.
So where do you see the future of the market? Tier 2, Tier 3 cities abroad, markets like Dubai, Singapore, where all are you going to penetrate in the next few years?
See, we think we can be in every middle-class Indian household once a day, eventually. So
that's about 450 to 500 million Indian households.
Yeah, so I think the opportunity is very large. We have to be disciplined, we have to be calibrated. We don't have to get ahead of ourselves, but we have to keep reminding ourselves that, you know, we're less than 1% done.
So, you know, with the kind of numbers that you're talking, each one of you is talking, it appears to me that you're still undervalued, not overvalued, huh?
Look, we just focus on value creation and leave the valuation to the markets.
Okay, so what is this connect between market value and the market share? And how do you look at expanding, growing, and enhancing market value in a much bigger way and getting a larger share of the market? Will that further enhance values? What is the core? How do you look at the correlationship in terms of values going up? Let's start with Piyush for a minute.
See, I think eventually we look at it in, I can talk about Lenskart. There is what we have achieved so far is a very small portion of what we intend to do. We want to give a vision to 1 billion people. We have given it to only about 25 million people so far. Right? So there is a lot more to do ahead. And I do think game and is going to be about how do you leverage technology, and this is my firm belief, to solve some of the biggest obstacles in getting access and affordability to people, right? Because what are the two important things? One is how do you deliver great experience? And second is how do you deliver it most efficiently? And in both of these, technology has a very large role to play. So for us, I think, and I believe for all of us right now, we are in very early stages of the journey. And I genuinely think with AI coming in the picture, if you have been using technology for a decade to deliver that extra experience, to deliver that extra reach, now is the time to take that extra superpower of AI and make it 10x.
Okay, I'm going to come to you, but I wanted to turn to Yashish because Yashish Daya has done a remarkable job in Policy Bazaar. He's sold about 20 million policies to Indians, health policies and term policies. It's a remarkable success story in terms of insurance. And Yashish, 20 million policies, what is the biggest challenge and how do you look at yourself in the next 5 years?
So first of all, before I say anything about Policy Bazaar, I wanted to thank you because you are the one person who for the last 10 years has been the go-to person for every startup. And we derived a lot of confidence in the fact that you were just there and willing to listen to all of us, whatever problem we had. So thank you for that. Now,
Totally agree, sir. Totally.
I think, see, we had a very simple, if you look at India, we used to have joint family systems. See, everybody works for about 20, 30, 40 years in their life. But before that, they are kids. And after that, they are old. And that time they don't earn, but they still have expenditures. And then there are people who fall ill or they die early. I've had some incidents in my family. And then their families go through very, very strong financial problems. You know, healthcare costs are going up, etc., etc. So for me, as I think of India 20 years, 30 years from now being a developed country, one of the biggest challenges we're going to have is healthcare and social security. Because we're a developing country, going to become developed. And I somehow thought in 2008, when we looked at the insurance industry, we were not selling health insurance and term insurance. We were selling some kind of savings kind of products and some car insurance, and that was it. And for me, that was, the reason for that was the consumer was not educated. And so we spent the last 17 years trying to educate the consumer about these products, but it's not that simple alone. You know, if today I'm not well and I know I'm going to, let's say I'm terminally ill, I want to buy a term insurance plan. So there's a lot of fraud element, etc. So in those 20 million, sir, it's a very circumspect journey, and it's been built kind of day by day, because you don't want to sell to somebody who's desperate to buy insurance. You want to sell to people, you know, that's the only way to kind of keep it feasible. So I think in terms of opportunity, it's very simple to look at countries that spend a lot on social security. You will typically find about 20 to 30% of their national budgets going towards things like healthcare, pensions, etc., etc. And in our case, it may not be the government, it may be individuals that have to be trained to do the same. And that training is a very difficult task. It's not it's not easy to get anybody to part with 10,000, 20,000 rupees. In the piece that, look, if something goes wrong, somebody will be there to help them. There'll be a claim provided. It's a pretty difficult proposition. But yeah, that's been the journey.
how do you, in the next phase, penetrate the next layer of tier 2, tier 3 cities? I also want to look at, because to my mind, Indian companies can be great companies if you can penetrate global markets. Export is very critical to me. You know, Indians must learn the art of getting 5x of what you earn in India by penetrating global markets. What's your strategy on penetrating tier 2, tier 3 cities and on exports? And I'll start with Swiggy.
Yeah, so I think for us, over the last many years, one thing that we've at least resolved is our commitment to focusing only on India. This is the market that we believe that we are in for the long term, and there's a fair amount of headroom for expansion here. So I think we are focused very much on India. On the aspect of tier 2 and tier 3, I can give an anecdote, right? A few months back, I was in a tier 2 town, Vijayawada, and I was meeting a few customers, and there's this homemaker who was talking about her purchase habits, and she spoke about how Instamart solves a very critical problem statement for her, where she cares for the health of her family, and there is a particular product, a 7-grained atta, that's not actually available in any of our local stores. While majority of our purchases still happen offline, there is this occasion, there is this element where we are providing access to people, and you know, a lot of our tier 2, tier 3 towns don't have that evolved retail formats as well, right? And that's the kind of opportunity which we think that we can. It's about access, it's about convenience, it's about affordability to the consumer when they need it. And while we started out not thinking that we would have a role to play in those areas, it turns out that we could solve a much more important problem in tier 2, tier 3 in comparison to tier 1.
Okay, Piyush.
See, I think it is, if I look at our lives today, we are consuming so many international brands. I mean, you look at apparel, you look at shoes that everybody is wearing. And if you think about it, consumers are going to gravitate towards what, you know, the best of the brands. And I think it is time that we start creating global brands, because my firm belief is that in the long term, if you think 10, 20 years, either you are global standard or you may cease to exist. What will it take for us to create global companies? I think the most important thing is belief. I think we have been phobic about it. When we were trying to go international, we faced a lot of resistance. More, I would say, mentally, you know, created, that Indian companies may not succeed international. How many successful examples do we have? But today, about 40% of our revenue comes from international markets. I think that belief was really important.
So which is your biggest export market right now?
Right now, the biggest market is Southeast Asia.
Okay.
Singapore, Thailand, and then Japan.
How big are you in the Middle East?
Middle East is second in the we're not allowed to disclose market-wise numbers, and we are listing in 2 days. So I want to make sure I comply. But I would say we are one of the largest players.
Okay. Abhiraj.
So 2 parts to this question. One, on the tier 2, tier 3 opportunity, I think that opportunity is immense. And it's only going to grow as India grows and middle-class Indians, you know, have more discretionary income. We are present in about 50-odd cities in India, and the number of emails I get every day from customers in cities we are not present in, saying that you should launch urban company in our city. We are worthy, and you know, we need your service. So I can see that opportunity, and I think it's a long-term, one-way opportunity.
And what's your most popular service?
Mostly around home cleaning.
Okay.
But we also have beauty and repairs, which is popular. But to your other question of going global, and we have a global footprint in the Middle East and in Singapore as well. One of the things I've realized, Amitabh, is when you are a global company, even if you have a small global presence, you learn so much because you learn to operate at the global scale. You learn about global quality standards, how your product should be globally competitive, how your service quality should be globally competitive. That invariably those learnings will be plowed back into your business in India.
Yeah.
So I always encourage companies to have at least some presence globally, because that's the real playing ground, and it allows you to calibrate yourself against what's globally best in class.
Okay. And probably you get a little bit better unit value realization also?
100%.
Yeah.
100%.
Okay. Yashish.
So, sir, 8 years ago, 20% of our business would come from tier 2, tier 3 cities. Today, it's about 75%. And most of the growth is coming from tier 2, tier 3. Talking about international, I did not originally believe in the international concept. Now I do. I think we certainly need to have our organizations going international, because that's how you build national IP. That's how you build, see, the fact is Google, Facebook, etc. That's how America makes a lot of money. And there is no reason India should not. Some of our organizations, including ours, are super good.
People have had grievous injuries and there could be one person dead. Anything which is going to be disturbing for the viewer, we will try and ensure that we try and gloss over it. But viewers at home, please use your own discretion as to who's watching these pictures. Now, if you can go full frame to the picture on the extreme right, that shows a car and a bike and also a lot of parts, vehicle parts. Now, this is the part. Now, you see that there's a white color car which is showing a lot of damage, but it's not on fire. And around that, it's a circular area. It's like a ring in which this entire fire is blazing, and it's really blazing. People are all around. Now, this is that. It looks like a motorcycle that's been blown to bits. There are other pictures also there. Other vehicles also which have been blown to bits. There's a car, and then there are fire service, fire tenders, 7 fire tenders being pressed into service that are trying to clearly douse the fire. But the intensity seems to be close to this vehicle, whose doors and all, the windows are smashed, the doors have come to pieces. There is an auto rickshaw which is damaged. You see the auto rickshaw. It looks like a parking lot area where this has happened, viewers. This is the first set of visuals. The second set of visuals shows the set of the intense blaze and the amount of fire, and also a lot of people at the center. The visual to the left of your screens, viewers, that's where we see the blaze. It's raging. Look at the fire tenders pressed into service. The pictures, it's really raging. The blaze is raging, really hot, and it's a larger ring. It's quite a large ring. Now, there you go. These are more pictures that we are bringing you, viewers. And look at it. There is a huge crowd. People are making videos. Look at the amount of damage. If you can go to the top left visual and just go full frame on that, where people are trying to use their mobile phones to record, and you would see at the top left, there you go. That's the intensity of the blaze. There are a few vehicles which are all damaged, and right at the center is the entire epicenter of the fire. Huge fire, and we can't make out what vehicle is there at the center. And we could see that same white car which was damaged earlier in the previous set of visuals, that is there at the far ground, at the background actually. And in the near ground, there are people trying to jump over a wall, but we see vehicles which have borne the brunt of the impact of the blast. And there are windows and panels which are damaged, but right at the center is this entire ring of fire. That's where we saw an auto rickshaw damaged, a motorcycle damaged. So there has been considerable extent of damage to vehicles, and it looks like it's a parking lot. But people, when they tried to run away from there, did that cause a minor stampede? Did somebody get hurt there? And because of that, have we lost one person? Or is it because of the impact of the blast that was caused because of the explosion? We'll have to wait and watch. What triggered this explosion? We need confirmation. As of now, the authorities are not calling it a nefarious act. Was it because a battery went off, or because of that, the fuel in the car also burst? Because you see, it's fuel burning. The black plumes of smoke showcase the smokes are indicative. If it is white, grey, black, that's the nature of the incendiary device. That's what changes. What's causing the fire? That could also change. General Pandey with us, Kulbir Krishanji is with us. General Pandey, now we've got more pictures. What is your assessment? This clearly looks more than an accident.
Correct.
Or does
it? Again, the black plume is indicator, why you said very correctly, in case there was an explosion, because of certain amount of explosive and all the color system would have been different. But what is amazing is that is about 25 minutes since the time the blast has taken place and the fire is still raging. That means the amount of fuel or the content which is fueling this fire was quite significant. Is it because of the environment where it was located, and in case the entire vehicle has just been blown off and there's nothing much left of it, that means not just a simple blast of a battery or maybe a gas cylinder which was kept inside, but there's something much more which has triggered this thing. It may be still be an accident, but the vehicle may be carrying some inflammable material which has resulted in this kind of a blast which has taken off the vehicle and damaged other vehicles around it.
Viewers, we on this broadcast, we were discussing terror modules, and we have two security analysts who've seen a lot, who worked on intelligence, and who've also seen, blasts, explosions, and also the result of it. Kulbir Krishanji, Manoj Kumar Gupta, our security affairs editor, group editor, saying that there is no crater at the spot. There's a lot of fire, there is plumes of smoke, but an explosive device would have also caused a crater. There's no crater visible. MHA officials are saying that as of now, to say anything, it's premature. They're going to look at immediately, central agencies are getting involved. Delhi Police Commissioner has spoken with senior MHA officials, so the Home Ministry is getting involved. This is Delhi, obviously national capital, Red Fort, and again, something like this will get the attention and, of course, immediate response of all the central agencies. But what's your assessment, Kulbirji, as you see these pictures?
See, what happens is when there's an explosion, no matter what be the cause of the explosion, it has a secondary effect in the sense there are cars parked next door to it, there are bikes parked next to it, they also explode. So the fuel in them also catches fire. So what happens is that it's not just one single blast. The blast causes secondary explosions, and it causes panic. People run around, near stampede-like situation arises. So the first thing which the police try to do is to secure the area, form a perimeter so that they can clear that area and then start looking for clues as to what happened and what was the cause of the fire or what was the cause of the explosion. So, and it's dark, it's difficult, but the police have to do it and they will do it, I'm sure. So these things, you set up an outer perimeter, an inner perimeter, and the forensics and the police search systematically in a grid type of way to reach to the,
Now we're getting more pictures. Kulbirji, we're getting more pictures. Arunima is with us. Oh, you can see the extent of damage. It's quite intense. Look at the picture that's come in just now. It's a WhatsApp video left of your screen. We'll try and go full screen. There you go. Fire officials are there. 1, 2, 3, 4, 5, 6. One can count at least 7. There you go. 8, 9, 10. Minimum 10 to 12 vehicles that have suffered intense amount of damage. This is a lot of damage that the cars around this place, this vehicle that's actually been the epicenter of the blast. The vehicles all around have suffered intense damage, and there is no crater. There is no crater, and this is the vehicle right behind the person in the check shirt that's been doused totally now. But it's smashed, it's gone. There's nothing that you can see of the vehicle that was the core of the blast. But look at the damage that's been caused to the vehicles all around. Now, is this a natural kind of damage that would happen if a car, a battery-operated car with fuel in it, perhaps a full tank, would explode? General Pandey. Arunima is with us with some details. I'll come back to you, General Pandey and Kulbir Krishanji. Yes, Arunima.
So, prima facie, what has been reported to Ministry of Home Affairs, Delhi Police falls under Ministry of Home Affairs, is that prima facie, it looks like that a vehicle which was fitted with a CNG cylinder, that was at the epicenter of this blast. So prima facie, police is looking at whether the CNG cylinder in this vehicle exploded, the vehicle caught fire, and subsequently other vehicles in the vicinity, either parked or in the vicinity, caught fire as well. Why is police looking at this angle particularly and not immediately jumping to the 3-letter word IED? Is because at that spot, prima facie, again I must emphasize on that word, prima facie, they have now not spotted any kind of splinters or any big crater. Or even
yes.
the glass around that area, because we're told this is near the metro station. So even the glass around that area, when even a Sutli bomb explodes, when even a homemade bomb explodes, usually the impact is borne by the glass windows around that area. We saw that in Rohini and near the CRPF school also. But because that kind of prima facie probe has not given immediately such evidence, so police is A, not ruling out anything at this stage too early. B, they're saying that we are looking into the CNG vehicle angle because that the vehicle which bore the brunt of it, it appears it was a CNG fitted vehicle. But we'll have to wait for a little more time.
Right.
Forensic
Arunima,
teams are
just
en
wait
route.
on. We got Mr. Avinash Kumar Malik from the fire department. Avinash ji, namaste. What can you tell us about what happened at Red Fort, sir?
नमस्कार सर, हमारे पास जो सूचना आई थी वो 6:55 पे आई थी शाम को कि चांदनी चौक के मेट्रो स्टेशन के बाहर कुछ एक्सप्लोजन हुआ है और कुछ कारों में आग है। उसके ऊपर हमने गाड़ियां रिस्पॉन्ड करी थी। टोटल 7 यूनिट्स हमारी टर्नआउट हुई थी
जी,
और उसका स्टॉप मैसेज आ गया है हमारे पास 7:29 पे
जी। तो आप कह रहे हैं
छह गाड़ियां हैं, 2 ई रिक्शा है और एक ऑटो है जो इन्वॉल्व थे, लेकिन अभी कैजुअलिटी क्या है वो हम अभी पता लगा रहे हैं। वहाँ पर कोई कैजुअलिटी भी है या नहीं, ये हम अभी ढूंढ रहे हैं।
जी, आप कह रहे हैं कि 7:29 पे आपने फायर को काबू में कर लिया है?
बुझ गई थी सर पूरी तरह 7:29 पे।
7:29 फायर इज आउट। पर प्राइमा फेसा क्या लग रहा है वजह?
देखिए वजह तो सर पुलिस इन्वेस्टिगेट करेगी, ये पुलिस का डोमेन है, हमारा नहीं।
हाँ, पर आपके हिसाब से
हम इसमें कुछ कमेंट नहीं कर पाएंगे सर। हम आपको ये बता सकते हैं आग कब लगी थी, हमारी गाड़ियां कब गई थी और कब आग बुझी।
और क्या आग जो थी किसी एक गाड़ी की वजह से लगी थी, जो कोर जो सेंटर पे था गाड़ी के आग?
ये सर बता पाना बहुत मुश्किल है। वीडियो आपका है, हम आप वीडियो ग्रुप पे डाल देंगे, आप वहां से ले लीजिएगा, देख लीजिएगा। उसमें कुछ गाड़ियां जली हुई हैं, कुछ शैटर्ड हैं। पर क्या वहां पर कोई क्रेटर दिखा सर, जो आपके ऑफिशियल्स को जहां पर? ये अभी मेरी नॉलेज में नहीं है
जी, नहीं लगा। लेकिन आप कह रहे हैं 6:55 को आपको इतला मिली थी और 7:29 को आग काबू में कर ली गई है। जी। और कुछ वहां पर कैजुअलिटीज, कुछ इंजरीज
वो अभी हम फाइंड आउट करने की कोशिश कर रहे हैं, लोगों से पता कर रहे हैं, आसपास पुलिस भी पता कर रही है, हम भी पता कर रहे हैं कि कोई कैजुअलिटीज में कहां थी। तो
पर आपकी टीम को कोई चोटिल दिखे वहां पर, या जो
नहीं? अभी तक हमें कोई कैजुअलिटी वहां एनकाउंटर नहीं हुआ है।
जी, आपको नहीं एनकाउंटर हुआ। ठीक है जी, थैंक यू वेरी मच। आई थिंक आपकी टीम हैज बीन वेरी क्विक टू रिस्पॉन्ड। अविनाश जी, थैंक यू वेरी मच। सो अविनाश जी फ्रॉम द फायर डिपार्टमेंट टेलिंग अस दे रिसीव्ड अ कॉल एट 6:55 and at 7:29 the fire has been doused. So viewers, what you are seeing on your screens are visuals between 6:55 and 7:29 p.m. 7:29 p.m. the official confirmation is that the fire has been doused and the area is under control. But there is also more numbers. 6 cars, 2 e-rickshaws and 2 autos have been damaged. The damage has been caused to 6 cars, 2 e-rickshaws and 2 autos. And the fire has now been doused. The fire officials not willing to tell us the reason for the fire, the impact or the core vehicle and what their assessment is, because they've left that to the police and the forensic team. But the fire department saying they will release more visuals and more videos very soon that could give us a picture. Fresh visuals coming in at the top left of the screen where there are ambulances, fire, the agencies. Let's go full frame to that if we can. The area being cordoned off with barricades, and there is no fire right now. That's what. So confirmation that there is no fire. Anshul now joining us live. Yes, Anshul.
So yes, it has been confirmed that the fire has been doused at 7:29. The cooling down operations are still underway. The manner in which this entire blast has happened, it is definitely prima facie. It is seeming like that either it happened from a battery of a vehicle or could be from a CNG of a vehicle. It is not seeming like an IED blast at this point. However, top officers of the Delhi police are on ground zero. They have already reached over there. Forensic teams are on their way at this point in time to reach Red Fort. And once they reach over there, then we could get a clearer picture as to what was the exact reason for this blast. But what fire department has told us that there are no casualties that have been seen by them. However, there are chances that there could be at least 3 to 4 injuries that could have been reported in this entire incident, and that is something that is being confirmed by Delhi police, because according to the locals on the ground, what we are being told is that as soon as the blast happened, the blast-like sound came out, there were a few people who
Anshul, I'm
who
just
had gotten
interrupting you. Are you saying that the police is saying there is no casualty, there is no death?
And definitely no reports of deaths have come in at this point in time. But yes, there could be some injuries.
So some injuries, but no death. So earlier there was some assumption that one person is feared dead. So that the cops are saying that no, that's not the case.
So yes, at this point they have told us that there are no deaths, but however there are few injuries whom people have been taken to hospital. These people were taken to hospital by the local people who were present over there. Even before the police and fire department could reach over there, all these people were removed. Whoever had gotten injured, they were removed from there by the locals who were present on the spot, and they themselves took them to the nearest hospital where they are admitted and under treatment. So in the next few minutes, we are awaiting for an official statement to come in from the Delhi police, which would clear the entire picture as to what has transpired and what could be the reason for this very tragic incident.
Anshul, just we'll keep your mic on and we will jump into you and come back to you the moment we have the statement. A lot of sirens going, but stand by. Stand by, viewers, here on CNN News 18 for the first official statement from the Delhi police. From the police commissioner himself, we'll get a statement very soon. The incident call report came in at 18:55 hours to the fire department. 7 fire tenders were rushed to the Red Fort metro station where a blast was reported. At 7:29 p.m. IST, the fire was doused. There are no craters visible there. It looks like it had happened with a battery-operated car that exploded, caused the blast, caused damage to 6 cars, 2 e-rickshaws and 2 autos around. And this fire that was seen earlier raging has been brought under control. There are a few people who are injured, but the authorities are saying no deaths. As of now, the authorities are saying there are no deaths. But we would wait for the full statement from the Delhi police itself. Within 30 minutes of the incident occurring, the fire was brought under control and doused. That's what the fire department has confirmed. It's the first official confirmation from the Delhi Deputy Chief of Fire Services, saying at 7:29 p.m. the fire was doused. So this is from earlier. This is the core. This is the center. We see vehicles all around, viewers. And as we see vehicles all around, those vehicles suffered the impact of this battery-operated car. That we've got confirmation, and that exploded. And that's what caused damage in and around.
पहुंचकर आपको दिखा रहा है वो तस्वीर है। ये देखिए बिल्कुल नीचे आपको कांच बिखरा हुआ नजर आएगा। हाई इंटेंसिटी का ब्लास्ट इसे कहेंगे। और सामने की तरफ जो आग लगी थी वो सामने की तरफ आपको दिखाई दे रही है। राकेश नेगी वो सामने की तरफ जूम करके दिखाई। देखिए ये पूरा सीक्वेंस था और गाड़ी जो है वहां पर एक वैन मारुति ओमनी वैन दिखाई दे रही है ठीक उसके पीछे जिसमें आग लगी है। ये वैगनर गाड़ी भी इसमें चपेट में आई है। वैगनर गाड़ी जिसके ठीक आगे की साइड का जो शीशा है वो पूरा ध्वस्त हुआ है। और सामने आपको दिल्ली पुलिस दिखाई देगी, फायर की टीमें दिखाई देगी। स्कूटी चपेट में आई है। उसके अलावा जो वैन है वो चपेट में आई है। एक ऑटो दिख रहा है उसके ऊपर, ठीक ऑटो चपेट में आया हुआ है। यानी काफ़ी जो हाई इंटेंसिटी का ब्लास्ट था और इस ब्लास्ट की उम्मीद किसी को नहीं थी, क्योंकि ये मेट्रो गेट नंबर 1 और 4 ठीक इस तरफ 4 है, उस तरफ 1 है। देखिए ये मेट्रो लाल किला गेट नंबर 4 है, जिसके ठीक सामने की तरफ ये पूरा घटनाक्रम हुआ है। इस वक्त न्यूज़ 18 इंडिया की टीम मौके पर स्पॉट पर हम हैं और आप देखेंगे यहाँ पर जो सामने की तरफ आपको पुलिसकर्मी दिखा रहे हैं, क्योंकि पूरा एरिया कॉर्डन ऑफ कर लिया गया है, क्योंकि जिस तरह की इन्वेस्टिगेशन है वो यहाँ पर चलेगी। लेकिन फायर की टीम है वहाँ पर, अब गाड़ी में आग बुझाई जा चुकी है। लेकिन जो गाड़ियाँ राइट साइड में दिखाई राकेश ने कि हाँ ये देखिए ये वो कारें हैं जो सड़क पर चल रही थी, वो धमाके की चपेट में आई है, क्योंकि एक गाड़ी की जो बैकलाइट है वो
Well, that was Deepak Bisht. Deepak Bisht, also of News 18 India, along with Anshul, present on ground and gotten close into the incident area. We'll try and go to Anshul. Okay, Deepak is reporting again, and then we'll get Anshul also.
दिखाऊंगा आपको। ये देखिए, ये राइट साइड में गाड़ियां चल रही हैं सड़क पर, लाल किले के ठीक सामने ये गाड़ियां चल रही हैं, जिसकी जो बैकलाइट है वो भी जल रही है। इसका मतलब साफ है गाड़ियां यहां से चल रही थी। इसके अंदर भी जो धमाका हुआ है, धमाके से मुझे लगता है काफी लोग इसकी चपेट में आए हैं, क्योंकि धमाके के बाद ही यहाँ पर ये सब चलती हुई गाड़ियां अचानक रुकी हैं, इनमें भी आग लगी है। और ये चलती हुई गाड़ियां 20 सड़क पर लाल किले के ठीक सामने ये गाड़ियां चल रही हैं, और उनमें धमाका हुआ, धमाके का असर भी उसमें हुआ। लेकिन जो धमाका हुआ था वो काफी खतरनाक था। देखिए ऊपर एक पोस्टर में दिखाऊंगा, पोस्टर भी बिल्कुल धमाके के बाद किस तरह से उसका निशान यहाँ पर दिख रहा है। तो इसका मतलब ये है कि जो धमाका था, हाई इंटेंसिटी का ब्लास्ट यहाँ पर हुआ था। उसके बाद जो गाड़ियाँ थी, एक गाड़ी यहाँ पर दिखाई देगी बस आपको, ये बस रोक दी गई थी, क्योंकि इसलिए रोकी गई क्योंकि यहाँ पर अचानक धमाका हुआ, उसकी चपेट में बस ना आए, इसलिए बस को तुरंत ही खाली करवाया गया और सब लोग यहाँ से हटाए गए। आप देखेंगे यहाँ पर बिल्कुल पूरा रूट, ये वैगनार जो यहाँ पर खड़ी है, ये वैगनार ऐसा लग रहा है प्राइवेट नंबर की गाड़ी है। और सामने देखिए कुछ चीजें यहाँ पर सामने दिखाई दे रही हैं, क्योंकि यहाँ पर हो सकता है कि कोई यहाँ पर घायल पड़ा हो, उसको ले आया गया हो। लेकिन यहाँ पर कई गाड़ियां यहाँ पर चपेट में आई हैं, और ये साफ तौर पर यहाँ पर दिख रहा है कि यहाँ पर जो धमाका हुआ था वो काफी हाई इंटेंसिटी का धमाका था। लो इंटेंसिटी का धमाका कभी भी इस तरह से इतनी गाड़ियों को चपेट में नहीं ले सकता। और इसीलिए यहाँ पर न्यूज 18 इंडिया की टीम पहुंची है ये सब दिखाने के लिए, क्योंकि हम देख पा रहे हैं हमारे सामने कई गाड़ियां इसकी चपेट में है। आप देखेंगे सामने कुछ गाड़ियां जो है पूरी तरह से ध्वस्त हो गई हैं, जो राइट साइड में, क्योंकि रेड बनाई गई है। और उसके बाद जो उस तरफ पुलिस ने जो घेराबंदी की है, उसके अलावा ये जो गाड़ियां इस वक्त चपेट में आई है, इसका मतलब साफ है कि एक बड़ा धमाका था, एक ऐसा धमाका जिसे यहां पर देखा गया, लोगों ने महसूस किया, क्योंकि आसपास के लोगों ने बहुत तेज आवाज सुनी थी। और बिल्कुल
Well, that was Deepak Bisht. He's reporting on News 18 India and also CNN News 18, getting you the pictures, and we'll try and bring in Anshul also. He's also live at the spot and try and get you more details. Now, you see the damage, viewers. As we see these pictures that are coming in, you notice the damage. That impact has happened to also vehicles moving on the road because of that blast on the car, the battery-operated car, and the intensity is quite severe. The car blowing to smithereens, parts going here and there. But if you were to see, the vehicles which were on the road, which were in the immediate radius, have been impacted, but there haven't been too many shattering of glasses. Now, these are all certain indicators of whether it is battery, whether it is the fuel of the car, it's an accident which has happened, or if it is an engineered IED. The other part that we are getting, and this is confirmation, there is no crater in the area where this has happened. That means that there is no clearly, that's one of the telltale signs of an IED or an improvised explosive device. So that's not there. But it's a high intensity blast in a high density area with a lot of vehicles around, and that's why about 10 to 12 cars and vehicles, let's not say cars, but vehicles have suffered damage. We can see there is a proper cordon that's been put out immediately. Within 30 minutes of the incident happening, the fire's been doused, the Delhi police teams, the agencies, they're all around. Let's try and get the latest pictures if we can also. These are pictures from earlier. These are pictures from earlier when the blast has happened, when the incident has happened, and in that area, the cops have already responded. The fire tenders responding within 10 minutes of the incident being called, and within 15 minutes or 20 minutes of the incident, of them reaching the site, they've doused the fire. Now, they've not only doused the fire, they're also saying that they did not see anybody very severely injured. Now, this is the one. Now, let's try and look at these pictures. What's happening? People are standing and they're trying to make videos. After first they run to safety, then they come back to make videos to see what all is happening here, who are all involved. At this point, there doesn't seem to be too many people who are stuck inside, that there are others who are rescuing. Look at this car. Look at this car. The cops are there. There's a smashed car, and they're trying to see if there is somebody stuck inside that car, and they're trying to rescue that person. So people also moving in, pitching in to help and move people. Eyewitnesses and also the authorities have confirmed some people who may have serious injuries or may be injured, but nobody who's very, very critically injured, and no deaths so far. That's what. Let's hope it stays that way, that everybody recovers and there are no casualties. And look at the third set of visuals. Look at these visuals. Now you can see portions of the car that are smashed. Look at the intensity of the fire. It's a blazing fire, and this seems to be the center. This is where the fire is the centered, and then there are other pieces which have moved to the other side. Now let's listen in. We got an eyewitness speaking.
कैसे हुआ था? तगड़ा धमाके की आवाज आई थी, बस के गोटी पड़ी है, सब देख लो। तकरीबन कितने लोग उस टाइम पे कुछ अंदाजा नहीं है।
The eyewitness will try and some of these pictures could be a little disturbing viewers, so please exercise discretion. We're just getting you inputs and information as it's coming in, as it's streaming in. Another eyewitness speaking. Let's listen in.
मेरा नाम राजधर पांडे। क्या हुआ सर, आप क्या बता पाएंगे? कुछ नहीं जी, हम कुछ नहीं, हम ये देखे, लपट देखा। हाँ। अपने छत से देखा, तभी मैं नीचे उतर के आया कि जरा देखो कहाँ है क्या, और तो पता नहीं किसी तरह की कोई आवाज आपने सुनी? बहुत जोर आवाज आई, बिल्डिंग खिड़की हिल गई। खिड़की हिल गई। आपका घर कितना दूर है? ये रहा गुरुद्वारे के पास। मेरा नाम राजधर पांडे। क्या हुआ सर, आप क्या बता पाएंगे? कुछ नहीं जी, हम कुछ नहीं, हम ये देखे, लपट देखा। हाँ। अपने छत से देखा।
That's playing on a loop now. Rajdhar Pandey, an old gentleman, says he lives close to the Gurdwara, which is about a few 100 meters away, and behind that, and he said that he felt his glasses rattle. Deepak Bisht getting us a live ground report.
है वो यहाँ पर पहुंचा हुआ है और इन्वेस्टिगेशन इसलिए जारी है क्योंकि उठे गए हैं वहां तक का एरिया कॉर्डन ऑफ किया जाएगा क्योंकि इन्वेस्टिगेशन टीमें यहाँ पर पहुंची है, डॉग स्क्वाड यहाँ पर पहुंचा है, फोरेंसिक की टीमें यहाँ पर पहुंची है। सब जांचा जाएगा कि किस तरह का ये धमाका है। क्या यहाँ पर ये जो एक टेरर एंगल की बात हम कर रहे थे, सुबह से लगातार फरीदाबाद में पुलिस ने कई सारी एजेंसियों ने मिलकर वहाँ पर रेड करी थी, वो एक टेरर एंगल से वहाँ पर विस्फोटक बरामद किया गया था। लेकिन क्या उसकी खींच यहाँ पर उतारी गई है, ऐसा भी सबसे पॉसिबल हो सकता है। लेकिन जिस तरह से ब्लास्ट आप देखेंगे, कई गाड़ियां यहाँ पर चपेट में, एक नहीं बल्कि कई गाड़ियों में आग लगी। उसके बाद फायर की टीमें यहाँ पर पहुंची, 5 से 7 गाड़ियां यहाँ पर पहुंची। दिल्ली पुलिस को यहाँ पर इन्फॉर्म किया गया, दिल्ली पुलिस के अधिकारी यहाँ पर पहुंचे, सारा जो महकमा है वो यहाँ पर पहुंचा हुआ है और इन्वेस्टिगेशन इसलिए जारी है क्योंकि जिस तरह का धमाका हम इससे पहले मैंने 2005 के भी ब्लास्ट देखा था, 2008 में देखा था करोल बाग, और उसके बाद सिलसिलेवार बम धमाके हमने देखे थे, 2011 हमने देखा था, 10 देखा था। तो इस तरह के ब्लास्ट हमने अनुमान नहीं लिए, तो काफी लंबे समय बाद इस तरह का ब्लास्ट है। तो एक कहा जा सकता है जिस तरह से आज ये ब्लास्ट हुआ है, क्या ये एक टेरर एंगल है, इसको लेकर यहाँ पर पुलिस कुछ देर बाद वेरीफाई करेगी, कुछ देर बाद इसकी पुष्टि कर दी जाएगी। लेकिन जिस तरह का ये धमाका है, ये आम धमाका नहीं कहा जा सकता और इसलिए भी नहीं कहा जा सकता क्योंकि इसमें अब तक 9 लोगों की मौत की पुष्टि हो चुकी है, यानी एक बड़ा धमाका जिसमें अब तक अस्पताल में 9 लोगों के शव पहुंच चुके हैं। और ये एक
Viewers, this is disturbing news and this is unfortunate. Now we got confirmation from the hospital. The hospital PRO has confirmed 9 people confirmed dead, and one of the eyewitnesses, who's a shopkeeper, says that he fell down thrice during the explosion. He's never heard something as loud as this ever. This is the eyewitness's account, and the hospital, the LNJP hospital PRO, confirming 9 people dead. Now, that means this is far greater than an accident right now, and it is far greater. The dimensions now suddenly change. Delhi Police PRO now with us on the phone line. Sanjay Tyagi ji, namaste. LNJP हॉस्पिटल कह रहा है 9 लोग मरे हैं इस धमाके में।
देखिए, अभी जैसे ही धमाके की सूचना मिली थी, पुलिस की तमाम टीम्स और सीनियर ऑफिसर्स मौके पर पहुंचे। मौके पर जांच की जा रही है, सारी स्पेशलाइज्ड एजेंसीज भी मौके पे हैं। धमाके के कारणों की भी जांच की जा रही है और कितनी क्षति पहुंची है इसकी भी जांच की जा रही है। कुछ समय में हम वी शुड बी एबल टू शेयर द डिटेल्स विद यू। कुछ समय में आपके साथ सारी जानकारी साझा की जाएगी। अभी पुलिस के तमाम सीनियर ऑफिसर्स और टीम्स ये सर्टेन करने में लगे हुए हैं कि धमाके का कारण क्या होगा और उससे कितनी क्षति पहुंची है।
संजय जी, LNJP PRO has said 9 people are dead.
No, I am not denying from that, but I am not confirming also because I have not got any information from LNJP. हमारी टीम्स अस्पतालों से भी, LNJP के अलावा भी कोई अस्पताल हो सकता है, तमाम से सूचनाएं इकट्ठी की जा रही हैं और मौके की भी जांच की जा रही है। कुछ समय में मैं आपसे विस्तृत जानकारी साझा करूंगा।
What is your assessment of the blast? Is it a high intensity blast? Will you call it a high intensity blast?
अभी हम ये लोग इस बारे में कहने की स्थिति में नहीं है। अभी कुछ समय और लगेगा जांच में, तभी हम कह पाएंगे कि ब्लास्ट का कारण क्या रहा होगा और क्या इंटेंसिटी रही होगी।
ये गाड़ी में ब्लास्ट हुआ, इतना आप बता सकते हैं? Was it a car?
Yes, it was a car. It was a car. It was a blast in a car. वो कारण, उसका कार का इंटरनल कोई फेलियर है, CNG है या कोई एक्सटर्नल कारण है, इस विषय में कुछ समय बाद ही जानकारी दी जा सकेगी।
What is the damage that's been seen? आसपास की कितनी गाड़ियां और क्या उसमें लोग?
मैं आपको बता रहा हूँ, उस गाड़ी को तो क्षति पहुंची है काफी जी। आसपास की गाड़ियों को भी क्षति पहुंची है। उन सभी फैक्ट्स को हम लोग वेरीफाई कर रहे हैं. जस्ट गिव अस सम टाइम, वी विल शेयर यू विद फुल डिटेल.
Are there injuries also? Are people injured also?
That is what I'm saying. People are injured. Vehicles have been damaged. So the quantum of damage and the cause of blast explosion are being verified by senior officers and various specialized police teams. In some time, we should be able to share the details with you.
Some eyewitnesses have said that they have never heard something so loud ever in their lives. In fact, they fell down twice or thrice when this happened.
That is all being verified. That is all being verified.
All right, Sanjay Tyagi ji, thank you. Thank you for speaking with us. So Sanjay Tyagi there, the Delhi Police PRO saying that yes, people are dead. How many he can't confirm. Yes, people are injured. How many he can't confirm, but they will be releasing a statement soon. We got another eyewitness speaking.
सर आपका?
मेरा नाम है वलीद रहमान.
जिस वक्त ये आवाज आई क्या हुआ?
जिस टाइम आवाज आई धमाका हुआ तो मैं दुकान पे बैठ गई. पीछे मेरी दुकान है, यहीं पे दुकान है, यहीं पे. तो मैं चेयर पे बैठा हुआ था. एकदम से अचानक इतनी तेज धमाका हुआ कि मेरे लाइफ में इतनी तेज मैंने अपनी आवाज के भी नहीं सुना. धमाके के दहल पे मैं 3 बार गिरा हूँ. उठाऊं फिर गिरा हूँ, उठा से धरती फटने वाला है. इतनी तेज धमाका हुई है. ठीक है, तो मैं दुकान छोड़ करके एकदम से भागा. मेरे साथ ही बहुत सारी पब्लिक भागी. एक पे एक पब्लिक गिर रही थी. उस टाइम ऐसा लग रहा था कि हम कुछ पल में, दूसरा धमाका हुआ था, हम मरने वाले हैं. ऐसा लग रहा कि हम बचने का चांस, ऐसा लग रहा कि मौत को मुंह से देख रहे हैं. इस तरह से नजारा था. तो मैं भाग करके साइकिल मार्केट में गया. वहाँ जा करके मैं एक कोल्ड ड्रिंक लिया. 2 बंदे को ने मेरे पे अच्छे से काबू किया. मेरे को समझाया कि हो जाता तो फिर मेरे को रिलैक्स मिला. फिर मैं दोबारा आया दुकान पे चाबी लेकर के. ये चाबी दुकान की, मैं चाबी दुकान बंद करके फिर अब घर जा रहा हूँ मैं.
So now we get the latest viewers. The eyewitness says he's never heard something like that. He was so shaken, he needed people to calm him down. Deepak Bisht getting us another ground report.
वहां पर ब्लास्ट हुआ है और उसके बाद जो गाड़ियां दूर दूर तक थी, तकरीबन 100 मीटर तक इसकी चपेट में लोग यहां पर आए हैं. और धमाका इतना तेज था, तीव्रता वाला था, जिसके बाद ये अंदाजा लगाया जा सकता है कि इस तरह का धमाका अमूमन ऐसा धमाका सामान्य धमाका नहीं कहा जा सकता. और ये कहीं ना कहीं इसके पीछे कोई ना कोई टेरर एंगल है. और जाहिर सी बात है कि इस तरह का धमाका उस वक्त किया गया जब भीड़ भरा यहाँ पर इलाका, जिस वक्त लाल किले की रेड लाइट जब चलती है, तो उस वक्त जो गाड़ियां यहाँ पर चल रही थी वो भी चपेट में आई है. 2 से 3 गाड़ियां नहीं बल्कि कई सारी गाड़ियां यहां पर चपेट में आई है. और सबसे अहम चीज ये कि जो वैन यहां पर खड़ी थी, लेफ्ट साइड में वैन आपको दिखा रहा है, ये मारुति वैन ओमनी, उसके ठीक आगे एक ऑटो जो है वो बिल्कुल पलटा हुआ सा नजर आ रहा है. यानी ये भी यहां पर खड़े थे. इनमें तेज धमाका हुआ. तो क्या आगे वाली गाड़ी में ये ब्लास्ट की कोशिश की गई थी उसमें रखकर, या फिर पीछे किया गया था? क्योंकि जिस तरह से आग थी शुरुआती दौर में, इसे कई लोगों ने कहा था कि तेज धमाके की आवाज उन लोगों ने सुनी है. लेकिन यहां पर जिस तरह से धमाका हुआ है वो लो इंटेंसिटी का ब्लास्ट कहीं नहीं जा सकता, कहीं कोई कह भी नहीं सकता, क्योंकि ये हाई इंटेंसिटी का ब्लास्ट है. इसके पीछे बड़ी साजिश यहां पर नजर आ रही है. क्योंकि हमने एक दिन, आज ही सुबह हम लगातार फरीदाबाद से थे जी.
इस वक्त तो मैं लाल किला के ठीक सामने हूँ जहाँ पर जोरदार धमाका हुआ. धमाके के बाद यहाँ पर स्थानीय पुलिस की टीम पहुंची है, एम्बुलेंस यहाँ पे काफी पहुंची है और इसके साथ साथ फॉरेंसिक जांच करने के लिए यहाँ पे अलग अलग टीम आ रही है. खासतौर पर अगर दिल्ली पुलिस की स्पेशल सेल की बात करें, क्राइम ब्रांच की बात करें, लगातार यहाँ पर कई टीम जो है वो आ रहे हैं. और यहाँ पर देखिए वरिष्ठ पुलिस अधिकारी जो है वो यहाँ पे पहुंच रहे हैं. देखिए ये मैं सबसे पहले दिखाना चाहूंगा, ये है दिल्ली पुलिस की स्पेशल सेल की टीम यहाँ पे पहुंची है. स्पेशल सेल के एडिशनल सीपी प्रमोद कुशवाहा जी वो पहुंचे हैं और स्पेशल सेल की ये टीम यहाँ पे पहुंची है. और विशेष तौर पे यहाँ पे देखा जा सकता है ये घटना स्थल पर ये एम्बुलेंस यहाँ से जाता हुआ और यहाँ पे लगातार यहाँ पे वरिष्ठ अधिकारी जो हैं वो यहाँ पे पहुंचे हैं, जो मौके का मुआयना कर रहे हैं. और इसके साथ ही एक कुछ जिससे भी बात करते हैं कि जिस तरह से यहाँ पे आज घटना हुई है, क्या कहना चाहेंगे?